gains of just 0.2%. In terms of individual names, what are you looking at, Lizzie?
Well, as you say, marginally outperforming. London's set to be marginally outperforming because we're minding energy stocks, oil at $106 a barrel. We're also watching European banks after that UniCredit offer to buy Commerzbank, and we're watching the airlines, not just because oil's fluctuating, but also because you may see European airlines under pressure as that war drives oil prices higher, and we've seen Emirates closing services at Dubai Airport and then reopening them, we report. So airlines, energy and banks all in focus this morning, Anna.
Yeah, certainly we'll keep an eye on all of those. Just moments to go then until the start of equity trading. Will higher oil prices, will that mean energy stocks continue to go higher, or will that start to prompt thoughts about demand destruction, and will that put an end to the strong run that we've seen for energy stocks? We will have to wait and see. Energy was in positive territory on Friday. Basic resources were firmly in negative territory on Friday. So these European equity markets then getting into another trading week, third week of war in Iran, and we see that the European equity market picture is pretty flat actually overall. We see the FTSE 100 up by around 0.3%. The CAC 40 over in Paris is up by 0.1%. The AEX in Amsterdam, incidentally, up by 0.4%, which makes my mind go to technology and wondering what is happening with that particular sector. But broadly speaking, don't have the DAX open yet, as is usual. Energy stocks are doing pretty well, and so that answers that question of whether higher oil prices are still a positive for energy stocks. And technology is certainly in focus with the AEX moving higher, Tom.
The top two gaining sectors right now: technology up 0.6%, energy up 0.6 as well. Retail getting a bit of a boost, 0.5%. Real estate also gaining 0.4%. That's a story for the FTSE 100 as well, of course. On the downside, utilities, the biggest loser across your sectors, down 0.6%. Food and beverage down about 0.2. But again, across the sectors, you're not seeing significantly major moves, the relatively modest moves in the context, of course, of the broader benchmark up just 0.2% and continued uncertainty. But it's real estate right now, it's top of the list, followed by retail, energy and technologies in the mix as well, up 0.5% right now as a sector. Lizzie?
Yeah, I had said that we should be minding the UK house builders, but that doesn't seem to be where we're getting the strength in real estate, because Berkeley Group, Taylor Wimpey, Persimmon, all in the red this morning. In fact, Vistry Group down 2.3%, despite that Rightmove report that I had flagged. In terms of the banks, of course, we're closely watching UniCredit. Shares down 0.7%. We're waiting for Commerzbank to open, and it's a mixed picture across the rest of the sector. Airline, again, a mixed picture. IAG down about 0.5%, but Lufthansa up about the same amount. Air France flat. So it's a choppy day at the moment, Anna.
Let's talk about these markets then in a bit more detail, get some wider context. Valerie Noel joins us, Head of Trading at Seas Group, and a pleasure to speak to you, Valerie, this Monday morning. So European equity markets opening up for a third week of being entirely focused, or at least largely focused, on war in the Middle East and the duration of any war. Valerie, how are you positioning right now with that in mind, with a busy week for central banks as well?
Well, I have to say that from a trading desk perspective, we can see that the market is not longer pricing fundamental. We are driven by headlines and then fundamental. And we have really seen that last week with this, Wall Street, who put the WTI down 19% in a few minutes. So this is clearly not normal, and it just shows how unstable the tape become with thin liquidity and fragile conviction. So I think the market is really vulnerable by the noise, actually.
Yeah, so vulnerable to headlines and headline risk driving things then, Valerie. What do you see in flows and investor appetite for defensive stocks versus maybe some of the other sectors? What is that telling you about risk appetite?
What we can see is maybe the retail and high net worth start to be a little bit fatigue or tired. We have seen some flow a little bit going down. More or less 20 to 30%. So it's not a capitulation that they don't do anything, but I think they are doing less. They're not full cash, it's just more selective. And we can see that they ask for protection. We have seen it on energy. They almost sell some single stock related to energy, but buy more ETF. They are coming back a little bit more on gold. Obviously, a Swiss franc, it's always a very good edge also. So yeah, for now, I think they are supporting the market. So the support is not unlimited, but I still believe that people are just not fully cash, and we can see, and we are still, 5% lower than the highest in January. So I would say that people, yes, start to be more selective and start to buy this protection, obviously with what's happening geopolitics side.
Valerie, it's a big week for central banks. Good morning, it's Lizzie here. Even if most of the central banks stay on hold, how much could the tone from policymakers still shift equities this week?
Well, I think, yeah, almost all of them is gonna report, this week. I think it's a big week, but broadly speaking, no major rate move is expected from them. But I think the wording and that's going to be very, very important. It's going to be, inflation outlook maybe more complicated. So maybe they're going to push central bank to sound a bit more cautious. So I think the wording would be very important, more than the rate actually. And also, that's one part of the biggest week, but we have also the triple witching on Friday, expiration of options. So I think this week can be quite volatile, especially at the end of the week.
You talked about how retail buying started to slow after this very strong run. I wonder, as we enter a third week of this war, are there different sectors that you're watching now in equities that could be affected that we weren't perhaps talking about in the first week?
Well, we've seen a lot of people, coming more to defense. You have talked just a few minutes before about everything about airlines. Obviously, is going down. We also have seen retail coming back on the Max 7, even if the Max 7 is down 10% since the high. We can see people coming back of what they know, the shares they know, and they come more defensive on some stuff, but they also go back on equity they know and they like. And us as a bank, we became more neutral on equity from a couple of weeks ago, and we have keep the cash for the moment. We didn't reinvest on something else, so we are more neutral on equity. But we still like, obviously, gold and commodities, agriculture for the moment.
Valerie, what is the rationale for gold? Because it has not performed during this conflict.
Yeah, I know, but the move was very, very high the last few months. But it's still a very good edge. For the moment, you can see maybe the gold is a little bit in favor versus maybe dollars, but is what's happened in geopolitical reason. The dollar also start to be a little bit edge. So we still believe that on the long term, gold is very important to have as the diversification, and we're still positive on it. On all precious metals, I have to say.
What would you have to see? Yeah, Valerie, what would you have to see across the equities? What would you have to see to become more constructive on equities? What specifically would need to come to bear?
For me, there is a hidden risk. We have seen start to see last week about this, all this private credit. We have seen Morgan Stanley and Cliffwater, they limited redemption in private credit vehicle last week. And when investors are gated in illiquid strategy, they often need to raise some cash from liquid asset. And this, for me, can be a quotation of what can happen. So pressure doesn't start in equity right now, but it can go through the equity. The volatility can come from asset to another one if people need to have liquidity. And for me, one of the bigger fears, like when you liquid winner, just to actually funding reason rather than fundamental, that's not very good. We are not here yet, but I think that's something we need to be cautious and ever look.
Yeah, Valerie, so if we do see some sort of contagion from that private credit story into other assets, you talk about equities, is it more likely that investors would sell equity stakes or liquid public debt markets or gold holdings? What would people be selling that's liquid to try and cover themselves if they're not able to sell private credit?
That's a very good question. I think you know, when you are forced to sell, you're going to set what, you know, what actually you have gained some money normally. So then it depends on what you have bought. But as I said, I talk about equity, but it can be something else. It can be crypto. It can be treasury. It can be a lot of things. But yeah, you need to be. Normally, people do the due diligence to what they're gonna, you know, what they gain and what they can sell, and so. I don't know exactly what they're going to do, but when you're forced to sell, you're going to sell what you have liquid on your portfolio.
Okay, so that's a clear risk factor for you in terms of the private credit markets and the linkages to other assets. Valerie, what's your take on the dollar right now? Do the gains that we've seen in the last few weeks for the greenback do they get unwound pretty quickly?
I think the dollar can strengthen much more than you know, maybe the market was expecting, even against Swiss franc. So it's really linked to the geopolitical stuff, and by the fact that we don't know now if the Fed's gonna, you know, reduce the rates. The market was expecting more or less 2 or 3 cutting rates by the end of the year. With what's happened, maybe the central bank will, you know, reevaluate what they have to do. So that's you know, good strength for the dollar for the moment. But everything is almost linked. But we'll see already by the end of the week what's going to happen and what the market's going to anticipate. But yes, it's to be very cautious on every move that's happening right now. And as I said, it's more a headline market than a fundamental for the moment.
Valerie, thank you so much. That's Valerie Noel, Head of Trading at SYZ Group, SYZ Group. Thank you so much for joining us. Well, let's check in on the core 6, shall we? We have got the likes of LVMH and Rheinmetall in focus once again, and actually strength for LVMH. We did have that overnight, surprisingly strong data out of China, perhaps benefiting them. We also have Rheinmetall up 2.5%, following on from the developments in the Middle East over the weekend. Schneider is just in the red there, but gains for most of the core 6 this morning. Let's check in on some of how the individual stocks are moving this morning. Let's go to Charlie Wells. Charlie.
Good morning, Lizzie. So a lot of movement in that banking sector. Some really interesting headlines coming through about that takeover offer of Commerce Bank by UniCredit. So seeing Commerce Bank, which UniCredit is offering at a premium to their close on the 13th of March, we're seeing that in the green, up well over 4%. You see UniCredit there down a bit, slightly unchanged, but just down a little bit. There might be some concerns there about, say, execution risk, about the cost. We do know that Commerce Bank shares, well, they're up right now, and they've been up since the disclosure of that 30% holding of Commerce Bank by UniCredit back in 2024. So watching that deal news, the market liking what it's seeing, at least from the likes of Commerce Bank. Also, we're keeping an eye on UBS because there were reports over the weekend that that bank would find out in April how much the Swiss government wants it to hold in additional capital. This has been a big issue for UBS over the past couple of years, so really focusing on that. We've been talking about M&A, and that's another thing that we're seeing in this market. We got to bring up the screen for Amplifon. So this is an Italian hearing care company. They have made some M&A news acquiring the hearing aid business of a Danish competitor. We're seeing that down significantly, 9.5% there. Could be concerns there about cost as well. Some of that, the difficulty there, some of the competition, and again, you know, taking a look at how much red we're seeing there. I'm going to flip because we've got to talk about defense. This has been such a big story in the news as well. Well, look, before we get to defense, we just saw that green there from an energy company, I believe. But looking at Hensoldt, up over 4.5%. They got an upgrade from an analyst, and we know that given this environment, given the concerns that we're seeing, a lot of these defense companies are in the green, and we're seeing that from Hensoldt today.
Charlie Wells on some of the stocks on the move. Charlie, thank you. We're seeing Meta called higher as well, pre-market. This on a Reuters report that the company, of course, and the parent company of Facebook could be looking to cut about 20% of its headcount. They employ about 76,000 people, so we're looking potentially at 14 or 15,000 people if these reports are confirmed. But the stock is getting a lift on this, up 2.6%, reportedly to offset the heavy spend on AI capex.
Yeah, absolutely. Watching that one. And of course, we're still in that weird period, aren't we, where we get in the European time zone, pre-market, an hour earlier than we're used to. That's why it's happening in the 8th hour here in London, in case you're confused. And this goes on for another couple of weeks, doesn't it, before we spring forward here in Europe.
Spring forward. I like that, Anna. Coming up, talking of springing forward, more on UniCredit's €35 billion, almost $40 billion takeover bid for Commerzbank. We've been hearing from the CEO of UniCredit. We'll bring you the latest on that potential significant tie-up between the two lenders. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back, everybody. This is the opening trade, 17 minutes into our trading day on Monday, the 16th of March. And this is the picture for you. Overall, not moving very far on these markets. And some of these major markets actually pretty range-bound, pretty flat. As we look ahead to a US session where futures are pointing higher, NASDAQ futures in particular up by 0.5%. We talked about Meta a moment ago. E-minis up by 0.5% as well. We have a lot of focus this morning on what's happening on energy prices. Lizzie, we're up by 3% on the Brent price and some of the energy names being supported by that. We're also very focused on the banking sector.
Yeah, and where we are finding some movement is in shares of Commerzbank and UniCredit, in opposite directions, mind you. On the news this morning that UniCredit's made a €35 billion bid for the German bank. For more, we're joined by Bloomberg's Tommaso Ebhardt, and good morning to you. What are we to make of this? Is it a bid? Is it not a bid? You've got UniCredit saying it doesn't expect to actually take full ownership just yet.
Yeah, let's try to unpack what's happened, a few minutes ago. So essentially, UniCredit launched a takeover bid in shares for Commerzbank, and so this is a fact. But at the same time, Andrea Orcel is saying we don't plan to take full control of Commerzbank with this bid. So why you're making the bid? So he's making the bid because UniCredit was already very close to 30%. Commerzbank is doing some buyback of its own share, which probably would have let UniCredit to cross the threshold. So making a formal bid with a very small premium, 4% versus the closing price, makes UniCredit in the position to then have free hands if they want to further raise their stake in the future, and somehow is telling the market, I'm here to stay, and I'm here to open a formal dialogue with Commerzbank top management at this stage. So yes, it is a takeover bid. No, UniCredit is planning to take full control of Commerzbank with the bid. But yes, Andrea Orcel saying we are here to stay.
And Tommaso, you point to that 4% premium, and you suggest it's modest. It is modest, and then you talk about the fact that they want to have talks, maybe. Do you get the sense that Orcel is seeing something, hearing something within the kind of halls of power in Germany that may actually move this conversation further? How is Germany likely to respond to this?
So, I mean, as we know, Germany so far has opposed a takeover bid by UniCredit. It has said quite vocally they don't want UniCredit to make a takeover bid. What has changed? At the moment, we don't know. We are waiting to get, any feedback from the German government on this, from German authorities. I think that this is quite crucial somehow, that Andrea Orcel is coming vocally and say, we are still interested in Commerzbank. We have a stake which is getting close to 30%. We're making a bid to cross the 30% stake, which gives us free hands. So if there is a message here that Andrea Orcel is giving, is that we are here to stay and we are still interested in making this deal, and he's starting doing a takeover bid, which most likely he's saying won't allow UniCredit to take full control, but it is a bid.
Okay, so Tommaso, so it's interesting. So he's here to stay. He's keeping his options open, maybe suggesting if anybody is going to take ownership of Commerzbank, then he's certainly at the table. But are we any closer to getting any of these cross-border M&A deals done within the banking sector? Because so far they've remained elusive.
How many years we have been discussing about the fact, generally speaking, the market, that Europe needs strong banks to compete with the American, with the Asian, with the Chinese banks. This is something that every politician tells you is right to do it, but when it gets to actual bid, then we see again, nationalism prevailing. Let's see if UniCredit, Commerzbank would eventually be the first case when we get to a cross-border big deal in Europe to start, the creation of an independent, bigger, stronger banking industry in the European Union. We'll see in the coming weeks and months.
Tommaso, I think your exhale and your sigh there on that question tells us a lot, doesn't it, in terms of the prospects of banking union across the EU. Tommaso Ebhardt, thank you very much indeed with that update. And Commerzbank is up about 3.8%. The stock so far, UniCredit under a little bit of pressure, down a little over 1%. Back to oil now, gaining this morning as supply risks in the Middle East escalated following a second attack on Fujairah, a vital port in the UAE. For more, Bloomberg's energy reporter Anthony Di Paola joins us from Dubai. Anthony, let's start with the latest then. What do we know about this attack?
Good morning, Tom. There was another attack this morning that follows an attack on Saturday. We're still waiting to hear about what the damage assessment is there. Apparently, there were some strikes to some crude tanks on Saturday, and we are waiting to see if that's the same thing that's happened again today. What we do know is that there was a strike with drones, caused a fire in that industrial area there, and oil and crude loadings have been suspended there. The significance of that is that Fujairah is the UAE's main oil hub that's outside of the Strait of Hormuz. Of course, Hormuz has been shut off because of the conflict now, and so we're losing about a fifth of global daily oil exports and daily oil consumption that usually passes through Hormuz and goes from the Gulf to global markets. So that's completely cut off now. The only outlets that we had were two pipelines, a Saudi pipeline to the Red Sea coast in the west of that country, and then the UAE pipeline from Abu Dhabi's main onshore oil fields to the Emirate of Fujairah, which has access to the open ocean. So that's been targeted. That's a risk because ships will be reluctant then to call there if they know there's the potential of a strike. So we're still waiting to see if there is any real damage to the loading infrastructure there. But in any case, you could almost say that some of the damage is done by showing that that port is vulnerable.
Yes, a reminder that it isn't just the Straits of Hormuz that are proving to be difficult or impassable. Now, President Trump is urging NATO allies and China, Anthony, to reopen the strait. What do we know about the pressure that President Trump is applying and what he is looking for?
Yeah, well, that's going to be a tall order anyway. I mean, so far we've seen these entreaties to allies done by some comments on Air Force One over the weekend and several social media posts on Truth Social. Asking allies to send their ships, saying that these countries, allies and none, he also called on China to come because those countries depend on Hormuz for their oil supply and for the exports that go mainly to Asia from there. But of course, we know that the market is a global one. So despite the fact that the U.S. has a sizable amount of oil production and even exports, the U.S. is still subject to those global market prices, which are up over $100 a barrel now because of this blockage at Hormuz. We have seen global countries come together. There is still a coalition in place to help vessels go through the Bab el-Mandeb Strait at the mouth of the Red Sea. So as we know, the Houthis in Yemen had been firing drones, missiles, some vessel attacks on shipping going through there, oil tankers, cargo vessels, everything. So that cut off a lot of traffic through the Red Sea going to that vital Suez Canal. That added time, added costs. The global economy is still adjusting and recovering to that. But the international coalition was really unable to fully open that and to fully stop those attacks. So we'll see an even greater challenge in Hormuz, which is a much more narrow passageway and much closer. It's right on the Iranian coast, so they have much more access to that. So it's going to be a big challenge if that coalition comes together.
Anthony, thank you very much. Bloomberg's energy reporter Anthony DePaola in Dubai. And of course, Lizzie, this takes our attention to renewable energy, which is increasingly in focus.
And indeed, we're going to be speaking to the CEO of Europe's largest renewable power generator, Statkraft, as electricity prices are projected to increase following this surge in oil prices due to the Middle East conflict. That conversation coming up next. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air, and they want clean water, and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg. At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
This is the opening trade. We're 30 minutes into today's session and we're treading water in European equities this morning. The Stock 600 is flat to the upside. We're seeing outperformance for the FTSE 100 here in London, up 0.3%, which corresponds with the gains we're seeing for oil. Brent above $105 a barrel at the moment. We have seen a crucial port in the UAE hit again as it suspends oil loadings, hence the gains for the FTSE. But across the continent, Tom, this morning, pretty range-bound.
Yeah, not a big surprise to your point that energy is leading in terms of the sector, up a full 1% on the back of higher Brent and WTI prices, again, on what seems to be a ratcheting up of tensions and the conflict, of course, in Iran. Across the members, then, this is the breakdown on what is essentially, as Lizzie was saying, a flat market. You've got 242 members of the Stock 600 in positive territory. The majority, though, are under pressure in the session so far, down 340 stocks in negative territory. Volumes have dropped pretty significantly, though, down 40%, as you can see, versus the 20-day average. Let's flip the board and have a look at some of the individual names, the leaders and the laggards so far this Monday morning. There's some idiosyncratic stories as well. Abivax gaining, as you can see, almost 3% after Jefferies initiated coverage of Abivax ADRs with a recommendation of buy. Commerzbank, of course, really big story in terms of the potential merger, at least an increase of the stake by UniCredit. Currently has 26%, going for more than that. Commerzbank then gaining on the back of that Orchel move, up 4.3%. That is a potential 35 billion euro, $40 billion bid. HSBC, in the meantime, news on Friday that both HSBC and Standard Chartered are set to be among the first licensed stablecoin issues in Hong Kong. HSBC up just 0.5%. Let's flip the board and have a look at the laggards this Monday morning then. Amplifon. This stock, as you can see, down 5.6%, falling after news that it agreed to buy the hearing aid business of GN Stornord for about $2.6 billion. UniCredit is the flip side, of course, of the Commerzbank story with that takeover bid, or at least increased stake bid, currently down 1.6%. And Vistry Group falling 2.7%, dropping as UK home building pressure continues. Expectations that the BOE will not be able to cut rates as quickly as some had expected. The BOE decision, of course, later this week. Some of your individual stocks moving this Monday, Anna.
Let's get an update on some of the bigger picture stories we're covering this morning. Spain's Conservative People's Party has won its third regional election in as many months, while Prime Minister Pedro Sanchez's Socialist Party also posted a strong showing. The People's Party won 33 seats in Castile and Leon's 82-strong legislature, with almost all votes counted, with the Socialists increasing their tally to 30 seats. Economic data out of China this morning has surprised to the upside, with industrial production growing at its fastest rate since September. Retail sales also rose, while fixed asset investment unexpectedly expanded after contracting for the first time ever last year. And Iran is denying US President Donald Trump's assertion that it wants ceasefire talks, launching fresh attacks across the Persian Gulf and forcing a suspension of flights at Dubai's main airport. Trump called on world powers to help the US reopen the Strait of Hormuz by sending warships to provide escorts to commercial vessels, but none of the countries have so far said that they're yet willing to do that.
Okay, let's get another view on the energy piece as we see that disruption in the Middle East as European oil and gas prices, of course, soar due to the war with Iran. Banks like Jefferies are betting that the conflict and reduced tanker traffic from the Strait of Hormuz will give clean tech another boost. Joining us now is Birgit Vardal, CEO of Statkraft, Europe's largest generator of renewable energy. Birgit, good morning. Thank you for joining us in the studio. Let's just start broadly with how this conflict is impacting your business and how you would expect it to impact renewable energy in possibly the months and quarters ahead.
Yes, so in the short term, this of course leads to increased revenues and higher electricity prices, both for us and the electricity markets. This is not good, however, because it has a negative impact on our customers, on Europe consumers. Looking ahead, as you point to, this is an opportunity for us and for the industry because Europe needs more renewable power to reduce cost, reduce emissions, and also increase energy security in homegrown produced electricity.
So just putting a pin on the here and now of higher prices, and you said that's not ultimately good. We know there are potential discussions in Europe about a price cap. Have you heard anything about developments on that front? Are we getting closer to some kind of price cap on energy prices?
Well, this is a discussion that we also saw back in 21-22 when we had the invasion on Ukraine, and the European Union concluded then to not introduce this. There were some countries that did do it. We are pushing for the same now. Marginal pricing is important in order to stimulate more renewable build-out. It's important to use the most cost-efficient electricity source. And it's really the long-term solution is to build out more renewable, not to do a short-term adjustments.
Yeah, Birgitte, good morning to you. Can I ask you more about marginal pricing then? Because some people here, gas prices have gone higher, oil prices have gone higher. Let's do more drilling and try and bring down those prices. And partly the reason they do that is because marginal pricing means that the gas price has more of an impact on just the gas price. It has an impact on what customers are paying for renewable energies. I mean, doesn't that sound as if it needs reforming in some way?
Well, marginal pricing is what almost all markets are doing, and this will drive the prices down over time so that we will build out more renewable power. Then I think I would turn the argument around. It's really because we have to import gas, because Europe has to use gas, that we see higher prices, while developing more renewable, building out more renewable will drive costs down. So we need to use these price signals to get more renewable into the system that will drive costs down.
So as a result of renewable build-outs and other changes since 2022, how much more resilient is Europe in the face of these higher oil and gas prices?
Well, it's better now than it was back in 2022. We see since 2020, the marginal price where gas is setting the price has gone from 72% of the hours to 40% of the hours. So this is a positive trend. We also see that in 2025, wind and solar generated more electricity in Europe than all fossil sources together. So both the marginal pricing and the EU ETS is really supporting the long-term trend for renewable that we all need.
But Birgitte, solar build in Europe stagnated as expected to fall in 2026, I think. Do you think that the stationary batteries, the electric vehicles which can charge during the day, will help to reverse that trend?
Yes, so we still have a significant build-out of solar, but it's not increasing year over year, but it's still a massive build-out. What you point to is that we see in the electricity market hours with negative prices because we have abundance of solar. So we need to install more batteries, both at home, we can use cars, as you point to, but also commercial batteries, and we need to expand grid. So these are elements that we need to bring into the system at a higher pace in order to adjust for the negative hours.
And what can be done, you mentioned the grid, to kind of reduce that bottleneck?
Well, it's to have a stronger grid across Europe, even within a country. You will reduce price differences between areas, and then you will sort of average out the prices and the consumption. between one area that maybe has a lot of solar production, another area that has a lot of wind production, and with a stronger grid in between, you can complement each other with those sources.
And we were just showing images there of all kinds of renewable energy sources, Birgitte, one of them onshore wind. Do you see the policy restrictions around onshore wind in certain parts of Europe changing as a result of what we're experiencing right now?
Well, we have seen over the last year a push for faster permitting and more build-out. Then, to be fair, there are local opposition against some of the build-outs that we are also facing challenges on. Having said that, the growth we are expected to be 4 times the growth of what it's today in 2050. So we still think that because of the low cost, because of the clean energy, we will see more wind also coming into the system.
Do you think we look back in 2 years, 3 years' time and think this was a pivotal moment which catalyzed an increased build-out and a shift into renewable energy? Because we could have made that same assumption about Ukraine, and it didn't happen. We opened up coal mines in Germany. We imported more gas from the United States. We talked about reopening nuclear power plants. How pivotal, how consequential potentially is this moment for that renewable shift that has faced that domestic political pushback?
Well, I actually think Ukraine was also a pivotal moment because we have, so the European Union came with the Repower EU. They reduced the permitting time. They really had a push for more renewables. And if you see the growth of renewable over the last few years and the speed that takes over for fossil fuel, I think that was supporting it. And now, as you point to, this is another opportunity because what we see and that we saw then is that it's when gas prices are high, it's when we get these demand shocks that prices are going up. So with more renewable into the system, we will bring costs down over time. And I think that's the understanding that we need to bring forward.
And that statistic you gave us earlier, I think, is really pivotal then to that point that Tom's getting at, that and that you made earlier, that in 70% of cases previously, the gas marginal price was setting the price, and now it's 40-something, you said. So we are a lot less affected by gas prices than we were back in 2022. So when you see European leaders gather and they all want to do something and say something, is your advice then, of course, do what you want to do for the most affected in society, but don't change the system? You think that the system is fine?
Yes, we believe that the system is what will bring us forward, but we, of course, understand that there is a need to look at compensation mechanism. But rather than changing the system, let's rather look at some compensation at the back for the society.
Are you facing supply chain constraints right now as a result of what's happening in Iran?
In the short term, not so much, but we expect to see that coming if this crisis extends, for sure. And also inflation will go up and our supply chain will.
So that's largely a cost impact that you expect across your business?
It's a cost impact, and it may lead to delays in our project, but it hasn't shown up yet. But if the crisis extends, then we expect to see
How long does it have to go on for it to be a difficult time for you?
Probably a few months, and then you will see delays sort of having a bigger impact on our projects. We are currently constructing 30 projects across Europe. We have a pipeline of 400 projects, and we need to move these projects forward all the time. And with longer sort of extension of the crisis, the more this will hurt our business.
Okay, Birgitte, thank you so much for coming to see us. That's Birgitte Vartdal, Statkraft CEO, with us in studio. Well, coming up, we'll be speaking to the Director General at the European Steel Association about the disruption in that industry caused by the conflict in Iran. That conversation next. This is Bloomberg.
cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We are 45 minutes into our session, and things have deteriorated in terms of risk appetite just a little bit over the last 45 minutes. So we're down by 0.2%. The FTSE still just above the flat line, but we do have the CAC 40 now down firmly in negative territory, down 0.3%. Basic resources and banks and autos are the worst performing sectors. Energy and real estate doing the best this morning. Let us put geopolitics front and center once again. Aluminium Bahrain has started a phased production shutdown at the world's largest single-site smelter. The company, which is known as Alba, is trying to preserve its inventory of raw materials and keep other parts of the plant operating. Alba's move comes as the metals industry braces for widespread supply blockages. Let's get now to Bloomberg's chief Europe correspondent, Oliver Crook, who's in Brussels with a guest, Ollie.
Yeah, that's right, Anna. As sort of Europe is trying to get its arms around all the secondary impacts from this war in Iran and the sort of the disruption it has created to obviously supply chains, but also to energy prices, we're very pleased to be joined by Axel Egert, who is the Director General of the European Steel Association. Of course, steel being one of the most important commodities that is produced in Europe for everything from building, housing, naval ships, the full defense build-out, but also one of the most energy-intensive and thus one of the most sensitive to the activity we've been seeing in the Gulf. And I'd like to begin, if we might, just by quoting one of your reports that came out back in December. You said there was the negative conditions were unchanged. U.S. tariffs, trade disruptions, economic and geopolitical tensions, protracted weak demand, still high energy prices, all continue to weigh on European steel market. That is now, in almost every category, much worse. What is the situation as we stare down the barrel of this now conflict in Iran?
Yeah, we are actually in a perfect storm, if you want to say so. The impact of the Middle East crisis has again a quite significant rate on our industry. Gas prices have increased by 50% over the last 3 weeks. So that has, of course, a direct negative impact on our industry. It has an impact on the margins of the company. So we have already very slim margins, and that, of course, is a major setback, and the crisis should not take too long.
And so help us sort of understand kind of more concretely what it's going to mean for steel producers. Does that mean that they're going to have to shut down capacity because it is no longer sort of economically viable? Does it mean more job cuts? For example, in the German economy, we saw 10,000 industrial jobs cut every single month last year.
Yes, indeed. If this crisis takes longer than expected, then of course it will have exactly the impact you just described. But we are hoping that this will over in a few weeks' time, so that we can come back on a basis where the EU has actually started to support our industry. We will have a new steel trade measure tackling global excess capacity, and if that comes into force on 1st of July, it could have a positive impact for our industry.
And I want to get to the European measures in just a moment, but in terms of that timeline that you're talking about, when is the sort of critical moment? At what point do you really grow worried when this war drags on for another, say, how many weeks?
Yeah, several weeks. I cannot predict how long this will actually take. But
when is the sort of flashing red for danger for the steel industry? When is it really a critical moment?
I would say 2 months is getting really critical. It also depends, of course, on our downstream industries. Demand, yes. What will be the impact on demand in the EU steel market? And that is determining the fate of our industry.
Yeah. But of course the EU was founded as a steel sort of union back in the 1950s. Now in 2025, last year, you just told me that they produced the least amount of steel ever in their whole history. So in the year 2026, what does the EU need to do to support the steel industry?
We believe there are 4 or 5 issues to solve. First of all, bring down electricity prices to around about 50 euros per megawatt hour. Secondly, solve the global steel overcapacity spillover impact on the European steel market. There we hope the new steel measure will come into force 1st of July. Third, fix the carbon border adjustment measure, where we should have a level playing field on carbon costs, which only EU players are paying today, but not the imports. 4, we need to have made in the EU for greener steel made in Europe. Otherwise, we will have problems to really come back on track in steel production in Europe.
So you mentioned a few things. I'd like to get into the details of at least one of them. There's going to be an active debate this week as energy ministers convene as we speak right now to discuss, but also at the end of the week, European leaders, the question of the emissions trading system that exists within Europe, which is seen by some as just a massive tax on energy. Others are saying it's an effective climate target. Of course, a lot of the European steel companies have been adapting their business models to conform with the ETS. What is the view from the steel industry in terms of what should be done with the ETS?
The emissions trading system is definitely a tool that can work. The disadvantage we have here is that it's a unilateral tool. It's only applied to European industries, not to those who are importing products from outside the EU. So that's, of course, an issue. We have a crisis today. That does not mean that we should abandon the ETS, because a number of our companies are already transitioning to low-carbon steelmaking. Others have more difficulties. For example, in Central Eastern Europe, we have companies that do not have access to cheaper electricity, that do not have access to funding for capital investment in new technologies. So there the situation is much worse than, for example, in Scandinavia. From that perspective, we need a balanced approach. What we are asking as a European steel industry is not to abandon the ETS, but to slow down the CO2 free allocation phase out.
Okay. And then also talking about the other theme that is obviously is top of mind for the steel industry, trade, the tariffs with the United States now currently on 50% for steel and, of course, the sort of derivative products. What are you hoping to see in terms of those negotiations? And as a second part of that, the consequence that we've seen from U.S. tariffs on the Chinese side, how concerned are you from dumping from there? So both the U.S. and China.
Yeah, first of all, we lost 30% of our steel exports to the U.S. in just 6 months after the 50% import tariff by the U.S. Last June. So this is, of course, a shock for our industry. On the other hand, there was agreement with the EU that there should be discussion how to tackle global excess capacity together with the US. So we hope that we will come back to that discussion in the next few months. Secondly, impact from China is significant. We have quite a number of trade defense measures on Chinese steel, anti-dumping, anti-subsidy, but currently the Chinese are able to undercut this again and export again significant volumes to the US. So it's important to tackle this again.
And something we've talked about a little bit less are these trade deals that have been struck with Latin America, with India. They're not fully implemented, but I'd like to get your appraisal from the steel industry and what effect this could have on the European steel industry.
First of all, it could have a positive impact because our customers, the automotive industry, for example, is exporting to Latin America, so there are some opportunities there. The automotive industry has had less possibilities to export to India because of the protected market in India. The opening of the India FTA, of that market, for the automotive industry could also help us.
Well, Axel Egert, thank you so much for your time. Director General of the European Steel Association there, called Eurofair, on all the issues that are affecting the steel industry, a very long list of them, added only by the war in Iran. Lizzie.
Oliver, thank you so much. That's our Chief Europe correspondent, Oliver Crook, in Brussels. Thank you. Well, let's take a look at what else we're watching throughout the week. Today, we have US-China talks continuing in Paris. We also have the NVIDIA GTC, the CEO, Jensen Huang, delivering a keynote at that GPU technology conference. Then tomorrow, we have the RBA's rate decision, one of the few central banks actually expected to move, a back-to-back hike expected here. We also have President Trump hosting a bilateral with the Irish Taoiseach, Micheál Martin, before on Wednesday we kick off with the rate decision from the Fed, before on Thursday the BOE, ECB and BOJ rate decisions. We also have the Japanese Prime Minister Sanai Takaichi visiting the White House, and on Friday the EU Leaders Summit. Tom.
Okay, let's bring in Skylar Mongori-Koning right now from my MLive team. Skylar, is this a market this week that remains captured by headlines versus fundamentals?
Yes, I mean, absolutely. We haven't really gone anything new over the weekend. I think, if anything, markets are a little bit more worried about the conflict being protracted. If you look at betting markets, there's more worries now that'll go into kind of April and May, and that's quite negative. And I think what's also negative is just this idea that if you have an environment where you get continued uncertainty, that's a negative in itself, because you get pinged around by these headlines coming through. You have to react to them, because if you do get the move, it will be quite large. And so you have this heightened volatility, this choppiness, and that's negative for equities in itself, because it means that if your economic environment is more uncertain, that means cash flows are more uncertain, and you should demand a higher equity risk premium. It also means that financial conditions are automatically tightening, so you get wider spreads, higher equity risk premium. That means that there's less confidence, and you have, less buybacks and issuance, and you also get this mechanical de-rating, or de-risking rather, when volatility is elevated, because some strategies have to sell automatically when volatility is high, of that high volatile asset, into other things.
Okay, and it's a big week for central banks. The RBA is up first. If we're going to get surprises this week, Skylar, where are they going to come from? Maybe that's an impossible question to answer.
Yeah, I mean, I can tell you where they're not going to come from, probably the ECB. I think the RBA is interesting from the perspective of back-to-back hikes. And it's also interesting because despite the Australian economy being relatively small, when we had a hike from them in February, there was a feed through to other markets. There's not a lot of comparisons that you can make between Europe and Australia in terms of one's an energy exporter, one's an energy importer, etc.
And they were already hiking, right?
Yes, and they were already hiking, but I think you'll still likely see spillovers, and the spillovers are most likely to be in those kind of fiscally vulnerable economies. So the ones that have a tendency to underperform during a sell-off like the UK, or the economies that were already at the end of the cutting cycle. Markets always look for hiking cycles as soon as the cutting cycle ends. And so there's kind of this bias to want to look for that, and that's Europe and Canada.
Do you know what's weird? Oil's up, but traders are trimming bets on ECB and BOE rate hikes. Weird one. Skylar, thank you for coming in. Skylar Montgomery-Koenig from our MLive team there. Thank you very much. Well, we are looking at a pretty range-bound session here in Europe. The Stock 600 flat to the downside, and not a whole lot of movement elsewhere on the continent. That's it for the opening trade. The Pulse is up next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Iran denies President Trump's claim that Tehran wants ceasefire talks, while Dubai's main airport and a key oil port in the UAE are both targeted in a fresh wave of attacks across the Persian Gulf. President Trump says he is, quote, demanding other countries contribute to the defense of Hormuz as it remains effectively closed to oil tankers. And UniCredit makes a 35 billion euro takeover bid for Commerzbank, but says it does not expect to take full ownership just yet. So there is quite a lot going on in the markets, not only in terms of M&A, but everything that's happening in the Middle East. So we look across assets to S&P futures are gaining some 0.4%. Look, I have to say the stocks futures are rising. The focus definitely on oil, and the focus is whether there are any signs that the Strait of Hormuz will reopen, as well as a slew of central bank meetings this week. Again, the U.S. president actually urging other countries to send warships to keep open the Strait of Hormuz, and you can see Brent at 105.25. This is a picture for the European markets map. Again, a little bit of concern out there, but nothing like we saw in the last couple of trading days. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So the U.S. president is ramping up pressure on other countries to contribute to securing the Strait of Hormuz, which Iran has effectively closed to oil tankers. Now, speaking to the FT, Donald Trump threatened to delay his summit with China's president and said that NATO would face a very bad future if they don't help secure the vital shipping channel. Well, speaking on board Air Force One, the president said he was in talks with 7 countries to get involved.
Really, I'm demanding that these countries come in and protect their own territory, because it is their territory. It's the place from which they get their energy, and they should come and they should help us protect it.
Well, reports this morning say a major port in the UAE has been hit and damage there is being assessed. It's one of the world's largest oil storage sites. Now, events in the Gulf are adding to inflationary pressure around the world. Central banks are about to make their first assessment of economic damage after more than 2 weeks of conflict between the U.S. and Iran. Now, ahead of its Global Investor Summit this week, Bernie Mensah, the president of International at Bank of America, is here with me. Bernie, thank you so much for joining me. As always, there's, of course, a lot going on. There's a lot of anxiety about inflation, about, of course, also what happens to people in the region. Like, how do you view this as a first and second round impact?
I think that, thanks for having me here, Francine, good to see you. I think this week is a lot of central bank meetings coming up, and I think that's exactly what they're thinking about. Is it a tightening because you think there's an inflation shock coming through, given the supply shock, or is it actually a hold or a weakening because the second-term impact might be a weakening in growth? So I think that's the question that the markets are trying to think through right now.
Do you worry about some kind of policy mistake? Because, again, things move pretty quickly, and we actually don't know what happens to the price of oil or the Strait of Hormuz.
Yeah, I don't worry too much about that, but I think they'll make decisions. We'll have to adjust to them. I think they're trying to make the right decision given the information that they have, as are all of the markets. So the key question is it temporary? And actually, when you replay some of the conversations we had during COVID, that's really the debate that they will have. I mean, my sense is that there will be a bit of a supply shock. How that feeds into different inflationary bits, we'll have to see. But there's an element of physical constraints as well as the price constraints as well.
How are your clients behaving?
I think that everybody is back to some of the playbooks of thinking, okay, what does this mean? Really trying to look through the fog and figure out where things land. It depends where you are. If you're close to the epicenter of the power markets, and in fact, some of those are sovereigns and countries that are thinking through what their supply chains might look like, not just in the headline crude, but in all of the products, even all the way through to things like sulfur that might drive, copper production. So everybody's just going back and figuring out what resiliency they have, where else they might go.
So this is like shifting supply chains. Is there also less spending in general, or are chief executives not buying anything at the moment because we're a little bit in a wait-and-see situation?
Well, I think in the M&A space, we saw a transaction announced in Europe, but actually there might be more spending in the CapEx space because you're actually rushing to secure other production. It's interesting because we are looking at a lot of the constraints that might come through, but I suspect if you're in the energy industry, there might be some other supply that might be coming online that might be seen as more viable. Even if it doesn't come in on time, I suspect that there'll be more resiliency. There might be other gas, provinces that might, now be more incentivized to be online.
Bernie, do you have any clients actually saying, I just want to get out of the markets right now and wait and see what happens in the next couple of weeks?
It's really interesting. Last week, my sense was not, when I was talking to a lot of our traders and trying to figure it out, you could see that people didn't want to miss the bounce, as it were. So people were not leaving the market, but maybe they were not leaning in. I think that the longer this goes, I haven't seen yet a sense of, okay, where's my safe haven? Where do I go and park myself? Which feels like it might just be at the very, very short end. I think a lot of people are still trading in the market and sort of saying, look, at some point there will be an end to this. And when that happens, I need to keep an eye on where the fundamentals are. And
have you gotten more calls from your Asian clients than European clients? Or, again, depending on where you sit, actually, you live this very differently.
Yeah, absolutely. It's such a global thing. I think out of Asia, there's been, there's a big rally in Korea earlier on. In Japan, the new Prime Minister Taki came on, so you can have a whole dialogue around that. There's a China-Hong Kong piece in terms of how the Hong Kong markets have been and what China's reaction function might be. In Europe, there's still an eye on Ukraine, you might say, and there's a sense that maybe the energy markets are a little bit more, face slightly more challenges than perhaps the U.S. But then if you look at TTF and other crude reactions, it's much less this time than it was during Ukraine. So I think it's spread all across, really.
Bernie, what are you doing for your staff on the ground?
Oh, we, at the moment, we're really work from home. We're giving them as much support as we can. I have a call with some of the team later today. We are in constant dialogue with our teams in the region. Really terrific leadership there in MENA, run by our regional country executives. So we're giving them all the support that we can get.
Are you expecting to move people to Europe or elsewhere?
No, we're not expecting to do that. People privately can do whatever they want to do, and then the firm is really helping to support, our clients, make sure that we're there to provide the liquidity, to provide the analysis. We've got a terrific research team, some in region, some outside, that are to the question you asked earlier. So all of that is going on. The resiliency is so important. And then, critically for our clients, just interacting with them and providing the liquidity. But for each individual person and their circumstances, we've got a terrific HR team that are there to support.
Bernie, I mean, the other big question is, of course, private markets or private credits. Bank of America was, just starting to get quite serious about it. What does it mean for your plans there?
I think our plans are the same, which is that we didn't rush into it. We're massive participants in the credit markets and the public markets and the DCM markets, all of that. We've been watching the private market very well. We've had debates with the private market participants, with the regulators for years as to where the boundaries should be, how that business should be. So we feel very good about our credit positioning and how we support our clients in that space.
Do you worry that, again, I mean, going back to the markets, that something happens that's accelerated in the next couple of months because of inflation going up, because of interest rates needing to go up, because of what's happening in the Middle East?
Well, I think if I can answer your question in one way, as an old trader, one of the things that has bemused me always in the markets is what causes sentiment to change. You can go through the same fact pattern and the market reacts one way. You can go through the same fact pattern and the market reacts another way. Perhaps a preponderance of things, as you're suggesting. So do I suggest a fundamental sort of break in confidence? No, I don't think so. I think that a lot of interesting things are going on in the underlying economy, in the technology space, still in private assets, in different economies that are doing well, India, places like that. But I think we have to be careful at all times that, if there is that sentiment shift that happens where everybody says, actually, I'm going to look at the glass half empty. I do think in the meantime, the dialogue that we're having about private markets, I think it's terrific, actually, because as you debate it and you shine a line on it, it's a bit like commercial real estate in the U.S. a year and a half ago. Christine, we were talking, oh my gosh, what's going to happen there? All the regional banks in the U.S. are going to stop lending. There's going to be this sort of, desert of abandon. And I think that debate around credit is a good thing, because I think it'll shine a light on it. It'll force people to look at their positions, raise, if those underwriting standards had slipped, raise them. And if we can manage through that and there's some price hits, that's okay.
So, I mean, is it like a reckoning? How would you describe it? Is it, if there is, I guess, pockets of private credit that get taken down?
Yeah. Exactly.
Was it the right thing?
Yeah, if pockets get adjusted, then that's a very good, healthy cleanup, as it were. And I think it is a resilience. People might still say, well, because I'm part of the market. But I think it is a resilience of the marketplace, where regulators are looking. By the way, journalists and media are asking the right questions. We get our credit book analyzed by 20, 30 regulators around the world all the time. So if that happens and there's a real light shines and it gets shaken up and all the stress tests happen, the US CCARs, all of those things, and other stressors around the ECB and the Bank of England, then I think we end up in a better place if we don't break the egg at the same time, which I don't think we will.
Bernie, you also have always talked about AI very comfortably. Does it change, again, given the uncertainty, does it change the game for AI or some of the valuations out there?
I think that for AI, the credit market and the energy markets will have an impact on the technology space, and I think they'll have to be so much tougher about the energy they use, how efficient they are, their ability to fund mega-scale data centers that can do anything. So some of that free money, some of that cheaper money at the margin may not be there. But again, that's not a bad thing. I mean, I think the amount of power and energy that we're using to drive that next 5-10% of inference capability or efficiency in the AI models will always be questioned. Because, by the way, a few months ago, there was a question of the return on those investments anyway. So this will force, more returns on that. But overall, I think there's huge opportunities in that space.
I mean, it was only 4 or 5 weeks ago. Like, you tend to forget that there was a massive, maybe not a massive, but a big daily market correction because of some of the industries that AI was going after. Does it change anything what does it change, actually, for financial services? Asset management or anything else?
Well, for financial services, I wouldn't say we're at the forefront of this. I mean, I think the debate that was happening is AI going to undermine, software as a service type companies? What does that mean? So I think there was a debate there. Interestingly, you might say we got a little bit further to the front because we're the end users of those services. So actually, the debate between the AI companies and us got shortened a little bit, because if there was a debate as to the fact that this new tool could provide a service, then they needed to understand what we need from those software service providers. So in that sense, sense, maybe there's certainly coming through from the certainly an uptake in that dialogue.
But at some point, is there a worry of how you deliver alpha if everybody has the same access to the same tools?
Oh, gosh, from what they have, yes, I have no doubt that there'll still be opportunities to deliver alpha. I don't think history is as Fukuyama said, I don't think history is dead in that regard. I think there'll be better tools, there'll be faster tools. I mean, we've seen that if you look at the foreign exchange markets. When I started this business, by the way, there were a lot of European countries, the lira, the Dutch guilder that were traded, all of that went away. Those traders went down by 70, 80%, but those desks remained the same. So machines are talking to machines trading a lot of flow FX, but we can provide structured solutions. When you go on holiday, you can decide at the point of payment if you want to pay in one currency versus the other. So I think what they'll do is they'll crowd in a level of sophistication around different asset classes and still make room for alpha generation.
Bernie, how much do you worry actually about, again, oil prices or inflation if this is protracted? So if this lasts, let's say, 1-2 months, even longer?
Yeah. I worry about I am starting to worry, and I'm getting myself educated on the physical impact, slightly less the price action. I think the price action, there's still a lot of flexibility in the marketplace to absorb that, not enough players to sort of tease that out in large oil companies and trading companies. But I worry about a supply, the Middle East being part of a supply chain that if you're not in the market, you don't fully understand. So where is jet fuel? Where is sulfur? Where are some of the gasolines and the products? Where are they actually refined as opposed to pure crude, and making sure that that ends up, and natural gas is not stored for long periods of time. It's a little bit of a just-in-time supply chain. So I think that those supply chains need to keep moving. So if those were impacted in a meaningful way, I think the markets are incredibly resilient, companies, our corporates are, but I worry a little bit about the physical aspect of where the actual molecules or products are.
Bernie, thank you so much for joining us. Bernie Mensa, their president of International at Bank of America, and this, of course, is ahead of their big global conference in Europe this week. Now, coming up, the U.S. president demands other countries step up as the Strait of Hormuz remains effectively closed. We'll have plenty more on that next, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat. There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
pressure on other countries to contribute to securing the Strait of Hormuz, which Iran has effectively closed to oil tankers. Meanwhile, a key port in the UAE has been struck for the second time in 3 days, which lies just outside the strait. Well, let's bring in Bloomberg Horizon's Middle East and Africa anchor, Jumana Barsechi. Jumana, thank you for joining us. President Trump is urging NATO allies and China to reopen the strait. What do we actually know?
Yeah, that's right, Francine. So a couple of lines here. The first is what the U.S. is conducting in terms of military operations in the region, and the second is their attempts to forcefully reopen the Strait of Hormuz. The latest being that he is calling upon 7 countries around the world to participate in this coalition of sorts to help reopen the strait and ensure the safe passage of vessels, including the likes of UK, France, of course, key NATO allies, South Korea, Japan. The defense minister of Japan has already dismissed the idea or said that the bar for them to get involved is very, very high. And then, of course, China, and China being a key player here because the lion's share of the seaborne oil that goes through the strait does end up in China's hands. We haven't had an official comment yet from China, but the state-run Global Times, which is a weekend tabloid, dismissed the idea and said this is Trump's attempt to spread the risk of a war that Washington started and cannot finish. So it's unclear at this point whether any of those countries that he's called on are going to willingly participate. At the same time, from a military perspective, as I started off saying, one of the big escalations has been that the U.S. struck Karg Island, that is the key island for Iran to export its oil. They hit military infrastructure, but in retaliation, Iran has said that they will strike back at even non-U.S. assets in the region. They are attesting that the U.S. launched those strikes from the UAE. The UAE have rebuffed those claims. That being said, we've seen several attempts, strikes at Fujairah. This is one of the key ports, strategic ports in the region, and an intercepted drone attack on a fuel depot around the Dubai International Airport this morning. So really no letting up here, Francine, and it is day 17 of this war.
Elsewhere in the region, flights are gradually resuming out of Dubai's main airport after a drone incident. What can you tell us, Drew?
Exactly that, Francine. So in the early hours of this morning, there were reports that a fuel depot very near to Dubai International Airport had been struck. It caused a fire. Shortly afterwards, the Dubai media office released a statement saying that the fire had been contained. There were no injuries. And remember, there was a similar incident to this about a week ago where there were actually 4 injuries on back of an intercepted drone. But on the back of that, the Civil Aviation Authority briefly suspended flights. And in fact, flights were temporarily halted for 7 hours. Emirates Airlines, the state-owned airlines, has resumed operations now, but with limited capacity. And of course, this is part and parcel of them looking to return back to normal, but activity levels are still way below where they were before the war started.
Jumana, thanks so much. Jumana Barsechi there from Dubai. Now, the Fed, the ECB, and the Bank of England are all expected to hold rates this week on the new inflationary headwinds from the conflict. Let's discuss what it means for supply chains and, of course, portfolios with Johanna Kirkland, Chief Investment Officer at Schroders. Johanna, thank you so much for joining us. I mean, the world is on tenterhooks to see what happens with oil and the Strait of Hormuz. This must be very complicated for central banks.
Yes, I mean, there's a number of cross-currents here, although we would argue that to some extent some of the rate cuts that have been priced in, particularly for the Fed, were a bit too aggressive. So we're already biased towards expecting inflation to be more of a risk than growth. So let's see. I mean, I think for now they'll stay put. We'll have to see how long this continues. I think there's still upside for bond yields.
Johanna, I mean, if this stays, as it is for a long time and you see dollar, actually oil staying at like 105 and going even higher, what choice do central banks have to do?
Well, I think my expectation is initially you'll see a sell-off in bond yields as they price. We still have a rate cut priced in the United States, right? So I think that probably needs to be taken out. I think while we remain at this level of oil price, I think it's unlikely. Having said that, I think ultimately, a rise in the oil price is a growth shock, I think, more than an inflation shock. So we will get to a point, the more this is protracted, the more there will be concerns about growth, the more likely it is that central banks look through this. And I think people have been drawing parallels with 2022, but it's a very different situation back then. Inflation was already surging. Rates were practically at zero as we came into that year, right? We're in a very different level of yields now. So I think initially it's being viewed as an inflation shock. Eventually, if it continues, I think it will be more of a growth shock. And I think that ultimately the central banks will look through it.
So it's actually quite tough. I mean, you could see a situation where the central banks don't do anything, right?
For now,
because they can't cut,
yeah,
or they can't hike, and so they're stuck. Does that lead to a policy mistake?
I think the policy mistake would be to react too strongly to the spike we've seen. Right. But I think that's unlikely because I think they understand the risks to growth as well. So for now they stay put, and I think that's probably the right way to be. And to some extent what has already been priced by markets. So I think it's the easiest path for them.
So what's your ideal portfolio right now?
Well, as I said, we came into the conflict already positioned for inflation. So we were overweight commodities, underweight bonds, and we were positive on equities. I think at this point, I think it's too late to be buying commodities. I think you buy commodities going into a shock. You don't buy them in the midst of a shock. We've just had a price spike. The risks are more balanced here. I think you still need to be underweight duration, though. As I said, we still need to price out some rate cuts. I think people still have to digest this shock from a price perspective. And also, we're underweight credit as well, because, again, there's very little reward in current credit spreads to take account of the risks that we see, not only from an inflation perspective, but also potentially increase in default rates. So stay underweight fixed income for now. With equities, I think volatility is likely to persist. I think that the current environment does favour exposure to the United States because it does weather these kinds of things better. But we also need to look to the medium term. The challenge here is we've got multiple time horizons going on at the same time. And we still see fairly resilient corporate earnings and a low risk of recession.
I mean, are you favourable in UK stocks compared to European stocks, or actually do you look further afield?
I think that obviously the UK has a very defensive sectoral composition, which helps it in this kind of environment. So I think people should own UK from a diversification standpoint. But generally, we would favour the US over Europe at this point because it is less vulnerable to the oil price and also benefits from some of the trends we're still seeing in technology.
Joanna, I mean, is there something actually that you look at dollar and you say, if dollar, what does dollar do from here? And that could change everything. It could change also what the ECB does because of the connection with euro.
We have actually moved positive on the dollar, and the reason is because it does help us to hedge the portfolio a little bit. Again, this is all about trying to get through the volatility without overtrading. I think it's a very bad idea to try and day trade geopolitical risk. We don't have an edge in understanding it. We do like the dollar versus the euro because, again, the US is better positioned for this kind of energy spike. I think the divergence in central bank expectations between Europe and the US is excessive now. I mean, they are still on the same planet. And yes, they have different mandates and different philosophies, but I think the divergence is excessive. So I think the dollar is a helpful position. It's positive carry and it hedges the portfolio.
I mean, emerging markets had a great year last year. What do you do with emerging market debt in 2026?
We still like emerging market debt. Our biggest concern for a number of years has been the level of fiscal spending, which puts, again, upward pressure on bond yields. But the dynamics are much better in many emerging economies. So we actually think that they offer still an interesting opportunity.
And does it depend on the reliance to petrodollars or also to oil? Or how do you, I mean, I imagine the map for emerging markets where you want to be invested in has changed quite a lot in the last 3 weeks.
In the short term, yes. So that creates, again, a need to position across different countries. Yeah. But over the medium term, what we're really focused on is better debt dynamics, which is a structural trend in emerging markets relative to developed markets where we've effectively thrown out the rule book a while ago.
Short term, but you don't know how long this lasts for, right? So are there alarm bells after like 5-6 weeks of oil at this level, or how do you look at this in terms of timeline?
Everything that's priced into the market assumes a fairly short conflict. So obviously anything more than that would cause concerns. And I think in particular, the more protracted it is, the more it poses a major risk to growth. So far, we've been positioned for very low recession risk, and we've been biased towards inflation risk. Our portfolio is designed to withstand that. If we see a more persistent rise in the oil price, and if we see this conflict continuing for much more than expected, then we'd have to start reconsidering our growth view, and that will lead to very different portfolio construction.
Yeah, overall, I mean, there's been a lot of talk about South Korea, where we saw record stocks. There's been also a lot of talk of Japan. How do you play Asia?
Well, we like China because, again, we have to remember there's a number of things going on.
Court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Iran denies President Trump's claim that Tehran wants ceasefire talks, while Dubai's main airport and key oil port in the UAE are both targeted in a fresh wave of attacks across the Persian Gulf. President Trump says he is, quote, demanding other countries contribute to the defense of Hormuz as it remains effectively closed to oil tankers. And UniCredit makes a €35 billion takeover bid for Commerzbank, but says it doesn't expect to take full ownership just yet. So on to our big corporate story, and as we were just saying, UniCredit has made a €35 billion takeover bid for Germany's Commerzbank. Now, the Italian bank says it doesn't expect to move to give it full control. The offer may rankle the German government, which holds a stake in Commerzbank and has repeatedly made clear it opposes a takeover. Our Tom Metcalf joins us with the very latest. Tom, so this is quite nuanced, okay, as you were saying. This is not like, when they say we're making this offer, but we're not going to take full control, what happens now?
Yeah, there's a lot of nuance here. There's a bit of technicality as well. So UniCredit had around about just under 30% of the stake in Commerzbank. In German law, if it goes over 30%, it basically needs to make a mandatory bid. And what it was finding with Commerzbank buying back shares is it was budging up against that 30%. And so effectively, and what I find most interesting is, what this says about long-term ambitions from UniCredit. They've gone, you know what? Let's go across this thing. Let's see if we can get, a few more percentages. And then very clearly what they're really saying is, look, this can be a moment for us to engage with Commerzbank. We want to talk with you. We're interested in doing a bid. But of course, what this doesn't change is what the German side are saying. And really, so far, it's all very much we're not interested, and basically go away.
Okay, so I want to ask you about the German government and what role, if they could at some point be behind a deal. And also you told me that they can only make a deal once a year, or an offer once a year. So after this, then they have to wait a year.
Yeah, my understanding of the time frame from now is basically this is a formal bid from UniCredit. So what they have is in May, they will go out to it. Shareholders can participate or not. The smart money is they get a few percentage points because the premium is pretty small, it's 4 or 5% from when I last checked, and then basically that kind of closes off a formal bid, at least from UniCredit, at least under the rules, right? But what can happen is talks can continue, and of course, stranger things have happened than if both sides can reach an agreement. Maybe there is some kind of agreement to lift these restrictions. So it will be interesting how it comes across, but certainly so far we're seeing all the messaging from Berlin is this doesn't really change anything for us.
Okay, Tom, thank you so much. As always, Tom Metcalf, they're in charge of our EMEA finance. Now, oil has fluctuated on escalating supply risks in the Middle East after a second attack on the port of Fujairah in the United Arab Emirates. The Islamic Republic has been carrying out retaliatory strikes on Israel and Arab states after the U.S. struck military sites on Karg Island. Let's bring in Bloomberg's Anthony Di Paola in Dubai. Anthony, thank you for joining us. So what do we know about this latest attack?
Yes, good morning. Well, we had another attack against Fujairah, which is one of the key oil ports for the UAE. That is a second attack in 3 days because they were attacked already on Saturday as well. In both cases, that they had to suspend crude and oil product loadings. Of course, Fujairah has become increasingly important because it's a port outside the Strait of Hormuz. It's the one remaining viable exit point for UAE crude because Hormuz is blocked. We've got about a fifth of global daily consumption of oil that's blocked inside Hormuz, can't get out, can't get to global markets, and that's why we're seeing oil hitting $100 a barrel. That puts a place like Fujairah more at risk because it is that viable export point, and if that gets cut off again, that's yet another bit of oil that we have halted going to market. So at the moment, we're seeing loadings there suspended as they evaluate what the damage is from that attack this morning, and then we will have to see if that remains a safe area for exporting crude oil. Again, we've had these comments by the U.S. administration about trying to open Hormuz, about trying to get other countries' navies to come in and escort vessels and potentially open that. That's, of course, going to be a tall order. So we'll have to see if that effort gets to become more concrete, Francine.
Anthony, I mean, oil price is currently at 104.8 for Brent. Where do they go next?
Well, I mean, potentially they could go even higher. It depends on whether the market is going to react to things like the attack on Karg, things like the attack at Fujairah, or whether they're going to take positive signals out of something like the flotilla that Trump is trying to put together to open the Strait of Hormuz. It looks like traders are very risk-focused at the moment, so it looks like they're really focusing on the issues around that oil flow being blocked off. If we see the oil flow being blocked off, if we see additional attacks that further restrict the limited exports that we're having now, or if we see any actual damage to infrastructure, we will see oil going even higher than we are now. But right now we're at 100, kind of on that risk, but also not higher because potentially traders are waiting to see how quickly things reopen. But here we are at the point where further damage, further hits to exports, risks us going much higher.
Anthony, thank you so much. Anthony Di Paola there with the very latest, of course, on oil and the Middle East. Now, my next guest says the 250th anniversary of the Declaration of Independence comes at a worrying moment in American history, with fundamental liberal principles under attack from illiberal forces on both the right and the left. His new book, Centrists of the World Unite, argues that America should renew its faith in its founding liberal principles to tackle the challenges ahead. Well, Bloomberg opinion columnist Adrian Woolridge joins us now. Adrian, I'm so happy to speak to you because this is a fantastic book. I I know a lot of people have been waiting for this book to, come out. And basically, you argue that liberalism needs to rediscover its lost genius. Like, what specific ideas from maybe earlier liberal thinkers do you think we could do with now?
We could do with the notion that power needs to be restrained, constrained by constitutions. We could do with the notion that truth can only be achieved through vigorous debate. And we could do with the idea that individualism should be the test of everything. But that doesn't mean just the individualism, doesn't just mean the freedom to go shopping. It means self-development, the ability to make good, sensible decisions.
I guess, Adrian, the problem is that many voters feel that, the centrists represent the status quo.
Absolutely.
And a lot of people want change.
Absolutely. I think there is a huge problem there. Liberals have become the establishment, and they've become the establishment that has made certain really important mistakes. So you might be inclined to go to the left, to left-wing populism, Greens and things like that, or to the right, to right-wing populism. I think the answer is that that's wrong. Those people will betray you, but we need a new and better liberalism.
But is the rise of populism because of the failure of liberalism?
Absolutely. Absolutely. Partly because they've become the establishment, and they've got all the deformations of establishment, self-dealing, being cut off from ordinary people. But also they have made certain big mistakes. The Iraq War was a mistake. The financial crisis was a mistake. I think the pace of immigration has upset people. So liberalism has got out of it's got out of sync with itself, with its best instincts.
But is it an idea problem, or is it a communication problem, because it's just not that appetizing on social media?
It's an idea problem, fundamentally. I think liberalism is always a mixture of freedom and control, and that mixture has got out of sync. We need to recalibrate the mixture. The mixture was always about doing your own thing morally and doing your own thing economically, and we did a bit more emphasis on social solidarity. And the communication problems and the political problems all stem from the fact that that message has failed to deal with the problems that we have now. You go to the streets of San Francisco. This is a belief that's failing to deal with terrible problems.
I mean, when you look at, again, one of the things you suggest is that liberals should be more critical of big business. Does that help, again, with the psyche of voters? I
think we've always been, as liberals, since about the 1980s, our assumption has been that big business is a good thing, that the state needs to be rowed back. And I think that that's got out of control in some ways. Certain forms of big business, the gambling industry, the big food industry, and the tech industry have become dissolving of good social habits. And self-discipline, self-control. The boom in sports betting in the United States at the moment is completely out of control. It's quite extraordinary, let alone the X and all these other social platforms that thrive on deceiving their audience, or on selling hot emotions to people who are already a bit troubled.
But is there space then for less hot emotion? Because actually it does feel like, a lot of countries are divided here, especially in the UK. Is there really space for the liberals to come back?
Absolutely. After the Second World War, we put all sorts of deliberate constraints on the expression of hot emotions in the political sphere, because we'd seen what happened in the 1930s. And those constraints have been eroded, and we have the rise of a new sort of politician, Trump being the leading member of that group, who specialise in stirring up antagonism.
But, so, Adrian, what I struggle with is that there are real concerns that people have, which is either cultural tensions or divisions or immigration. So you need to tackle those.
Yes.
And so how do you do that as a liberal if you don't want to become a populist or make sense? Actually, it's not a worry that we should have.
One of the things that liberals tend to do now over the immigration problem, which is at the heart of a lot of things, is either to say it doesn't exist, there's no problem there, and anybody who says there is a problem is a racist, or use exactly the same arguments and language as reform, as the populists. And what we need is a liberal solution to what is a real problem. And the problem is about the pace of immigration. It's about the education level of the immigrants we're bringing in. Education is a proxy for social adaptability. And it's about an emphasis on assimilation. And in the worst cases, we haven't assimilated large numbers of people who just create parallel societies.
Who in the real world is a liberal and has a chance of getting in?
Well, that is an extremely vexing question. I can't really answer that question, because I think what's happened is that we have a liberal establishment which is discredited and a bit confused. So we need to have a revolution within liberalism from younger liberals. I would say that the new mayor of San Francisco is an interesting example of somebody who says, look, things have got a bit out of control. We must have more attention to social solidarity, the state of the streets and things like that. So you are getting people coming up, mostly not politicians, when it comes to the issue of phones in classrooms. The campaign has generally been led by ordinary, engaged, worried parents rather than particular politicians, and the politicians have followed on.
So
we wait for Bill Clinton to come along, the new Bill Clinton.
Thank you so much, Bloomberg Opinions. Adrian Woolridge, of course, author of Centrists of the World Unite. It's a good book. It's an easy read. It's written with clarity and also a lot of historical reference. Now, Melinda French Gates is my first guest on the new series of Leaders with Francine Lacqua, the podcast, which launches today. Having navigated some of the most defining transitions in life, she spoke to me about leadership, resilience, and why people sometimes stay in top executive jobs for too long.
I think sometimes people stay too long because their ego's attached to the job or because they're too afraid to make the transition. And they may not even realize they are afraid, but it does take courage to make a transition. And so I try to say to them, look, there's something beautiful on the other side. You may not know what it is next. You may be afraid, but when you make the transition, you're also making room for what might come next for both you and whomever's to come behind you, right? And so I think as leaders, it's our job to understand, when is it time to go? When do we need another leader in this role?
How would you advise is it up to the people that surround them
100%.
To say, like, look, hold on, think about what you're doing, or is there something that they need to think about from day one?
I think it's both. I think they need to lay out for day one, what are they trying to accomplish? What happens if they don't get there? What is their exit ramp for themselves? Do they have a time limit? Like, if I get X done by year 5, but if I don't, will I leave? So having a plan going in, and then they have to surround themselves with people who are truth tellers and who they will truly listen to, right? Because once you get into a position of power, people are always going to tell you, you're doing well, you're doing great at this, aren't you fantastic? You have to have truth tellers around you, and you have to be willing to listen.
I feel like that's the hardest thing. It's making sure that you're not in an ivory tower where people say you're wonderful and actually you're doing things that are wrong.
Absolutely. I worry about that for myself. I worried about that at the foundation, like, who's not telling me the truth? And I knew there were a lot of people who weren't, but you know what? I could find the 2 or 3 that would tell me the truth about my leadership or something they didn't think was right about the organization. And so I had to make that safe for them. I also, outside of that, I'm very close to my family. And so my 2 younger brothers, my older sister, they will tell me the truth. And they never, ever let me think that I'm all that, especially my brothers.
And you can catch more of that interview with Melinda French Gates in the first episode of Leaders with Francine Lacqua, the podcast, which launches across Bloomberg TV at 10 p.m. this evening, London time. Coming up, we'll talk to the Irish finance minister as the EU discusses expanding a naval mission to the Strait of Hormuz. Our interview with Simon Harris is next, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's
It's what you need to think about.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
And I think, Francine, the scale of the economic impact will obviously depend on the duration and the depth of the conflict. So, of course, from an economic point of view, let alone a humanitarian point of view, the most important thing we need to see here is de-escalation. The longer this conflict goes on, the more concerning the economic impact becomes. And, of course, there is a degree of, from an economic point of view, here we are again in terms of the uncertainty channel. There's already been so much uncertainty in the world. This heaps further uncertainty on the European economy.
Do you see any signs of de-escalation?
Being very honest, I know there's a lot of effort going on from many countries, including positive efforts from the European Union. But I think the jury is out in terms of where that's going to go. But we really do need to see that de-escalation, both from a humanitarian point of view and from a global economic point of view, too.
Are you expecting the Irish government to have to intervene to do something on energy prices if they either stay at these levels or go up even further?
So we're preparing a range of measures that we could deploy in a variety of scenarios. Of course, we're trying to get the best macroeconomic analysis to make sure we make the right interventions, because what could seem right today, as you know, could indeed be the wrong medicine tomorrow. But we are prepared to take action should that be required, and we'll bottom out our analysis in the next few days.
Yes. How do you think about that? Because, again, this is a timeline. You don't want to make a rash decision too soon and then have to reverse it. But at the same time, you need to give assurance to the people.
That's exactly right. And if you look at the last 10 days alone, I mean, what we've seen in terms of the price of a barrel of oil, we've seen it at $85, $120, down to 87, back to 100. And that's just a reminder of the volatility. But there is a point at which we'll have to call it. And I think all European governments, and indeed the UK government, I'm seeing the Chancellor of the Exchequer later, are trying to get that intervention correct. So we are prepared in Ireland to act, but we're trying to make sure that the course of action we take is the correct one. Because while we're talking about energy today, should this conflict go on for a prolonged period of time, of course the economic impact is beyond energy. Inflationary impact on growth, impact on the Eurozone. So we do need to try and make sure we get that best possible data across the Eurozone in the days ahead.
So what's the right way of thinking this for the EU to actually be more energy independent?
This is the key point. I mean, the key point is the European Union still finds itself too reliant on what happens in other parts of the world, and still finds itself too impacted by decisions made by others. And this has to be a sharp wake-up call in terms of the acceleration of energy independence in the European Union.
Ireland's president has condemned the violation of international law in the current conflict with Iran. Does the government back the same view?
Our president has every right to speak on behalf of the people of Ireland, and indeed has a mandate to do so. And she's right to remind us of the horrors of war, and that we should never become numb to those horrors of war, and the importance of international law and the UN Charter. Ireland always supports international law, and we want to see a de-escalation as quickly as possible.
But the Spanish Prime Minister has been very vocal vocal and actually going against what's happening from the U.S. and the Israeli side. Again, would you support that view? Are you closer to the way the Spaniards are looking at this, or other countries in the European Union?
I think we've been very clear right across government that we want to see a de-escalation, that we want to see the conflict come to an end as quickly as is possible, that we very much believe in international law, and indeed that this conflict is the intervention is not mandated by the UN, and Ireland has always been a very strong supporter of the United Nations. So we're deeply concerned about what we're seeing, and we can never become numb to the horrors of war and the impact on civilians.
I mean, Ireland is a very close trading partner to the U.S. What does this mean for trade? If the U.S. asks for full support of its war in Iran, what's Ireland's position on that?
I don't think that will arise. I think Ireland's position on international matters is well known by all. I think our relationship with the US is deep. It's meaningful. It matters on both sides of the Atlantic, economically, but culturally, person to person. There's about 30 million people in the US who claim Irish heritage. But it's also okay to disagree with friends on occasion too, and to have different viewpoints. And Ireland has very clear views around international law, around the UN, and indeed we work with European partners in relation to that. But it's important to show up and to keep talking and to keep engaging with the US.
But what should the EU's position be, for example, in trying to secure the Strait of Hormuz, something that seems very dangerous, but also unclear how that happens? Yeah,
I think that is a fair point, and I know EU foreign ministers will give further consideration to this today, to what practical measures can we take. Because while there's lots of discussion, understandably, around cost alleviation measures that can be taken to help people across Europe, fundamentally this is a supply-side issue, and we need to ensure that there can be a supply of oil and certainty of that globally too. So we need to see what practically can be done at a European level, and I know foreign ministers will be considering that today.
Deputy Prime Minister, how do you see this trade deal actually between Europe and the US? Because it's unclear if the old one holds. I mean, everything's been shifted to the Middle East, so we're not really talking about this deal anymore.
I think that's true. The opportunity cost, and I say that purely in an economic sense, to this latest level of uncertainty and conflict is absolutely huge. It's in many ways taken attention off Ukraine. Putin has in many ways been a beneficiary of rising oil prices, and it is really important that we don't lose sight of very important issues around our trade agreement too. We worked very hard at a European level to try and agree a trade agreement with the US. It's imperfect, but it is very important that both sides now honour that agreement. We stand ready to honour it on an EU side. The relationship matters to both the European economy and the US economy, but it is important that they'll be in a position to bring clarity from the US side as quickly as possible.
How are you looking at defence spending, and actually how much more can you increase given the neutrality of Ireland?
So Ireland is militarily neutral. In other words, we're militarily unaligned. We're not politically so. We stand fully with the people of Ukraine. We're not immune from security risks. We have undersea cables. We're not immune from cyber attack and the likes too. So we take very seriously our national security, and we're investing more now in defence and security than ever before, and we stand willing to do more, because just because of our geographic location or our military neutrality, that doesn't provide a magic shield in terms of protection.
And do you think that will be the case for all EU countries, given the uncertainty actually and the spectres of war?
I think so. I think absolutely. I mean, and defence and security is such an important issue for the European Union, and we've seen many member states respond in different ways. From an Irish perspective, conscious of being militarily unaligned, our focus will be on increasing our own capabilities around radar, sonar, monitoring of undersea cables across off the coast of Ireland as well. But defence and security is a really important issue of our time.
So Ireland also takes the EU presidency a little bit later this year. What will your three main priorities be?
Competitiveness, security and values. And when it comes to competitiveness, we have to remind ourselves that the European Union needs to build up economic resilience. And one very practical way we can do that is by getting savings and investment union done for once and for all. It's been talked about for decades. I really believe it's within our grasp now. If people are pragmatic, if people are willing to approach these conversations in a can-do way, that we could get this over the line. And during the Irish presidency, I want to try and see agreement on savings and investment union. That will be a personal priority for me. Also trying to steer agreement on the EU's multi-annual budget, the MFF. Again, a very important moment for Europe at a time of huge uncertainty. And continuing to stand by Ukraine, of course, will be a fundamental part of our presidency and all EU presidencies in the time ahead.
I mean, what does that look like? So trying to get people to invest more? Is it incentives?
I think it looks like a number of things. It looks like continuing our practical support for Ukraine, finding ways of unblocking the very, very unfortunate and unconscionable Hungarian block on the loan to Ukraine. But it also looks at how we can help prepare for the day after, if there can be a just, enduring peace. How we help Ukraine rebuild, how we bring Ukraine into the European family, because the people of Ukraine have chosen their future. They want to be European, and I think that in and of itself is a security guarantee.
Yeah. Deputy Prime Minister, I mean, on a very light note, there was also, like, you know, the greatest actress at the Oscars is Irish.
Oh, we are so proud.
She must be a source of, being proud.
Jessie Buckley has lifted the mood of our nation at a time of such challenge in the world.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Investors are giving this bull market the benefit of the doubt.
This is starting to weigh on the market, but we have not quite seen that typical pullback.
Markets have essentially got an assumption that this could be a quick war.
We don't have a lens on when this is going to end. Nobody does. The market right now is overly complacent in my mind.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, the war enters week 3.
We expect that the global economy is going to have a big positive shock as soon as this is over, and we're still being briefed that it would be 4 to 6 weeks from the beginning and that we're ahead of schedule.
One White House advisor indicating the war could take 4 to 6 weeks following another weekend of escalating strikes across the Middle East. The president is scrambling to put together a coalition to reopen the strait. That story is where we begin this hour. President Trump demanding other nations help to get energy moving once again.
Talking to countries about releasing the straits. We are demanding that these countries come
Speaking to the Financial Times, the president saying if NATO allies don't help soon, the group will face what he calls a, quote, very bad future. The pressure keeps building.
Look, I can't get into President Trump's head and I can't get to the heads of the NATO leaders, but it does seem like there is a signal in all of this, which is there's not an easy off-ramp and it's not clear exactly how we're going to get an endgame at this point. The fact that President Trump is reaching out to other people after, already saying some pretty mean things to them and saying, please get on board, gives you a signal that's potentially could go on for a while. Has the market truly priced this in?
The Journal over the weekend reporting the US could announce a coalition as soon as this week. No idea when that would actually become operational, and that piece of it is key.
It was interesting. It came Sunday night, of course, before the oil futures started trading and equity futures started trading. What was so interesting about the Journal report was this line. They are still discussing it, however, whether those operations would begin before or after hostilities end. Well, if they begin after hostilities end, when are we talking about potentially this coalition coming through and naval escort when it comes to the Strait of Hormuz? When they say potentially end of the week, next week, 2 weeks' time, it really is unclear. There's a lot of lack of clarity in terms of what countries would be willing to sign up. Japan or Australia already said no. The European Union maybe are going to move their naval escorts they have in the Red Sea to Strait of Hormuz, but others, it's a big question mark.
This is going to take time, and that's the bottom line. That's why we're repricing crude further out along the curve, and strategists are starting to adjust as well. Morgan Stanley with this. Brent in the second quarter now seen at $110 a barrel. That's up from 80. For the third quarter, they now see it at $90 a barrel. That's up from 70. That story getting pushed out along the curve.
And I keep thinking about what Steve Auth over at Federated Hermes told us, which is that he is still constructive on risk assets up to $90 a barrel. But should there be an average price of crude at $90 a barrel for the average remainder of this year, that starts to curtail growth and materially changes his outlook to the U.S. equity market.
WTI this morning, 99. Brent crude just short of 105. Coming up this hour, Chris Verona, strategist with stocks looking to snap a 4-day slide. Norman Rule of CSIS as the U.S. ramps up the pressure on allies. And Kevin Book of Clearview Energy Partners as crude continues to climb. We begin this hour with our top story. Fresh attacks on a major oil port in the UAE, sending crude prices another leg higher. Our team coverage starts right now with Bloomberg's Jemana Basechi in Dubai. Jemana, welcome to the program. Escalating strikes over the weekend, including that strike that we just outlined. What's the significance of what we've seen over the past few days?
Yeah, so there are two strands you need to think about. One is the U.S. administration's attempts to reopen the Strait of Hormuz, as you were just discussing, looking to build together a coalition of multiple countries to help provide some escorts or naval escorts for ships to traverse the strait in a safe manner. But already it seems as though there's skepticism around this plan. The Defense Ministry of Japan, for example, saying that the hurdle, the bar is very, very high for them to get involved. And of course, the main appeal would be to China, given the lion's share of the oil, the seaborne oil that passes through the strait does end up in China's hands. But still, they have not officially commented. So that is one strand of thinking coming through from the Trump administration. But then, of course, the other strand is the ongoing military operations. And what we saw on Saturday was a massive escalation with the U.S. striking Karg Island. Now, they did hit military infrastructure there. They were not targeting the oil infrastructure, but this is essentially the lifeline of the Iranian economy. About 90% of the Iranian oil that does get processed passes through the island. The fact that the U.S. are now signaling that they could go one step further on Karg Island marks a very deep escalation from their standpoint. And the Iranians have not taken it lightly. They have vowed to retaliate. They have re-emphasized that they are not open to a ceasefire, but also gone one step further this weekend, threatening to strike back at non-U.S. assets in the region and specifically in the UAE. They allege, this is what they're alleging, that the strikes on Karg Islands were launched from the United Arab Emirates. This is something that the UAE have rebuffed. They said it is based on senseless claims, and of course they continue to act in self-defense. But over the course of the last few days, we have seen a meaningful escalation. Earlier this morning, Iranian drones struck a fuel depot near Dubai International Airport. It caused operations to be suspended temporarily. And then in the last 24 hours, we have seen another strike, once again, on that Fujairah key port, very strategic port in the UAE for two reasons. Number one, it is outside the Strait of Hormuz, so it's not actually on the strait. It is one of the largest refueling ports in the world, but then also it's been playing a significant role for that oil land pipeline to get Abu Dhabi oil outside the Persian Gulf by not passing through the Strait of Hormuz. The fact that they have attempted to strike at it twice tells you that from Iran's perspective, they really are beginning to go after key energy infrastructure sites and not necessarily just U.S. assets in the region as well.
Jumana, stay close. Jumana Basechi out of Dubai this morning. The central bankers might have to edit some of those statements. The Federal Reserve meeting on Wednesday. On Thursday, the Bank of England, the ECB, the BOJ. This is a major week for central bank speak.
And I'm going to argue that the ECB is going to be a more interesting meeting than even the Federal Reserve, because what you're seeing is a bigger impact on assets in the region. And frankly, they're between a rock and a hard place, and an even harder place given the fact that they're facing an inflation shock and a growth shock at the same time.
That meeting taking place this coming Thursday. The view on Wall Street this morning looks like this. Chris Verona, strategist of Baird Company, writing, "We think we still defer to the uptrend in equities. Keep an open mind and stay committed to price first, narrative second approach." Chris joins us now for more. Chris, good morning.
Thank you.
Price first, narrative second. What is price saying right now?
Yeah, well, listen, I think when you look at the broader picture here, most global equity markets are still in uptrends. At the same time, I'm not convinced we've really seen a deep flush here yet. And you kind of look to not necessarily levels, but what do the internal characteristics of this market look like? You know, we're sitting here with about 40% of the S&P above the 50-day. We really haven't seen the big surge in new lows yet. The put-call ratio remains pretty benign here. So things I would want to see to really mark some capitulative flush, I don't think have necessarily been checked yet. Now, that can change quickly. That can happen very quickly. I want to be open to that happening over the next week or two, but we haven't checked those boxes yet.
We've repriced energy. Yeah. We've repriced rates. Where have we started to reprice growth?
Well, I think that's the big question from here forward, and particularly when you put it in context of the Fed, you know, it's crazy to me that you see all these narratives being written that central banks are going to tighten into this. I think central banks have learned along the way you don't tighten into energy shocks. I think if anything, you know, if this gets worse than people anticipate, we should be talking about more cuts, not less cuts down the line. And kind of our barometer to really economic growth, or how the market perceives growth, is what is consumer discretionary doing relative to consumer staples. Now, we've seen a modest correction in that pair over the last, 5-6 weeks, as you might expect. It's really essential to us. Things like that, or banks or industrials, can respond out of this. I think if there's a bigger problem developing, we probably still rally first. We learn about it in the summer as the real cyclical stuff starts to roll back over. That's the timeline for, I think, how this plays out.
Do you think that it's the same in all different regions? We were talking about all the central bank decisions and how it's crazy to think that anyone would be hiking into this, and yet people are expecting the ECB and the Bank of England to hike into this. Do you think that that's plausible, even as the United States maybe faces less of that kind of pressure?
Yeah, listen, I think one of the things that maybe was revealed again to us during the last couple weeks is markets are ruthlessly efficient at exposing what the weak links are. So you think about the last 2-3 weeks as this event has played out, U.S. 10-year yields, yeah, they're up, but they're kind of still in the same range they've been in all year. What's making new highs? German yields, French yields. What's making new lows? The euro. What's making new highs? Aussie, CAD. So the market is so ruthlessly efficient at really exposing where the vulnerabilities or the weak links lie. And I think the European bond markets are in a much more fragile spot here than the U.S. ones. I think the European currency is in a much more fragile spot. At the same time, look at how the commodity exporting FX pairs have all really asserted themselves here, whether it's CAD or Aussie or ZAR or Real. So this is a ruthlessly efficient market in exposing kind of where the fault lines are.
If that's the case, going back to what you guys are talking about, what's the signal in terms of what they're exposing in financials, given the fact that financials are down and down hard, regional banks down and down hard? Is that exposing some kind of weakness there?
It's funny, of all the things you just mentioned, and we can talk about, insurance and private credit and banks, the regionals are actually what I'm least worried about right now. The regional banks are still in uptrends. They're oversold here. I know they're down 10 to 15% across the board over the last couple of weeks, but they're not bad charts or broken charts. And even when you look at stuff like European banks or Japanese banks, they're correcting here, but really haven't corrected from big top formations. I think the bigger question is, when you look at the traditional money center banks in the U.S., which entered the year kind of among the favorite of the consensus, right, because of deregulation and all the like. Can these respond here? You have oversold conditions in Goldman and Morgan Stanley and Bank of America and Citigroup. Can these actually respond here? That, to me, is probably the big question over the next 4, 5, 6 weeks. When you look at kind of the landscape of both geopolitical events and financial events, what you learn historically is underemphasize geopolitics, overemphasize financial events. I'd be much more worried if this is manifesting into the latter.
Chris, why is gold, though, under $5,000 an ounce?
Yeah, this has been something we wrote on the kind of the weekend that war broke out 2 weeks ago. We said, be very alert to what is behaving differently than your own intuition might suggest. And I think gold is, number one on that list. If you had just read me the headlines 2 or 3 weeks ago, you would have got, okay, gold's going to 6,000. The fact that it hasn't, I think, really reflects what was blow-off-like conditions from October through January in gold. Frankly, silver acts a lot worse here. Platinum acts bad. Palladium acts bad. I think these are all going lower. Come up with whatever narrative you want. I think the story will reveal itself in time. But I like precious metals lower here. And, in a lot of respects, I think this commodity bull market's diversifying, right? For much of the last 2 or 3 years, it was precious metals exclusively. I think that's less the story going forward. I mean, these grains have all broken out. I think the industrial metals are still in better condition than the precious. So something there is evolving. I like precious lower.
Chris, it's good to see you. It always is. Thanks for being here, sir. Equity futures right now in the S&P positive by 0.4%. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. President Donald Trump is demanding other countries join U.S. efforts to defend the Strait of Hormuz. The president says the United States is in talks with about 7 countries to help ships pass safely through the waterway. The European Union's foreign policy chief encouraging member states to redirect the bloc's Red Sea naval mission to kickstart that transit through Hormuz. Meanwhile, President Trump says he could delay his planned summit with Chinese President Xi Jinping later this month if Beijing does not help unblock the strait. The president stressing China's dependence on oil from the Middle East in an interview with the Financial Times. Trump also telling the FT that NATO faces a, quote, very bad future if U.S. allies fail to assist. And the key port of Fujairah in the UAE was hit by a drone this morning, halting oil exports. It's the latest in a series of strikes threatening the country's only export route. Fujairah is a major hub for both crude and fuels and has taken on increased importance for global markets because of its position outside the Strait of Hormuz, which, of course, has been all but closed since the start of the war 3 weeks ago. That's your Bloomberg Brief. John.
Yahara, thank you. Appreciate the update. Up next on the program, President Trump demanding a coalition.
Talking to countries about policing the straits. I'm demanding that these countries come in and protect their own territory because it is their territory.
Up next, we'll catch up with Norman Rule of CSIS, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The war in the Middle East stretching into a 3rd consecutive week, and right now, crude up again for a 4th consecutive day. Brent crude 104 on Brent this morning, up by 0.9% on the month so far, up by more than 40%. In the equity market, 5% away from all-time highs. That's the correction so far, 5% on the S&P 500. Futures this morning positive by 0.5%. This from Mislav Matejka this morning over at JP Morgan. Have we seen capitulation? We've seen capitulation in sentiment, in our view. That suggests that if one is selling now, the risk of being whipsawed is increasing. The sense of things from JP Morgan this morning.
Yeah, and this is the reason why it hasn't been a deeper correction. The fact that everyone's waiting for some sort of statement saying, okay, we found an off-ramp, and then the rip-roaring rally that has come every single time we've ever gotten a downturn going back since the pandemic. Key question, if there is an off-ramp, will the rally be sustainable, or is there already a hit to growth, to your point earlier?
The Nasdaq futures this morning up by 0.6, the Russell of small caps up by 0.5. Under surveillance this morning, President Trump demanding a coalition.
Demanding that these countries come in and protect their own territory because it is their territory. It's the place from which they get their energy, and they should come and they should help us protect it.
So here's the latest this morning. The president ramping up pressure on other countries, demanding support for escorting vessels through the Strait of Hormuz. Trump threatening NATO with a, quote, very bad future and to delay his summit with China President Xi Jinping. Bloomberg's Tyler Kendall joins us now from Washington for more. Good morning, Tyler.
Hey, John, good morning. Well, the White House intensified calls this weekend to reopen the Strait of Hormuz as President Trump now calls on other countries to send naval escorts. Data analyzed by Bloomberg Economics finds that nearly 89% of total oil flows through the critical waterway do go to countries in Asia, and that includes 38% of total flows going to China. This, as President Trump, in a post on Truth Social, directly appealed to China as well as some other countries, including Japan, South Korea, France, and the UK, to all send ships. As the Wall Street Journal reported over the weekend that the Trump administration could announce as soon as this week a coalition has been formed to help secure Strait passage, even as publicly many countries are non-committal about sending ships until the conflict resolves. New this morning, though, we did hear from the EU's foreign minister, who is urging member states to redirect a coalition of ships currently tasked with securing passage through the Red Sea to the Strait of Hormuz, though that plan at this point is far from certain. President Trump also ramped up threats in other ways, saying that the U.S. will strike energy infrastructure inside Iran if disruptions continue. This comes after the U.S. on Friday confirmed it had hit military targets on Karg Island, Iran's main export port for oil. Now, John, as these disruptions continue and we wait for the strait to reopen, the Trump administration has said that it is mulling multiple options to help with supply disruptions in terms of prices here for consumers in the U.S. I spoke with the Interior Secretary Doug Burgum on Friday, who told me there are a lot of tools in the toolkit, including potentially intervening in the oil futures market.
Tyler Kendall with the latest outside of the White House this morning. Tyler, thank you. To build on this conversation, Norman Rule, the former senior U.S. intelligence official and senior advisor at CSIS. Norm, welcome back to the program. We've seen reports over the past few days of moving additional assets into the region. In your mind, what does the next phase of this conflict look like?
Good morning. The United States is not preparing for a greater involvement that would lead to boots on the ground, but the commitment to the United States does remain focused on a coercive approach to this. There's no sign of a diplomatic engagement in the near term. So you basically have a situation where the United States approach is to beat down Iran's missile and drone capacity, to hit the regime on its police, its interior forces, in the hopes that this might provoke some sort of unrest, to open the Strait of Hormuz. And at the same time, the regime is trying to outlast this by striking economic targets that echo into the world economy to put pressure on the United States. Each side is trying to outlast the other.
Norm, when it comes to Karg Island, how significant was that hit over the weekend from the president?
Well, the United States certainly destroyed every military site on the island, and the island is indeed the primary artery for Iran's outlet of oil. It has no secondary outlet of any consequence. The port of Jask, which Iran has attempted to open in the Gulf of Oman, has a very modest output, but the Karg Island appears to be operational for all of its oil output capacity. I think there are a couple of ships that burst very quickly after the U.S. military operation. And I think that's consistent with what the president was trying to do. He was trying to message the Iranians, look, we can touch you here if we wish. We're going to touch the military elements, but we could take this farther. Why don't you end the conflict? I don't think it changed the Iranian position, but it certainly sent a message.
In terms of the military strike on Karg Island, what does this mean for the operational capacity of the IRGC?
Well, it doesn't really touch the IRGC's capacity per se. The IRGC's capacity is derived from its missiles, it's derived from its drones, and it's derived from its internal military placements that suppress the people. So it's got plenty of capacity that doesn't rely upon the economy, doesn't rely upon the banking capacity. It's accessible reserve. So it's not a money issue that keeps the IRGC going at present.
What role do you think the ground troops would play? You mentioned that it does seem like there could be a preparation to send a special unit of Marines over, potentially even to Karg Island. Do you understand or have an understanding of what that would look like?
I think that's very unlikely at present. The U.S. commander's first option at this point would not be to create a force protection problem for himself. His goal is to create a force protection problem for the Iranians. This unit, although capable certainly of ground operations, probably would have its first goal to improve counter-drone operations and improve protection capacity for units, although some ground operations could conceivably be part of its mission. It's a relatively small force for such an activity.
Norm, are you seeing an off-ramp evolving here?
Not at present. The conflict will likely continue for some weeks on each side. But this said, the United States and Israel have absolutely eroded Iran's missile and drone capacity to a far, far greater degree than Iran ever anticipated. And the Gulf partners, particularly the United Arab Emirates and Saudi Arabia, have done an absolutely spectacular job of defense, as well as Bahrain, Kuwait, and the Qataris. And I think you're seeing that years of investment of training, equipment, and the leadership of these programs has done spectacular work. And indeed, Fujairah's ability to put itself back online demonstrates just the redundancy of the systems and the leadership of the Emirati oil program under individuals such as Dr. Sultana Jaber, where it's really coming to the forefront of keeping the world's economic programs going.
But Norm, at what point do the Gulf allies have to go to the White House and say enough is enough? There's a lot of reporting over the week about Mohammed bin Salman urging harsh action against Iran. But at one point do they say, this is just too harsh right now on our economies?
I don't see that happening yet. Now, certainly there's going to be an economic blow. Remember, these countries derive their economic gains from tourism, from transit. Dubai Airport was hit today by a drone. That's a single drone attack. That's obviously a messaging attack by the Iranians. It's meant to disrupt. It's not meant to cause massive damage. So that economic blow is there. But these countries at the same time have shown tremendous resilience. So you're looking again at going to Abu Dhabi and Dubai and Saudi Arabia. They've shown tremendous capacity to keep their economies going during all of this. Expatriates are generally quite comfortable in these environments by many, many reports.
Hey, Norm, it's good to see you. Thanks for making time for us this morning. A busy morning. Norman Rule there of CSIS. As we're conducting their conversation, just getting some headlines from the Iranian foreign minister conducting a news conference, a press conference just moments ago. The war must end in a way that it doesn't repeat. That headline crossing just moments ago, the war must end in a way so that it doesn't repeat.
Right, which is deterrence, which is a reason why there is this escalating level of attacks, not just on U.S. bases, but also on infrastructure in the region.
We'll talk about crude and energy infrastructure in just a moment. We'll catch up with Kevin Book of Clearview Energy Partners with crude pushing higher. Plus, Yahira back with your morning movers. Meta, this is one to watch in the pre-market. The stock is higher by almost 3%. Reports over the weekend of widespread layoffs. More still to come on that story in just a moment. From New York City, you're watching Bloomberg TV.
Crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Stocks down for 4 consecutive days coming into Monday this morning, bouncing back by just 0.6% on the S&P 500. On the Nasdaq, up by 0.75%. A 4-day losing streak on the equity market, a 4-day winning streak on Brent crude. Brent looks like this so far this morning. Trimming gains. Brent at the moment up 0.33%, 103.43. What a move so far this month. And we're only halfway through this month. A 40% move on crude. Brent crude just about holding on to triple digits. In the bond market, 2s, 10s, 30s. Last month, the 10-year bond yield was down 30 basis points. This month, it's up about 30 basis points. We've been for quite a ride over the past 2 months. 425 on 10s this morning, going into the Fed this coming Wednesday.
Yeah, and it's as clear as mud in terms of how they're exactly going to signal this. Clearly, in the short term, it's going to be an inflationary pressure. But as you mentioned before, at what point does it become a drag on growth, given the fact that it's going to eat into consumer discretionary accounts? I do think this is interesting from Deutsche Bank economists saying that only a sustained $150 per barrel would eliminate the benefit that a lot of consumers are getting from the one big beautiful bill. So there is a threshold that people are watching for that pain.
Two-year bond yields around 370, 369 this morning, declining by 2 basis points. Going into the Fed meeting on Wednesday, two-year bond yields near the highest since last summer. 3 hours away from the opening bell, let's get you some morning movers, some single names. Yahara has more. Hey, Yahara.
Hi, John. Meta is outperforming the Mag 7 up 2.8% on a report by Reuters that it could cut 20% of its workforce, which could be 16,000 of its 79,000 employees. The move, of course, comes as it tries to offset that massive AI spending it's been making and could be a sign that AI is delivering meaningful productivity gains, as we heard from Block last month. Moving on to Sable Offshore, those shares rallying nearly 7% in the pre-market as the company gets the green light by the Trump administration to restart oil production off the California coast, despite opposition from regulators. We know that this is a fight between the White House and California that has been brewing for months, but with oil prices surging due to the Iran conflict, you can see how the administration is moving more aggressively to bring more U.S. oil supply to the market. And we end on private credit with Blue Owl shares rising nearly 1%, up for a second straight day, but it is a meager rise compared to the sell-off we've seen in this name, down more than 40% year to date as investors continue to worry about rising defaults, their software holdings, and redemption requests all over the private credit sector. John?
Yahara, thank you. Thanks for the update. More from Yahara later this hour. On our radar this morning, President Donald Trump seeking support from several countries to secure energy flows through the Strait of Hormuz. Trump also telling the Financial Times that NATO faces a, quote, very bad future if the alliance doesn't join the war effort against Iran. Elsewhere, the UAE's Fujairah port hit by another drone attack. Oil loading operations at the trading hub have been suspended while the damage is being assessed. The port is the UAE's only export route outside the Strait of Hormuz. And finally, President Donald Trump threatening to delay his summit with the Chinese leader Xi Jinping. The Financial Times reporting the president may postpone his planned trip to Beijing if China does not help secure the Strait of Hormuz.
A lot of people are wondering how long this would take given the rising pressures on all sides. How much is this President Trump trying to get leverage for one of the key importers of Iranian crude, and what kind of incentive does China have to get on board and pressure Iran, given the fact that they're still getting shipments of that Iranian oil? There is a feeling, though, that maybe, at least according to some reports, China's getting a little bit annoyed with some of the practices of Iran, so maybe there can be some leverage, but this does seem to be an outgoing question.
Some vessels are getting through. You need a magnifying glass, but some vessels are getting through, and it depends on what flag is on top of that vessel. This hasn't been talked about much this morning, but it was talked about a lot going into the weekend. This from the Financial Times. The European countries, including France, had opened talks with Tehran seeking to negotiate a deal to guarantee safe passage. Now, ultimately, that story has gone nowhere over the past few days, but some comments from India just moments ago kind of speaking to the same thing at the moment.
Right, what India is saying is that they are in talks with Iran. We have seen some Indian vessels get through, especially when it comes to liquefied petroleum gas. 90% of India's imports of that for cooking oil relies on going through the Middle East and the Strait of Hormuz. What India is saying right now is that Iran didn't ask anything to give ships safe passage, but this is what the United States doesn't want. They don't want individual countries going to Iran one-on-one. They want this to be a coalition. And what this proves right now is that the strait is actually not closed. The strait is controlled, and it's controlled by the regime.
We've got a logistics problem, which is causing a production problem, and the president is aggressively trying to solve a logistic problem of his own making right now.
And that's the reason why it's kind of difficult to get coalition, an allies, coalition on board quickly after the fact without having communicated earlier. And the reason why Iran is really taking this step to negotiate individually with companies.
But whether or not, because there's a lot of talk about the fact that Trump named China in a Truth Social post as one of these countries that should come to help, whether or not China likes it or not, they're involved. 90% of Iranian exports go to China. The rest go to Syria and some other countries. But this is important for China, and higher prices are also important for China. So at some point, China's going to have to get involved.
And we're certainly getting higher prices. Crude holding on to triple digits this morning. The average price for a gallon of regular gasoline topping $3.70 following fresh attacks in the Gulf. The U.S. Energy Secretary Chris Rice saying the White House's strategy remains on track.
We knew there'd be a temporary interruption of flows out of the Straits of Hormuz. This is short-term pain to get through to a much better place, where the Middle East can no longer be held hostage by the one rogue nation in Iran. The conflict will come to the end in the next few weeks, and we'll see a rebound in supplies and a pushing down of prices.
The U.S. demanding allied support and projecting vessels through the Strait of Hormuz after striking Iran's main export hub. Kevin Burke of Clearview Energy Partners writing, if nothing changes, prices look poised to continue rising until they balance supply by destroying demand. Kevin joins us now for more. Kevin, welcome to the program. I want to pick up on that line that came from the Energy Secretary just moments ago, that ultimately we'll see a rebound in supplies and will push down prices once again. If the war ended right now, this second, the headline crossed, how much damage has already been done and how long would it take to recover?
There's two ways to look at that, Jonathan. Good morning, and thanks for having me. The first is that there are forward-positioned inventories that are being drawn but not exhausted, and strategic barrels yet to follow. So if we stopped today and traders optimistically look forward, they might say, well, look, it's not so bad, it's a blip. The other side of that, though, is that we don't know how much damage has been done to all the facilities that have been hit directly or incidentally, and even the ones that shut down gracefully need weeks to restart properly. So there's still latency yet to come. And then on that second leg, that less optimistic leg, Jonathan, there's the question of whether or not the war takes a leg up on an escalatory pathway, expanding into other countries, directly engaging Iran, for example.
Kevin, when it comes to timelines, Total Energy also this morning says production has been shut down or is in the process of shutting down in Qatar, Iraq, UAE when it comes to offshore. That's one part of it. Then there's the opening of the Strait. What do you think is harder for these companies that are involved, trying to get through their vessels through the Strait of Hormuz, or when they have to restart some of this production that they're shutting in?
Well, I think most executives you talk to will emphasize the importance of security for their personnel. So the risks don't have to be very large to stop those vessels from going through. As far as the operational side of the story, these companies are world class. They know how to operate their fields, but that's kind of the point I made in the first response to Jonathan. It's that they're not going to rush to turn things back on immediately. You have to be careful. You have to do this deliberately and very properly engineer to bring production back online.
When it comes to the United States and gasoline prices, we've already seen about 70 cents before the war how much higher these gasoline prices are. At what point do you think the U.S. administration is going to go back into the toolbox and potentially use some other levers? What point, what line in the sand is that for a gallon of gasoline?
Well, I can't give you a per gallon gasoline price that draws the alarm, but there are certainly psychological levels that one sees. 4, 5, above 5. Setting an all-time record, I think, produces something like all-time intervention. But here's what, when we look at it economically and politically, we get different answers. Economically, as a share of disposable personal income per capita, actually, we're not even close to where we were at the height of the post-Ukraine invasion peak in June of 2022, which was about 3.6% of average national per capita DPI going to gasoline. Now we're a little above 2, maybe 2.25%, depending on where prices settle. But that's cold comfort to voters who come into contact with the price on a regular basis. And so the politics of this happen much faster and at a much lower threshold.
Kevin, there's been some discussion about the U.S. Treasury getting involved with oil futures, and a couple of traders have been pointing out that the cost of physical crude is much higher than the cost of oil futures, and is wondering why that discrepancy has widened out. Do you think there already is some activity, government activity, in the futures market?
Theory and reality tend to converge at settlement, so there have been a lot of academic studies about how spot prices and future prices can diverge until they don't. As far as the financial engineering of missing molecules, there are some challenges to that. You have to ask what that means. What are we going to do? If we buy forward contracts to try to provide a virtual reserve, as has been suggested in some of what we've seen reported, then what happens if we're still short when those barrels are due for delivery? We tighten inventories, and that might get priced through. What are the impacts of that? Do we move the intercept, or do we end up moving the forward months higher when there's currently a steep decline, which Kevin Hassett from the National Economic Council pointed out yesterday on TV?
How much of an off-ramp is using the Red Sea? We've heard from Saudi Arabia in particular, possibly diverting more shipments through that passage. Do you see that as a viable off-ramp, or is that just sort of out of the frying pan into the fire?
Well, it raises another risk consideration, which is whether or not the Houthis would be activated either independently or in conjunction with Iran to try to stop those cargoes from moving. Right now, it's a meaningful off-ramp. Right? If we look at the significance of the 5 to 7 million barrels per day of headroom east-west to Yanbu on the Red Sea, that's a pretty significant share of what Saudi Arabia otherwise could put out, and keeps us from losing almost all of the production that would come out of the Gulf. On the other hand, that's a big risk.
We've seen how much trouble the Houthis can cause there, that's for sure, over the last few years. Kevin, appreciate your time, sir. Kevin Book there of Clearview Energy Partners on the commodity market. Some headlines crossed in the Bloomberg terminal as we've been having this conversation. It's been a busy morning already. The president is putting tremendous pressure, or attempting to put tremendous pressure on NATO allies to get involved and help open the Strait of Hormuz. Had some pushback from Germany, and the UK also distancing itself from this war with Iran. The German government saying moments ago the Iran war is unrelated to NATO. The British Prime Minister, Sir Keir Starmer, speaking just moments ago also and saying the following: we will not be drawn into the wider war in Iran.
But also at the same time, the UK is, we have to open up the Strait of Hormuz. That is not a simple task. So they want to have it both ways. And how are they communicating to their electorate, which many feel like they should be taking a stronger stance against the U.S., especially when it comes to the fact that they've been dealing with this administration when it comes to trade tariffs. The fact of the matter is this is going to hurt Europe more when it comes to energy supplies than it is the United States. Whether they like it or not, they might have to get on board with this coalition.
This headline, Lisa, from the British Prime Minister: the cost of living is foremost in my mind. If you've been tracking the bond market in the UK, we've had a 50 basis point move, 50 plus, over the last month alone. And that's just this month, in March. That's a couple of weeks, plus one. A 50 basis point move.
I'm so glad you picked up on that. Keir Starmer also saying that they're taking 5 steps to tackle cost of living, a real question of the policy response to try to stave off some sort of financial crisis for individuals, especially after they've already been facing really escalating costs. How much is that one of the drivers of the long end of the yield curve over in Europe, as you potentially could see the fiscal budget go increasingly toward those cost of living concerns?
The UK getting drawn in to address that problem. We'll get you some details on that in just a moment. Let's get you an update on stories worldwide this morning. With your Bloomberg brief, Yahira has more. Hey, Yahira.
Hi, John. CEOs of major U.S. airlines are urging Congress to end a 29-day partial government shutdown that has forced 50,000 airport security officers to work without pay. The shutdown already disrupting travel at some major airports as airlines are expecting a record-breaking spring travel period. Meanwhile, President Donald Trump blasting Fed Chair Jay Powell on social media once again, posting courts treat Republicans so unfairly, always seeming to protect those who should not be protected. How is Too Late Powell not even allowed to be investigated for the horrible job he does? The post coming after a federal judge quashed subpoenas the DOJ issued against Powell. And at the Oscars, one battle after another won Best Picture, and Paul Thomas Anderson took home Best Director. Michael B. Jordan won Best Actor for Sinners, and Jessie Buckley took home the trophy for Best Actress for Hamnet. K-pop Demon Hunters won the Oscar for Best Animated Feature Film and Original Song, Golden. That's your Bloomberg Brief, John.
Yahira, thank you. Thanks for the update. More from Yahira in the next hour. Up next on the program, clouding the outlook.
We think the Fed is on hold indefinitely. We're now facing what is potentially another prolonged period of elevated inflation coming out of the oil shock. And we think at this meeting there's an underappreciated risk the Fed turns a little bit hawkish.
The Fed decision 2 days away. Jeff Blazek of Neuberger Berman joins us next from New York City. This is Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from New York City this morning. Good morning and welcome back. Equity futures shaping up as follows on the S&P 500. Following a 4-day losing streak, the S&P this morning higher by 0.6 on the Nasdaq and by 0.75%. Setting the tone over the past few weeks. This move right here, 40% plus move on Brent so far this month. Brent crude this morning behaving itself briefly, 103.11 and just about unchanged on the session. The world's reacting, the president putting tons of pressure on NATO allies to get involved. Germany pushing back, saying basically it's not our war, and they won't be getting involved in this war in the Middle East.
Yeah, just one of a number of countries that have really distanced themselves. Japan also saying that they're not going to get involved in this, even though a significant part of the energy that they receive comes from this area. And it's not just crude, it's also liquefied natural gas. There are a whole host of other resources as well. So how long they can say they're going to remain on the sidelines while supporting some of their economies does remain to be seen.
Some of these European countries don't have the fiscal space to get involved. That's problem one. And problem two, they've got to address problems at home. And Sir Keir Starmer speaking just moments ago, addressing the British public, pledging to help them with heating costs. And this is going to become a bigger and bigger issue in the months to come.
Yeah, saying that they're going to support heating costs with some £57 million of extra support. Where is that going to come from? Over to you, Bank of England. How are you going to respond to that? Over to you, ECB, where you've got a 10-year yield over in France at the highest level since 2011. How much fiscal headroom is there given all of the other pledges they've already put out?
Major move in gilt yields over the past few weeks, 50 basis points plus on 2s and on 10s. Under surveillance this morning, clouding the outlook.
We think the Fed is on hold indefinitely. We're now facing what is potentially another prolonged period of elevated inflation coming out of the oil shock. The standard textbook in central banking is that if inflation expectations are well anchored, you ignore this inflation and you focus on the labor market, focus on growth. But it's not clear that they can do that here. And we think at this meeting there's an underappreciated risk. The Fed turns a little bit hawkish.
So here's the latest this morning. Policymakers around the world weighing inflationary pressures from the Iran war ahead of a busy week of central bank rate decisions. Jeff Blazek of Neuberger Berman writing the following: we are emphasizing the growth hit more than the inflation impact from oil and commodities. The main thing will be how the Fed thinks about the trade-offs. Jeff joins us now for more. Jeff, good morning. Good to see you.
Good morning.
Thanks for dropping by. 2 days away from a Fed decision this coming Wednesday. The meeting begins tomorrow, a 2-day meeting. What do you expect to happen, expect to see in a few days' time?
We expect them to hold, but I think the commentary is going to be really important for us to listen to. That balance that you just highlighted, the growth versus the inflation. To us, it would not be appropriate to address a supply shock in terms of energy costs with policy increases. So we would expect the Fed to try to really allow itself flexibility, though, in its rhetoric.
Unfortunately for this Federal Reserve, they have to put out some forecasts as well. There are some people out there believing that maybe they've got a stagflationary twist to some of these forecasts, a revision down to growth, a revision higher for inflation. Do you expect to see the same thing?
I'd consider it a very short-term stagflationary risk. I mean, I don't necessarily think that we would project out meaningful core inflation increases 1 to 2 years in the future. In fact, when we look at inflation break-evens of the TIPS markets, we're not yet seeing it permeate further out the curve, but it's certainly a very real-time risk in the next few months.
There is a sense, though, that the Fed is not going to have the fiscal or the headroom right now to cut rates materially in the rest of 2026. Do you think there are risk assets that haven't fully priced in that reality of potentially lower rates ahead?
Well, I do think that if the rate market, which has been perplexing to us, I mean, you mentioned earlier the Bank of England, the rate increases, ECB, we've seen 50 to 75 basis points on the front end of the curves that are suggesting hikes overseas and far less cuts in the U.S. If that is true, and that is what policymakers decide, then equities categorically have not priced that adequately. And so I do think it's a bit of a juxtaposition we've seen in a cross-asset mindset. But we don't expect this to be. We are now erring on the side of adding duration and being a little more dovish in posture, both in multi-asset and our fixed income portfolios.
Does that mean that you think it's going to be an even bigger hit to growth, or do you think that people are underappreciating the ability of central bankers to look through an oil price shock?
I think look-through is the key. So right now, year-end, so the front month is very volatile. It's inverted with backwardation. We get all of that. But right now, the market is suggesting we might be at $75 oil at year-end. That's pretty palatable. That's manageable. It's like a 10 or 15 per barrel increase of geopolitical premium, which seems fair. But you're talking about a manageable hit to GDP. Maybe we revise downward. Our expectations coming in were 2.5. Maybe that takes us to 2%. That's still very well above trend.
What would change your outlook? I mean, you think we would see a bigger hit to growth and potentially some correction in the equity market?
By far, what changes our outlook is prolonged oil above 100 for not weeks but months, and maybe going into the year end. That's where we would suggest that consumer spending is probably going to get hit pretty hard, and it would risk a recessionary type backdrop. Again, though, if that ends up being what happens, our pro-duration stance benefits because we would see rates respond downward due to the growth outlook.
Do you think the Fed could cut in that environment, though, above 100 for months?
Well, I think what you end up risking in that scenario, which is not our base case, and this is a severe outlook that we're theorizing about, but basically what would happen is you would have the double whammy, much like 2007. Remember, crude oil was at 140, banks were tightening, and then in short order, less than 12 months later, they were dramatically easing because of what happened in that whipsaw.
You've said it a few times now, bonds are a buy here. Is that just the US? Or is that the international bond market too?
No, if anything, we think it's more a buy outside the U.S.
Whereabouts?
Well, we like Europe. We like core Europe because we think that the idea that there are 2 hikes priced in this year is not appropriate. Now, we do worry when you see some of the ECB members talking and they suggest they might have this bias. And by the way, they're dealing with the pressures that you all were just talking about. Politicians are trying to come up with fiscal support to alleviate the consumer pressure. The central banks are a bit nervous about all that. It makes sense. We just think that when this war settles down and gets contained, the central banks are not going to have to be this hawkish.
You know what the pushback would be, though, Jeff, is that the ECB's done it before. They did it in 2008 under Trichet. They hiked with an inflation shock, with a crude price move, not quite like the one we've got at the moment. I think it was closer to 140 than it was 100. And for the Brits right now, we just had the conversation. You suggested it. The Brits are talking about helping consumers at a time when they have limited fiscal space to do so. That would be the pushback this morning. How would you counter it?
That's a fair pushback. I would call it the Groundhog Day scenario. Here we are again. All we can do is express our views publicly, express our views in duration with the comfort. But if they made a policy error like that, we probably would start to pivot more toward the long end because we would see inverted curves. The long end would say, look, you guys are not getting this right.
It would be another reason to buy bonds.
Correct.
Jeff, it's good to see you. Thank you, sir. Jeff Blazek there of Neuberger Berman, thoughtful on fixed income and the opportunity that's opened up now in the bond market to buy.
Yeah, and he's not alone. There are a number of people who are saying that ultimately this is a stagflationary shock. And typically, if you have a short-term pop in oil prices, that reduces growth over the long term, and it should be a buying opportunity for bonds in the long term, which is not what you're seeing. And that has been sort of the conundrum. Is this because of the fiscal potential to really increase deficits, or is this people believing that you can withstand it because of the strength in the economy, and it's ultimately inflationary? Well, his answer, just buy.
You would hope the ECB has learned from its mistakes. back in 2008, but then one official speaking in just the past week, talking up the prospect of acting before people think.
You know, one commentary that I was reading said that not only is the ECB dealing with a fiscal shock, not only are they dealing with an oil price shock, but they're dealing with fragmentation as well. So they also have to deal with some sort of splitting and splintering of some of their base groups in terms of their approach and their opinions.
So as the trading week begins, let's set the scene for you. Crude still around triple digits on Brent, WTI at 97. The president pushing allies to step in and help him reopen the Strait of Hormuz. And allies so far this morning, the UK and Germany, pushing back.
Pushing back, throwing some cold water on this idea that they want to get involved in what is going on in Iran and the Strait of Hormuz. What's interesting, though, is the EU's foreign policy chief did talk about the fact that member states potentially could be moving the Red Sea naval mission they have right now to protect cargo in the Red Sea that's been going on for months. Maybe they can move that to the Strait of Hormuz. Politically, though, this is going to be incredibly challenging for some of these European countries, not to mention the fact that Australia, Japan have already come out and said the threshold is very high for us to do so.
It's a very fast-moving financial market, that's for sure. It's fluid, I think it's fair to say. Crude rolling over just briefly, and as it does, equities break out to session highs, up 0.75% on the S&P 500. Up next, we'll catch up with Stephen Parker of JP Morgan, Henrietta Trays of Veda Partners, Francisco Blanche of Bank of America, and Vishal Kanduja of Morgan Stanley. The second hour of Bloomberg Surveillance is up next.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is clearly a massive shock for now.
People see the shock. They think the U.S. economy is well positioned to manage it.
The longer it goes on, the higher the risk that this one-time price impulse gets kind of normalized.
Globally, this is more of a risk to growth rather than sign of some sort of recession.
For now, the Fed is going to be cautious.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures, after declining for 4 consecutive sessions on the S&P, we bounce by 0.75%. On the NASDAQ, up by 0.9. In the commodity market, a 40% plus move on the month in crude. We pull back just 1/3 of 1%. Brent at 102.85. Going into this week, a Federal Reserve meeting. 2 days away, that decision just around the corner. On deck also, the ECB, the Bank of England, and the BOJ.
Yeah, and arguably some of the other meetings, other than the Fed, could be more interesting because the strain that they're feeling is coming on 2 different sides. On one hand, they have a bigger energy shock than the United States does. On the other hand, there is even more pressure coming from different governments to pay for some of the offsets that a lot of consumers will need in order to cope with the cost of living hit that they are feeling. We saw that this morning from the United Kingdom. You put all this together, how does the ECB, how does the Bank of England respond? Do they even entertain hiking rates?
It depends how long this goes on for. How many times have you heard that over the past 2 weeks? It depends how long this goes on for. Crude higher over the past 2 weeks, and these central banks might need to respond sometime soon. With language or with action. And let's hope it's not with action, because that could be a major policy mistake. This is the headline we're getting out of the UK at the moment on a coalition coming together to do something about reopening the Strait of Hormuz, which many people in the commodity market describe as somewhat as an impossible task at the moment. Hormuz defense needs as many partners as possible. The words of the British Prime Minister just moments ago.
But no one is running. No one is running to make sure that their naval is out there in front, going through the Strait of Hormuz and this coalition that the president is talking about. Japan, Australia already said we're not going to do it. China has yet to respond. What you have from the European Union is this discussion potentially of their naval fleet they have in the Red Sea moving to the Strait of Hormuz. But then when you look to the individual leaders like Keir Starmer, like Frederick Merz, they're basically saying not so fast. They don't want to touch this right now with a 10-foot pole.
You break it, you own it, fix it. Seems to be the response from some NATO allies at the moment, whether they feel the repercussions of it or not.
So Luxembourg's foreign minister had this to say: blackmail is not what I wish for. Then you had this UK official saying, it's also important to remember that we have not sought to be a protagonist in this war. So definitely a feeling of not wanting to get involved.
I think an important comment this morning comes from the Iranian foreign minister. The reason we say we do not want a ceasefire is not because we are seeking war, but because this war must end in such a way that our enemies never again think of repeating these attacks. When analysts come on and continue to say that their worst case scenario is that this is prolonged, that is basically the base case for people that are living in the region and are touching this story every single day. Because of this reason right now, they took out the Ayatollah, they took out the top brass, they went after Karg Islands. Right now, it doesn't seem like the Iranians feel like the U.S. has suffered enough.
Market participants called it a risk. The Iranians called it a goal. Right now, Brent crude around triple digits, Brent at 103 and just about unchanged on the session. Coming up this hour, Stephen Parker of JP Morgan Private Bank as crude adds to recent gains. Henrietta Trey's of Veda Partners as President Trump demands support in the Strait of Hormuz, and Francisco Blanche of Bank of America with the White House forecasting a dip in energy costs. We begin this hour with stocks pushing higher on the S&P 500 by about 0.7%. Stephen Parker of JP Morgan Private Bank with a 7,400 to 7,600 year-end S&P target and writing the following: we've not changed our base case forecast for growth, but acknowledge increasing downside risk the longer energy prices remain elevated. Stephen joins us now for more. Stephen, good morning.
Morning.
It's good to see you. So let's talk about what we've seen so far. 5% move on stocks, 60 basis points of widening on high yield spreads from the tights of the year so far. Is that a sign of resilience or complacency?
You know, I do think the markets are probably a bit complacent given the move that we've seen in energy markets. We've always said to clients, when it comes to geopolitics rarely have long-term impacts on markets, but we have to acknowledge that particularly when energy is at the center of the storm here, they can certainly have a bigger impact on markets in the short term. You mentioned the pullback that we've seen in the U.S. We've seen a bigger impact in international markets, particularly in places like Europe and Asia, who are more exposed and more at risk to these higher prices. But there does seem to be a bit of complacency in markets.
Where do you see that complacency concentrated at the moment?
Well, I think that investors are just looking at the fact that the expectations for energy prices are to recover and be back around $80 in the not too distant future. And in that sort of world, then we can get back to the fundamental story around U.S. equity markets and double-digit earnings growth, which is what we expect. The challenge is if we end up in a situation where we're looking at triple-digit oil, not just for the next month or two, but for the next 3 to 6 months, then you have to start asking yourself about the outlook for growth and the outlook for inflation.
Are people more accurately pricing in that perspective internationally? You talked about the hit to international markets.
Well, I think you're seeing two things. One, places like Europe and Asia are more exposed to higher prices in the near term, and the risks of those prices remaining higher are there for a longer time period. The U.S. is buffered by a greater sense of energy independence. I think you're also seeing a bit of a flight to safety, a flight to quality. You're seeing it in the rally in the dollar. You're also seeing it in the recent outperformance of tech. Not too long ago, we were talking about tech being under pressure, the rotation into more cyclical parts of the market. I think investors are looking at this environment and saying the long-term structural fundamentals, the earnings growth, the upgrades that we're seeing in the tech sector, and that's bringing money back into the U.S. and supporting U.S. equity markets.
Do you think this has materially shifted the narrative that took hold in the first 2 months of the year, which is diversify outside of the United States, diversify outside of tech? Has that pulled it full circle and actually caused the leadership to come from the United States and from big tech?
I think perhaps in the near term, but I do think that longer term there is still that diversification story. In particular, we think there are interesting opportunities in emerging markets who have been hit the hardest in this recent move higher in oil prices. But still, there's a really interesting story, particularly in Asia, around the tech story there, the hardware sector. We've seen massive earnings upgrades in places like Taiwan, Korea, India. We think that story continues, and we're looking to build a shopping list with our clients to say, if this volatility continues, what are we thinking about adding? Emerging markets would be squarely in that bucket.
At the top of the shopping list over at Neuberger Berman, just on the programme moments ago, the bond market. They believe all roads lead to lower bond yields here. Even if you fix this crisis over in the Middle East, lower bond yields. If you don't, lower bond yields. Because if you don't, ultimately, it's going to hit growth, and yields at the long end of the curve are going to roll over. Is there an opening here in the bond market?
Yeah, our view around rates is that we're probably more range-bound. We came into this year a little bit more conservative than the market. We thought we would see one cut from the Fed. That's still our base case view. The challenge is going to be this push and pull between potential for lower growth and potential for higher inflation. That's why it's going to be interesting to listen to what we hear from the Fed this week as they try to set the narrative, as they try to guide markets in terms of which one they're going to prioritize. I still think that there's room potentially for another cut, but we don't think necessarily that rates are going to move meaningfully lower from here.
How do they guide the market in this moment when in the past, when we saw energy price spikes, they just called it transitory and they were wrong?
Yeah. Well, I think what's going to be interesting is to listen to their comments on not just energy markets, because I think those are more difficult to prognosticate, not just for us, but also for the Fed. I think it's going to be interesting to listen to what they say about labor markets. Obviously, recent data has been a bit weaker than what we would like to see. The question is going to be about not just sort of the demand for labor, but the supply of labor. And if they indicate that that is front and foremost, the top of their mind, that could indicate that they're willing to let inflation run a little bit hotter at the expense of supporting labor markets.
You mentioned semiconductors, some of these companies you like. Have you thought about other issues with the Strait of Hormuz besides oil? Helium. A third of global helium goes to the Strait of Hormuz. That is needed when you make semiconductors.
Yeah, I mean, what we're seeing, everyone is looking at the first order effects, which is higher energy prices, higher gasoline prices. But as you pointed out, Amory, there are long-term meaningful impacts around supply chains, broadly speaking, in different industries around the world. And the challenge is, if these things get turned off, they don't just get turned on with a flip of the switch. One of the themes that we've been talking about a lot with clients is this idea of the shift from globalization to global fragmentation, and the idea that countries and companies are going to be more concerned about supply chain resiliency rather than supply chain efficiency. And so one of the areas of focus has been on this idea of national champions in strategic industries as the U.S., as Europe, as Asia look to develop these national champion companies in places like power and infrastructure, security and defense, and technology.
I'm going to ask you a really unfair question, so brace yourself and forgive me. Forgive me for doing this. But as I sit here and listen to this and you bring up chips and we're talking about geopolitics, a lot of this is scenario analysis, but I think it's a scenario that we need to explore. How would you react if China used this as an opportunity to go after Taiwan?
I think that question is coming up more and more in our conversations.
What do you say back to clients?
I think we have to acknowledge that it is a significant risk, and I think that markets would react more aggressively to that type of news, even than what we're seeing as it relates to energy prices. I do think at the end of the day, there is still an economic agreement amongst the world, and the impact that might have on the economy probably reduces some of the risks there, but it's a risk that we need to acknowledge. And at the end of the day, when it comes to geopolitics, we don't manage portfolios around tail risk scenarios. In the long run, that's a losing strategy. It's why we lean into diversification. It's why we think about global investing, stocks and bonds, but also diversifiers in a portfolio related to higher inflation, which has been top of mind for our clients.
And that's the risk. It's because those supply chains aren't diversified enough right now. Stephen, it's good to see you. Thanks for being here. Stephen Parker there of JP Morgan Private Bank. It's a conversation coming up with clients. It's a conversation I'm hearing as well over the weekend.
Yeah, especially because there were Chinese ships that were getting close and doing some war exercises near Taiwan, according to a number of reports. There was a question of whether this was actually going to come to pass. As I listen to this, I do wonder how you can get the confidence to lend longer term to companies. If you're dealing with this number of variables and this number of potential tail risks, wouldn't you charge a higher premium? This sort of speaks to the question of at what point do you have to start seeing a risk premium baked into credit markets, not only commodities markets, to reflect some of these potential scenarios?
It's a great point, and for a lot of people, it feels very existential because while the U.S. is focused and their Navy is focused on the Middle East, China right now potentially could make a move with the U.S. unable to respond. Now, Xi Jinping has to weigh other things the president could do, and some of them could be, the nuclear option, literally a nuclear option. But this is something that continues to come up, and our stock market is 90% tethered to Taiwan because of how important hyperscalers and these tech companies are to our S&P 500.
Probably not the conversation you wanted to hear this morning, so again, forgive me. Equity futures on the S&P positive by 0.7% with an update on stories worldwide this morning. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. The key port of Fujairah in the UAE was hit by a drone this morning, halting oil exports. It's the latest in a series of strikes threatening the country's only export route. Fujairah is a major hub for both crude and fuels. It has taken on increased importance for global markets because of its position outside the Strait of Hormuz. U.S. allies responding to President Trump's calls to form a coalition to support safe passage through the Strait of Hormuz. UK Prime Minister Keir Starmer saying efforts to reopen the strait won't come as a NATO mission, but the UK will work with partners on a plan. A spokesperson for the German government also saying Germany won't provide military support in Iran, calling the war unrelated to NATO. And Meta will pay as much as $27 billion over the next 5 years for access to AI infrastructure from the cloud provider Nebius. Nebius is set to give Meta $12 billion of dedicated capacity starting early next year. Meta is building a portfolio of massive AI partnerships, including with NVIDIA and AMD. That's your Bloomberg Brief, John.
Yahara, thank you. Thanks for the update. Appreciate it. Look, when I say this, I understand people on Wall Street are blessed. They just have to price risk. They just have to price war risk. They don't have to fight it. It's a very, very different story. So take this comment with a pinch of salt. This from Peter Bugvar, publishing just moments ago. Is it Friday yet? That's the sense of things on Wall Street, right? It's like no weekends anymore. Is it Friday yet?
Try keeping up, and not only is it not weekends anymore, but I keep saying it feels like 52 pickup, where someone's throwing up all the cards and then saying, try to find them all and put them in order, and you're just sort of in this role of, trying to put this all in some sort of incomprehensible order.
Monday morning on Wall Street. Is it Friday yet? Up next on the program, securing the strait.
The whole world will be united on the need to open Hormuz, and clearly we will have the support of other nations to achieve that objective.
Up next, Henrietta Trays of Veda Partners, live from New York City this morning. Good morning.
countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Three-week losing streak on the S&P 500. Haven't had one of those in 12 months. Responsible for 2 weeks of that, this right here. Brent crude, 102.83, just about holding on to triple digits and pulling back by a third of 1%. WTI breaking 97. We're down by 1.8% on the session. In the equity market, near session highs. On the S&P, the Nasdaq and the Russell. The S&P up by 0.7. The Nasdaq higher by 0.8. Likewise on small caps this morning. Under surveillance this morning, securing the Strait.
The world depends on the flows through Hormuz, and most importantly, the Asian nations, Japan, Korea, China, Thailand, India. A meaningful part of their total energy supplies come from the Straits of Hormuz. So, of course, the whole world will be united on the need to open Hormuz, and clearly we will have the support of other nations to achieve that objective.
So here's the latest this morning. The president demanding other nations help open the Strait of Hormuz, with crude holding above $100 a barrel. Bloomberg's Tyler Kendall joins us now for more. Good morning, Tyler.
Hey, John. Good morning. Well, as disruptions continue, the White House intensified its calls over the weekend to reopen the Strait of Hormuz. And new within the last hour, a NATO official in an emailed statement to Bloomberg News does confirm that individual allies are speaking directly with the U.S. about what more they can do, including in the context of securing the strait, though it appears that allies still remain wary. We heard from the UK Prime Minister Keir Starmer just moments ago, a headline crossing, where he said that the effort to reopen the strait will not be a NATO mission. President Trump told the FT in an interview over the weekend that the NATO alliance would have a, quote, very bad future if allies did not help out. And that's not the only threat that we've seen lobbied from the president in recent days. He also threatened to delay his planned visit to Beijing, set for the start of April, if China does not come and send ships. According to data analyzed by Bloomberg Economics, nearly 38% of total oil flows through the strait do go to Beijing, but our own analysts say that it is unlikely that we would see China send ships, due in part to the fact that some of the vessels that are getting through the waterway right now are headed towards Beijing, and the country also has a vast stockpile from the past few years. The Wall Street Journal did report over the weekend that we could see a coalition announced as soon as this week, but at this point it's unclear what that would actually look like and when it would take place, either before or after the conflict resolves. John, in terms of other threats, President Trump is now saying that the U.S. could target energy infrastructure if disruptions through the Strait of Hormuz continue. As you well know, the U.S. confirmed that it had hit military targets on Karg Island on Friday, the country's top oil export hub.
Tyler, appreciate the update. Tyler Kendall there from outside of the White House. Tyler, thank you. Henry Trace of Vader Partners has this to say: permanently securing the Strait of Hormuz will likely require a sustained presence to override Iranian weaponization on the economic front. Henrietta, welcome back to the program. The financial asymmetry is pretty obvious here. It's costing America a lot to fight this war. Just how much is this costing?
Over $1 billion a day, over $200 million a day for Americans buying gas at the pump. And I think there's just this uncertainty overhang, this cloud that markets hate so much, as the president gets sort of increasingly hysterical with regards to our NATO allies, whether it's the UK or Germany or France, Spain, just going after them in ways that remind me a lot of 2025, except now he doesn't have tariffs. And I think it's striking that just 8 days before they started bombing Iran, the Supreme Court took away the president's tariffs. And it seems obvious to me that he misses those IEEPA tariffs quite a bit. I think it'd be a different situation if he still had them. So, his Twitter posts going after it, as extreme and dramatic as they are, really underscore how much he misses that cudgel that he just doesn't have anymore.
Henrietta, an energy shock in the United States is never good for U.S. president. It's even worse in election season. Right now, you have the national average $3.72 per gallon of gasoline. In California, already above $5 a gallon, potentially going to $6 sooner rather than later. What could the administration and Congress do when it comes to protecting Americans at the pump?
There's not a lot. There's actually, that's the wrong way to say it. There are a lot of little things. So they can change the ethanol blending rate to an annual blend instead of exceptions for certain times of the year. They can release some of the SPR. They can change the Jones Act. They can continue jawboning the way that the president is trying to do about victories in Iran and how everything is going swimmingly. But the reality is you need the Strait of Hormuz to be reopened. And we need, for example, military ships from France that have anti-mine capabilities. We need the divers in France that have the anti-mine capabilities. And the president is just not getting those allies on board with this war of choice that he has decided to engage in. And the extremes that he is trying to push on them are just not working. As I mentioned, you can feel the absence of the tariffs.
Some of the other tools the president also has is maybe an export ban when it comes to U.S. crude and crude products, as well as gasoline price caps. What would Congress say to that?
Yeah, I think the export ban is really interesting. I get that question a lot from clients. I think it's counterproductive, though, because obviously the problem is not domestic. We have a lot of energy production. We have a lot of supply. We have shale revolutions. We have alternative energy sources. It's getting the oil around the globe to places that are extremely exposed to Iran. That's the problem. So I think restricting exports would, while it sounds good, be counterproductive in the long run. And I think that would frustrate the White House. So I'm not expecting to see that. Congress, for its part, I just spent a week up on Capitol Hill. I don't think they're ready to address the war in any kind of material capacity. I think we're going to have to get past the spring recess, which basically puts us into mid-April, before they start to act on actual legislation around another government stimulus package. The farmers are going to need a second bailout. It's not just oil. It's all the fertilizer, as y'all well know. They're going to need another $15 billion, and the USDA is working on that. So I think we are probably at a situation where it will be at least 3 weeks of the continued war before we see any action from Congress. They're much happier to not focus on this, and they're going to be happy to go on recess.
Henrietta, I don't mean to be snarky, but are they prepared to do anything on anything in the next couple of months?
No, definitely not. And I don't think it's snarky at all. I mean, the president and the Republican conference are at very different loggerheads when it comes to the Road to Housing Act, when it comes to the crypto legislation. And the president stressing at the Republican retreat last week that he wants to focus on the SAVE Act, which is associated with mail-in balloting and transgender sports. We do not have a package that is moving through the Senate that can also pass the House, that can also get the president's signature, and they don't have an agenda list either. So the entire thing really, I think, rests on a DHS reopening package. We're on day 30 or whatever of a DHS shutdown. They're going to need to address that, but I don't think it's going to be until after the spring recess. So the whole agenda, I think, is suspended and will be for the rest of the year.
So you don't think that DHS and that sort of partial shutdown that's getting people in lines and waiting forever when they go to the airport is going to get resolved? I just wonder if in some ways Congress has absolved its role as an equal power with the executive branch. But if we've seen a fundamental shift that will not go back to where it was before.
Absolutely, Lisa. I mean, I think that we saw that all through 2025. And everybody's just waiting to get through the midterms. The popularity of President Trump with his voters is so overwhelming that Republicans do not have an opportunity to step outside the lines. With a couple lone exceptions, I would say Senator Tillis, who we had the opportunity to sit with for an hour. He is seriously going against the president's agenda. The social media post the president put out about the Federal Reserve Chairman is not going to land well with Senator Tillis. And he is absolutely living his best life right now, having a great time standing up for the Fed and saying, we want Fed independence. I want this entire case thrown out. I want it, completely eliminated. And I will stay in this seat until January 3rd of 2027, making sure that that ends up happening. And I think he's raising the odds that Jay Powell stays on after his replacement is confirmed, just to make sure that sticks.
Yeah, just to echo that, based on our conversations with the senator from North Carolina, seems like he's having a good time at the moment. Henrietta, thank you. Henrietta Trace there at Fader Partners. As we've been having this conversation, an update from the UAE on oil production from the team and some reporting elsewhere as well. Production there for crude has fallen to about 2 million barrels per day. That was around 3.5 million. Around 3.5 million before this war broke out.
And we're just 3 weeks in, so potentially this number can actually get a lot smaller, which is why when the IEA comes out with 400 million barrel a day and stockpiles being released, it is not enough to fill the gaps that we are seeing right now.
Equity futures this morning positive by 0.7% on the S&P 500. In just a moment, we'll talk about crude with Francisco Blanche of Bank of America on the growing threat to global energy supplies. Plus, Danny, how's your morning movers? Meta moving higher on some big reports of some big layoffs. That stock is higher by 3%.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Crude looks like this morning. Brent after a 40% move so far this month. Brent and WTI shaping up as follows. Brent crude at the moment 103.65, just about positive by 0.5%. In the equity market on the S&P 500, holding on to gains following a 4-day losing streak, up by 0.6%. Plenty of Monday morning notes to drop in, including this from Mike Wilson over at Morgan Stanley. Lisa, the bar remains high for the oil spike to threaten the business earnings cycle. While we can't rule out modest downside in the near term, if the rate of change on crude and the dollar accelerates further, we maintain our view that this correction is closer to its ending stages in time and in price.
Yeah, they're not alone. There are others as well, including Goldman Sachs and others who have come out and said something similar, because the U.S. economy is more immunized from any kind of oil price shock to the downside. And frankly, there's a lot to like, and people keep pointing to that. We were bullish just 2 weeks ago. Do we really have to change everything all over again?
A 5% move on the S&P 500. Is that your dip? Is it time to buy? Let's get you some single names, some morning movers. Danny Berger has more. Hey, Danny.
Hey, John, I want to start with where the oil majors are trading this morning. They still are moving higher, even though NYMEX crude is to the downside this morning. Exxon and Chevron. Chevron has been up some 5% since the war started, to close Friday at a record. Exxon closed just under a record. That's up less, about 2.5%. Some of the other corporate news we are tracking: Reuters reporting that Meta plans to lay off staff. It could affect about 20% of them. The idea is to funnel those savings into AI infrastructure spending. They're going to be spending about half of their revenue on capital expenditures. So a lot of maybe efficiency Mark Zuckerberg wants to bring back to the company. Those shares up 2.5%. And then the other side of this trade is Meta signing one of their biggest ever single contracts with Nebius. This is a neo cloud. It's worth about $27 billion over the next 5 years. Nebius is going to provide them with about $12 billion worth of space in their neo cloud. So those shares moving 14.2% in the pre-market, John.
Danny, appreciate the update. More from Danny in the next hour. On our radar this morning, Apollo executive John Zito calling out, quote, arrogance in private markets and blaming the media for creating a frenzy around private credit. According to audio obtained by the Wall Street Journal, Zito believes his firm is on solid footing. Elsewhere, the president saying Iran wants ceasefire talks. Iran's foreign minister refuting those claims.
No, we never asked for a ceasefire, and we have never asked even for negotiation. We are ready to defend ourselves as long as it takes.
Tehran launching fresh attacks across the Persian Gulf as the war enters its third week. And finally, the world's largest single-site aluminum smelter is cutting output as shipping through the Strait of Hormuz stalls. Aluminum prices on the LME, the London Metal Exchange, briefly jumping to the highest level since 2022.
It's important to remember we're not just talking about crude when we're talking about the Strait of Hormuz, and the story really highlights that. Yes, it's aluminum, but as we were talking earlier and Anne-Marie mentioned, it's also about 30% of the helium, which is a key ingredient to semiconductors, also travels through there. Also 30 to 50% of the world's urea, which is a key nitrogen ingredient in fertilizer. Also, of course, about a quarter of LNG, liquefied natural gas. So we're not just talking about an oil shock. We're talking about a whole slew of commodities that are also getting severely impacted.
Well, it's not just this aluminum smelter, it's also Total Energies overnight talking about some of the production they need to unwind in some of these countries. On top of that, when it comes to countries like India and places in Asia, which is really on the front lines of getting hit when it comes to an energy shock, liquefied petroleum gas, what they use to cook their meals with. There was a story over Bloomberg over the weekend, the fact that a number of Indian weddings, these wedding venues had to go out and tell brides and grooms, we're going to have to cut back on the menu because we cannot afford right now where prices are and we don't have the stock when it comes to this gas we need to make this food. It is incredible what is going on right now, and it's not just the crude complex.
It's getting serious, that's for sure. I just want to issue a quick correction. I've lived here more than a decade. I love this country, forgive me. Aluminium. Every time I say aluminum, I just don't feel good. It's particularly aluminium on the London Metal Exchange.
You know,
right? Just to...
I think that it's fair. I think it's fair for you to say aluminum.
You'll give me whatever that was.
But it wasn't.
Aluminium or aluminum.
But it wasn't worth the correction. It's just a difference, an alteration.
Adidas, Adidas.
My brothers and sisters over there might be getting, you know...
Really upset?
Upset,
might
maybe.
make Thanksgiving
different. The family group chat.
Brent crude climbing over $100 a barrel following President Trump's threat to extend attacks on Iran's oil hub. The NEC director, Kevin Hassett, dismissing concerns about elevated energy prices.
You could also look at futures markets, which are interesting because you've cited over and over the spot price of gasoline, which of course is affected right now by the disruption of the Strait. But if you look at the futures prices, they're expecting a rapid end to this situation and much lower prices. In fact, I don't think I've seen a sort of future price path with as steep a decline in all my years watching futures.
Francisco Blanch of Bank of America writing this: Brent could well average $100 $100 a barrel for the year if the war impacts oil balances significantly into the third quarter, and could average near 130 if the disruptions extend into the fourth quarter. Francisco joins us now for more. Francisco, welcome to the program, sir. I want to start with a key assumption of yours in your research. We do not embed any permanent supply loss from this war. Francisco, why is that line so important?
Thanks for having me, John, and great to see you again. It's very important because if we end up with some meaningful destruction of energy assets, we're going to see forward points increasing very quickly in the curves, right? These curves that Mr. Hassett was referring to in his comments. So, of course, we've seen Hark Island, Iran's main oil loading terminal, been struck over the weekend, and there was a clear point made that energy infrastructure was still intact, even though military assets had been specifically targeted. So I think it's very important, but of course, in wars, as you know, it's difficult to find sometimes a closure, and you know, we are always one step away from a major escalation on the energy side, and that's, I think, the fear the oil market has.
There are supply chain realities, though, that we could discuss right now. If you shut in production, how hard is it to restart it and get back production to where it was before?
Well, I mean, I think there's some concerns around that, but again, most oil fields across the Middle East are conventional. So I would expect a lot of the production to come back relatively quickly. Refineries are another point of concern. We saw the Tehran refinery, or at least Tehran refinery fuel depots being targeted. The refinery itself is unclear what's its current status. But I think generally most assets should be able to come back within a month to 2 months, if and when the war ends. And now, having said all that, another key assumption in our numbers is that Hormuz is going to be reopening sometime soon and recover the majority of its traffic, which might also be maybe too far-fetched an assumption. That's one very, very important concern. Hormuz, as you pointed out, is the choke point for a lot of the commodity flow in and out of the world.
Francisco, do you have a day circled on the calendar this week, to John's point earlier, where you start to challenge some of your assumptions and shift to some of the $130 a barrel base cases?
Well, look, I mean, we know the Houthis were able to disrupt traffic in Bab el-Mandeb for about 28 months. So I want to remind everybody of that. Flows were down from 9 million barrels a day to 4.1, 4.2. Now, the difference between Bab el-Mandeb and Hormuz is that there's clear alternatives that allowed shippers to reroute those 70 vessels that used to cross. A lot of them rerouted through the Cape. So that was, I think, a big relief valve for Bab el-Mandeb. Here, there's no clear rerouting. So I think the options are not great to reopen the strait, particularly in the light of all the capabilities that Iran might have, and also. To be honest, this quickly becomes a bit of a guerrilla war like we saw in Yemen, and I think shippers themselves will be very, very cautious not to take that route if there's risk of their vessels ending up in fire. And we've seen 20 of those already being attacked or so, I think. So it's a difficult time for shippers, for insurers. Everyone's kind of waiting for a resolution, but if it doesn't come up in the next few weeks, I mean, I'm going to give it maybe until the end of the month. Things can get very, very complicated for oil prices.
We had Jeff Curry of Carlisle on last week, and he was talking about how even if the Strait of Hormuz is opened this week or next week, there is going to be an extra risk premium placed not only on oil, but a whole bunch of different commodities, partly because there'll be nations that are stockpiling, akin to what China has done, and partly because people will understand that there is that risk of transporting goods on the seas. Do you agree with that thesis?
Yeah, I think the war is gonna transform the way we think about commodities more fundamentally. Remember, in the 1990s, Japan pushed for just-in-time, and in the 2020s, it's been China's just-in-case strategy of inventory accumulation. So they've been building up huge oil reserves, and we've seen, obviously, in part because of trade tensions, in part because of political/military tensions, we've seen a big buildup in commodity inventories. I think this trend only speeds up once the war's over. And I think that provides support to long-dated commodity prices sooner or later, and we'll see, I think, a bit of a mad rush once we are out of the war. But again, we need to see this war coming to an end, because if we don't, I think the risks of recession will grow by the week as we head into April, and definitely if we are still in the same place in May, looking into a third quarter, I've already mentioned we could see spikes to $160 a barrel. If things keep going, we could see Brent breaking $200 a barrel. I think it may take a little longer to get there, but it's important to understand that we don't have that much time, and obviously the U.S. is a little more insulated than other regions, but I think in particular Europe is very, very exposed, as are many other Asian countries, particularly Northeast Asian countries.
Francisco, I know that you track what is going on in terms of the OPEC countries, and we've learned this morning at Bloomberg that the UAE production has fallen to about 2 million barrels a day. It was closer to 3.6 in February. What other countries do you see production really falling off a cliff when it comes to the Gulf?
Well, it is known that Iraq has been curtailing output, as has Kuwait. Remember that, we think probably about 10, 11 million barrels a day of production has been curtailed in the past 2 weeks. So that's about 10% of the world's supplies. About 20% is what passes through Hormuz. So we've seen about production cutting about half. The other big issue, I think, is refined petroleum products. Refineries have been shut down across the board. And the issue with refineries, as you know, is we don't really have a strategic petroleum reserve for petroleum products. We have it for crude oil, so it's a little bit mislabeled. The strategic petroleum reserve is really a strategic crude oil reserve. So if we lose refining capacity, that impacts petrochemical units. You pointed out the weddings in India for LPGs like propane, and honestly, like it's. The supply chain dislocations that are building up in the background are gigantic. I mean, remember, 1% of energy is roughly 1% of GDP. So if you take out 10 percentage points of oil, and oil is about a third of energy, plus obviously we're losing on gas, we are looking at potentially 7 or 8 percentage points of energy sucked out the world's system right now, and that's going to have a big knockdown effect on GDP very soon. If that disruption doesn't get resolved.
I'm glad you brought up products, because a lot of the conversations I had over the weekend was centered around jet fuel, diesel, LPG. When it comes to these Gulf exporters, are they having to start to pick and choose what they're going to export? What's the most important for the global economy?
Well, we are seeing very little petroleum, in terms of petroleum products flowing through the Gulf. I mean, my understanding is whatever has been flowing has been Iranian crude oil, to a tune of 1.5 to 2 million barrels a day, and again, those are crude vessels heading for China, which I think sets a very interesting next set of days with Harg Island now being a bit in limbo. But also importantly, I think the petroleum products are already experiencing huge distress. Jet fuel prices are $250 a barrel already, right? So we've seen that, and we've seen, in fact, Dubai crude oil over $150 a barrel. Again, that's crude oil for delivery in the Persian Gulf, and of course we know China has been curtailing, has actually banned the export of petroleum product fuels like gasoline, jet fuel, and diesel, which is in part exacerbating this problem. So I think the question is, who else is going to do it? Who else is going to preserve or limit those petroleum product exports? And of course, we know who is most dependent on those petroleum product exports. Number one exporter in the world of petroleum products, America, 7 million barrels a day. So not a bad time for U.S. refiners, but obviously a point of concern as those petroleum fuels that are being exported also impact domestic prices for gasoline at home in America. So lots of question marks as countries go on to protect their own market.
Francisco, always good to catch up and get some clarity from you, sir, at a very volatile time. Francisco Blanch there of Bank of America on the broader commodity market. The latest on China, a big factor here. The president spoke to the Financial Times over the week and had said this about China. I think China should help too, because China gets 90% of its crude from the Strait of Hormuz. before going on to say that we need to address these issues and ultimately he might have to delay his trip to China, which was set to take place in the next couple of weeks. The Treasury Secretary has been meeting with his Chinese counterpart over the weekend in Paris in preparation for that get-together, that meeting over in China. And this is what the Treasury Secretary had to say to the American press just moments ago. If you're connecting those stories, don't. It's false to say if China doesn't open Hormuz that the trip will be delayed. If the president delays the China trip, it would be due to prosecuting the war. The Treasury Secretary just moments ago.
So he's trying to put some distance between that trip and what is going on right now with the Strait of Hormuz and the fact that the president is coming out and saying that he is demanding, saying it is appropriate last night, that people who are the beneficiaries of the Strait will help to make sure that nothing bad happens there. The biggest beneficiary of the Strait of Hormuz is arguably China, with Iran's exports 90%, 95% going to Beijing. But the Treasury Secretary is trying to put a gap in between almost what the president threatened last night when it comes to Air Force One in that interview with the Financial Times.
Besson doing what Besson does, which is calm things down just a little bit. Crude right now, 103 on Brent, WTI 97, with an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. As Anne-Marie mentioned, the UAE's daily oil output has been cut nearly in half. Reuters reporting crude production has fallen to 2 million barrels a day from over 3.5 million in February. The Iran war and the effective closure of the Strait of Hormuz has forced widespread production cuts both on and offshore. Elsewhere in the UAE, Dubai's main airport resuming operations after a drone attack sparked a fuel tank fire that suspended flights. State-owned carrier Emiratis restarting a limited schedule after a more than 7-hour ground stop. The world's busiest hub for long-haul flights suffering 3 disruptions since the war began. And here in the U.S., FCC Chairman Brendan Carr threatening the licenses of major media broadcasters. In a post on social media, Carr writing broadcasters that are running hoaxes and news distortions have a chance now to correct course before their license renewals come up. Carr's warning follows a post from President Donald Trump complaining about coverage of the U.S.-Israeli strikes on Iran. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. More from Yahara in about 30 minutes' time. Up next on the program, short-term pain for long-term gain.
The conflict will come to the end in the next few weeks, and we'll see a rebound in supplies and a pushing down of prices after that. This is short-term pain to get through to a much better place.
Up next, Vishal Kanduja of Morgan Stanley from New York City. You're watching Bloomberg TV.
What's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets. Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Getting a real-time update on crude production from the team here at Bloomberg. So according to sources familiar with the matter, Q80 oil output has fallen to about 1.3 million barrels a day. Before the war, that was 2.6. That's the latest on Q8. This is the latest on UAE. Oil production there has fallen to about 2 million barrels per day versus 3.56 back in February before this war. Just gives you an idea of how much production has been cut in certain places by about half. Brent crude right now positive by 0.2%, 103.34 on Brent. WTI at about 97. We've started to calm down just a bit in the commodity market. In the equity market, it looks like this. Equity futures on the S&P 500 positive through the last few hours, positive by 0.75%. Under surveillance this morning, short-term pain for long-term gain.
I think that this conflict will certainly come to the end in the next few weeks. Could be sooner than that, but the conflict will come to the end in the next few weeks, and we'll see a rebound in supplies and a pushing down of prices after that. This is short-term pain to get through to a much better place where the Middle East can no longer be held hostage by the one rogue nation in Iran.
So here's the latest this morning. Rising oil prices and the threat of higher inflation leading investors to scale back rate cut bets. Vishal Kandudra of Morgan Stanley saying the onset of the war changed the dynamics. The stagflationary shock will delay central bank easing and inflation will cause further macro dispersion. Vishal joins us now for more. Vishal, welcome to the program. Ultimately, what does it mean for this Federal Reserve as they get together down in Washington, D.C. tomorrow?
Morning, John. Thanks for having me on. Interesting times that we live in. Not just inflation shock. I think we are seeing a growth shock as well that will probably subsequently follow. We've seen how history is proving to this or guides us towards this. Countries that are going through or regions that are going through this one right now and are oil importing or energy importing will feel that shock quite significantly. Countries or regions that are net exporters like the U.S., yes, we will feel it. It's painful, but it won't linger in the economy for long periods of time. But growth shocks or the negative side will be felt. So this week is a tough one for the Fed as well as the other central banks. I think it's easier for the Fed versus the other central banks, to be honest. But yes, I think a little bit more direction and no action this week.
Michelle, do you think that this is an opportunity to buy longer-term bonds if you believe this is going to be more of a growth shock and not necessarily a longer-term inflation shock?
We do think that way. I think around that 10-year, 7 to 10-year point of the yield curve does provide you quite a bit of protection, both from a growth shock subsequent that will follow, as well as I think that sort of if you go back to what the Fed was telling us, they felt that the rates even before this were in the restricted territory. And now we've backed up not only rates, smidge on the interest, spreads as well. That gets the overall sort of monetary policy a little bit more restricted than what it was. Now the Fed, if it had it in its own, could have two rates, one for the lower end of the economy and one for the upper end of the economy. But I think they have to suffice with one. And we do think that they will focus on their second part of their mandate, which is the labor market, a lot more going forward.
Who would you rather be this week, Vishal? Fed Chair Jay Powell or ECB President Christine Lagarde?
Absolutely, Jay Powell. Easier shoes to fill. Economy can withstand this. We are coming into this with very, very strong balance sheets. Now, again, both those central bankers have to focus on the dispersion of opinions and dispersion in the economy that they're going to go through as well. Europe with different countries coming together, one country doing really well versus the other four. And in the U.S., you're seeing a significant K-shaped economy. And this thing, the extra $200 million that the oil price jump will impact, it's going to impact more on that lower end of the K-shaped economy. So tough jobs they have to fulfill, tough shoes to fill in this week.
Vishal, is this a different ECB? Is there anything left of the Trichet ECB in 2008 when they did hike interest rates?
They are looking at history and significantly worried about this thing. They do not want to hike in a period where growth dynamics were deteriorating. Certain parts of their coalition are suffering through deficit issues similar to the US, France, Italy being case in point. They're going to go through some elections. Taxes are very, very high. UK, not in the EU, but still in that similar region, is facing similar issues as well. So they're looking at history and negotiating over this oil shock that we're going through. And that's why we believe that there might be sort of pain points or pain thresholds that we are crossing through as we are extending the duration of this conflict.
History has not been kind to that decision, that's for sure. Vishal, it's good to see you. Thank you, sir. Vishal Kanduja there of Morgan Stanley. The ECB, their decision on Thursday. The two-day meeting of the Federal Reserve begins tomorrow, concludes on Wednesday. Coming up in the next hour, Liz Thomas of SoFi, Jay Goldberg of Seaport, David Seif of Nomura, Barbara Reinhardt of Voya Investment Management. The third hour of Bloomberg Surveillance is up next.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks happening everywhere, and that's what AI is most helpful in improving.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Investors are giving this bull market the benefit of the doubt.
This is starting to weigh on the market, but we have not quite seen that typical pullback.
Markets have essentially got an assumption that this could be a quick war.
We don't have a lens on when this is going to end. Nobody does.
The market right now is overly complacent in my mind.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equities near session highs on the S&P 500, higher by 0.8%. Small caps outperforming, up by 1 percentage point. In the commodity market, Brent and WTI taking shape and looking like this. Brent crude unchanged at 103, WTI at 97, following a weekend full of escalating strikes into this week. This week right here, full of central bank decisions, a Federal Reserve on Wednesday, an ECB, BOE, BOJ a few days away as well.
Yeah, how do you respond to a stagflationary shock? How do you deal with the fact that inflation expectations in the short term are picking up to a significant degree at the same time that potentially this could crimp growth? Not well. That's sort of been history. And right now, the Fed has an easier job, arguably, of the different panoply of central banks that are going to release decisions. The ECB, the Bank of England, I do not envy them, given the fact that they face a bigger hit to growth and potentially a bigger fiscal response that will create some issues for them on the fiscal and the debt side.
We've repriced energy. They need to reprice growth if these moves hold. This from Kuwait moments ago. The team here at Bloomberg just breaking down the cuts to production we've seen across the region in the Middle East right now. Output in Kuwait has fallen to about 1.3 million barrels per day. Before the war in February, that number was 2.6, double what it is right now. For the UAE, that number now has fallen to about 2 million barrels per day. The number before the war for the month of February, 3.56 million. That's just two nations. There's others in the mix as well. But you can see the cuts here. We're talking about half, production cut in half at key producers in the Middle East.
And this is only the third weekend. And this is what happens when basically you have the Strait of Hormuz blocked and this product has nowhere to go. We're still waiting on other numbers officially. We know that Iraq's numbers have come down, waiting on the Kingdom of Saudi Arabia. How much have they had to wind down some of their production given what's happening right now? And the issue with the Strait of Hormuz is that there's no answer right now. And everyone says you can pick apart and do little tools here and there, but the only silver bullet you have is reopening that strait. When it comes to the coalition, there's not a lot of countries that are running to the president's help.
The Iranians want you to feel it. They want you to feel the pain to make sure this never happens again. That's the goal of the Iranians. It's basically what we heard from the foreign minister earlier on this morning.
Ceasefire isn't the goal. That's not exactly what they're trying to do. What they're trying to do is to prevent this from ever happening again. And they've talked about $200 per barrel that is being an inevitability and, frankly, almost a goal. What can you do to offset this? What do you do if you are a corporate executive trying to come up with a plan and giving guidance? Good luck.
It's going to be very challenging, whether you're an oil executive or an executive that requires the use, which is pretty much every company, diesel, jet fuel, helium, fertilizer. This is going across not just the crude landscape, but other commodities as well. When it comes to the Strait of Hormuz, then what the Iranians are doing, there have been a tremendous amount of pressure put on this regime, and they are still not saying that they want to come to the table. Not just the Ayatollah and top brass of the regime taken out, but Karg Islands was hit. The military complex on Karg Island was hit. 9 out of every 10 crude barrels that Iran exports goes through that island. So Trump is showing them he can really hit them where it hurts, and it's not working right now.
And here we are Monday morning with equities up by 0.8%. on the S&P 500. Coming up this hour, Liz Thomas of SoFi with stocks on a 3-week decline as conflict in the Middle East sparks volatility. Jay Goldberg of Seaport looking ahead to NVIDIA's AI conference, and David Seith of Nomura counting down to this week's Fed decision. We begin this hour with stocks aiming to snap a 4-day losing streak. Liz Thomas of SoFi writing, periods like this are incredibly uncomfortable and impossible to predict, but it's unlikely that the stock market experiences a prolonged or deep drawdown. Liz joins us now for more. Liz, good to see you in the studio. Good morning.
Good to see you too. I sound optimistic in that statement.
On the edge of optimism.
Yes.
After a 5% decline, is that it?
In my defense, I wrote that last Wednesday. So
how much has changed in a few trading days?
I mean, here's the thing. This is all about how long this lasts and how many countries are impacted from a growth perspective. Now, this word of stagflation is back, and it's back in a strong way, and I think we're worried about that globally. But I do believe that if this only lasts for, let's say, a month or less, we will be okay. There will be a snapback, and generally, I would say it's likely that we go back to the trends that were in place in January and maybe early February, that sort of cyclical rotation in the market. It's obvious to me that investors still have risk appetite. They're looking to position themselves in places that have been beaten down. So we've had some rough days throughout this conflict, but it was interesting, even in the early days, you saw something like software bounce on those rough days. So there's risk appetite there, I think. As long as we don't destroy that risk appetite, we still have an opportunity to bounce back if this de-escalates.
You can see how this has played out in commodities and energy, obviously, and you can see that's how this has played out in rates, in yields, and how we're pricing central banks and easing or not over the next year or so. Where have you seen it play out in equities? Have you seen any pockets of capitulation in the equity market?
Well, I think the ones that had been beaten down already, I already mentioned software. I think that found its bottom, or at least is in the bottoming process, and investors are looking for ways to position in some of those that maybe were called falling knives before, but now the knife has fallen, right? So looking for opportunities. And something like software, even before this conflict began, it was trading as if the entire industry was going to disappear. And that's probably not going to happen. Will there be disruption? Of course. But disappearance? Probably not. So I think I'm willing to leg into it and watch how this plays out as the year progresses. Other places that have been hit pretty hard by this, I mean, all of the cyclical sectors have been hit hard. Industrials, materials, even consumer discretionary and staples have been hit because we have this big question mark of how much will companies pass through if there is an inflationary shock and the consumer has to pull back. Rather than saying a certain spot in the market, I'd like to see consumer confidence bounce back. And if inflation feels like it's more under control or we're not going to have this prolonged shock, I think consumer confidence will bounce back pretty quickly.
I think that John's question really points to the paddling duck aspect of this market, the idea that each sector has been really operating on its own dynamics. And you've seen, half the stocks go up 20%, half the stocks go down 20%. And sure, the index looks flat, but a lot's going on under the surface. How long can that feature be a feature of resilience versus really challenged should there be a true growth scare in the United States?
So what I think you need to see, and this is, I'm going to answer both of your questions at the same time here. True capitulation is something that happens when you see correlation and volatility rise together. And I don't think we've really seen that yet, at least not even for a full trading day. We saw it the Tuesday after this conflict began. We saw it in the morning. It was a really rough Tuesday morning. Everything was down. The good stuff was being thrown out with the bad stuff. If that happens for a few days, then I think you've reached that peak fear. I don't think we've priced in peak fear yet. And unfortunately, we might need to see a full flush before we can find some more footing. But as I mentioned to John, the risk appetite for cyclicals and some of the spots that are looking more attractively valued, I think is still healthy. So it's still alive. So that sort of paddling duck under the surface is still looking for places to buy in equities. And that, I think, as long as it remains alive, is a good thing for strength ahead. That's all sort of caveated by, let's say this does last over a month, and let's say break-even inflation rates spike and stay elevated. Let's say we've got a Fed who talks this Wednesday about stagflationary risks or starts to give us the impression that they're more concerned about inflation than jobs. Then I think we've got a conversation where something like hikes comes back onto the table later this year, which would probably terrify markets.
Would that make you more bullish or less bullish in the long end of the yield curve?
On the long end of the yield curve, less bullish. And I think we've seen the 10-year rise over this period for good reason. I mean, this would end up being an inflationary shock in many ways. And there is some maybe saving grace that we are a net exporter of oil, so as prices rise, there are certain spots in the U.S. economy that could benefit from that. But the consumer drives our economy. And if you've got a consumer that's under pressure already from inflation and has been for a number of years, and now we're taking one of the non-negotiable items of their spending, which is energy and particularly gasoline, to get to work, take your kids to school, and pressuring that, then we've got a consumer that has to pull back and make different decisions in other places.
The round trip on bond yields has been unreal. February up 30, or rather down 30 basis points, and then March up 30 basis points, back to where we were at the start of last month.
Yeah, and a full range of one particular benchmark yield. I mean, it's not exactly moving that much out of that range. I do wonder, though, is this going to be recessionary or disinflationary down the line? I guess that's the real question, because if you start to spend less, does that cause the economy to grow more slowly or even contract and lead to lower yields down the line? This is sort of one of the big debates right now on Wall Street.
Liz mentioned consumer confidence. You, Mitch, came out on Friday going into the weekend. Sentiment 3-month low. The survey director said this to us: the sentiment readings that came in after the attacks were considerably lower than what we were collecting beforehand. The survey period, really important here, it was between Feb 17th and March 9th. So ultimately, anything that came afterwards, you saw a very different picture. I wonder, Liz, in your mind, and just to wrap things up, do you think this is going to change how consumers interact with the economy when they get those tax refunds, which were meant to fuel a cyclical bounce in this economy?
Yes, I think in the near term it will. And there are two different consumer confidence readings. There's the University of Michigan and there's the Conference Board. The questions for University of Michigan skew towards inflation more than jobs, Conference Board more toward jobs. So I would expect that we see a bigger hit to the University of Michigan numbers than the Conference Board numbers. But yes, in the near term, consumers do usually pull back. I think we're still in an era, though, where the consumer will just hit pause and not stop and not reverse yet. We haven't gotten to a point in gas prices yet, I think, where people have seen demand destruction or entirely changed their behavior. But there is a pause button that gets hit, and you'll see that sort of bake through into the data. One of the things that's really important to watch in this upcoming earnings season is operating margins, to see if companies have needed to start managing their cost structure differently. I don't expect... Operating margins are very strong right now, in fact, above trend. So there is some buffer to absorb this. But I don't expect that there's companies that are going to manage it yet. But you do want to watch that line, that operating margin line, for a rollover, even just the beginning of a rollover, and then sort of manage your expectations if it starts to come down.
Liz, this was awesome. It's good to see you in person. Thanks for being here. Thank you. Liz Thomas there of SoFi, breaking down this market. You mentioned earnings season and corporate executives who will need to talk about this. That's about a month away, the middle of April, when the bank earnings begin.
Yeah, they're probably glad they've got a little time to see how long this is going to go on. And to the point of that one big, beautiful bill, I still go back to this. Deutsche Bank economists think that a sustained oil price around $100 a barrel would be manageable and actually would be offset entirely and then some by the one big, beautiful bill. But $150, another story, even $130. So there's definitely is a sort of sea change as it goes higher.
But not if some of that money was already spent, because consumers knew it was coming down the pipeline. They maybe spent it during the holiday season or in January when electricity prices were higher. This is going to get incredibly challenging for this administration as gas prices continue to tick higher. In some states, it's already above $5 a gallon. And I think when it gets to 4 and continues tracking to 5, that's when you can see more of these controversial tools coming out of the toolbox.
Average around 370 at the moment and climbing pretty quickly. Let's give an update on stories worldwide this morning with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. Treasury Secretary Scott Bessent saying this morning he sees more and more oil going through the Strait of Hormuz and expects oil prices to fall, quote, much lower than $80 a barrel in the coming months. Bessent went on to say his recent talks with his Chinese counterparts in Paris went well, and it's false to say President Trump's scheduled trip to China may be delayed due to the war. Iranian authorities are not seeking a ceasefire as the war enters its 3rd week. The country's foreign minister saying, quote, this war must end in such a way that our enemies never again think of repeating these attacks. President Trump saying Washington is talking to Tehran, but he's not sure if Iranians were ready. And U.S. allies responding to President Trump's calls to form a coalition to support safe passage through the Strait of Hormuz. UK Prime Minister Keir Starmer saying efforts to reopen the strait won't come as a NATO mission, but the UK will work with partners on a plan. A spokesperson for the German government also saying Germany won't provide military support in Iran, calling the war unrelated to NATO. That's your Bloomberg Brief. John.
Yahara, thank you. Appreciate it. Up next on the program, the Morning Calls Plus. Jay Goldberg of Seaport Global looking ahead to NVIDIA's AI conference live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Most assets should be able to come back within a month to 2 months. If and when the war ends. Another key assumption in our numbers is that Hormuz is going to be reopening, which might also be maybe too far-fetched an assumption. We are always one step away from a major escalation on the energy side, and that's, I think, the fear the oil market has.
I would say that was a balanced interview with Francisco Blanch of Bank of America a little bit earlier, aware of the risk but constructive on the outlook and confident that we can bounce back from this shock if it ends quickly, and that's a big if. Right now, crude looks like this. Brent pulling back by just 1/10%. Brent 103, WTI 96.60 and down 2 percentage points. That move sets the tone for this. Just helps equities on the margin following a 4-day slide. A 4-day losing streak coming into Monday on the S&P. We bounced back by 0.9% on the S&P, on the NASDAQ, up by 1 full percentage point. That's the price action. Let's get you some morning calls. First up, Wells Fargo cutting its price target on United Airlines to 130, citing risk from higher fuel prices. Your second call from Seaport Research downgrading Qualcomm to sell, saying the memory crunch is going to hit its customers the hardest. And finally, from RBC, raising its price target on Micron to 525, expecting data center demand to drive multiple expansion. That stock is up in the pre-market by 4%. Let's stick with tech. NVIDIA's annual AI conference kicking off today. Traders looking for a fresh catalyst, with the stock trading lower despite last month's blowout earnings report. Bloomberg's Ed Ludlow joins us now for more. Ed, welcome to the show, buddy. What are you looking for later?
Yeah, I mean, a fresh catalyst is exactly what the street is looking for, John, but that catalyst is going to have to be pretty spectacular to move the needle. You know, like the problem with NVIDIA is that it's a stock that's traded in a very narrow range, sideways, essentially, for more than 6 months. and all of the growth that came from some 2022 through 2024 that was predicated on real revenues growth, nothing's really changed since. So NVIDIA has this guidance for $500 billion of data center sales through the end of the year, and they'd already kind of indicated at the start of this year that they were tracking beyond that. If you basically, both across the buy side and sell side, were to summarize the sentiment, that $500 billion figure is going to have to change enormously to move the needle here. But it is, how can I say this with respect? It can be a bit of a circus. It's 48 hours of just NVIDIA everything, where you hear from the main man, Jensen Huang himself, half a dozen times, so brace.
Stock has done nothing for more than 4 months. It needs to start doing something, that's for sure. It's negative on the year so far. Ed, before you go, I wanted to squeeze in this from Reuters. Meta. This could be a big story. Planning sweeping layoffs, according to Reuters, that could affect 20% or more of the company. Is this a block-type play? What do you think this is?
Yeah, the interpretation is that it is a block-type play, that there's limited sell-side reaction, but they're all looking at it and saying, actually, following on from block, decreasing headcount such that it is, Meta is a good candidate to follow suit, and it would... The reason the stock might be higher in pre-market is that it would be evidence that AI is having a positive, meaningful impact for Meta to make that change. I would also note, capital expenditures or R&D, that their spending tracks very high relative to peers, and so maybe that either justifies it or they'll have to pull back on some things. But that certainly is the signal from the market in how this is being read.
Stock is up by 3% in the pre-market. Ed, good to see you. Looking forward to the show later. Bloomberg Technology, a few hours away. Meta employs about 80,000 people. 20% is not nothing, that's for sure.
And we've seen them already engage with rounds of layoffs like this, right? The year of efficiency led to the year of investment. This time, they're still investing a tremendous amount of money, but it is not going to increasing their staff, and that really speaks to the trend right now in tech.
Let's keep it on tech and talk about NVIDIA. Jay Goldberg of Seaport Global has a rare sell rating and 140 price target on shares of NVIDIA, writing this will likely be a tough year, buffeted by shortages and rising costs without the demand to bolster their results. Jay joins us now for more. Jay, welcome to the show. Let's talk about the difference between vision and execution. Today might be about vision. Why is the execution a problem?
I think the execution is a problem in part for a lot of factors beyond NVIDIA's control, right? One of their big limitations right now, why they can't take numbers up higher, is because they're limited at the capacity that got allocated by TSMC, right? TSMC can only make and can only package so many NVIDIA chips. NVIDIA's getting everything they can out of TSMC this year, and that's a pretty hard constraint. I think you look a little bit further out, there's also, I think, growing friction in trying to finance these data centers, right? I saw statistics yesterday that you look at the hyperscalers, they have something like $700 billion in operating leases off their books. And these, in order for NVIDIA's numbers to keep moving up in a way that I think will make people happy, you need to have some really big numbers. People have to pay for it, and that's getting harder and harder with the size of some of these data centers that are coming online in the next year or two.
Jay, do you expect to get any guidance as to what the Iran war is potentially going to mean for NVIDIA? And I say this, Anne-Marie made a great point about 33% of the world's helium transports through the Strait, and that is crucial for TSMC's production of chips and the world's majority of them. I mean, do you have a sense of how some of the big tech players, NVIDIA primarily among them, are really viewing this?
I think the primary concern around the Iran war for semis this year is more on the demand side. What that's going to do demand, you just had a guest on talking about oil prices going way up. That's going to crimp consumer demand and just make people a little more risk averse when it comes to investing hundreds of billions of dollars at data centers. In terms of little spot shortages like helium, I think there's a pretty good amount of helium already in reserves out there. I'm not so worried specifically about that one component. But you have to remember, in the context of everything in semiconductors is constrained right now, helium is just one more constraint. There's a lot of bottlenecks in the industry right now.
But Jay, on this point, when it comes to a company like NVIDIA, you had Jensen Huang with the president a year ago on that Middle East trip. I spoke to him in Riyadh. He was so excited about data centers in Saudi Arabia and the UAE. Do they need to rethink that rollout?
I think geopolitics are a giant wild card for the whole industry that nobody can predict right now. I mean, right after that same trip, the president tweeted out that they'd reached an agreement for NVIDIA to sell chips to China. We still don't have that, right? So we're still sort of bottlenecked by that as well. Certainly, Data center construction, I'm imagining, is not a high priority in the Gulf right now, and that's going to be a concern for lots of players here. But I think that's sort of for me, like worrying about the Iran war. There are bigger concerns than data centers and AI getting built.
Well, what are the bigger concerns? You mentioned China. We do have the president potentially weighing not going to Beijing on this trip. You mentioned these chips that are not even going to China yet. Does China have the appetite for the level of chips that the United States is willing to send?
I think there is a lot of demand out there for AI chips. And I think what's happening is this big meteor of demand has hit the industry and is rippling across. And NVIDIA got sold out first. Now we see that demand spreading to other companies like Broadcom, who I think is still very well positioned here. AMD starts to get into the mix as well, right? If you look at the numbers, NVIDIA is at sort of 83% share of data center semiconductors right now. And that's sort of plateaued, right? Where do you go from 83% share? It's hard to go up much from that. And I think if NVIDIA's going to it's gotten what share it has, and now we see competitors have seen the door cracked open for them, and they're rushing in there.
Hey, Jay, it's good to see you. Thank you, buddy. Jay Goldberg there of Seaport Global. Ahead of this developers conference a little bit later, Ed Ludlow, Caroline Hyde will guide you through that story later on today. Big tailwind for that company coming into this year was the sovereign story. And a lot of that was coming out of the Middle East. And I wonder to what extent that's been upended by the past few weeks.
Absolutely. A lot of money was being sent by these hyperscalers to the UAE, to Saudi Arabia, to create these data centers. What are they going to do in the future? These data centers now need to go underground because they're concerned of the security risk. This is a huge problem. Also, if you are shipping these chips from Taiwan to the United States, how are you doing that? It's going to be a lot more expensive, and potentially you have to avoid a huge region in the global world.
And these countries are making less money. We've seen the production numbers this morning coming out of UAE and Kuwait. Production cut in half, basically, as some of those key producers across the Middle East. Up next on the programme, David Seath of Nomura counting down to this week's Fed decision. Plus, Danny Berger has your morning movers. Micron rising ahead of results this week. Their stock is up by 4%.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Stocks are higher by 0.9% on the S&P 500, following a four-day losing streak through Friday and coming into Monday. We bounced by 1% on the Nasdaq and by 1% plus on the Russell 2000. In the commodity market, the highs overnight, 106.50 on Brent. The high overnight on WTI, 102.44. We're off those levels, 103 on Brent. WTI at 96.60, and that's breathing some life into this equity market rally. In the bond market, major moves on the month so far. Yields higher by some 30 basis points across the curve, 2s and 10s. Coming into Monday, we declined by 4 basis points across the curve, 2s out to 10s. The 10-year at 4.24, the 2-year at 3.67. The Fed meets on Wednesday, and some major questions about how they take this move in crude and put it into their outlook.
The way that the market has put it into their outlook is by subtracting one rate cut from their expectations. When you look at Fed funds futures, there now is one full rate cut being priced in, and only at the end of the year. Do you get confirmation of that? Do you start to hear about geopolitics? Do you start to hear about the idea that even transitory shocks could have big ramifications in the short term for inflation expectations? The rhetoric will be key.
It's a four-part act coming up on Wednesday. You've got the statement, the news conference, the outlook, and then the political cloud just hanging over the Federal Reserve at the same time. Some big questions about the future of Chairman Powell. You know, when I was asked this question a few times about whether he'd step down in May and just, you know, enjoy retirement, make some real money again, away from the central bank, which compared to his PE money days is like nothing.
Not real money.
He needs to make real money. I'm sure there's a lifestyle to upkeep. But for him, I do wonder if he stays around now, because these legal issues are just not going away.
They're not going away, even though the White House, in a sense, was gifted a gift over the weekend. On Friday, you had the U.S. District Court basically saying you cannot subpoena the Federal Reserve. And then you had Attorney Pirro come out and say, what we are going to do is continue the investigation and we will appeal this. Okay, then it went silent until just after midnight tonight, the president unleashed on Jay Powell and the district court for what they're doing. So it doesn't seem like they're trying to wrap this up anytime soon.
The senator from North Carolina is a key player here, Tom Tillis, good friend of this program over the years. He's basically saying, just take the out. Why are you not taking the out? The off-ramp is there. Your guy's lined up. We're going to confirm him in the Senate and we can move on. Here's the off-ramp. Take it, but they're not taking the off-ramp.
You know, I can't answer that question, but it feels a little bit like when you're in third grade and you say, you know, you're a dummy. No, you are. No, you are. And you keep saying it because no one's willing to stop. It feels a little bit like that.
The funniest part of that press conference was every reporter kept asking about Senator Tillis, and clearly Attorney Pirro was getting very annoyed. She said her lane is not politics, and at one point she goes, I don't even know who he is, talking about Kevin Warsh. I'm not sure the incoming potential Fed chair liked the idea of that.
There you go. We'll get back to that story in just a moment. Equity futures positive here by 0.9%. The opening bound just around the corner, less than 1 hour away. Let's get you some morning movers, some single names. Danny has more. Hey, Danny.
Hey, John, a little bit of deal news this morning. Public Storage will be buying National Storage, creating a $57 billion storage giant. The deal size is about $5.6 billion. They're offering just over $42 a share for National Storage. So you can say we're surging. We're not even at the deal price yet. That moves higher by 27% in the pre-market. Public Storage sinks by about 4% in the pre-market trade. Elsewhere, we do have some earnings, some big earnings coming up this week. We're going to hear from Micron on Wednesday. The sell side very bullish, out with a lot of upgrades. And again, bullish language ahead of that. So we are seeing the shares rally 3.9% in the pre-market. TD Cowen says that they expect a big beat in RBC, lifting their guidance ahead of those results. Again, they come on Wednesday. Finally, rounding things out with another set of earnings from Dollar Tree this morning. Shares up 1.9%. In the past year, they swung to a profit after a loss in the quarter prior. However, their outlook was somewhat muted. It slightly missed expectations, but just want to point out Dollar General had some pretty poor earnings last week. They also had expectations that didn't meet the bar of Wall Street for these value-seeking stores, so some of that might already be priced in. Shares moving nearly 2%, John.
Danny, appreciate the update. Danny, thank you. Danny Berg and Matt Miller coming up on Bloomberg TV in about 30 minutes' time to guide you into the opening bell. Look out for that a little bit later. Traders are awaiting this week's Fed rate decision. It's just around the corner. The central bank widely expected to keep interest rates on hold. Bloomberg's Enda Curran joins us now for more. Enda, we talk about that 3-4-part act. Let's park the politics and focus on the three. A statement, a news conference, the projections. What are you and the team focused on down in Washington?
So the real action is going to be, this will be the first time we get to hear from the Fed, John, in terms of their response to the Iran war and the oil shock. As you mentioned, no change to policy expected, but they're going to put out new forecasts that are expected to show an increase in their outlook for inflation. That will be interesting, and at the same time, they're going to nudge down, or expected to nudge down, their outlook for growth. So then when you consider the fact that we're at that point where hawks are really in control of the FOMC committee at the moment, those ones who are more worried about inflation than anything else. When you consider that weak February employment number and the fact that there are those warning $100 a barrel oil will eventually, once you look through it, become a tax on consumers and business and will impact growth, then I think what we could see on Wednesday is the start or the beginning of the Fed debate around how will they respond to that Iran oil shock, and will it ultimately result in rate cuts, and will they, of course, start to use the word transitory again?
And do we have an appreciation for where inflation is right now? And the reason I raise that question is because many people in the economics industry were looking at the PCE data on Friday into the weekend and were focused on the methodology that was used for certain indicators, certain readings on things like legal fees. What's your takeaway of what's going on at the moment?
I think, look, inflation remains above the Fed's target. It's certainly a core PCE, their own preferred gauge, is still beyond, their comfort zone. But, John, it's broadly, what I'll say, stable, perhaps. By component, there's certainly different signals being given off. For example, the goods sector, we saw in those numbers last week, the inflation story there is still somewhat mixed. But the service side of things, you look at the insurance sector, you look at periodically cost linked to education, tuition, healthcare and the like. There's clearly parts of the economy where inflation is real, sticky and persistent, and that's why the hawks on the FOMC are in control at the moment, and that's why we had several at the last Fed meeting warning that at some point they may need to start talking about hikes. Now, I think this Iran shock might put a different hue on the debate at the Fed. I'm not necessarily sure if the Fed will be talking about hikes near term. It's probably going to be more of a story of looking through that. But there's no doubt about it in terms of the Fed getting back to its inflation target. I mean, that remains a long way off for now.
And good to see you. Enda Curran down in Washington. Appreciate your time, sir. David Seif there of Nomura weighing in on the Fed's path forward, writing this. We continue to expect 2 cuts in June and September under Chair nominee Walsh. We do not think that the Iran conflict significantly lowers the likelihood of Fed rate cuts. A man who knows who Kevin Walsh is. David joins us now for more. David, good morning.
Good morning.
I'm sure you'll let that joke slide. It's good to see you. Let's talk about what you're expecting from this chairman. Chairman Powell, in his penultimate meeting, I believe, on Wednesday.
Yeah, well, we're certainly not expecting any change from the Fed, and I think that at this meeting, and I think Chair Powell has to continue to reflect the entire committee as he does at every press conference, and so really separate from what's going on in Iran, there has been, I would say, a change in Fed rhetoric. Not from the core of the committee like Powell, but from some members of the committee who have gotten a little bit more hawkish. So we might see Powell reflect that. At the same time, we had an 11-to-1 decision with only one dovish dissent at the January meeting. We could easily see this as a 9-to-3, which is our base case, with 3 dovish dissents. So Myron this time joined by Bowman and Waller, all 3 of them dissenting. So the decision itself could actually be seen as dovish, with 3 people voting for a cut instead of just 1, with the press conference a little bit more hawkish. When it comes to Iran, though, we really just don't see this having a big impact on Fed policy at this point. So sure, the statement will, of course, acknowledge geopolitical risk. It might not use the word Iran, but we really just don't think this is actually that major for the Fed, despite changes in market pricing.
At this point, how much is that phrase doing some heavy lifting?
You know, it's not doing as much heavy lifting as you might think. I think that the Fed will have to increasingly acknowledge the two-sided risk from this. But the important thing is that it's two-sided risk. So yes, this has raised oil prices. It will probably raise headline inflation. But the Fed really focuses in on core inflation, and that's really important here. And so we really just don't see a huge amount of pass-through from this sort of headline inflation rise, which is really oil-focused, into core inflation. And so we look to the Fed to probably look through this. I think it would take a lot longer of a conflict, significantly more than the, say, additional month that markets are thinking, before the Fed really has to consider this. And it's not even clear that its response would be to be more hawkish, as is being priced in.
That said, even stripping this conflict out, looking at core inflation, it's actually inflecting upwards so far this year. And you're seeing a lot of services and goods that have actually been getting expensive at a faster pace. How can they really reject that?
Well, there's no question that we've been seeing some elements of supercore inflation start to creep up a little bit. And that has, again, nothing to do with the Iran war. I think that is why you've been seeing, as I was talking about before, some members of the FOMC become a little bit more hawkish. And Powell may have to reflect this. It's not really clear that he himself feels that way. But again, you know, we're at the cusp of a major change in Fed leadership, one that we think is going to bring more dovishness to it. And so even if a Powell-led Fed were Powell to remain as chair for, say, another couple of years, even if that was something that was likely to get more hawkish outside of the effect of the Iran war, it's really not clear that Chair Warsh, once he's confirmed, is going to be on board with that at all.
Can we go down a little rabbit hole with core PCE? There was a huge debate over the weekend about a key aspect of core PCE that was changed without disclosing it, legal services.
Yeah.
If they hadn't changed the methodology, that would have been up more than 11%. Instead, it was up less than 1%, which seriously skewed the entire data, which normally is completely predictable based on the other inputs. Is this a political act by the BEA? Is this how do you take this and understand it in the framework of whether some of these numbers are legitimate?
Yeah, I'll tell you, it does seem like the BEA sort of changed horses in midstream here, and usually we, along with many other forecasters, are extremely accurate. Almost everybody was off by a full 10 basis points, which is a big miss on this. And it was essentially 100% due to this legal services fee change. And it was just a matter of, usually it's taken from the CPI when it goes into PCE, and this time it was taken from the PPI. There was no advance warning given on that, and that made a big difference here. I think some criticism is pretty justified. I can't say whether it was political or not. I will say in the BEA's defense that the BEA does have more discretion than the BLS, which comes up with the CPI and PPI numbers, to do these sort of methodological changes. And had it made this change where it didn't matter so much, I think there would have been a little bit of people shrugging their shoulders. I think what is leading to this debate and criticism, which I think is at least somewhat fair, is that they made this change right when it mattered the most. And you know, it is what it is. I don't think there's any way to sort of sugarcoat that is what happened.
Timing isn't great. Let's finish on the calendar. The chairman of the Federal Reserve, Chair Powell, March 18th, April 29th, then he should be done.
Yes.
What are the prospects of him hanging around?
I think there's really three options here. One is, does he leave immediately? Two, does he wait out the midterms and see whether he can you know, if the Democrats win the Senate, he might be able to resign after a few months and prevent Trump from at least nominating a successor and leave the seat vacant indefinitely, or force a compromise candidate, or stay around forever. I don't think he's going to stay around for the rest of his term, which would be until 2028. But I do think that as Democratic prospects of taking the Senate rise, it does make it increasingly attractive for him to at least take a look at and see how November goes.
That screams politics, doesn't it?
It does scream politics.
Is he a political beast?
I think that Powell avoided politics for quite some time, as much as he possibly could, and it was really a sea change what happened on January 11th with his response to the subpoenas, which do not appear to be going away anytime soon. It does appear that he has based some of his statements.
But let me piece those things together, because those pieces of information, your view is important. You just said you don't think the subpoenas are going away. One, there's a prospect that Powell stays until November. Two, doesn't that raise a question about the future of Walsh's nomination?
Subpoenas did not go away despite the ruling from the district court. I do not think that they will be a constraint to Walsh being in practice. They will be withdrawn if necessary in order to make sure that Walsh is confirmed in time for him to be on there for the June meeting.
So basically you think Pirro at some point stops the investigation, because Senator Tillis has been very emphatic that he will not go ahead unless the investigation to the Fed is dropped.
I think Tillis is likely credible. There are ways around that in the Senate. I don't think that Thune would necessarily use them. So yes, I mean, I think that they will keep this investigation going as long as they can, but will ultimately withdraw it or end it in time to make sure that Walsh is confirmed for the June meeting.
Okay, David, good to see you.
Great to see you.
By. David Seif of Nomura on what could be a messy summer for the Federal Reserve. Let's get you an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. Iran launching fresh attacks across the Persian Gulf as the war enters its third week. The UAE and Saudi Arabia reporting drone and missile attacks overnight, with the key Fujairah export terminal suffering another hit. The repeated strikes have led to the UAE cutting its oil production by nearly half since the war began. Elsewhere, Meta is planning layoffs that could affect at least 20% of the company. Reuters reporting that top executives have signaled the plans to other senior leaders at Meta. No dates for the cuts has been set, and the scale of the layoffs has not been finalized. The cuts are aimed at offsetting costly investments in AI infrastructure. And a top Apollo executive is sounding off on, quote, the arrogance in private markets. The Wall Street Journal reporting the firm's co-president of its asset management arm blaming the media for creating a frenzy around private credit. John Zito saying, quote, obviously we are in the middle of a private credit party, apparently. If you do credit well, it's supposed to be pretty boring. That's your Bloomberg Brief, John.
Yahara, appreciate the update. Thanks for this morning. Thank you. Up next on the program, setting you up for the day ahead. Plus, we'll touch base with Barbara Reinhardt of Voya Investment Management as the conflict in the Middle East whipsaws equities. Equities this morning up by 1% from New York. You're watching Bloomberg TV.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
It's crazy to me that you see all these narratives being written that central banks are going to tighten into this. I think central banks have learned along the way you don't tighten into energy shocks. I think if anything, you know, if this gets worse than people anticipate, we should be talking about more cuts, not less cuts down the line.
You hope they've learned along the way. Is I imagine what Chris Verona-Strategas was meant to say a little bit earlier when he spoke to us earlier on this morning. Equities are doing better this morning. On the S&P 500, firmer by 1%. On the Nasdaq, up by 1.1. On the Russell, up by 1.3. Two pillars of support this morning. One is a shaky one. We'll talk about it now. Brent and WTI. Brent crude off the highs from overnight. 102 at the moment and down 1%. WTI breaking 95 now. We're down by about 3.9%. That is a fragile pillar of support because that can change any second, any moment. The tone out of the talks over the weekend with China and the US, constructive, even if, as the press secretary suggested just moments ago, Caroline Levitt, that meeting between Trump and Xi might be delayed. China and the US agreed to stable trade ties to benefit the world. The readout of that meeting coming from the Chinese side just moments ago.
So basically the Chinese side is saying this détente, we want it to last and we want a working relationship with the United States. What's interesting about this meeting, though, is I actually long thought the second Trump had these strikes in Iran, the meeting would be delayed because the Chinese like everything to be done ahead of time. And this is the first real meeting we've seen before that meeting is set to take place in just 2 weeks' time. So a lot of the deliverables aren't yet on the table, and Trump is now solely focused on trying to reopen the Strait of Hormuz.
And that is a major focus, not just for him, but for everybody else as well. As we count you down to the opening bell, this is the trading diary for the week ahead. At 2 p.m. Eastern Time, the NVIDIA CEO, Jensen Huang, speaking at the company's AI conference. Look out for that. Look out for this too. 3:30 Eastern Time, the President and Vice President J.D. Vance speaking to the press. The Vice President's been fairly quiet recently. His thoughts, hopefully, on the war coming up a little bit later. On Wednesday, PPI data plus a Fed rate decision with Chairman Powell. On Thursday, rate decisions from the BOJ, ECB, and BOE, plus another read on the labour market. Jobless claims just around the corner. Barbara Reinhardt of Voya Investment Management writes this about the market. There is a real risk of a whipsaw in equities because of the news-related nature of the war, and this is clearly a highly uncertain time for investors to make any major bets. Barbara joins us now for more. Barbara, good morning. Good to see you.
Good morning.
Our capacity to absorb shocks with the stock market just 5% away from all-time highs. Is there a cushion there?
The valuation cushion certainly isn't there, but the fundamentals going into this war were actually quite good, right? You had wage inflation was coming down pretty dramatically. You were close to the Fed's target on core personal consumption expenditures or getting there. So the fundamentals were great, and you also had very good earnings support. So going into this, it's very different than it was in 2022 when you had inflation was rampant. PCE at the time was over 5.5%. Wage inflation was spiraling, and you had a Fed that had to be very aggressive. Turning into this one, you had an easing of monetary policy, you had fiscal support, and you had very strong earnings. So it's a very different place we were in 2022.
It seems like no one's really worried about a massive drawdown. They're all worried about missing out on the upswing when you do get some sort of resolution to this. Would you say that's accurate?
Well, there's been a lot of nervousness underneath the market. While maybe the S&P is only about 4.5% off of its all-time high, the internals of the market have been very weak, right? Liquidity has been very low. There's been a lot of reduction in length and positions. And also, if you think about where most of the assets had gone in the first 2 months of this year into the emerging markets and into Europe, those markets are down closer to 10%. So
we see that there's been some relative weakness. Some of our short-term sentiment indicators are oversold, but they're not looking at capitulation yet, where you would say shut your eyes and buy. The thing to do at this point, from our view at Voya, is that when you have an initial surge in oil prices, bond yields generally get dragged up with it. We do not think that any central bank is going to be hiking into this. This is a supply shock, not necessarily a demand shock. So if you want to do something in your portfolios, probably buying some duration at this point would be a very good bet. That's what we've been hearing from a number of guests so far this morning. Is that because there is an expectation that growth will have to slow, or is it just simply capitalizing on the wrong way bets that people are making, which seems to make sense in the short run but never does in the long run?
Well, I think there's two things. Number one, no central bank is going to be hiking into this, right? This is a supply shock that consumers are going to be feeling in their purses, and bond yields get brought down because consumption starts to slow. More of your pocketbook has to get spent on energy and gasoline prices. That, of course, is going to slow inflation pretty dramatically, and that's why bond yields are likely to fall off of this.
What kind of levels in WTI, Brent, or gasoline do you predict potentially mean that this would actually impact growth and impact consumers?
In order for it to really hurt the U.S. in a significant way, you would probably need to see Brent somewhere around, WTI, somewhere around $140 a barrel for a pretty long period of time, like 2 to 3 months, in order for it to really hit the U.S. economy very hard.
If the bond market's a buy, are energy stocks a sell?
Oh, so look, if the bond market's a buy, unfortunately, it's the news-related nature of this. If you're selling equities today, there's a real chance you could get whipsawed on something
in both directions.
Yeah, exactly. That the straits suddenly open up, or they suddenly end up shutting down again. So I think if you're going to look at this for a longer-term time period, like we do when we're investing for retirement, you try to invest through these political shocks. And if you can get a capitulation, oversold environment, that's when you would potentially start to add.
Have we seen that capitulation yet, do you think?
I don't think you've seen it necessarily in the U.S. If you were to get another 10% drawdown from here, or even maybe another 5 to 5.5, you might start to see it. We look at things like AAII bull bear. We look at the put call ratio. We also have weekly sentiment indicators and also our own homemade ones. You haven't seen capitulation. You've seen distress. You've seen low liquidity levels. But you haven't seen it where you would say, shut your eyes and buy.
Not seeing it this morning either. Barbara, good to see you.
Nice
Thanks
to meet you.
for being here. Thank you. Barbara Reinhardt there, Voya Investment Management. Equities this morning higher by 0.9% on the S&P 500. A lot can change between now and tomorrow morning. In the meantime, crude is lower by 3.5%, 95 on WTI, Brent at 102. Coming up tomorrow, Julian Emmanuel of Evercore, Bob McNally of Rapid Energy, Liz Ann Saunders of Charles Schwab, and Lisa Hornby of Schroders. Monday morning, and some of you wishing for Friday already. From New York City this morning, good morning. This was Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, discourse is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now that these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
We are kicking off the week with some futures optimism here. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, President Trump calls on other nations, including China, to help secure passage through the Strait of Hormuz.
Oil market set for more turmoil. Brent trades above $100 a barrel at the start of the week, though futures start to drop.
Plus, Meta rallies on a report of sweeping layoffs while NVIDIA kicks off its AI conference with investors looking for a surprise to jolt the stock.
I feel like that's the lesson all these companies are going to learn. Lay off people, say it's because of its AI, and the shares will rebound and bounce.
Right, but can you have sustainably strong earnings with fewer people in your workforce?
Well, I guess Meta's about to find that out. Let me show you what the stock is doing this morning. It is up 3%, and this is kind of two sides of the trade. So Meta says it's going to cut 20% of its workforce to offset AI costs. That was a Reuters report. And then they also announced plans to spend up to $27 billion over the next 5 years to access Nebius cloud infrastructure. It's a neo cloud, whatever that is. So firing employees so can invest in Nebius, basically.
All right. That's a big bummer, obviously, for a lot of people feeding families. Let's take a look at what's going on in the markets right now. S&P futures are higher, 0.9%. We closed down on Friday. You do have Brent crude giving up some of its gains right now. It's down to 101.67. It had been up to 105 and hanging out in that area for a while. NYMEX WTI was up over $100 for a while last night as well. The 10-year yield coming down about 5 basis points now to 4.23. So it looks like risk-on moves are in store for this market this morning, Danny.
And we're tracking the geopolitics as to what we'll do to oil and other assets. President Trump trying to assemble allies to reopen the Strait of Hormuz as the war with Iran shows no signs of letting up. Trump also claims that the Iranian regime wants to make a deal, but Iran's foreign minister says that is not the case.
No, we never asked for a ceasefire, and we have never asked even for negotiation. We are ready to defend ourselves as long as it takes, and this is what we have done so far, and we continue to do that until President Trump comes to the point that this is an illegal war with no victory.
Let's get the latest with Bloomberg Washington correspondent Tyler Kendall at the White House. So, Tyler, certainly some conflicting messages between Iranian leadership and this White House.
Right, Danny, good morning. Conflicting messages after President Trump appeared to float the possibility that we could see talks, but then that was shot down by Iran, saying that that outreach hasn't happened. We heard from President Trump over the weekend saying that it is because of him that an agreement hasn't been reached, because he is unhappy with the terms that have been put forward, saying that in order for him to agree to a deal, he would have to have firm commitments that Iran was abandoning its nuclear ambitions. At this point, it is unclear exactly who is speaking with whom and if those talks are actually happening, as the White House does intensify its calls to reopen the Strait of Hormuz. Of course, the top disruption that we've been watching closely. And as you mentioned at the top there, President Trump is now demanding that allies take part in potential naval escorts to secure the strait, though at the moment it appears that our allies are wary of that movement. A NATO official did confirm in a statement with Bloomberg News earlier today that individual allies are in talks with the U.S. about what more could be done in regards to the strait, but it appears that efforts are falling short of a full naval mission. For example, we heard from the UK Prime Minister Keir Starmer earlier this morning, who said that a NATO mission will not be sent to secure the strait, though people familiar with the matter do tell us here at Bloomberg News the UK is floating some other potential options that could be put on the table, including potentially deploying autonomous mine hunting drones. Matt and Danny, this comes after over the weekend President Trump did threaten the NATO alliance in an interview with the FT, saying that NATO will have a, quote, very bad future if it doesn't deploy ships. We know that this is something that is actively under consideration and a top priority for this White House.
I know, Tyler, that French President Emmanuel Macron said it's up to President Trump to clarify his objectives. He reportedly declined to clarify those objectives in a call with our allies, and he told a Fox news host that he'll know the war is over when he feels it in his bones. But he did tweet on, or post to Truth Social on March 6th, that there will be no deal with Iran except an unconditional surrender. So that means there would be no terms at all. They have to simply say, we quit and we're at your mercy. Are these objectives, are these goalposts going to stay where they are?
Well, Matt, we're going to ultimately have to wait and see, because as you're laying out here, there has been mixed messaging from the administration, though if you ask officials here at the White House, they still maintain that those core goals when it comes to dismantling Iran's nuclear program, its ballistic missile system, and its support for proxy militia groups remain front and center. But you're exactly right. There are, of course, questions here about exactly how the administration is going to be measuring progress. As we heard from some senior administration officials in interviews over the weekend, that they do expect this war to continue on for the next few weeks. That, of course, then raises questions about just how long we could see these disruptions. For example, last, when it comes to the Strait of Hormuz, I will put on your radar that President Trump had appeared to threaten that he could delay his trip to China, for example, if we don't see Chinese involvement in sending ships over to reopen the strait, though we did hear from the U.S. Treasury Secretary Scott Bessent in an interview earlier this morning, appearing to downplay that there would be a connection between China sending ships and President Trump delaying his meeting. But that's another thing to keep on your radar, as it appears it could be possible that President Trump would delay that critical visit to Beijing at the start of next month.
All right, Tyler, thanks very much. Tyler Kendall there at the White House. Oil, right now we see giving up some of the gains that we had seen earlier. Here's Brent crude now coming back down to $102 a barrel, and we see NYMEX WTI had gone up over 100, is back down now. This, even as Iran steps up attacks on ports and airports. B of A commodities analyst Francisco Blanche says the next 2 weeks are crucial for reopening the Strait of Hormuz.
Shippers themselves will be very, very cautious not to take that route if there's risk of their vessels ending up in fire. And we've seen 20 of those already being attacked or so, I think. So it's a difficult time for shippers, for insurers. Everyone's kind of waiting for a resolution, but if it doesn't come up in the next few weeks, I mean, I'm going to give it maybe until the end of the month, things can get very, very complicated for oil prices.
Let's discuss with Will Kennedy, Bloomberg News Director for Europe, the Middle East, and Africa. And Will, it seems as though it would be in the best interest of Iran and obviously in the best interest of Russia as well to keep the Strait of Hormuz closed.
Good morning, Matt. That's going to be the concern right now, is that for Iran, this is the point of maximum leverage, and the longer it can keep the strait closed, the more economic pain it will inflict on the rest of the world, putting pressure on the US to find an end or an exit from this war. But prices are down today, and I think that reflects some hope that there may be a solution at hand. But the other thing it reflects is that we've got to look at the energy system as a whole, and that, you know, crude oil is only one part of that. And if you want to look at the pain, you should be looking at the refining system, some of the products that come out of refineries like jet fuel, fuel oil that's used to power ships, and diesel that's used to power cars and trucks and factories around the world. And those prices are very high indeed. And so there's not oil needing to go, able to go into those refineries, but that's sending the price of refined product much higher.
Well, one of the bets that this president seems to be making is that the pain will especially be acute for China, that China needs the Strait of Hormuz to be open, and President Trump floating this idea that the summit with President Xi would be delayed unless China does help. Does it seem like there is any willingness from China to send escorts, to send a navy to help open the Strait of Hormuz, and is it necessary for them to do so?
I think most people think that that's quite unlikely. For the Chinese to use its naval power in that way would be unprecedented. And it's also incredibly striking that the US president, who's often leads a country that's often had an antagonistic relationship with China in the last few years, and that sees the rise of China as the greatest strategic challenge, is asking for Chinese military help to solve this problem. Yes, in some senses, interests are aligned. The Chinese need this strait to open at some point soon. It has insulated itself with some very large strategic reserves, but it gets a lot of its oil supplies from the Middle East. So the interests are aligned, but whether China would be able to lend that very direct military help to solve this problem seems quite unlikely.
Well, thank you very much for that. That's Bloomberg's Will Kennedy in London. Now, elsewhere, away from the war in corporate news, Meta is reportedly planning layoffs that could affect 20% or more of the company. It's also spending $27 billion over 5 years with Nebius to build out AI infrastructure. Let's get to Bloomberg Tech's Ed Ludlow. Ed, just how necessary are layoffs at Meta in order for them to keep spending at the rate that they are?
Yeah, I mean, the capital expenditures commitment is very high, and the Reuters report details that that is the trade-off to make cuts at 20% or beyond 20% of total workforce because of the rising infrastructure spend. And the interpretation of the sell side on this is interesting. They look at the Block announcement for a few weeks ago and say that, you know, there is evidence within Meta internally that AI productivity could help them, and that would be a part of the story in eliminating some roles. But also, like, it's a signal of intent to keep spending. And if you're going to do that, reducing headcount at those levels also protects margins, right? You know, the terminal team with that chart just showing capital expenditures as a proportion of revenue, like very, very high. But Meta's still a profitable company, right? And so protecting the bottom line is something that the sell side has kind of cheered, and one reason the stock's up in the pre-market such as it is.
What do we know about the deal with Nebius, Ed? You know, last week we were talking about Meta's own chips, and maybe they're not quite there yet in terms of competition with NVIDIA or Google, but will they be using their chips in these, you know, neo clouds?
Yeah, it's the everything strategy. So their own chips, buy NVIDIA and AMD chips for their own data centers. And then this third part of the strategy is the Neo Cloud, buy AI-specific capacity. So it's a 5-year agreement for $27 billion total, but $12 billion of committed or dedicated compute next year. That's quite aggressive and accelerated timeline. Nebius principally relies on NVIDIA-based systems, and you know, that's been a part of their selling point, just as CoreWeave in this country has made it a selling point as well. And you know, they need compute. They are compute constrained. The demand for internal workloads is greater than they have access to. So you know, this is a big spend by them on the Neo Cloud portion.
Yeah, the risk is in execute and supply, not in demand, as Mark Zuckerberg has made very clear. Ed Ludlow, Bloomberg Tech co-anchor. That show kicks off at 11 a.m. Definitely tune in for more on that. Let's get a look right now at some of the other movers on our radar this morning. Alibaba is revamping its business to put all AI products under a single unit that will focus on profitability. So you see Alibaba shares. These are the ADRs here trading up 3%.
In other tech movers, Micron sealing a deal to build another site in Taiwan. That was announced 2 months ago. They also report earnings on Wednesday's shares climbing more than 4% ahead of that.
And Dollar Tree delivered a mixed annual outlook, raising doubts about its ability to keep winning over shoppers with low prices.
And finally, some deal news. Public Storage set to acquire National Storage in an all-stock deal worth about $10.5 billion, creating a $57 billion storage giant.
That's a legit Halo asset, right?
Yeah, that's Bruce Richards likes Halo, right?
Yeah, I mean, a lot of people like Halo right now.
True.
Hard assets, low obsolescence,
Nice.
I believe is the O.
Yeah, that sounds right.
Yeah.
Well remembered.
All right, coming up, UniCredit's attempt to take over Commerzbank, or is it? Berlin says no. We'll talk about it with Steve Aarons out of Frankfurt next. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get now to high interest. Look what's making headlines around the world. The Wall Street Journal is reporting that Apollo executive John Zito has warned of arrogance in private markets, saying troubled private credit loans to smaller software firms may recover only 20 to 40 cents on the dollar. He says many private equity valuations are wrong. He's actually said literally all marks are wrong, but a spokesman later clarified that he was referring only to the software loans out of private credit. So we'll continue to keep an eye on this space. Obviously, this show is very focused on the private credit party, as Mr. Zito called it in what was apparently an off-the-record conversation. Elon Musk's AI startup, xAI, is recruiting Wall Street bankers, traders, and credit analysts to train its Grok chatbot on complex finance strategy. The hires will help Grok to model deals like leveraged loans and mortgage bonds as AI firms race to sell tools to investment professionals. The push comes as xAI tries to catch up to rivals like OpenAI and Anthropic in business software. And UniCredit is making a $40 billion bid for Commerzbank, pushing its stake past the key 30% takeover threshold under German law. The CEO of UniCredit, Andrea Orcel, says the move gives his bank flexibility over the potential of a future takeover, though full control isn't the goal right now. A formal offer is expected in early May. And joining us now is Bloomberg's Stephen Ahrens. He leads our EU finance coverage out of Frankfurt. And Stephen, they have to make this offer, right? It's a procedural motion after they pass the 30% stake. But they don't seem to want to take over all of Commerzbank right now. So why build such a big stake?
Yes, you're right. The offer sort of needs to take place and then gives Commerzbank the freedom. It's going to be off the table. They don't expect many people, any people really, to accept it. And then they're free to buy more shares if they want to. So that's the, I think, the rationale behind this. They want to be able to actually take over the bank, but they can't yet. There's government opposition to the potential deal. And once they have that flexibility, they have more time to talk to the government, to talk to the bank, and prepare, lay the groundwork for a potential acquisition bid further down the road.
Well, they'll need that time to talk with the government because already the German government, Stephen, has dismissed this, calling it unacceptable. What is their position?
You're right. The government is very clear. They've been against this deal from the very start when Orgel first disclosed the stake in UniCredit a year and a half ago. They've always said, we don't want this to happen, and they've reiterated that position just today. So it's very unlikely they ever change a position, but it seems Orgel is just not giving up. He really wants this deal. He really wants Commerzbank. He realized it's going to be really difficult to buy Commerzbank if Berlin continues to oppose it, but he's just banking on time. I mean, the government could change, I suppose, or even the stance, and that's what he's preparing for.
It seems like, you know, everybody's pushing for cross-border mergers as a goal. The ECB has stated this, and most governments are for it as well. But no one wants one of their own banks to be the target. Is that how it sits in Europe right now, Stephen?
Yeah, I mean, it's absolutely true. Everyone is paying lip service to the idea of an integrated Europe, but when it actually affects their own banks or their own financial services companies in their own country, there's a lot of reticence. They don't want it to happen. They want to have control, domestic, national control over those very crucial parts of domestic infrastructure, and they hate the idea of giving it up. So yes, that sort of nationalistic feeling plays a big role here, despite all the the claims that they support European integration.
Stephen, thank you so much for joining us this morning. That's Bloomberg's Stephen Ahrens. And catch Bloomberg Deals that airs every Wednesday at 12 p.m. New York time, hosted by yours truly. This will definitely be part of the conversation this coming Wednesday. Coming up on this show, mixed messages from Wall Street strategists about a stock market reaction. We asked RBC's Lori Calvasina where she stands. That's coming up next. You're watching Bloomberg Open Interest.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound.
Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Strategists still see equity pain ahead, but no bear market. Goldman's Peter Oppenheimer warns of a downturn, but says we are not going to get that 20% decline. He says that geopolitical and energy shocks have historically led to short-lived corrections and reverse quickly. Meanwhile, Morgan Stanley's Mike Wilson believes the correction phase of this conflict is nearing an end. The S&P 500 is down 4%. I don't know if you can call that a correction from its highs, and had its worst two-week performance since April's tariff turmoil. Joining us now is RBC head of U.S. equity strategy, Lori Calvasina. Lori, is it your expectation that there's more pain in store for this equity market?
So it wouldn't surprise me. I mean, we define on our tiers of fear, and I know I'm scaring everybody by talking about this. I'm actually not that bearish.
Not at all, actually.
I'm not. I'm actually
you're bearish at all. Yeah.
No, I'm actually pretty neutral. But, you know, part of it, right, last year around tariffs, actually heading into that situation, we kind of formalized our process for thinking about drawdowns. And so we sorted them into 4 tiers, which we call the tiers of fear. And tier 1 is a garden variety 5 to 10% drawdown. We tend to have these often, right? We had one last October and November that bottomed out at 5.1%. It's possible this could be it, right? I mean, that one that we had last fall felt like it would go much deeper, and it didn't. And the U.S. is benefiting right now from, you know, kind of the safe haven trade at the moment. So, you know, it's certainly possible this could be it, but it wouldn't surprise me at all to see us go down a bit deeper. And if you kind of hit that 10% mark, 6,300 is about where you go. Now, we have said that the second tier of fear, which is what we had last year, that 18.9% drawdown, we've had 5 of those since the great financial crisis, where we've had peak to trough declines of 14 to 20%. Risks of that have grown, but you have to get to a point, right, where there's genuine fear of either a recession or some sort of contagion. And I don't think that's where we are yet. I don't think we're really even close to that, frankly, from talking to clients, from seeing what companies have been saying. I was at our financials conference last week, and the tone was solid and steady. So I understand the fears and kind of looking at that left tail worst case scenario, but we're just not at that point yet where you'd even kind of get to a tier 2.
Did you see the John Zito story in the Wall Street Journal today?
On private credit.
Top dog at Apollo. Yeah, not just private credit, though.
Yeah.
He said, I told my wife last night, I feel like the market should be down at least 10%.
Yeah.
And that was last month. That was before we invaded Iran.
Yeah, well, look, I mean, I don't want to sort of speculate. I wasn't in the room, right? But in terms of why we've been so resilient in the U.S. equity market, we've been watching PE multiples creep down since last August, right? And it's been AI jitters. It's been private credit fears. Geopolitical tensions, frankly, started to really balloon back in January. I was up in Canada the first week of the year. We talked mostly about Greenland, not really about Iran, but I went back and looked at betting market data, and we actually saw expectations for the U.S. to strike Iran spike back then, and that's around when the S&P turned choppy and the energy trade really took off relative to the S&P. So I do think there was a tremendous amount of preparation going into those strikes. I think obviously people were not anticipating the extent of it. And you know, when I talk to my colleagues sort of on the derivative side of the business, right, it seems like a lot of people have been very well hedged coming into this. So I think there is a lot of nervousness, but I think there's also a lot of protection on as well.
All right, you're going to stay with us, Lori. We've got the opening bells up next as futures rise this morning. Oil back down to only a mere $101.78 a barrel for Brent crude. S&P futures higher and NASDAQ futures up by more than 1%. We're back with the opening bell on the other side of this break.
such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your Opening Trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller, looking at pretty decent gains in terms of futures. 0.9% on S&P futures. NASDAQ futures up more than 1%. It may be that this market came down. At one point, it was down 5%, at least intraday, and that's enough of a correction, I guess, so that we're off to the races again. Ireland Inc. ringing the opening bell at the New York Stock Exchange. We're going to talk to Peter Burke later on in this program. I think they're ringing the bell today because tomorrow, St. Patrick's Day, is a market holiday, so they wouldn't be able to. It's not a market holiday.
No, it's not. I was like, I am unaware of that.
It should be, I think, you know.
If anything, the day after should be.
Why not? Exactly, Wednesday should be. Acadia ringing the opening bell down the NASDAQ, ACAD. The stock is down by more than a fifth year to date, so hopefully this gives them a little bit of a boost in terms of performance.
Speaking of boost, I'm looking at Meta and Nebius this morning. Reuters reporting that Meta could cut up to 20% of its workforce to offset AI costs. People kind of pointing to the block firing of people too and saying, hey, this is a very similar thing. You free up capital in order to spend on AI, or at least that's what you say. But Meta's not just saying it, they're doing it. Planning to spend up to $27 billion over 5 years for access to Nebius's cloud infrastructure. Nebius now up 13% at the open, Matt.
All right, we're also watching Dollar Tree. It anticipates slowing sales growth this year, raising doubts about winning over shoppers with its low prices. Shares were negative after the report, but are climbing right now, up more than 4%. Let's bring back in RBC Head of U.S. Equity Strategy, Lori Calvasina. And Calvasina, is that Irish? Are you Irish?
It's Italian. It's Italian.
It's your birthday, though, today. Happy birthday.
Happy birthday, Lori.
Lori. You see Dollar Tree's glum outlook, and I wonder if you're not worried about the consumer as gas prices start to rise again. What are we at? $3.70 now for regular unleaded, and the consumer is squeezed in so many other ways. Inflation, PCE, core PCE was 3.1% in the last reading before the gas prices came into play. How could you be so bullish on the stock market as we get into this forever war?
Well, it's funny. I was at a dinner last week with my rate strategist, Blake Gwynn, and we were actually debating this point, and I had to remind him the U.S. equity market, the S&P 500 specifically, it doesn't have the same weight to the consumer that the U.S. economy does, right? And, you know, just to give you sort of an illustration of that, couple of days after the Iran situation broke out, I went to my U.S. analysts and said, look, I said, I need you to fill out the survey. I'm really sorry. Like, and they were actually great. And I had a few people who even thanked me for doing it. But we just said we want to gauge impact from this conflict if oil goes above $100 for an extended period of time, and if the conflict goes on for an extended period of time, which we define as more than 4 weeks. So those were their parameters, and we said, we want you to gauge impact to earnings from oil and gas. We want you to gauge revenue exposure directly from the Middle East. And third, and I think most importantly, we want you to gauge the impact of knock-on effects. And so then they had 5 choices. They could say none. They could say only a little. They could say mixed, not relevant. They could say some, a decent amount, and then they could say a lot. And so those latter 2 were sort of in the more significant impact category, and the first 3 were kind of the lesser significance category. On the earnings question, 72% fell into those 3 categories of lesser significance. On the revenue exposure question, it was 77% that fell into the lesser significant categories. Now, knock-on effects, there was more impact seen, but it was still surprising that 66% fell into those less impact categories. Now, 2 of the sectors that were viewed as being significantly impacted were consumer staples and consumer discretionary. The other one was materials. So we took away from that yes, there are pockets of risk. You want to be concerned about those, obviously. And talking to Nick Modi, my consumer staples analyst, I actually went back to him with the survey, and I said, because he scored, as more significant across all 3 of the questions. And I said, I want to make sure these are your real answers, because people are going to think staples is defensive, but you're telling me it's not by answering this. And he said, no, I agree with that. So, we do think... You
agree with that it's not defensive?
That staples may not be as defensive as you think it is in this conflict.
Why is it different this time? You have seen that in the market price action. It was down nearly 5% in the first week and down 1.2% last week.
Yeah, so look, this was a sector, we've been neutral on this sector, right? But we've classified it as one of the ones with better valuations, and that was a good data point coming into the year because people really did want cheap sectors, right? You actually saw the sector benefiting from that early on in the quarter. But as things were on, I know there was one day, I forget if it was last week or the first week, but consumer staples were just getting whacked across the board. And I talked to my trader, and there were not really, there was one company that had a bad earnings data point, but then others were just sort of getting pressured. And I was also seeing materials was the second worst performing sector, along with staples out of the gate.
That's a halo trade, materials. I thought that was hard asset, low obsolescence.
Well, look,
commodities are just through the roof, right?
Well, I will say materials, the metals and mining trade, was really what was gassing a lot of that, and that's actually started to look a little bit expensive in here. But we do think that what we learned from that analyst survey, right, is there are pockets of risk, but this idea that the broader U.S. equity market has some insulation, you're hearing that from a bottom-up perspective. And I learned a long time ago, had a lovely transportation analyst I used to work with back in my Credit Suisse days, and we would go, all the macro people would talk about all these things going on. And I just remember I would always talk to Allison, and her name was Allison Landry, and she covered the rails and other transportation and logistic companies. She said, well, my companies aren't saying that. And she would be very direct with us, yeah, you guys can go off and sort of think whatever you think, but until the companies actually start giving us color on that, investors are not going to pay attention.
Lori, one of the things I've been kind of obsessed with over the past week, that this came from a cocktail party conversation, but this idea that so much
cocktail party is a really nice way to put it.
Thank you, Matt. That's exactly what it was. But this idea that so much of what we're seeing in equity markets can really be attributed to the pod shops, that all of the money gets concentrated in the winning pods, so momentum goes up really hard, but they have really severe risk parameters. So when the market turns against them, they degross and get as low to the ground as they can. So over the past 2 weeks, what we've just seen is unwinding of software shorts, so software does better, selling everything else off, and that's why a lot of the market moved lower that maybe didn't seem like it made sense. How much of this market has just been positioning and from these pod shop hedge funds?
I don't have a specific number on that. I think that's generally the right instinct. I do think that what my long-only managers tend to do when you're in markets like these is sort of sit back and wait and see what happens, and then look for things to buy on dislocations, right? And, I think software, I had some conversation, this is pre-Iran, but I had some conversations about software when we were going through that AI, jitter trade that turned into scary trade really fast. And I remember talking to some people, and they're like, well, yes, the valuations are cheap, but people are looking at cash flow. We have to sort of sort through that. I remember someone telling me, I want to see, sort of more capitulation from the sell side. I want to see more analyst downgrades. And I don't know if this gentleman has, kind of moved in yet or not. It's been a little while since I talked to him. But the reality is I do think that long-only managers do tend to look at things with a longer-term lens and will sort of look at that noise created by the hedge funds and figure out where they can be opportunistic. And I heard a lot of that around the tariff example, for example.
I'll bring John Zito up again, because in this off-the-record discussion he had at UBS, or with UBS clients, the Wall Street Journal reports, he said, I think it's more likely than not we go into a recession, a consumer confidence-led recession.
Well, let me tell you on consumer confidence. Okay, so if we look at both the Conference Board data and the Michigan data updated on Friday, and I tend to watch that because post-COVID, it's had a pretty decent relationship with the stock market. It's broken down a little bit the last year, and it's been a good barometer for sector performance since the financial crisis. So I do watch the Michigan data pretty closely, and even with the downtick it saw last week. So if you look at that press release, they said basically, things were pretty good in the first half of the survey period before Iran, and then things came down and offset the gains in the second half, right? And people were mentioning gas prices. That at least is my take on the press release. And so we know that this conflict had an impact on that and ended up knocking the data point down. But even with that knockdown, we've seen that time series sort of stabilizing around, pretty extreme lows in recent months. So you just have to remember that coming into this, the consumer was already, not feeling great, frankly. When I asked my analysts about knock-on effects, consumer confidence and inflation were the top two. But guess what? We have been dealing with those consistently in the post-COVID environment. So the question, right, is are companies able to work around those kinds of issues? And I think the jury is still out on that. But I have to tell you, this private credit conversation needs to evolve. We are hearing a lot of companies, I'm not speaking about any particular company. We did have a BDC panel at our conference last week and a number of other speakers, so we wrote about this a little bit in our weekly today. But if you sort of think about the conversation, right, it's like, well, I'm better off than this firm. And if there's a recession, yeah, the metrics are going to get messier. I think that the bigger issue, right, is that there is just not a lot of transparency in this industry, right? So when folks like me try to sit down and analyze risks, it's very, very difficult to do so. And we're kind of stuck in this narrative. And I think what we need at this point is more focus on the industry and more evaluation of the industry. And we need to have players stop pointing fingers at each other, frankly. We need to sort of really understand what are the risks of this industry to the broader financial sector. If you talk to Gerard Cassidy, he would tell you, he's not overly worried, would be my guess. We had some companies at our conference specifically say they don't see a massive correction. They don't see contagion. Like, they are watching this issue, right? But I think that we're just sort of stuck on the narrative right now. And I don't know who is going to break us out, but somebody needs to do it.
It's such a good point. It is everyone that joins us is like, there's problems in the industry, but not us. We're doing great. Everything is wonderful. But
we don't have any software exposure.
Yeah. No, Apollo said they're going to start to try to mark things daily, so maybe it's
true.
Apollo, ironically, or not, that leads us out of this. Lori, we're going to have to end things there. Okay. Thank you for joining us on your birthday. Happy birthday. Are you going to get a cake?
My kids are demanding one. I wanted cupcakes, but they wanted a cake, so we're getting a cake.
I'm for a full cake.
They should be happy with either.
I'm still paying for the cake, so.
Lori, thank you so much. Wonderful to see you. That's RBC Head of U.S. Equity Strategy, Lori Calvasina. Let's get a check on your equity market. 10 minutes into your trading day this morning. We move higher by 1% after consecutive declines on the S&P 500 for 4 days last week. It was the longest losing streak so far of this year. It's the Mag 7 leading us higher after entering into a correction. NVIDIA up 2.2%. A Reuters report out just moments ago that they are forming a JV with private equity companies led by TPG worth about $10 billion. Meta also having a good day, the second best performer in terms of added points to the S&P after a report that they will be letting go about 20% of their staff. Micron, they're going to be reporting earnings on Wednesday, so moving ahead of that. To the downside, it's Walmart, Netflix, even though one battle after another, one best picture. Wait, that's not a Netflix picture, is it?
No, so not at all.
I guess that's the reason. Maybe it's down. I don't know. Anyway, Costco moves lower. Public Storage moves lower after a bid for National Storage, creating a $57 billion storage giant. Chevron is down because if you look at the individual sectors, everything is up except for energy, with the price of oil moving lower this morning, but not down really significantly. Infotech, again, that's the best performer, with NVIDIA leading the gains, and they have Matt, your memory is going to be better than mine this morning. The developers conference that they do.
The GPU.
Yes.
TC.
Yes, exactly that. But there is a good chart floating out there that apparently when Jensen Huang tends to speak at these things, NVIDIA actually falls. So it's not necessarily an indicator for how the stock will do. But again, there's that Reuters report of private equity money moving into OpenAI, more spending happening. So maybe NVIDIA gets...
he sounds too much like a hype man, right? It's like, dude, you don't need to convince us. Just show us the numbers. But he's always trying to big him up. He's always like, oh, you can't believe how much demand there is. Okay, we can believe it. We see the numbers, but I think that's a problem.
Yeah. Sometimes it helps other companies like TSMC moves higher or something, or the memory chip stocks move higher because Jensen Huang talks about the memory cost, but NVIDIA doesn't necessarily move.
All right, we're going to follow all of it for you. And, of course, Bloomberg Tech kicks off at 11 a.m. We will be talking more about Facebook, Meta, the parent company, maybe the next big tech firm to lay off a ton of employees. Reuters saying a fifth of its workforce as it spends more on AI than people. Details next. This is Open Interest.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Let's get your top calls this morning. What the sell side is saying. First up, KBW. They upgrade Rocket companies, saying that the stock looks cheap based on its outlook for mortgage demand and Rocket's earnings. KBW believes that changes to the business could lead to stronger and more stable earnings. Shares up just under 7%. Next up, Argus is downgrading Adobe after the company's latest results and the CEO stepping down, saying that the leadership change overshadows its earnings and comes amid broader concerns about AI disruption. Shares down nearly 1%. Finally, Seaport Research, they downgrade Qualcomm to a sell, arguing a shortage of memory chips will hit Qualcomm's customers the hardest and leave the company losing share even as the overall market gets smaller this year. Little change to Qualcomm shares this morning, Matt.
All right, so some upgrades and downgrades there. Let's talk about a company that is rallying big on huge job losses, reports of huge job losses. Meta, according to Reuters, will cut 20% of its staff to offset costly investments in AI infrastructure. Today, Meta also announced plans to spend $27 billion over 5 years on that infrastructure with Nebius, a neo-cloud provider. Let's get a read on this with Bloomberg Intelligence head of global tech, Mandeep Singh. So, market's responding really positively, and obviously this has been a goal number one for Mark Zuckerberg to turn the social media augmented reality AI company into an AI company. Is he going to get a real return on this kind of investment?
I mean, there are two ways to interpret this. One is that AI is driving efficiencies, and that's why, they're doing the layoffs. The other side of it is the foundational model has been trailing, the leading models like OpenAI, Anthropic, and Gemini. And they will be investing over $100 billion in CapEx this year. So they obviously want to carry on with that. And the margins are going to really look bad. The free cash flow margins for this year are going to really look back despite the acceleration in top line that Meta is talking about. So from that standpoint, not having a product, a standalone app like OpenAI's or Anthropic is a problem for Meta given how much they are investing. And so from that standpoint, to offset the margin impact, they're doing this ahead of time because to me, the cut is really coming at the R&D line. Look at the R&D line.
But Mandeep, did they not need these people? Did they just have an extra 20% of staff just sitting around to be fired?
Well, what they are saying is all the product managers need to be more efficient in terms of how they are managing the team, and they are doing that proactively as opposed to the market forcing it when it happened in 2022, 2023. But other than the R&D line, they don't have as much cost intensities to cut. So if you're talking about a 20% layoff, it has to come, a bulk of it from the R&D line because they spend almost $58 billion on R&D, in the last 12 months. So from that perspective, given their R&D intensity is much higher than a Microsoft or an Alphabet, it makes sense for them to, optimize that cost structure right now.
I mean, but again, the point you're making just seems like that can't be enough. Is that fair to say that layoffs can't be enough to save your margins given the spending that they're doing?
Especially if the top line doesn't get that bump from, the large language models. I mean, look at how fast Anthropic and OpenAI are growing their revenues. Meta is growing a very healthy, 25% top line, but all that is coming from their core business. The apps that are very addictive, they continue to monetize them very well in terms of the feeds. But in terms of the pure play AI contribution from the large language models, whether it's APIs or standalone app, it's almost nothing. And you're really hoping that $110 billion of CapEx will translate into top-line revenue. And that's where not having a cloud business, the infrastructure cloud portion that Microsoft and Google have, is a disadvantage for Meta.
For now, Meta shares getting rewarded up 2.5%. Mandeep, thanks for joining us on this Monday morning. That's Mandeep Singh of Bloomberg Intelligence. Coming up on Open Interest, BYD shares surge as the Chinese EV leader makes moves abroad. That's coming up next. You're watching Bloomberg TV.
your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
BYD shares surging the most in 13 months, lifting with it other Chinese EV stocks such as NIO and Xiaomi. BYD's Brazil plant received orders for about 100,000 units, a sign of improving sales outlook in foreign countries. Bloomberg's Detroit bureau chief David Welch joins us now. And David, with all the success of these more affordable, smaller electric cars, with all of the talk about BYD maybe getting into F1 and World Endurance Championships, it seems that more people in other countries are ordering.
The USMCA negotiations, how Mexico treats Chinese-made vehicles, that's also a big piece of this. What a lot of China hawks in the Trump administration and the domestic auto industry here wants to make sure that Mexico doesn't become, and for that matter Canada, sort of a backdoor entry point for Chinese vehicles into the U.S. market.
We are looking at gas today, David, that's up to more than $3.70. It's not an alarming national average like $4 or even $5, but the backlash against EVs, is that set to turn around as people realize they could actually save money with these things?
Yeah, I've thought for a long time, Matt, that there's an inflection point. It's not 370, but if we were to get gas prices to stay well above 4 for a while, you might have people, certainly they'll look at hybrids, right? And they already are. But you could have them also looking at EVs if gasoline gets expensive over time. The problem with EV sales in the U.S. is once you take away the government incentives, there are too many trade-offs for a lot of consumers. But if they start to see benefit because fuel is expensive, then they would certainly give the plug-in vehicles and pure electrics another look.
My favorite hybrid is the Corvette E-Ray. It's just fantastic the way they put the power down. David Welch in our Detroit bureau, thanks very much for that. Tune in to my podcast because my co-host Hannah Elliott disagrees with me about the Corvette. It's called Hot Pursuit. You can get it on your favorite podcast platform.
cidade estava sitiada.
Nisso ao começo eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro. People back home, they are suffering
and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. Week 3 of the Iran war, and the White House is pushing back, with some NATO allies snubbing his call to help reopen a key shipping lane in the Middle East to get global oil supplies moving again. Spokeswoman Caroline Levitt.
These countries are absolutely benefiting from ensuring that Iran can never obtain a nuclear weapon. This is something not just the United States, but the entire Western world has agreed with for many, many years. So I think the president is absolutely right to call on these countries to do more to help the United States to reopen the Strait of Hormuz.
Those Iranian women's soccer players have been having second thoughts about seeking sanctuary in Australia.
Iran state media report the captain of the Iranian women's soccer team has withdrawn her bid for asylum in Australia and will return to Iran. That means 5 of the original 7 players have now changed their mind under unbearable pressure, it seems, from the Iranian authorities, who human rights activists say threatened the women's families with reprisals. Fear of reprisals for refusing to sing their national anthem at the tournament in Australia is what led the women to seek sanctuary in the first place. Vicky Barker, CBS News, London.
Spring is 4 days away, and so far signs are it'll come in like a lion, from blizzard conditions in the upper Midwest to possible twisters, strong winds and heavy rain in the east. CBS meteorologist Lonnie Quinn.
The highest risk for tornadoes and the worst severe weather anywhere from, say, around South Carolina up to Washington, D.C. around 5 o'clock this afternoon, with the tough weather even stretching into New York City. It's offshore by the time we get to about 2 a.m.
Almost 3,800 union employees have gone on strike at the nation's biggest meatpacking plant. Their beef, not money, but safety. Deborah Rodart works at JBS in Greeley, Colorado.
The jury took.
We should be treated better than the cattle, because the cattle is the one that gets treated better.
Deliberations continue in L.A. today in the first ever jury trial on the harmful effects of social media.
The jury took up the case Friday after a trial which heard witnesses including Meta chief Mark Zuckerberg. The issue is whether Meta or YouTube deliberately created programs posing a danger of addiction in children, or if they were negligent. A 20-year-old woman filed a lawsuit claiming she became obsessed with social media starting at age 6, which amplified depression and suicidal thoughts. Michael Toscano, CBS News.
Days after he called for an end to the Iran war, we're learning Pope Leo will be honored in Philadelphia on the U.S. 250th anniversary in July. He'll deliver a virtual acceptance speech from the Vatican when he's awarded the National Constitution Center's Liberty Medal. Average gas price, $3.72 a gallon. This is CBS News. The bracket is set for the women's NCAA tournament.
After going a perfect 34-0 on the season, UConn earns the top overall seed in this year's tournament. But when the action begins, none of that matters to Huskies head coach Gino Auriemma.
We've lost a bunch of tournaments being the number one, and we've won a couple not being the number one. You're going to have to play everybody anyway, so you might as well just go play.
UConn, aiming for its 13th national title, is joined by UCLA, Texas, and South Carolina as the other number one seeds. The women's tournament gets underway with the first four on Wednesday and Thursday. Erica Herskowitz for CBS News.
In last night's Oscars in Memoriam on ABC, 83-year-old Barbara Streisand remembered her The Way We Were co-star Robert Redford with a few bars from her Oscar-winning song. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Brokers Studio in New York City. We are streaming live on YouTube. We're also streaming live on Bloomberg.com, so you can check us out there as well. Coming up today, we're going to check in with Dan Williams, reporter for Bloomberg News. He's based in Jerusalem to get the latest on the Middle East. Ed Ludlow, B-Tech co-anchor. He's going to give us the tech news of the day. I want to talk to him about this Meta story. Meta to spend up to $27 billion on nebulous AI infrastructure. The deals just keep on coming there, and the numbers are so huge. Cliff Kupchan, chairman at Eurasia Group, discussed the latest out of the Middle East. I'm still trying to get through the note from those folks. It's very dense, a lot of good stuff, so we'll get the breakdown there. Scarlett Fu and Paul Sweeney live here with you with the Bloomberg Intelligence Program. Let's kick it all off with John Tucker in a Bloomberg Business.
All right, risk on, at least right now. This Bloomberg Business Flash being brought to you by IBKR. Will the U.S. Consumer Confidence Index be above 101 in March 2026? Turn your view into a trade at ibkr.com/forecast. Last trading day is March 22nd. So all 11 major industry groups in the S&P 500 are higher right now, and technology shares in the lead in the S&P 500. The leaders individually: SanDisk, Seagate Technology, Ciena Corporation, and Micron Technology. At the bottom, energy, oil lower on word of a trickle of vessels beginning to find a way through the Strait of Hormuz. Right now, Brent crude, which has been in the driver's seat for so long for so many assets, right now down 2.6%. Still above $100 a barrel, though, 155 cents. Michael Kelly at Pine Ridge Investments is advising investors: any more dips, jump in and buy.
We're still leaning constructively towards the markets, understanding, you know, if they do have another back off, we think we're a couple weeks from the beginning of seeing some sort of calming down, and we would buy into further disruption.
Right now, the S&P 500, 82 points higher, up 1.25%, 67.15 on the index. The Dow, 526 points, that's up 1.1%. The NASDAQ 100, 328 points higher, that's up 1.4%. Javier Blas has a great column today, and this is implications for global trade. He writes, of course, about oil infrastructure and energy in particular. We've seen dramatic swings in the price of fuel for ships. This is fuel oil. It's the stuff that's actually at the bottom of the distillates when you crack the fuel. Bloss points out it's getting crazy expensive. The real worry is that some key ports may run dry of fuel for ships, effectively bringing world trade to a screeching halt. Yep. Or whatever ships do when they halt. We check the markets for you all day long, right here.
I think they drift.
Yeah, well, you don't want that either. Right here on Bloomberg Radio, I'm John Tucker. That's your Bloomberg Business. The band's back together again.
I know, it's
so
great.
I don't know. It's and Paul's tan actually.
It was
Who gets
sunny out
tan
there.
from skiing?
It was 5 days of bright sunshine, not a cloud all week, and when you're at 12,000 feet, it just beats on you.
Yeah, that's true.
So,
well, you know, it offsets what we have, which is like that pasty white skin from months in winter weather.
Gray.
It was good. This probably can be the last week or two of skiing out there.
Yeah, I would imagine.
Oof.
Wait, you got snow though?
We got snow the week before, so we were okay. But like Utah, the photos I'm seeing there are just nothing. So
yeah, it looks like the East Coast,
it's
basically.
very early into the season out west, unfortunately. Except for the people in Tahoe, they got tons of snow. All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here with you in the Bloomberg Interactive Broker Studio, streaming live on YouTube and streaming live on Bloomberg.com. As John was reporting, we got green on the screen here, but let's take a look at some of the stocks on the move today. For that, we're joined by Bloomberg's Tatiana Daria. Tatiana, what are you looking at today?
Paul, we got to talk about Meta shares. They are up by about 3% after reports the social media giant is planning layoffs that could affect about 20% of its workforce or more. No date has been set for these cuts. The magnitude is also a moving target. Nonetheless, in the world of AI capex overshadowing everything else, a reduction in the labor force is welcomed by the market, particularly if it comes as a result of AI productivity. But let's see more on that when the company actually announces something. Again, this is based on a Reuters report without a confirmation for the company. Shares up by 3% this morning.
All right, let's stay in the tech space. What do you have for number two?
Well, where we have a confirmation is actually Meta's deal with Nebius, and will pay about as much as $27 billion over the next 5 years to access AI infrastructure from the cloud provider as it spends aggressively to compete for the top frontier models. Nebius is a Dutch company listed in the U.S. and a so-called neocloud that operates data centers and has a strategic partnership with NVIDIA. Separately, Meta also committed to buying as much as $15 billion in additional capacity that the cloud provider is building for third-party clients. So all in all, this represents one of the biggest single contracts for Meta, which tells you, two things here, that the AI trade is alive and well in parts of the market. And the second one, that the war isn't really impacting CapEx plans just yet.
Just yet. Okay. The numbers are big, but that AI story really gets me here because I think that portends in other industries as well.
Yeah.
I mean,
obviously.
Big time. I mean, so I'm sticking with my strategy or my call that it's a net destroyer of jobs, that being AI versus a net creator. One more, Dollar Tree.
Dollar Tree shares are up by 5%, really rebounding here from losses in the pre-market on a mixed annual outlook, which raised some doubts about its ability to keep winning shoppers with low prices. Its sale projection for this year of about $21 billion equates to growth of about 7%, and that is a slowdown from a gain of 10% last year. Overall, though, for quarter profits topped projections, so it looks like the street is coming back saying that maybe that outlook was just out of abundance of caution in this tough environment. But man, with oil prices up so much and other, as you guys mentioned, prices too, one would have to really think that Dollar Tree would benefit from that.
All right, well, we'll see how it all plays out. Tatiana Daria, thank you so much. She is our strategist for our Markets Live blog. You can check her work out at MLiveGo on the Bloomberg terminal. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple, Spotify, or anywhere you listen, really, to get your podcasts. All right, let's get the latest on what's going on in the Middle East. There was an attack today on one of the main ports that the UAE relies on that's separate from the Strait of Hormuz. It's just outside the Strait of Hormuz. It looks like things have kind of gotten back to normal. They've had a resumption in operations. Let's bring in Dan Williams. He's a reporter for Bloomberg News based in Jerusalem. And clearly this is what everyone's watching in terms of the resumption of some oil operations. But just walk us through where we are in day 17 of this war in Iran.
Good morning. Yes, it's well into the third week of this war. It would appear that the war, while intensive, while being fought on several fronts, is now really focused on energy attrition, each side trying to inflict pain on the other in terms of how they can sustain this when it comes to energy resources, energy worries, keeping in mind that this is, the Strait of Hormuz at least, is a pathway, a maritime corridor for some 1/5 of energy exports, oil and gas. The U.S. president has been appealing to various allies in hope of finding a way to break the logjam created there, or should I say the de facto closure, given worries about Iranian attacks on shipping there. There have been a trickle of ships allowed through. It would appear that that has yet to be resolved. Obviously, it's affecting energy prices. Meanwhile, in the corner of the Middle East where I am, in Israel, a second front is proceeding apace. That is between Israel and Hezbollah, which has long been Iran's cat's paw in Lebanon, which borders Israel to the north. That front had been relatively quiet until 2 days into this war, when Hezbollah resumed attacks on Israel across the border, and the Israelis are going in very forcibly, increasing ground forces by the day, and now basically saying they're establishing a de facto buffer zone in the south of Lebanon.
Dan, also being reported that President Trump has called on world powers to help U.S. reopen the Strait of Hormuz. How's that going over?
To my knowledge, it's slow going. The president may have exhausted some of his credit with those powers when it comes to NATO, given his past comments on NATO, his past disinterest or avowed disinterest in NATO, or at least the heavy U.S. participation that has traditionally been seen in NATO. The British Prime Minister already saying that Britain will not be drawn into this war. It's worth remembering that when Britain said it was mustering a naval contingent to send here, I think it was just about a week ago, perhaps over a week, they were publicly poo-pooed by the U.S. president, who said they were too late to the party. I'm paraphrasing there. And that the Brits would not be welcome, given that then, as he put it, victory was already at hand, so there's no need for the Brits to come in. Apparently there is need now for allies to come in and assist. The main alliance here is between the U.S. and Israel. Israel is not geographically situated to help with that. The Americans are increasing their U.S. Navy assets in the region. I think everyone's looking especially at Harg Island, which is a major asset when it comes to Iranian oil exports. Some 90% of oil exports are piped to this island and loaded onto ships. Now, the Americans just 2 days ago bombed military facilities there. They say the energy facilities have remained intact. There's some speculation they might land troops to control that, taking out of the hands of the Iranian regime while nonetheless preserving the infrastructure for the whatever administration, whatever leadership they hope follows the regime, should that regime fall as the allies want it to fall. So that would obviously be another escalation, more pain applied on the Iranian regime. It's talking a big game. It's nonetheless outgunned by the U.S. and Israel. The question is how long it can last, how long its firepower will last.
Dan, before we let you go, we've got a minute left. The president here says that Iran is ready to make a deal. The U.S. wants better terms, however, and Iran is denying all of that.
True. It's worth remembering Bloomberg had an exclusive story, I think it was 4 days ago, where Iran said what truce terms it would accept, and withdrawal of forces, of enemy forces and the like. So clearly the Iranians are thinking in terms of a truce. I guess the distinction here is they're not suing for a truce, they're saying. So it's hard to know what to make of all this. One imagines there are back-channel discussions. It's worth remembering that for a long time, the U.S. and Iran didn't really directly engage. That changed around the nuclear diplomacy of recent years. I'm presuming there are channels intact. Time will tell what's true here.
All right. Thank you so much. Dan Williams, our reporter for Bloomberg News, based in Jerusalem on the latest out of the Middle East. Again, we are well into the third week of fighting in Iran, day 17 of this conflict.
Right. And I'm just looking at the energy markets here. WTI crude oil off about $4.70, down to $94 per barrel. So coming in a little bit. Brent crude also off about 2% here, right around $100 per barrel. And that's impacting global financial markets. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Oil pushing lower. That's helping lift stocks today. You have tech leading the gains. Among other things, NVIDIA's AI conference that's starting today. Also have this news report that OpenAI is discussing a joint venture with private equity. S&P 500 right now, 88 points higher. That's up 1.3%, 6720 on the index. The Dow Jones Industrial Average of 566 points. That's up 1.2%. The NASDAQ 100 up 352 points. That is up 1.5%. Brent crude still above 192, but it's down 2.1%. Then you have WTI. That's the biggest of the declining in the fuel prices, down close to 5%, 94.05 for American crude. And in the yield space, the twos, which are more policy reactive. Remember, we have a Fed meeting this week, down almost 4 basis points, 368. The 10-year, that's down 6 basis points right now at 422. Some of the individual movers. Public Storage agreeing to acquire National Storage Affiliates in a $5.6 billion all-stock deal. Creates a storage unit company with a combined market cap of about $57 billion. A lot of money in storage. National Storage, right now, those shares are up over 28%. And then Scarlett was talking about this Dollar Tree strategy to introduce higher price items, helping it increase sales, especially with wealthier shoppers.
It's part of the trade down, seeking more value for your dollar.
Oh, yeah.
But I don't think things are $1 at Dollar Tree anymore.
Well, you know, you can find stuff for $1. It's just you got to look hard. Sales projected to be as much as $20.7 billion this year. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube and at Bloomberg.com. Boy, the tech news continues to come fast and furious. Let's get the latest with Ed Ludlow, B-Tech co-host. He's out there somewhere in California getting into trouble in Silicon Valley. Ed, I want to start with the Meta platforms paying as much as $27 billion for cutting-edge artificial intelligence infrastructure from Nebius Group. Nebius Group stocks up 13% today. All right, not bad. Up 52% year-to-date. Okay, better. Up 345% on a trailing 12-month basis. Ed, let's just start with the basics. What is Nebius Group? What's going on over there?
Yeah, it's what we call a neo cloud. It's a fancy way of saying it's a data center that just runs AI workloads, because prior to this point, lots of data centers have done all kinds of software and storage. And, you know, Meta is pursuing this kind of everything strategy. Meta is not a cloud computing company, but it has a lot of compute demand. And so it's buying loads of chips from NVIDIA and AMD for its own data centers. It's working on its own chips in-house that go into its own data centers. And then it's basically leasing or renting capacity from a number of other players. The difference with this Nebius deal is, like, it's really big. It's $27 billion over 5 years, but up front, $12 billion next year for dedicated capacity. And that tells you that they've moved very quickly, and it's a very serious arrangement.
And it adds to its $3 billion deal with Nebius last year as well. You talk about Meta really diversifying and not betting on just any one company, right? I mean, it's kind of spread its chips everywhere.
Yeah, the idea is that in an environment where you are supply constrained, in other words, the demand that a company has for compute power is greater than what exists in the real world, they have found that diversifying is the best way to get the compute needed for different workloads. Meta is a very big and serious buyer of NVIDIA chips. You know, it's in the top 5 easily. But there is benefit to designing at scale. Like, the economics of designing your own chips makes sense, particularly when it's for running internal workloads, right? When I visited Meta's chip lab last week, one of the chips they've come up with, for example, trains the algorithm that does ranking and recommendations. In other words, how ads show up in your timeline. That's, like, very specific to them. And so it's paid off the investment so far.
I mean, just looking at the graph of this chart from Nebius, I mean, went public in 2011, kind of bouncing around, not doing anything. And then around February of 2022, at the price of about $20 a share, people said, oh, this is an AI play. So we go from $20 to $128. Where was that call Ed Ludlow?
Well, there's also a history part of it, which is that it was previously associated with or a property of Yandex, which is a Russian cloud computing company. And so, you know, just simply due to, what's the word I'm looking for? I guess sanctions, you know, it changed itself. It's now an Amsterdam-based company. So that's a part of it. But it's completely, I'm visualizing the chart for our audio audience, but it, you know, it completely coincides with the birth of the Neo Cloud and demand specifically for data centers that just run AI.
All right, here's another story that just recently crossed the Bloomberg terminal. Again, big numbers. OpenAI in talks for $10 billion joint venture with PE firms. What's up with that?
Yeah, so we've just moved our own version of this story. And what I'm told by sources is that basically it helps a lot for OpenAI to have some money that's off the balance sheet, to go out there and find a vehicle, a mechanism to sell its software. And so what these guys are doing is they've set up an entity where those private equity companies in the first instance can go to all of the different kinds of companies that they own and are trying to make better in the classic PE style and say, you know what, why don't you guys use OpenAI stuff? It's pretty good. And so that gives like OpenAI a way of going to market, and it gives these private equity firms some exposure to OpenAI and a mechanism to do business with them that also benefits all of their existing portfolio of investments.
Do we think that this is going to be the template that it starts to use more of these off-balance sheet kind of ventures?
Yeah, I think this is very interesting because, like, what I hear from time to time across Silicon Valley for all sorts of things is that there is benefit in having multiple entities, be that a geographic split or be it a business line split. And in part because you at scale with enterprises, the OpenAI private equity story is about selling OpenAI's platform to different enterprise companies. It's just a sort of old archaic world where it seems like going back to that model is what is in favor. But this news that broke this morning is the first real example I've seen of it. Yep. The idea has been spoken about in the corridors for a little while.
Ed, great stuff as always. Lots of stuff to discuss. Ed Ludlow, BTech co-anchor with Caroline Hyde, talking on the tech news of the day. Let's get back to these markets. Ann Berry joins us here in our Bloomberg Interactive Broker Studio. She's a founder and managing partner of Threadneedle. We want to talk to her about the markets, but I got to start here. Campbell's soup. I love Campbell's soup.
You
Grew
did.
up on it. Basically saying my mother was not
Favorite flavor?
Manhattan clam chowder.
Oh, I like that one too.
And Paul's favorite snack, which sometimes he dips into the soup.
It would be a yodel or
the goldfish.
Oh, the goldfish, absolutely.
Owned by
All right,
Campbell's.
so
that's
Campbell's
right.
soup. Again, I grew up on this stuff. It's based in Camden, New Jersey. Another reason I like it. Why is it on your list, Ann Berry?
It's on my list because it's underperforming, and I think it's ripe for a catalyst. So if you take a look at what's gone on food, you've got activists all over the sector. Elliott Management, $4 billion stake in Pepsi, shaking things up.
True, yep.
Right. We've got Kraft Heinz, which was going to split itself up, and this new CEO said, hey, let's take a beat. I think I've got a plan. You had Kellogg's, another iconic American food company, split itself up, now parts of it owned by Mars, parts by Ferrero. General Mills is trying, it's doubling down on pet. So what's Campbell doing? And in my opinion, it's not doing enough. It's just hit nearly 2-decade lows, which means that it's time, I think, that you're going to have the activist community looking at this one and making a play, and that's why I went into it.
What do you think activist investors would force it to do? I mean, these companies, Campbell among them, are facing some structural headwinds, including the fact that consumers really do like those private label food companies. They don't necessarily want to pay up for that brand.
Absolutely. And so one thing that Campbell's did do, and I think is the one thing that it sort of figured out, it doubled down on Rayo's, so it went into a great brand. It's got great consumer awareness, and that's in the sauce space. Trying to figure out, does it divest some of its legacy assets? There is a market for those. Private equity does have a history of coming in and buying these legacy brands, stripping out the costs, and basically running them for cash, freeing up a public company like Campbell's to double down on some of the higher growth segments. So there are things that they can do, but they're not doing it to themselves. They're not self-medicating.
That's a tough business. I mean, it's always been a low-margin business.
Yes.
But now with the store brands and the so I can see how there would be some disruption.
Or add protein. Just add protein to everything.
Yeah, like Doritos protein, right? Back to what others are doing, yeah.
Exactly. All right, I like this note you have in your notes. I being you, finally found a CEO who could articulate why the sell-off for his company is overdone.
Yes.
So who is this company and what are they saying?
So this is Zeta Global.
Zeta Global.
Zeta Global. David Steinberg's the CEO and founder, and Software, as we've talked about here on the show, the software sell-off has been astronomical. So I've been saying, look, babies are being thrown out with the bathwater. They always are in moments like this. Cybersecurity has been one. I see CrowdStrike down today. I'm absolutely going to go and add that one. But Zeta is interesting, and let me give you the context for it. When I'm sitting in boardrooms or I'm running businesses, there's one area that everyone is focused on making sure they succeed in, and that's marketing, because of the battle for eyeballs and the battle for consumer attention. You've now got boards who are increasingly paying attention to technology because of AI, and they're all saying, show us return on investment. It's not enough to be brand building anymore. It's kind of amorphous. We need to see metrics and hitting attainment. And Zeta's got a platform that has provably delivered 600% ROI on investments to have personalized ads targeting you and me. And it's working. And when you've got 600% ROI, you can take price. They've had a fantastic set of consecutive quarters of outperformance. And I can see the play here. And this is what David Steinberg, the CEO, said that really caught my eye, Paul, which is if you think about how you sell into enterprises, you've got to get through compliance, through legal, through the financial department. You've got to get through tech. It's not easy to kick out. It's really hard to get in. And they're managing it. So that's why.
So I guess there is room for software companies that can survive this AI onslaught. You just have to be really focused and really know where to look. What would that approach yield in terms of other software companies? I mean, how do you think about the parameters you search for?
Well, I think there are some that are really going to struggle. Let's take Adobe, for example, which really, I've been frustrated by Adobe, I've been frustrated by PayPal, because they're the kinds of companies that had huge incumbency advantages, had enormous repositories of proprietary data, and fell totally behind in terms of how to mine it and ultimately how to build the kinds of models that others have been doing for them. So
I got complacent?
I think they absolutely got complacent. And I think that there was a lack of willingness to take a bold move in terms of their executive changes. Finally, it happened. But I also think they got stuck. It wasn't just complacency. I think it reached a point where they just didn't know what to do other than try to buy their way out of it and couldn't get the M&A to work. So I do think there are, this idea of proprietary data is critical. Number one, it's a necessary but not sufficient condition. The next piece is trying to figure out, have they got the technological chops to go mine it in a differentiated fashion? You need both.
30 seconds. And what are you doing on the private side?
I've just cut a check for Jan LeCun's new AI firm, Advanced Machine Intelligence. Jan LeCun's one of the godfathers. He's doing a new approach to building AI models, which is based on how we learn as humans. We don't read as children. We take in data through listening and through looking, and that's his next go-around.
Technology, AI, that's what the kids are doing.
She's not being stopped by the war whatsoever.
No, just keep going. And thank you so much for joining us. Really appreciate it. Ann Barry, she's a founder and managing partner for Thread News, joining us live here in our Bloomberg Interactive Brokers studio. Taking a look at oil here. WTI crude oil, it's off about $3.75. Just about $95 per gallon. And on the Brent side, off about 1% here, but still $102 per barrel. So still lots of risk premium baked into that commodity here. Bitcoin, on the other side, is risk on here, up 2.4% to about $73,000. The equity markets, S&P is up 1%, the NASDAQ's up 1.2%, and the Dow is up 0.9%. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, today, traders seem to be latching onto any glimmer of hope that you're going to get out of the Mideast. There was news of the trickle of ships to the Strait of Hormuz. So you have oil lower and stocks are higher, although the major averages, stock averages, though, are off the best levels of the session. The S&P 500 up 63 points, just under 1% higher, 66.96 on the index. The Dow Jones Industrial Average right now up 367 points. The NASDAQ 100 up 257 points. And Brent down right now about 1.5%. So we're still above 100, 101.64. WTI, that is down right now to 94.79 a barrel. That's down almost $4 a barrel. Meta is going to pay as much as $27 billion over the next 5 years for access to cutting-edge AI infrastructure from Nebius Group. Nebius up close to 13%. Meta shares also are higher. They're up about 3% on word that they're cutting jobs. Meantime, Chris Verone at Strategis Securities says stocks may have further to fall.
You know, we're sitting here with about 40% of the S&P above the 50-day. We really haven't seen the big surge in new lows yet. The put-call ratio remains pretty benign here. So things I would want to see to really mark some capitulative flush, I don't think have necessarily been checked yet.
And yields, remember Fed meeting Wednesday, it concludes 10-year down 4 basis points. 423, the 2-year down 3 basis points, and that is at 368. So at the Wawa, just 357 this morning. So it's like down 2 cents.
Okay.
But Americans are feeling the pain. The price at the pump this morning nationally for a gallon of regular, according to AAA at least, is $3.72 a gallon, which is a 27% jump in the past month.
You go to California. I was there last week. Yeah.
Oh, that's a special item.
$5.69 a gallon. Yeah.
Special case.
That's why they all.
I was like, my eyes,
Teslas.
shield my
That's
eyes.
why they all drive Teslas.
Yeah.
Right, exactly.
Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Phil and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, the Eurasia Monday note came into my inbox this morning. I printed it out. I will read it on my 2-hour train ride home today, and I feel like I'm going to need all 2 hours. These things are dense, people, but you have to read every word. That's how good they are. Cliff Kupchan joins us. He is the chairman of the Eurasia Group, one of the people to blame for these huge notes that I have to read. Like homework, it feels like. Cliff, let's focus on Iran here. I think most folks probably couldn't articulate a reason why we are in Iran, but I guess that's past tense. The question now is, how does the U.S. get out of Iran? Do we have any idea how that might work and when?
I think eventually the U.S. and Iran are going to both taper their fires. I don't think it can happen until the Strait of Hormuz is at least somewhat more open to oil passage, and that's going to delay. I mean, Trump just can't declare victory with the strait shut and oil markets over 100. And I think it's going to be some time before he gets the naval convoys, the insurance schemes, and decreased Iranian fires. Those are the key conditions he's got to get before we see some relief here.
Okay, so that's what the U.S. is looking for. What about Israel? I mean, does the U.S. have a different goal than Israel at this point?
Well, the key question is what Bibi Netanyahu is going to do with the regime change issue. The Israelis see this as the chance of a generation, the shot of a generation to get rid of the Darth Vader, the ultimate evil in the world, the Iranian regime. They sold this, as did Trump, but the Israelis sold this to their population as a chance for regime change. And the war is incredibly popular, unlike in this country, incredibly popular in Israel. And I think the Israelis are starting to realize that there's likely to be a hardline government in Iran when this war, this phase of the conflict, however you want to look at it, ends. But that that's going to be a hard decision for Israel. So I don't think in the end game there will be a difference in goals, because I think the Israelis above all prize the relationship with Trump and the U.S. But there is a chance that Israel won't stop shooting when Trump wants them to, and that would be really ugly.
Is there a reasonable chance for regime change in Iran in the near to intermediate term, do you think?
I don't think it's very, very realistic or very high, because I mean, one of the real misjudgments by the Trump administration was that the security forces, this is Venezuela 2.0, that they can find a Delcy Rodriguez. I mean, you know, we all have to say that Venezuela was pulled off brilliantly by the president and his team, but this is not Venezuela. There is, you know, the United States of America has spent the better part of 60 years looking for Iranian moderates, and you know, we haven't found them. I think there are some, but they don't have power. So the capacity of the security forces is very, very likely, after this is over, to be able to put down any kind of dissent, either nationwide protests or ethnic, the Kurds, other Kurds, the Baluchistanis. I think the chance is remote. It's possible, but it's really remote.
So in addition to seeing this conflict as Venezuela 2.0, the White House also did not necessarily anticipate having to clear the Strait of Hormuz and get that going again. Right now, the president is calling on other countries, France, UK, Japan, China, to help the U.S. clear the Strait of Hormuz. Is this going to gain any traction, this kind of request?
In the near term, I don't think so. Most of our allies don't want to be involved or perceived as being involved in the war, offensive operations. Now, clearing the strait is kind of offense, defense, is squishy. I am increasingly of the view that the U.S. either won't or more likely isn't able to do this by itself. Again, to be fair to the Trump administration, the analytic community was completely wrong too about the common wisdom, since I've been doing this issue for 30 years, was that the United States Navy can clear the strait in a month to a week. That was wrong, because nobody, including the Trump administration, priced in that we'd also have to be defending the Gulf countries and Israel, and there's just not enough boats to do that. So I think ultimately, yes, I think there will be contributions from other countries. It's going to be slow. The whole process is going to be slow, but we need the Europeans, and ultimately, I think they'll do something.
So it sounds like the whole linchpin here is the Strait of Hormuz, and
it is.
And making that safe is the only way to make that safe is just to come to an agreement with Iran to make it safe?
No. I mean, that's the best way, get the Iranians to stop shooting. But I don't think they're going to stop shooting. I don't think we're going to stop shooting anytime soon. So the best we're going to be able to do is convoys. I mean, possibly what the Marine Expeditionary Unit, these 2,500 Marines going in, one of the things they may be able to do, they might take Karg Island, they might try to secure the fissile material. We can talk about that if you want. But the other thing they might do is suppress and occupy sites along the Strait of Hormuz, missile launching sites. Now, it's incredibly dangerous for the Marines, but that's another way to secure the strait. But we're going to have to get at least 2 or 3 million barrels a day to calm oil markets out of the strait. And yes, I think for market participants, especially, but also for geopolitics, this is about the Strait of Hormuz right now. And I think that's often missed in the press.
Okay. Quick final question for you about the summit with Xi Jinping of China. President Trump putting that at risk, saying that he could delay that summit if Xi Jinping doesn't help clear the Strait of Hormuz. How are you thinking about that?
I think it's a coin flip, this summit right now. I think that, look, I mean, if you're President Trump, would you want to fly to Beijing and be in front of global press when the Chinese are not helping with the issue that might cost Trump his presidency? The optics aren't really very good. On the other hand, China showed what the critical minerals weapon can do to markets. So he's caught between a rock and a hard place. Ultimately, I think he'll go, but I don't think I bet, more than $1 on that.
Interesting. All right, Cliff, thanks so much. Broad range of topics there for sure. Cliff Kupchan, Chairman, Eurasia Group, joining us there on the Middle East and on a potential meeting with President Trump and Xi. Markets here, they are higher here today. The S&P's up 58 points, about 0.9%. The NASDAQ up 240 points. That's 1%. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube and streaming live at Bloomberg.com as well. Let's talk a little healthcare here. We do that every Monday with Sam Fazeli. He's the Director of Research for Global Industries, and he's a Senior Pharmaceutical Analyst for Bloomberg Intelligence based in London. Sam, understand, I was looking through how we can do that here. We can spy on fellow employees. I was looking at your calendar. I saw you're in China last week. What's going on there?
Oh, a lot going on there, Paul. China biotech has been on a rising trend for the past 21, 22 years that I've been going there in terms of moving from, or China Pharma, let's say, moving from two drugs and generics and active ingredients to first-in-class innovative drugs that they've been working on. And you can see that in several trends, number of trials that are taking place with their drugs in the US, or drugs that have been originated, at least in China, number of licensing deals, i.e. partnerships with Western pharma, if you like. So all of that is in a rising trend, which is really positive for the sector there. And the companies are looking really good shape, good money, i.e. in terms of cash balances. So they should be able to deliver on this in the next 5 years.
And of course, you look at the huge market for those weight loss drugs. I understand that Novo Nordisk begins losing its IP on that active ingredient used in Ozempic and Wegovy in several large countries, including China. What is the progress of weight loss drugs in that market?
Well, there are plenty of approved drugs, but there is already an approved drug there, which is not, aside from originated in China. And I think you're going to get a whole host of others that tends to be the way that China pharma biotech works. A lot of people chase the same asset, the same class, or same disease. I think there will be a little bit of a change there, but I think you'll see quite a lot of companies with products there. Of course, usually in the world, the best drug wins, but this is a mass market product to a degree, so I think price is going to be a significant thing. Of course, things are cheaper there, but even there, you're going to have a competitive price there. Now, today, Scarlett, we had news of Structure Therapeutics in the US, but their assets actually came from China. So that's quite an interesting connection between, and they've got one of the best oral pills in terms of data that's reported today, and the share price is up 5 to 7% today. So again, a China-originated drug or a China-originated base. So that's that all ties in quite nicely together.
Sam, you've been going to China for 20 years, you mentioned. How has it changed in terms of how much of their pharmaceuticals do they make themselves? Do they source in country versus maybe license from the West or buy from the West?
Yeah, so that's become more and more the case, that they have fast followers, is what you would call it, that's going on in China. So a lot of the drugs, generics, of course, nobody talks about it because anybody can make them, especially if they're standard small molecules. Even biologics, they've started to be able to make themselves. And so I would say, if you wanted me to give you a number, I'm pretty sure it's north of 80% of drugs. Now, of course, there are some drugs that they can't copy, if you like, or have a generic, but they do their own IP and they work on that themselves. Some of them, for example, one of them being AstraZeneca's best-selling drug for lung cancer called Tagrisso. There's a company in China that developed a version themselves, and that's launched, and they're competing in China. So it's not exactly a copy, but what's going to be interesting is, where are these first-in-class drugs? How many of those is China going to be responsible for in the next 5 years? And that's going to be the thing to look out for.
I'm so glad you mentioned that idea that Structure's weight loss drug was originated in China. How big a source is the innovation on drugs in China for so many U.S. pharmaceutical companies and European pharmaceutical companies that face expiration of patents and need to fill their pipeline?
Yeah, I mean, I would say they punch above their weight. Let's not forget, U.S. is the biotech center of the globe, right? That is where most of the biotech companies are. That is where most of the biotech innovation has been happening. China has been picking up in the past 5 or 6 years. One of the things that we found is that a lot of that's interestingly correlated with Chinese nationals who've been working in the US, working at Harvard, working in pharma companies, going back. And you can see that a few years later, you start seeing the fruits of that. So, but there, in terms of the number of deals, number of drugs based on the number of companies, I would say they punch above their weight. So what's going to be interesting, of course, is, well, how many of those drugs are going to be, again, I keep calling it this phrase, first in class, true innovation that they've managed to bring to market. That's going to be something to watch out for in the next 5 years.
Sam, thanks so much. Appreciate it. Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceutical Analyst, Bloomberg Intelligence, joining us from London. I see in his calendar that he will be in the States early April, or we'll get him here in the studio.
Absolutely.
So we'll do that. See, I can see
Well,
that.
Drug Boss, right?
Yeah.
That's his jacket?
I don't know. Yeah, he's all over the place. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence coming up in just a moment with markets moving higher here. The S&P is up 1%. Same for the Dow. The NASDAQ doing a little bit better, up 1.2%. And the small caps doing well as well. The Russell, really the best performer out there, up 1.4%. So some breath in the market. Energy pulling back just a little bit. WTI crude oil off $3.50. That's about 3.6%. $95 a barrel. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Monday morning. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu, live from our Bloomberg Interactive Broker Studio in Midtown Manhattan. We are streaming live on YouTube as well. Coming up in this second hour of Bloomberg Intelligence, it is well into week 3 of this war in Iran. We are on day 17 right now. So, of course, we're going to get an update on everything that's been happening there. We're also going to dig into company news. Jen Bartashis, our senior analyst covering retail staples and packaged foods, will talk to us about Dollar Tree's latest earnings. Elliot Stein, he is our litigation analyst. We'll talk about the DOJ appealing the Powell subpoena quash and how that is likely to fail and what that means for the Federal Reserve Chair nominee, Kevin Warsh, as well. We also have with us as well David Doherty. He is BNF's head of natural resources research on oil. Oil prices have been pretty much all over the place. Right now, they are lower. WTI is trading below $95 a barrel. Brent is holding above $101 a barrel. And we're going to check in as well with Michelle Korsmo. She is the CEO of National Restaurant Association on some restaurant industry headwinds. My guess is higher costs, including higher oil prices, will be a big part of that conversation. First, though, let's go to John Tucker for our Bloomberg Business Flash. John.
All right, guys, thanks. Of the 11 major industry groups in the S&P 500, tech is at the top right now. Oil is at the bottom. Brent crude down 1.2%. The Bloomberg Mag 7 index up 1.4%. Today is GTC. That's NVIDIA's annual AI conference. I might get something out of that. This comes after 6 months in which the shares essentially have traded water for NVIDIA. OpenAI in advanced discussions to form a joint venture with private equity firms, including Bain Capital and TPG. It would focus on bolstering adoption of its AI software. And we have this headline. I'm still trying to figure this the why behind this, but trading has been halted in key contracts on the London Metal Exchange. And as soon as we find out more on this, I'll bring it to you. Meantime, Lori Calvasina at RBC Capital Markets says markets may have to sell off further before clearing.
5 to 10%, is kind of what we think of as a garden variety pullback. Frankly, I will be relieved if we actually cross that 5% barrier so we can, sort of get some of this needed pain out of the way.
Right now, the S&P 500 up 72 points, up 1%, 6704. The Dow Jones Industrial Average up 468 points. That's a 1% rise. The Nasdaq 100 up 286 points, and that's up 1.2%. The VIX down to 2408. Again, Brent crude down 1.4%, 101.75. 10-year yield is down 4 basis points, 4.23, I'll call it. The 2-year is down 3 basis points. That right now is at 3.68. The tech companies' needs for AI processing facilities and making data centers the latest darling of the real estate industry. So spending on data centers in the U.S. has exploded, surpassing offices for the first time.
That makes sense.
It makes sense, but, you know, I would say it's kind of a key moment in real
Inflection
estate.
point?
An inflection point. Thank you. That's why I pay attention to Scarlett. Key point, inflection point for the real estate industry. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Paul and Scarlett.
All right, thank you so much, John Tucker, with our Bloomberg Business Flash. Let's get a check on stocks that are on the move this morning. And for that, we bring in Carmen Reinecke. She is our Bloomberg Equities reporter. Carmen, what are you looking at?
Yeah, so the first one I'm looking at this morning is Nebius Group. This is ticker NBIS. So shares are up about 12% right now. This is only the most in like a few days, but you know, still a pretty significant jump. It's at the highest since November. Basically what happened is Meta Platforms announced it will pay as much as $27 billion over the next 5 years for access to artificial intelligence infrastructure from Nebius, which is a new cloud, so cloud provider that operates data centers. And this company also has a strategic partnership with NVIDIA Corp, which will also provide Meta some dedicated capacity starting in 2027. So just seeing, more and more companies put more money into building out their artificial intelligence infrastructure. And yeah, looks really good for some of these cloud providers.
Yeah, it's putting Nebius certainly in a prime position here. All right, next up on your list?
Yeah, so we got to look at Dollar Tree. Shares doing pretty well here as well. This is ticker DLTR. Shares up about 4.9%. So this is the best intraday since early January. So the company had earnings this morning, and investors are happy with the results that they're seeing. Sort of a key thing to point out. So they've introduced higher priced items to sort of get more wealthier, higher income, shoppers coming to their stores. So that helped also by increasing sort of store traffic. So more people coming in to buy these items in a range from $3 to $5. So boosted results for that company.
All right, we know we're near the end of earnings season when you've got the retailers reporting, but you do have a tech company reporting as well.
Yeah, so Micron here, this is ticker MU, and this is going to be a really interesting one to watch because the memory names have done so well this year. So shares are up about 5% today. This could close at a record high if it stays at this level. And what we're looking at is results come after close on Wednesday.
All right, Micron to be reporting earnings later on this week. Thank you so much. Carmen Reinecke with our Stocks on the Move. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Carmen had mentioned one of the big movers was Dollar Tree. And the outlook here from Dollar Tree was kind of mixed because even though adjusted earnings per share is going to meet the average analyst estimate, the outlook for revenue came in a little bit light. So let's bring in Jen Bartashis. She is our senior analyst covering retail staples and packaged foods. And Jen, we've seen these value retailers do pretty well in this current environment with a lot of higher income consumers trading down. Yet this sales view did miss the average analyst estimate. Is that because analysts and investors have gotten a little bit ahead of themselves when it comes to the outlook here?
Well, it's a good question, Scarlett. With regards to the overall revenue growth for Dollar Tree, last year was a real transition year for them. They shed the Family Dollar unit. They're refocusing. They've been, investing in the business. But that trade down customer doesn't come all that often into stores. And so while they bring a much higher basket and they're big adopters of that higher price point of $3 to $5, they're just not coming in as frequently as kind of the core low-income consumer. And so I think the conservative view on the top line is that there are a lot of things going on right now. You've got, fuel prices are on the rise. You've got consumers who are stretched, and you've got a mixed behavior with regards to the types of households that are coming into Dollar Tree.
So, what's Dollar Tree and the other dollar stores? How are they adjusting their strategies at all?
So, with regards to strategy, one of the things that they really ran into trouble with, and this is why they went beyond that $1 price point back in 2022, was being able to have a compelling variety of merchandise in the stores. So the multi-price point strategy that Dollar Tree is rolling out has been really effective for them because it gives people slightly more choice of what's in the store, and they can offer more compelling value. So that's been a tactic that's really paying off. It's just a question of, they're still in the process of rolling that out to all of their stores. So it's not everywhere yet. And so they're getting that bump as stores are adopting these higher price points. But once they're in all the stores, the question is, how sustainable will it be? So that's one of the things that everyone is looking for.
And Jen, one thing we know about Dollar Tree is that it has done better in terms of operations, in terms of performance, because of this decision to divest its Family Dollar chain, which was begun last year. How far along that process is Dollar Tree? Is it, halfway done, 2/3 done, 100% done?
So the divestitures is done. The question is the refocusing on their own internal operations. So, with regards to last year, they started to pay a little bit more attention. They're really working at improving their supply chain efficiency. They're working at improving store level productivity. They've invested in wages in the stores to help have more employees there at the right times and to provide the right amount of customer service. But it's still early days for their overall transformation of the company now that it's back to being just a single banner. And so it will probably extend through this year that we see more of those tactics start to take hold and to have a real material impact on the business overall.
What is Target? What is Walmart? What are they doing in response here?
What's really interesting, Paul, is that Dollar General, as a direct competitor in the dollar store space, they talk about having over 500 items that are at the $1 price point or below. So they're actually undercutting Dollar Tree on some of that value play. If you go into a Walmart or a Target, when you first walk in, they have kind of those value alleys where they have low-priced items right at the front where you can see them. So everybody has a strategy to try to show value through some variety that's at very low price points. But then when you get to the big box guys, their competitive advantage really is in the breadth of assortment that they carry. And if they can be compelling on value across the store, that puts them in a good position.
Yeah, value is definitely the play right now for all of the big retailers, whether you're already in it or you are looking to kind of beef up that part of your offerings. Jen, thank you so much. Jen Bartashis is Bloomberg Intelligence Senior Analyst covering retail staples and packaged foods on Dollar Tree's earnings. The stock up about 5% right now. We do have some breaking news here. Bank of America has agreed to settle claims that it aided Jeffrey Epstein's sex trafficking. This is according to a court record. It's reached an agreement in principle to settle a proposed class action lawsuit on behalf of Jeffrey Epstein's victims. They had accused the bank of aiding in Epstein's sex trafficking. We will bring you more details as we get it.
Okay. All right, on Friday, U.S. Attorney Jeanine Pirro reacted to news that a judge blocked subpoenas of Fed Chair Jay Powell. Pirro was stern in her criticism of the judge who made a decision and suggested Powell was now, quote, bathed in immunity. Let's take a listen.
Jerome Powell today is now bathed in immunity, preventing my office from investigating the Federal Reserve. This is wrong, and it is without legal authority.
All right, that was U.S. Attorney Jeanine Pirro talking about the case with Fed Chair Jay Powell. Not sure really where this is, but our next guest is Elliot Stein, Bloomberg Intelligence litigation analyst. Elliot, just summarize what's going on here for those folks that aren't, paying attention to this kind of stuff, and where are we now?
Right. So, I mean, there's a history here between President Trump and Jay Powell. President Trump has been upset that Jay Powell, chairman of the Federal Reserve, has not lowered interest rates quickly enough. He's been, criticizing him for years now. In January, we learned from Chairman Powell that the Federal Reserve had received subpoenas from the U.S. Attorney's Office in D.C., which had opened a criminal investigation revolving around Chairman Powell's testimony to the Senate back in June concerning cost overruns related to renovations of the Federal Reserve building. So that's sort of the basis of the investigation, and the subpoenas are meant to gather additional evidence of a potential crime to see if Chairman Powell lied to Congress in June.
And of course, it was Chair Powell who made the direct linkage between this subpoena and the fact that the president has wanted him to cut interest rates, but he hasn't because he's more focused on the data, as he says. So where do things stand now? Because I know the White House had kind of said that they were not part of this decision by the District of Columbia's Attorney General to subpoena Jay Powell. So have we seen that link completely disappear, or is there some kind of tenuous link?
It's interesting to hear the White House say that, because on the other hand, they are taking the position in all these cases that everyone who works in the executive branch reports to the president and he has unfettered control over them. So I think there is a little bit of a disconnect there. But the judge essentially did agree with the Federal Reserve here that the subpoenas were issued, basically as a pretext to go after Chairman Powell for not resigning or not lowering interest rates. The court found that it was essentially a fishing expedition looking for some evidence of a crime where there isn't any yet. And he weighed two things, right? The judge weighed the voluminous number of comments and tweets that the president has issued over the last several months or years criticizing Chairman Powell for not lowering interest rates versus any justification from the U.S. Attorney's Office that a crime was committed here, and he found that they could produce almost nothing so far. And so based on those two issues, he said this was really a pretext meant to harass Chairman Powell.
So in terms of Mr. Warsh, where do we go here?
Yeah, so this is what's really interesting, right? Because
Mr. Warsh being the...
Yeah, Kevin Warsh is President Trump's nominee to replace Chairman Powell as chair of the Federal Reserve Board when Chair Powell's term in that seat ends on May 15th. Remember, Chairman Powell's term as a governor doesn't end until January 2028, and his role as chair of the FOMC actually runs until the next coming January, in January 2027. So Kevin Warsh is the nominee to replace Powell as chair of the Federal Reserve Board. But Senator Tom Tillis, who sits on the Senate Banking Committee, which oversees the nominations and confirmations of Warsh, has said that until this Justice Department probe is resolved, he will not vote to confirm anybody in this seat. He actually likes Kevin Warsh. He thinks he's qualified. But in terms of the process, he thinks it's a problem that there's this investigation. So what does that mean for Warsh? It means right now, it looks like his nomination is going to be delayed.
It's going to be delayed, and I guess the question is whether there's any kind of workaround for that, or does it have to be? Does it have to go through that confirmation hearing that is chaired by Tom Tillis?
Well, in order to get Warsh on there, you have to go through the confirmation hearing. This could have been an off-ramp for the Justice Department to sort of end the investigation and sort of clear the path for Warsh to go through the confirmation process without any issue. But the Justice Department, Janine Pirro, indicated that they're going to appeal this decision. So that's probably going to run several months. It's likely not going to be resolved by May 15th, so you're not going to get a confirmation of Kevin Warsh. What you could see, because on May 15th, I think Chair Powell will have to step down as chair of the Federal Reserve Board, not the FOMC, but the Federal Reserve Board. And you could see President Trump name someone like Stephen Myron as acting chair of the Federal Reserve Board at that time. He's already on the board. He's been confirmed as a governor. But he could name Myron, I think, as acting chair of the board, not of the FOMC. The FOMC votes for its own chairperson. And
there's so many layers to this.
There's a lot of layers, and the FOMC is really what's important here because they drive the rates policy.
All right, and of course the FOMC begins its two-day meeting tomorrow
This week, yeah.
and concludes it with the announcement on where it sets interest rates Wednesday at 2 p.m. Elliot, thank you so much for breaking that down for us. Elliot Stein, Bloomberg Intelligence litigation analyst, the DOJ appealing the Powell subpoena quash. Where does it go from here? For now, Kevin Warsh is sitting around waiting for his Senate confirmation hearing to start, but no indication it's going to start anytime soon. Thank you so much. All right, we're looking at equities in the green right now. They've come off their highs and they've bounced off their lows. They're just kind of waffling around. The S&P up 1%.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Stocks trying to stage a comeback as oil treats some. The International Energy Agency said it can release more emergency stockpiles if needed. Right now, Brent, the international benchmark, Right now, it's down just about 0.9%. It's still above 100, 102.20. You have WTI down 3.3%, 95.46 for West Texas Intermediate. Meta Platforms is going to pay as much as $27 billion over the next 5 years for access to AI infrastructure firm cloud provider Nebius Group. Shares of Nebius in U.S. trading 11% higher. Dollar Tree gave a mixed annual outlook today. The shares right now up 5.1%. Trading in copper, trying to get a copper quote, and it's stuck at 75. Trading halted, it says on my screen. The London Metals Exchange says the trading in copper, zinc, aluminum, other contracts has been halted. The spokesman, pick up your phone because we're trying to call you to find out why they were not immediately available. How many times has that happened to you? Fascinating story in the Bloomberg. In terms of private equity, has its sights on a lot of small businesses gobbling up like, plumbing supply, stuff like that. And now the small businesses, fascinating story, are pushing back and saying, you know what? We don't like what you do to our companies when you take them over in terms of
load us up on debt, for instance, streamline operations,
and kind of alienate customers. So even though millions could potentially be at stake for some of these small business owners, they say, forget it. So
what do they do when they want to cash out? Because a lot of these owners are also nearing retirement age.
Yeah, well, sell or in the case that was cited here, it's just going to the kids. Josh Rosner and Gretchen Morgensen did a great book.
Yes.
These are the plunderers. You can imagine what they think
they have a certain
of private
take on it,
equity.
Sure.
So anyway, we check the markets view all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Paul and Scarlett.
Yeah, that was a great story, actually, that you were talking about.
I'm through chapter 1, so I got a ways to go on this book.
But definitely, like you said, a point of view. All right, the point of view on markets today, at least in equities, is green. The S&P 500 up 1.2%. This marks the first advance in 5 days. So you wonder just how much of a toll the war in Iran has taken on equities overall, because since late February, equity indexes are lower, but not dramatically so. Let's bring in John Campbell. He is Senior Portfolio Manager at Allspring Global Investments, joining us by Zoom from North Carolina. John, how are you thinking about the effect of the war in Iran? The fact that it's going on still in its third week, day 17, it's raised all kinds of stagflation fears with oil prices, persistently higher oil prices, reigniting inflation concerns, and now fueling a lot of exasperation about the prospect of a slowdown in the economy, maybe even recession, although no one's quite saying that yet.
Yes, so it is definitely looking like it's going to last longer than investors had originally anticipated. But as you mentioned, the response in the markets has been relatively muted. I've been a little bit surprised. We've also seen a pickup in interest rates, and I think the 2-year yield is now about the same as the Fed funds rate, so maybe investors are also pricing out some of the rate cuts that they anticipated. And I guess one of the more worrying aspects is the higher oil prices leading to higher gas prices, and I think we were all looking forward to some individuals getting some bigger tax refunds and then also lower tax withholding, and that being a bit of a stimulus for the economy, and some of that is being offset by higher oil prices. But the markets are taking it a bit in stride. So I guess it's good to be diversified, of course, and maybe since the geopolitical risks aren't really moving the markets a lot, we can focus on company fundamentals.
Mark, in your notes, you say, we don't view these types of geopolitical shocks as opportunities to seek alpha, but rather, these are times to manage risk. What do you mean by that?
Well, this is, so our team is a team of quantitative investors, and so we have quantitative models to try to pick stocks, but we also have quantitative models that we use for risk management, and we don't typically forecast things like geopolitical shocks. And so in areas where we don't have explicit forecasts, then we treat these as risk management exercises. So we don't know how long the Strait of Hormuz is going to be closed and what oil prices are going to be like in 6 or 9 months. So it's best to try to neutralize that risk where you can. So, it's interesting. Our energy stocks have been the best performers this year, but most of the move happened before there were any strikes. So risk management is important at all times, and having good diversification around things like energy exposure just makes sense from a long-term perspective. And we're just going to neutralize those risks and try to focus on stock picking otherwise.
And how much of your stock picking extends to mid caps or small caps? Because every time we think that we have this rotation into things out of big caps, they tend to not last very long.
Well, so our team manages across the cap spectrum, but I do manage a strategy with my co-manager Vince that is exclusively focused on small and mid-cap stocks. And these stocks have been kind of out of favor for a decade plus, as large cap stocks have really dominated, and large caps have had great earnings, and so it's understandable. But we started to see a rotation late last year and early this year, where small and mid caps started outperforming value stocks, started outperforming growth stocks. Part of it maybe is a bit extended rally and high valuations in some of those larger cap names. But there's also an earnings story that's happening under the surface. Earnings growth in small and mid caps is actually picking up. It may not surpass large caps, but the rate of change is increasing.
All right, very good. John, appreciate it. John Campbell, Senior Portfolio Manager, Allspring Global Investments. Want to get back to the war, but perhaps the business of war and actually how all these weapons and munitions, who makes them, what are the ones that are really in demand out there? And we, fortunately, at Bloomberg Intelligence, have an expert on all this stuff. Wayne Sanders, Senior Defense Weapons Analyst for Bloomberg Intelligence. He's based down there in D.C. Wayne, talk to us about when we think about all these rockets and low-cost drones flying all over the place, it really calls into the question, air defenses. How do you think about that? Because it seems like there are a lot of rockets flying over in Iran.
There absolutely is, and thanks so much for having me on. I think when you look at air defense, it becomes it's a multi-dimensional, multi-layered problem, because everybody talks about PAC-3 interceptors and the Patriot system. They talk about THAAD batteries. Those are part of the exquisite ecosystem, right? Those are your exo-atmospheric, you're talking about ballistic missile defense. You're going after very, very high-end targets normally when you're using those types of defenses. And so when you start talking about trying to use an exquisite munition, an exquisite interceptor like that to shoot down a $20,000 or $30,000 drone, you start running out of capacity, you start running out of money from that perspective. So what we've seen a lot from the Defense Department, or the defense industry as a whole, is you've started to see a lot of newcomers that come into play that are bringing in low-cost interceptors. They may not be exquisite, and you can't reach them when you're in the atmosphere, but what you're able to do is provide countries that can't always, afford a $4 million PAC-3 interceptor at scale. You can look at BAE's and L3 Harris's Vampire system, along with what they call the APKWS, which is this advanced precision kill weapon that is only for $20,000 or $30,000 for each of those. So you're starting to see scalability, and you're starting to see demand and orders come in for some of this additional capability.
And this is all readily available, or is there a long lead time for these companies to be able to produce this more ordinary air defense rather than exquisite air defense equipment?
Yeah, no, I think the answer to that question is everybody always wants more cowbell. And it doesn't matter whether or not you're looking at exquisite, you can't build them fast enough. The smaller amounts, obviously, you're going to need more of them. So scalability does become an issue. So they're still trying to ramp these up. You've seen a lot of push in the United States, obviously, across. There's the upcoming $50 billion, emergency spending plan, if you will. That's part of it. You look at Europe's actually put in $150 billion into R&D, which is a 50% year-over-year growth for what they're looking at for air defense to be able to do it themselves. So there's a lot of money to be in this right now. I see about $150 billion surge within the next 12 months to be able to increase demand and productivity and production for everything from the exquisites. your RTX SM6s and your Lockheed PAC-3s, all the way down into some of these additional ones. You also have directed energy is another one, right? You see a lot coming forward right now in high energy lasers and high powered microwaves. But as you mentioned, from a scalability and fielding, they're still at low rate initial production. They are not in full production scale now.
And folks, if you want to read all the BI research as it relates to the Iran war, they actually have a page set up for that. BI space Iran, that collects all the research from Bloomberg Intelligence as it relates to Iran. It's a great, great resource. Wayne, some folks are saying that there may be some shortages of some key munitions. Secretary of Defense Hegseth says that is not the case. What do you know?
So what we did on our research is we actually started looking at production levels of everything from PAC-3 interceptors, some of our SM6, and what we know that the U.S. has purchased throughout that. Then we start looking at engagements. Even if you go back to PAC-3, you got to go all the way back to 2001. So you start putting these numbers together, and then you look at the engagement specifically for ballistic missile defense and how many times those have been used. And as you know, the reporting is not great out there because everybody's holding on to operational and national security means. So you get what you can to be able to put together some of these numbers. But from a ballistic missile defense perspective, we still think that we have quite a few for PAC-3 interceptors, SM6 specifically being something that we would want in a 2027 scenario. And the transition that took place after week one of this conflict, moving towards precision-guided munitions, looking more at what Secretary Hegseth called gravity bombs. General Kane came on and said as well that there's only, or actually I think it was Secretary Hegseth who said that, only 1% of the munitions right now are some of our exquisite long-range standoff munitions, which means that they can save that capacity for future potential contingencies. And we have a vast amount of these precision-guided munitions, GPS-guided gravity bombs. With our air superiority, you can drop those and hit your targets.
All right, good stuff. Wayne, thank you so much. Wayne Sanders is our senior defense weapons analyst here at Bloomberg Intelligence on how the global air defense demand is soaring with this war in Iran now entering its third week. He named companies including BAE Systems, L3 Harris, RTX, as well as Rheinmetall of Germany. From Bloomberg Intelligence here in Bloomberg, New York, good morning. We have an equity market that is in the green, the S&P 500 higher for the first time in 6 days.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. All 11 major industry groups in the S&P 500 higher right now. You have information technology and consumer discretionary in the lead. Consumer staples, that's actually at the bottom in terms of performance. SanDisk, Intel, Dollar Tree, individual index leaders right now. CF Industries, think fertilizer. That's actually the worst performer in the S&P 500, down over 4%. There were reports of a trickle of ships getting through the Strait of Hormuz. That has oil and fertilizer lower. We have Brent crude, the international benchmark, down 1.4%, still above 100, 101.68 right now. As far as the major indexes, the S&P 500, 77 points higher. That's up 1.2% at 6710. The Dow Jones Industrial Average of 486 points. The NASDAQ 100, 325 points higher. That is up 1.3%. Chris Grisanti at My Wealth Advisors says the recent sell-off in stocks did create some buying opportunities.
We're bellying up to the bar and we're buying Microsoft and we're buying NVIDIA, and we can legitimately call them value stocks. So, you know, I would urge investors to look through the war and position their portfolio for what will probably be a decent year of economic growth after this is behind us.
And Bank of America reaching an agreement in principle to settle a proposed class action lawsuit on behalf of Jeffrey Epstein victims. They accuse the bank of aiding in Epstein's sex trafficking. The timing of this agreement likely is going to allow Apollo Global Management co-founder Leon Black to avoid a scheduled deposition that was scheduled for March 26th. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. It is Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube and streaming live at Bloomberg.com. I guess what we're all learning here is the key thing here, Scarlett, to this Iran war. I mean, one of the key things is this Strait of Hormuz as it relates to the flow of oil here. We always knew it was a big deal, but boy, is it a big deal. And we're still seeing elevated levels for oil. So let's check in with an expert here. David Doherty, head of oil and renewable fuels research at Bloomberg BNEF. He joins us in our studio. Tomorrow is his national holiday. We may not see him here tomorrow. David, thanks so much for joining us here. Talk to us about, you traded oil at Citi back in the day. Let's just say for a talking point, we come to a peace agreement today. How quickly does the war premium come out of oil, and maybe over what time frame? Or do we stay at some elevated level, do you think?
Yeah, that's the big question, I suppose. Yeah, we think the shut-in fields, the oil that has been kept in the ground, or production that's been cut off, could take as much as 8 to 10 weeks to get back to pre-war levels. But there's oil in tanks, there's oil on ships, and that can get out pretty quickly. So a couple of days for that, but there will be disruptions, but 8 to 10 weeks full capacity back to what it was before.
Interesting.
And I guess key, at least in the White House's mind, to getting the Strait of Hormuz cleared is help from other countries, the UK, China, for instance, France, Japan. What we know right now is that no one has agreed to do anything yet because they're kind of reluctant to place themselves in the middle of this conflict. What's the best argument the U.S. could make to these countries to get involved?
Well, their prices are hurting a lot more than in the US. I think that's the easiest thing to say. Europe is in real trouble with jet fuel and diesel. Asia's in trouble with almost everything, particularly fuel oil. So their economies are a lot more exposed to oil price fluctuations than the US. So it actually is in their interest, I guess, right?
We are, the U.S., a net exporter now.
Yes, we are.
Because I watch Landman. I know that. So I know all about that stuff.
Thank you, Billy Bob Thornton.
Exactly right. Talk to us about countries or the IEA, which is the, you're going to tell me in a second, releasing stockpiles of gas, whether it's a strategic petroleum reserve here in the U.S. or other parts of the world. Does that impact the price?
100%. Yeah, we think it's about 2.5 to 3 million barrels per day. And actually, I think these incremental measures to dampen the impact of the closure of the straits is why oil is not at 140, 150, right? We have about 3 million barrels per day, maybe 2.5 from the IEA. You've got bypassing of the straits coming through. You're seeing Russian barrels onto the market. It's starting to make up some of that gap, not all of it, but it's what avoiding that panic in price, I think. And markets are now starting to maybe trade a bit more on fundamentals and less on tweets and headlines, because last week was messy, basically.
Yep.
And when it comes to the release of those emergency stockpiles, we know some countries have already started to do things, the U.S. as well. How are you thinking through what that does for the supply that's already out there and how quickly this could come online?
Yeah, the US is the only one we have clarity on the timeline. So 120 days and a little over half the release, or a little under half the release. And that is really important here in the US. Just this last week, American consumers paid an extra $1.65 billion for gasoline, an extra 1.5 for diesel. Huge numbers, right? That's per week versus if prices didn't change. In a voting year, that's really important, right? So I think there's a sort of an emergency situation, let's say in the US. Other countries do it in a very different way. They don't necessarily have one large government-controlled SPR. It could be done with industry. It's held at refineries. It's different locations.
Oh, interesting.
So this Strait of Hormuz has, I guess, always been a problem or always been a risk for oil coming out of that part of the world. Is this the best the industry can do? Is just kind of hope that the Iranians play nice every day? It seems like, boy, if I've got so much, 20% of my oil coming out of that part of the world, I need to figure out a better plan here.
Yeah, there has been some contingency plans. Like there's a Saudi pipeline going from the east to the west, for example, and that's coming into action now. It's ramping up. We've had the UAE do the same. There's other countries that can't do much. Kuwait, for example, Iraq, Iran itself, for the most part. Yeah, energy security is key. This is a centralized energy system when so much of that is concentrated in one spot. And I think that's the argument you're going to see in policymakers from energy import countries or regions like the EU, even China. This is what's going to push their transition to localized sources of energy. So this will have repercussions for all different technologies, I think.
In terms of which countries are feeling it the most, you mentioned Europe is certainly hurting, Asia as well, a lot of oil importers there. What options do they really have? I mean, how many are picking up oil from Russia, for instance?
Yeah, Vietnam, Indonesia, India, real trouble. Restaurants closed because of the reliance on LPG in India, for example. Gasoline reliance in Indonesia. This is really painful. It's a luxury to be able to join the IEA and have 90 days of imports and stuff.
International Energy Agency.
So you got to be rich to be able to keep that amount and have the facilities to store it. Some countries don't, and they live sort of hand to mouth when it comes to fuel. That's where the pain point is for them. That's going to hit inflation, pockets, voting.
All right, just broadly defined new energy finance, what you guys do at NEF, which is some of the best data and best analysis of this transition to a new energy environment. This is a U.S. administration that is less supportive of that transition than other administrations, yet you've got the market coming in every day, hitting you over the head saying, we got to do this stuff because we're seeing right now there's a risk to getting access to fossil fuels. So that's just another reason why you got to diversify your energy sources. Is that kind of how your world's thinking about it?
Yeah, I mean, we look at the translation of a technology, any technology, into a commodity and what it means for oil, gas, metals, you name it. The world is now becoming more localized, right? And it's back to that security, sustainability, and affordability. Those three things used to be fairly similar across the world. Now it's very local based. And we saw, for example, after the Russia-Ukraine invasion, we saw an increase in solar installations, for example. So these knock-on impacts are huge. So we try to track that. What does a battery mean for a barrel, right? If you're an oil company, you want to be watching what that means.
If you're an oil company right now, how are you thinking through the next 3 months, the next 6 months? I mean, you're kind of in a fog, aren't you?
It really depends on where you're headquartered, I guess. This is good for the U.S. Producers for sure. If you're thinking of a long-term capital investment, you're not going to, off of this, you're not going to invest for another 10, 5-year project, right? So it's foggy at the very best, if not flying in the dark sometimes.
All right, David, good stuff. I mean, there's a lot going on here as it relates to energy and that energy transition. And boy, then you get this black swan event coming out of the Middle East, and it just shows you once again, that is a delicate infrastructure for sure, an ecosystem. David Doherty, Head of Oil and Renewable Fuels Research for Bloomberg NEF, based here in our Interactive Broker studio. But as you can tell, he's from Ireland. So I'm going to call his boss right after this and see if I can get him a day off tomorrow so he can go celebrate with his compatriots there. S&P up 78 points. That's 1.2% here today. The NASDAQ up 320 points. That's 1.4%. So some good moves there. The Russell also performing well. The small cappers up 1.4% as well. Let's get you the oil quotes here. WTI crude oil off about $3.90. That's about 4%. We're sitting just below $95 a barrel. Remember, that was 57 just a couple months ago. And Brent crude, $101 per barrel, off 1.7%. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and streaming live on Bloomberg.com/video. That's where you'll find us there. As you know, we often like to talk about and analyze the restaurant industry for a variety of reasons, one of which is just a really good snapshot on how the consumer's doing there. Where are they spending money? Are they going out and spending money on things like restaurants? And we have a great guest here. Michelle Korsmo joins us, CEO of the National Restaurant Association. Michelle, thanks so much for joining us here. You know, one of the industries that was thought to be impacted or could be impacted severely by some of the change in immigration policy from this administration was the restaurant business. Has that in fact happened?
Well, it's interesting, Paul. When you look at last year, we had some growth, but not really strong growth. It was 4.6% nominal growth and less than 1% full-time growth. And we know that that has a lot to do with the fact that consumers were a little bit more weary. The immigration policies and the immigration disruption definitely made a difference in restaurant business, particularly people coming to sit down in family dining. You know, it's interesting when you think about immigration because 1 out of every 5 people that work in restaurants was born outside the U.S. Many of those are citizens. Many of those obviously are fully documented and able to work. But in terms of an immigrant population, the restaurant industry very much represents that.
So what are your operators telling you about maybe just their access to the ability to attract and retain labor? Has that been a challenge for them?
Yeah, it's always tough to find and retain the best labor. We're thinking about the value of working in restaurants as people are considering, do they go and work in healthcare? Do they go and work in education? And people need to know that you can find a great career in restaurants. In fact, there's a lot of opportunity that exists. 8 out of every 10 restaurant managers started in entry level. And so we know, 9 out of 10 started in entry level and 8 out of 10 owners started in entry level. So we know that there's a lot of upward mobility. So finding people to come in and then building that upward mobility is always a priority for restaurant operators.
Michelle, talk to us about tariffs. We're going into year 2 of this uncertain tariff regime or situation. How is that impacting the restaurant industry? Has the industry figured out a way to kind of just deal with it?
Yeah, it's interesting you talk about figuring out a way. It has a little bit normalized that we have some disrupted prices. Food and beverage tariffs have been pretty stable for at least the last 6 months. And so that's provided some more continuity in terms of pricing. But food price is tough, right? Food prices have been steadily increasing since before the pandemic, and that's something we're watching. So it's often more now about availability. We know we don't have enough cattle herd that exists today to meet the beef demand in the United States. So that has an impact on pricing. So we're seeing those types of activities impact food prices almost more than tariff activity today.
I noticed going to restaurants more and more signs saying we're going to charge you 3% more if you use a credit card versus cash. And that's a big issue. And now, not for me, because I walk around with a lot of cash, but for most people, because the younger folks, they would know, a $50 bill if they tripped over it. So, I mean, talk to us about these swipe fees and all that type of stuff.
Well, you are one of a quarter of restaurant patrons who uses cash, but the vast majority, 3/4, are using credit cards. And the U.S. is the last country, nation really, to have any kind of competition that exists between our credit card carriers. And so without that competition, it allows those carriers to charge what we see as really high swipe fees, costing the average American at least $1,200 a year because of the swipe fees being higher in the U.S. than, say, they are in Europe or in Asia. And so that's something that restaurant operators need to figure out how to account for, is how do you manage 3, sometimes 4 or 5%, depending on a credit card, swipe fees. And so those extra charges are helping people understand what a difference it makes when you're using a credit card as opposed to paying cash.
So what's the longer term trend, Michelle, just in terms of people eating home versus eating out? I know that pandemic, upended a lot of people's kind of how they do things. What's the longer term outlook?
Well, long-term outlook for restaurants is always great. In fact, even today, we talk about the numbers in our State of the Industry survey that shows that 7 out of 10 Americans are saying they'd spend more money in restaurants if they had more disposable income. So you know that the demand is there. There's always a pent-up demand. And people really like the taste and the flavor profile for restaurants, the convenience, the speed. With lives getting faster and busier, restaurants are definitely a win. The other thing that's great about restaurants is that it's a pretty competitive industry, and that competition causes each restaurant to figure out how they can do better to get those customers in the door. So the quality of the food is going up, pricing is staying competitive. The restaurant industry is a great business to be in.
Yep, absolutely. I'm a big fan. You know, this stage of my life, I'm going to restaurants more
Keep
and more.
going.
Michelle Korsmo, thanks so much for joining us. She's the CEO of National Restaurant Association, joining us there. When I was out on vacation last week, you go to the lodge at Aspen, you get your slice of pizza, your drink, whatever, you leave it on the tray and you put it underneath some type of thing and it tells you, AI tells you what it is and what your price is going to be. You don't have to scan anything, you don't have to do anything. So technology is getting crazy out there, particularly in the restaurant business. So that was very cool. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Balance of Power with Kaylee Lyons is coming up in just moments. Markets are rallying. The S&P is up 60 points. That's 0.9%. The NASDAQ up 270 points. That's 1.2%. Oil pulling back. WTI crude oil, $95 per barrel. That's down about $3.50. This is Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
We're in the third week of war with Iran. Welcome to Balance of Power. I'm Kaylee Lyons. As President Trump is set to hold a news conference any minute now as he calls on world powers to help reopen the Strait of Hormuz. We'll look for answers from the president as to what will happen next in the Middle East, as he also just announced on True Social that his White House Chief of Staff, Susie Wiles, has been diagnosed with early-stage breast cancer. We'll have the latest from the White House this hour with Bloomberg's Tyler Kendall and get analysis on the ongoing conflict in the Middle East from Becca Wasser, our defense lead at Bloomberg Economics. Our political panel, Rick Davis and Jeannie Shanzano, will be here too with their view on things. But we begin, as always, with a check on the markets. And for that, we turn to Charlie Pellet at the New York. Hey, Charlie.
Hi, thank you very much, Kayla Lyons. Indeed, lots of green. Back to work Monday here. We have got the Dow, the S&P, NASDAQ. They're all advancing right now. A slide in oil prices, certainly lifting stocks and bonds on hopes that more tankers will be able to make it through the Strait of Hormuz. S&P right now up 65. That is a gain of 1%. We've got the Dow up 384 on the Dow, gain there of 0.8%. NASDAQ up 275. That is a gain now of just about 1.3%. The 10-year at 4.23%. The VIX, by the way, down at 24. The 2-year yield 3.69%. Gold at $49.90. It is down 0.6%. West Texas Intermediate crude 95.57 a barrel on WTI, down 3.2%. Brent still above 101 right now, down by 1.1%. Bitcoin up 2.1%, 73,233 on Bitcoin. Stephen Parker is the co-head of global strategy at JPMorgan Chase Bank. He has got a 7,400 to 7,600 year-end target on the S&P 500 index. He was the guest this morning on Bloomberg Surveillance.
We've always said to clients that when it comes to geopolitics rarely have long-term impacts on markets, but we have to acknowledge that particularly when energy is at the center of the storm here, they can certainly have a bigger impact on markets in the short term.
Stephen Parker of JPMorgan Chase Bank interviewed this morning on Surveillance. Among oil names, ExxonMobil up 0.8%, Chevron now up by 0.1%, ConocoPhillips trading lower by 0.4%. According to a court document, Bank of America has reached an agreement in principle to settle a proposed class action lawsuit on behalf of Jeffrey Epstein victims who accuse the bank of aiding in the deceased financier's sex trafficking. Again, recapping stocks higher. S&P up 63, up by 1%. West Texas Intermediate crude 95.51 a barrel, down 3.2%. And that, Kaylee Lines, is a Bloomberg Business Flash.
All right, Charlie Pellet in New York, thank you so much. Back here in Washington, we are keeping a close eye on the White House, the East Room specifically, where there is set to be any minute now a news conference held by President Trump ahead of a meeting with the Trump Kennedy Center board that will be taking place after the fact. The president, of course, having potentially the opportunity to answer a great number of questions as it pertains to the conflict in Iran, which is now in its third week. Of course, he fielded many of these questions as well yesterday aboard Air Force One when he had some 20-minute gaggle with reporters who pressed him on things, including his call for other world powers to help reopen the Strait of Hormuz, not just American allies like the UK or Japan, for example, but even adversaries like China. And he would like to see these other countries come help reopen this waterway that, of course, sees 20% of oil and natural gas flow through it on a usual day, that has not happened for weeks now. This is what the president said last night.
We're talking to countries about policing the straits. Nice to have other countries police them with us. And we'll help. We'll work militarily. As far as I'm concerned, we've essentially defeated Iran. What country wouldn't help us with a very small endeavor, which is just keeping the strait open? And by comparison,
obviously, the roar of the engine of Air Force One making it a little hard to understand the president, but he was saying they're calling on other countries to help police the strait. So far, though, that call appears to be unanswered. You have the UK, Japan, Germany, other countries all saying that they do not want to get involved in this, at least at this time. So for more, we turn to Becca Wasser, who's our defense lead here at Bloomberg Economics. We have, of course, been keeping in close contact with Becca throughout this ongoing conflict. And Becca, when we consider that, yes, the strait is effectively closed, we did see 2 Indian flag vessels able to pass through this weekend, but those seem to be exceptions to the rule, which is that vessels largely cannot consider the strait safe at this point. If a coalition can band together, and there's no sign of that yet, that there are other countries who want to help participate, is it possible that if our Navy can't do it alone, other navies in tandem would be able to make sure that this is a safe waterway for tankers?
Well, it would always help the United States to have allies on board, which was not something that President Trump asked for at the beginning of this conflict when he started it, aside from cooperating with Israel. Additionally, I think it would be a supplement to American capabilities. It would draw on European countries in particular who have a great deal of minesweepers, which is a capability that the United States has divested of. And if Iran were to mine the strait, they would be absolutely crucial. But the answer at the end of the day is not that, European and Asian partners and other countries could change the calculation, but rather that it would be a really, really difficult mission, both escorting, keeping the strait open, and even if countries enter into it saying that it's by purely defensive means only, like we're hearing from France and other countries, it's not going to possibly remain in that defensive element if ships were to be fired on by any type of Iranian missiles, drones, or even run over a mine.
Well, so then I guess it becomes a question of how many missiles or drones Iran has yet left to deploy in that fashion. We hear repeatedly from the Pentagon, from President Trump himself, that we have taken out the vast majority of their capabilities. What do the numbers look like at this point, Becca?
Nobody knows the exact numbers and what that looks like, even though everyone is asking and everyone wishes that they knew. And the United States and Israel have done a great deal of degradation to Iranian capabilities. It's taken out its launchers, it's taken out parts of its navy, but that doesn't mean that Iran is without options. Here, Iran just needs a few drones to get through and to have good targeting in order to have an impact on the global economy, as we've seen with some of their strikes on oil infrastructure in the Gulf. They just need to be able to do enough to complicate things and cause costs. And those are economic costs, but also very much psychological costs when we're looking at some of the missiles and drones that are continually being fired into civilian populations in places like the Gulf and Israel.
Well, when you talk about what Iran now seems to be targeting, obviously we have seen more infrastructure in the UAE targeted specifically. Is this an actual expansion of the conflict in that we're about to see even more, not just defending that the Gulf countries need to do against Iranian strikes, but potentially them going on offense as well? I just wonder when we reach that breaking point.
That's really a question for a lot of folks in those Gulf capitals, and thus far they haven't been willing to take that extra step. They have been emphasizing their need to protect their own country, their own assets, their own people, but they haven't gone further than that. And in fact, when there have been reports of them going further than that, they've been batted down quite loudly by some of these official ministries of defense, interiors, or even, prime minister and presidential offices. So it doesn't seem to be the tipping point for them quite yet, but they are doing a great deal when it comes down to just the defensive missions alone, and they are really trying to make sure that they can secure their skies, but it's been very, very difficult, and we've seen continued tax on some of those really critical infrastructure from oil to water desalination plants.
Well, of course, Iran alleges that it was missiles that began in the UAE that hit Karg Island over the weekend. Of course, President Trump said specifically the U.S. was there going after military targets. We know Karg Island is important for the flow of oil, and the energy infrastructure on it is crucial for Iran's economy. Is the military infrastructure as crucial? What did these strikes accomplish, Becca?
I think those strikes were really just moving up the escalation ladder. Thus far, it seemed as though Iran has actually had escalation dominance in this conflict. They've been able to hold things at risk. They've been able to have these economic costs, and the U.S. has not been able to up the ante. So I think this was President Trump trying to up the ante, trying to create it so that he had some next rung on the escalation ladder. And that means that he was threatening Karg Island, but didn't want to go after that critical oil infrastructure because he didn't want to go too far or to keep that in his back pocket as a potential next thing to strike. So thus, I think that's why we saw a pretty high number of strikes just on Karg Island alone, but trying to stay far away from that energy infrastructure.
So when we consider the ways in which the U.S. still has the ability to escalate, knowing that more personnel, other assets are moving into the region, what are they likely to do, Becca? How do you read that move?
So there was a great deal of activity on social media in particular about what the Marines moving in would do, and the idea that that could be part of, some type of ground force invasion. That element is too small to do a ground invasion of Iran or broader
Karg
territory.
Island specifically?
But they could be okay for Karg Island. But I think really what you're probably going to see the Marines doing, they're trying to secure the Strait of Hormuz and trying to go after some of the anti-ship cruise missile threat to try and make it so that any ships, whether those are commercial ships or U.S. warships transiting through the strait, have less threats that could be held against them. So I think that's what you're mainly going to see the Marines do. I don't think that they're about to do a ground invasion and march on Tehran, as much has been made of that. But I do think there is a world in which we could see Marines at least try and secure some part of Karg Island.
It was incredible to consider. And of course, as we deploy more service members, as we deploy other resources, all of this is just raising the cost, presumably, of what this conflict ultimately will tally at. We've heard rumors now for weeks about a supplemental funding request that's likely to go to Capitol Hill. Becca, with your defense expertise, do you have a ballpark number as to how much you think the White House may need to ask for in order to either sustain this conflict or to replenish everything we've already spent?
Well, if you are looking at potentially sustaining a longer-term conflict, which we are in a third week, and this was supposed to be a short excursion, according to President Trump, so we might see this continue on for even longer. And you look at all of the munitions in particular that have been expended, we are talking billions upon billions. It is going to be such a high price tag. But I think there are other price tags that are also higher that you can't make up just with funding alone. Those are readiness, the potential for the United States to be ready for future threats. There's been a trade-off with that, and you can't pay for readiness. You also can't pay for some of the blood and treasure that have been lost already, and we've already seen U.S. service members killed, and I think, unfortunately, that toll will continue to rise. So it comes down to the fact that there are really high financial costs, but there are also other costs for the U.S., and they are not ones that can easily be made up with dollars and cents.
13 service members, at least, have lost their lives in this conflict so far. We should all bear that in mind. Becca Wasser, thank you so much, our defense lead at Bloomberg Economics. Now, as Becca and I were talking, a headline did just cross the Bloomberg terminal from the German Chancellor Friedrich Merz, who says the following: Germany won't participate in the U.S.-led war in Iran, perhaps an answer to the president's call for countries to help open the Strait of Hormuz. Of course, Germany was not directly on the list that the president posted on True Social. He was asking China, France, Japan, South Korea, the UK, and others to help secure the strait. So for more, we turn to Tyler Kendall, who is joining us live from the North Lawn of the White House. So Tyler, obviously the president has put this call out there for other countries to join in with the U.S. Is anyone willing to answer it?
Well, Kaylee, at this point, we've gotten responses that have ranged from non-committal to outright rejection. Not necessarily surprising that we are hearing this from the German chancellor, breaking just moments ago, considering that earlier today we had heard from the EU foreign ministers in a statement saying that they do not want to escalate the conflict with Iran, though a senior NATO official does confirm to Bloomberg News in a statement earlier this morning that individual allies are speaking with the U.S. about what more can be done when it comes to the strait. But it appears that efforts are falling short of a full naval mission, as President Trump has called on allies to send naval escorts as they intensify this call to reopen the Strait of Hormuz. I'll put one other leader on your radar. We heard from UK Prime Minister Keir Starmer earlier today, who seemed to rule out the idea that there could be a NATO-based mission sent to the Strait of Hormuz to help secure safe passage, though a person familiar with the matter does tell Bloomberg News that the UK is looking for some other options that they could put on the table to assist in this, including potentially deploying autonomous mine hunting drones. So, Kaylee, at this point, we're seeing this pushback to President Trump's call for allies to help out in the strait, as it does remain a top priority for this administration to get it back up and running.
Well, and of course, it goes beyond just our traditional allies, Tyler. The president has called out China specifically, knowing China is the end market for the vast majority of Iranian crude and energy products that are moving through the Middle East, and they arguably are being hurt the most by the Strait of Hormuz closure. The president suggested in an interview with the Financial Times that he may delay his trip to China at the end of this month over this. How likely is that?
Well, it was interesting because the U.S. Treasury Secretary Scott Bessent came out afterwards. He was briefing reporters in Paris after the latest round of U.S.-China talks, and he really made it a point to clarify that if the planned meeting set to start on March 31st was delayed, it was because President Trump, as the commander-in-chief, is needed to oversee operations in Iran, not out of retaliation for China not sending naval escorts to the Strait of Hormuz. To put a finer point on your point about how much of this oil goes to China, about 38% of the flows through the Strait of Hormuz do go to Beijing. 89% of the flows through the Strait of Hormuz go to Asia, Asian countries at large. So that's sort of where President Trump's push to get this cooperation from some countries in Asia ultimately comes from. I will quickly point out that China did not confirm the dates for that potential visit, so we'll see what happens.
All right, Bloomberg's Tyler Kendall live at the White House for us. Thank you so much. And we want to take you live inside the White House now to the East Room, where the board meeting of the Trump Kennedy Center has just begun. The president is speaking now. Let's listen live on Bloomberg.
Wonderful group of very, very smart, talented patriots at this table. Our powerful military campaign to end the threats posed by the Iranian regime continued in full force over the past few days. They have been literally obliterated. The Air Force is gone. The Navy is gone. Many, many ships have been sunk. They're warfighting ships, but I guess they didn't know how to use them. And anti-aircraft is decimated. Their radar is gone, and their leaders are gone. Other than that, they're doing quite well. They've been a terror for 47 years, and now I guess the world, through the United States, with the help of Israel, is doing what should have been done many years ago. Should have been done many years ago. Since the beginning of the conflict, we've struck more than 7,000 targets across Iran, and these have been mostly commercial and military targets. We've achieved a 90% reduction in their ballistic missile launches and a 95% reduction in drone attacks. The missiles are trickling in now at very low levels because they don't have too many missiles left. We've also attacked the manufacturing plants, where the places where they manufacture the missiles and the drones. And that's going on today. We just hit 3 of them today. And it's getting very hard for them to manufacture. More than 100 Iranian naval vessels have been sunk or destroyed over the last week and a half. That has to be some kind of a record. Additional strikes continue to launch from all directions every single hour. And as you know, we attacked Karg Island and knocked it literally, destroyed everything on the island except for the area where the oil is. I call it the pipes. We left the pipes. We didn't want to do that, but we will do that. We can do that on 5 minutes notice. It'll be over. But for purposes of someday rebuilding that country, I guess we did the right thing. But it may not stay that way. Just one simple word and the pipes will be gone too, but it'll take a long time to rebuild that. We are aggressively dismantling Iran's defense industrial base, and ability to rebuild its missiles and drone capability is getting down to close to zero. And we're hammering their capacity to threaten commercial shipping in the Strait of Hormuz, with more than 30 mine-laying ships destroyed. We hit, to the best of our knowledge, all of their mine-laying ships. Now they can put them on other types of ships, I guess, and drop them in. But we don't know that any have even been dropped in. We're not sure that any have been. That's a big negative for them if they do it. It's a form of suicide. But we don't know that they have dropped any in. But we've hit all 30 of their ships and destroyed them. They're all at the bottom of the sea. We strongly encourage other nations whose economies depend on the Strait far more than ours. You know, we get less than 1% of our oil from the Strait, and some countries get much more. Japan gets 95%, China gets 90%. Many of the Europeans get quite a bit. South Korea gets 35%. So we want them to come and help us with the Strait. We have it in very good shape. The countries, I said, we've already taken care of Iran, but now, because of the fact that literally a single terrorist can put something in the water or shoot something or shoot a missile, a small missile, and it's fairly close range because it is a tight area, and which is one of the reasons they've always used that as a weapon. Iran has always used that as an economic weapon, and it's not going to be able to be used very long. Numerous countries have told me they're on the way. Some are very enthusiastic about it, and some aren't. Some are countries that we've helped for many, many years. We've protected them from horrible outside sources, and they weren't that enthusiastic. And the level of enthusiasm, it matters to me. We have some countries where we have 45,000 soldiers, great soldiers, protecting them from harm's way. And we have done a great job. And when we want to know, do you have any minesweepers? Well, would rather not get involved, sir. I said, for 40 years we're protecting you, and you don't want to get involved in something that is very minor. Very few shots going to be taken because they don't have many shots left. But they said, we'd rather not get involved. I just want the fake news media and everybody else to remember that that was said, because I've been a big critic of all of the protecting of countries, because I know that we'll protect them. And if we ever needed help, they won't be there for us. I've just known that for a long period of time, just like I knew about the Strait, that it would be a weapon, which I predicted a long time ago. I predicted all of this stuff. You guys were very generous in that. I predicted all of it. I predicted Osama bin Laden would knock out the World Trade Center. I made that prediction a year before he did it. I said, you better get him. He's a bad guy. I watched him be interviewed one time, and I said, that's a bad guy. You better get him. 1 year before, exactly. I wrote it in a book. You can even check. About a year before the World Trade Center came down, President Clinton actually had a shot at him, and he didn't take it. Unfortunately, I'm not blaming him for that, but he didn't take it. And he ended up knocking down the World Trade Center, but I predicted that too. I predicted a lot of things. We strongly encourage other nations whose economies depend on the Strait for blood. I mean, these people literally need it. 95% of their energy or their oil comes out of the Strait, and they should be in here very happily helping us. And it's incredible. We have such great, we're number one in oil by double now. We drill, baby, drill. We're double any other nation, and it's going to be soon triple any other nation, and that doesn't include Venezuela, who's been great. By the way, the relationship with Venezuela has been fantastic. Millions, literally millions of barrels of oil are being taken out, and it's been a great help, and it's been to their great benefit. The president has done a really good job. We get along with him really well, but we've taken out millions of barrels of oil and brought to Houston and other places for to the refineries. We have refineries set up specifically for that, and it's been a great relationship, and more and more is happening. It's a tremendous oil source, and we're stepping it up very rapidly. The big companies are going in, and they will actually numbers in a pretty short period of time, numbers that they've never been able to do. We'll be doing. There's a lot of oil under that land. We strongly encourage the other nations to get involved with us and get involved quickly and with great enthusiasm. I have that from a number of them, and I'd like to say their names, but frankly, I don't know if they would want me to or not, because maybe they don't want to be targeted. But I say, wouldn't matter if you're targeted or not, because this is a paper tiger that we're dealing with now. It wasn't a paper tiger 2 weeks ago. It's a paper tiger now. So now we're going to get down to the reason. We'll take a couple of questions in a moment, but we're going to get down to the reason we're here today. Actually, this was set up a long time ago. It's the Trump Kennedy Center. Over the past year, we've made incredible strides to restore the true purpose and prestige of this revered institution. Together, we're going to ensure it remains the finest performing arts facility of its kind anywhere in the world. And I don't know that it ever really reached that stage, but it will over a period of time. We're rebuilding it. It's in very, very bad condition. It's been it's been somewhat of a disaster, to be honest with you. It's been let go to hell. That's what they've done. They did a poor job. They spent money in the wrong places. They built some theaters underneath that nobody uses, little ones, tiny theaters that cost $300 million. And the money was spent incorrectly, wrong. We're dealing with some networks on the possibility of renting those little theaters. Nobody's going to use them. They want the big halls. The halls are going to be incredible. They're in bad shape, but when they're completed, the bones are potentially something that could be unbelievable. So I want to, before we begin, I want to thank Rick Grinnell. He's been a friend of mine for a long time. He's been unbelievable. He was the ambassador, as you know, to Germany. There was no happier woman in the world than Angela Merkel. Angela. She called me, "Thank you, sir, thank you." Although she liked Rick a lot, there was nobody happier that he was no longer going to be the ambassador to Germany. He was difficult for them. He was not your typical ambassador. He was the opposite. He would do what was best for the United States, not for Germany. And I want to tell you, he did a great job. So good that I put him in charge of a thing called intelligence. And something he didn't really want to do, but he did it, and he did it incredibly well. There were a lot of leakers. He found out the leakers. And when he didn't find out who the leaker was in a certain area, he fired everybody. And he went into one room where there was leaks coming out. These are long-term problems that these various places have had. And he said, "Who's the one that leaked this?" And they wouldn't admit it, so he fired the whole room. And he did a good job, I'll tell you. He was very good. And during this transition period, I asked Rick if he would run it because we wanted to see. And if you remember when we first took it over, I didn't do it with enthusiasm. I did it because somebody had to do it. I had to turn it around because it was failing. It would have closed, and physically it would have almost fallen down. It was in very bad shape. The steel columns outside, as an example, were meant to be covered. You know, exposed steel is unusual to have in building. What I do best in life is build. I build buildings really well and under budget and ahead of schedule. That's what I do, unlike the Fed building, which is going to cost billions of dollars. It may never open. I mean, right now, we have a wonderful a wonderful new head of the Fed coming in. I don't know if he'll ever be able to occupy this complex. It was destroyed by Jerome Too Late Powell. I call him too late because he's always too late with interest. Should cut interest rates. He should cut them right now. They should have a special meeting. What's a better time to cut interest rates than now? A third grade student would know that. But that's a terrible thing. But what I do is build. I build great stuff. And what we're going to do is, right outside. In fact, if you look behind me, see the nice gold curtains? If you want to look into a nice foundation and you want to see a lot of work, very deep, very, very deep for specific reasons, we have a magnificent ballroom being built because this is the biggest room and it holds like 98 people for dinner. But behind me, you're going to have a ballroom that this building and the people occupying it, in particular, every president for 150 years, has
President Trump
clamored
speaking
for a
at the
ballroom,
White House, of
a
course,
large,
speaking now of renovations at the White House, but covering other ground as well as he speaks from the East Room at a meeting of the Trump Kennedy Center board. He did say he will be answering some questions in a few moments. We will bring you his answers live here on Bloomberg. Thank you for sticking with us on Balance of Power. We just heard from the president, despite repeating his desire for an a decrease in interest rates, that the Fed should have a special meeting, knowing, of course, the Fed's meeting, as scheduled, begins tomorrow with a rate decision expected on Wednesday. The president also going into the war in Iran, saying the following: the military campaign has continued in full force over the past days. We knew that already, of course, that the U.S. has struck some 7,000 targets across Iran, and according to President Trump, has achieved a 95% reduction in Iran drone attacks. The president also contending that Iran does not have many missiles left, and also touting the attack we saw from the U.S. onto Karg Island over the weekend, of course, targeting military infrastructure, not the energy infrastructure, but President Trump there noting one simple word in the Karg Island pipes. Speaking of the pipelines, where the oil goes will be gone. It was also interesting to hear the president reiterating his call for other countries to join with the U.S. to help reopen the Strait of Hormuz, which has been effectively closed since this conflict began. He said that he encourages other nations dependent on Hormuz to help us, noting that the U.S. itself doesn't get much of its oil from this region, but other countries like China do. He said, many countries have told me they're, quote, on the way. Some other nations not enthusiastic about helping us. So for more on this, I want to turn to our political panel who is with me today. Rick Davis and Jeannie Shanzano, both of them Bloomberg Politics contributors. Rick, of course, Republican strategist, Stone Court Capital partner. Jeannie, our Democratic analyst and senior democracy visiting fellow at the Harvard Kennedy School's Ash Center. Welcome to you both. Rick, I'm curious what you make of the timing of this call for other countries to join with us in this coalition, to come in part to our aid. Was the opportune time to ask everybody to join hands actually before we went in the first place? What good is it now? Who is likely to say, sure?
Yeah, the traditional methodology used by previous American presidents in scenarios like this has been to create a coalition of the willing, right? Going to these nations, our allies, our partners, and getting them signed up for specific roles and responsibilities before hostilities occur. And one of the reasons that you do that is because you really never know what's going to happen once you begin an effort like this, and you want everybody prepared to respond. Trying to recruit now against a sort of known problem, and that is the Gulf, the Strait of Hormuz right now, is much more difficult. And to some degree, the president has spoiled the water a little bit because he was highly critical of the fact that he didn't need his allies and partners to be able to mop up this Iranian threat. And so, to some degree, it's a problem of our own making. And I must say, part of the problem too is, what is the mission? Because if the mission is to use naval vessels to escort tankers out of the Gulf, we have the largest armada of naval vessels assembled in the region, I think, in history. And so I would really question what we need our allies and partners for, other than just to share the burden. And that's never been something I think President Trump has particularly been interested in.
Well, so Jeannie, I'd love for you to weigh in here, because the president is factually accurate in saying that it's not the U.S. that is actually reliant on many of these exports, at least energy exports, that are coming through the Strait of Hormuz. It is other countries, specifically in Asia. China, of course, perhaps the most exposed here. That is all true. The U.S. technically doesn't need it, though it will feel the effects of the higher prices of the supply constraints that the Strait closure creates for the global economy. But I just wonder if you think that that reality, the idea that it is other countries that are going to feel the pinch of this much more, will mean that even if they're not coming to the president's aid right now, that they may eventually answer this call and have an active or a reason to get active in trying to reopen the Strait of Hormuz.
You know, Kayleigh, I'm sitting here and I'm listening, and just before you cut out from the president, he said two things. It was not about the 13 American dead soldiers. It was not about the chaos that he has inflicted on the world economically and in the Middle East. It was not about a war that he is on the brink of losing. It is not about an Iran that is stronger and a regime that is more entrenched than ever. But it was about the gold curtains behind him and the ballroom that he is building. And I think that we can't ignore that that is what the president is talking about at the meeting of the Kennedy Center board while we are at war and in this very chaotic situation. And I think that is what speaks to so much of what is going on. As it pertains to our allies, once you threaten to take over Greenland, once you impose tariffs around the world at every country regardless, once you repeatedly tell NATO allies that we don't need you, and once you go and you enter a war without even informing them, let alone creating some alliances, you have decided that you are going to go it alone. And let's not forget, it was a few days ago he posted on Truth Social about Keir Starmer that we don't need you. We've won the war. But now, of course, he needs them. And as opposed to doing what a strategic politician would do, even at this late hour of trying to form alliances, he is threatening people by saying, wait, you'll see what happens to NATO if you don't do this. So we are at the hands of a person who has not entered a war in the way that you need to have a plan to win, whether it pertains to alliances, strategy, operation, or anything of the sort. And hence, we are all in a situation here in the U.S. with people dead, terror threats around us, and gas 77 cents higher than it was when he decided to enter this war.
Yeah, it is pretty remarkable to see those prices at the pump. According to AAA, the national average, Rick, is now at the highest we've seen it since October of 2023. Of course, it is this high now in March, knowing that the midterm elections are not until November. There is many months to go between now and then. So I wonder, knowing that there is that a little bit of a date-oriented cushion for President Trump politically here, when you think that starts to become a much more serious problem? If it isn't March, is it April? Is it May? How much longer can he allow these prices to keep climbing realistically?
Yeah, look, I don't think it's actually date related. If you think about it, you go back 2 months ago, the president was lauding the fact that, he had gasoline prices down below $2, and there were really good records being set on the price of gas. But then you look at the ballot, and it wasn't improving his favorabilities. The Democrats were increasing their margins against Republicans on who would be most likely to get your vote in the midterm. And consumer sentiment was at one of the all-time low levels. So, we attach a lot to gas prices because Donald Trump attaches a lot to gas prices. and there's no question it's a factor in inflation. But it seems already baked in that folks believe they spend too much for goods and services, and it doesn't seem to mean anything to them if there's a moderate fluctuation up or down. So I'm beginning to believe that we're already getting baked in for this midterm election when it comes to some of these economic issues.
Well, it's remarkable as we consider the midterms to keep an eye on the East Room of the White House where President Trump is still speaking. Again, he is expected to take some questions from the media in the room any minute now, and we will bring you those live. But seated directly next to him is the Speaker of the House, Mike Johnson, Jeannie, who obviously is already helming a very tenuous, very narrow majority in the House that prevailing wisdom is going to turn to a minority after November, because it's going to be very difficult politically for Republicans to keep the House. What do you think Mike Johnson is telling him, not around this table publicly where, again, the media is present, but behind closed doors? Jeannie, do you think there is a bit of a message to the president that he needs to be more wary of the political consequences here, even if they're not saying that publicly?
I hold out hope that may be the case, Kaylee, but looking at how Mike Johnson has behaved from the time he became Speaker of the House, this has really been a House that he turned over to the president. At every turn, he has bowed to this president. He has given up his own institutional power. He has given up the power of the Speaker. I mean, Donald Trump is effectively operating as President of the United States, Speaker of the House, Senate Majority Leader, obviously leader of his party. So I am not really convinced that Mike Johnson is telling him. I mean, we even hear Senate Majority Leader John Thune over the weekend saying, I'm trying to be the expression essentially of reality to the president when it comes to this ability to pass this Save Vote Act. But the president doesn't seem to be listening. And it sounds like if this tornado that you're getting in DC, Kaylee, sorry to hear that, if it doesn't strike and they actually are able to conduct some business in Congress today or tomorrow, that they're going to be spending really important time talking about the SAVE Act. Now, if the SAVE Act had to do with voting and voter ID only, it may have a possibility to pass. But the president has decided to monkey it up with all kinds of things like transgender athletes, and the list goes on and on. So I'm not convinced that Mike Johnson is doing anything but sitting there as the yes person he has essentially been since he became Speaker of the House, and facing, of course, or leading a House Republican conference that really, when they're not retiring in droves, I think the number now is 32, are behind the scenes saying, we are in dire condition here. A president who promised to make life more affordable, that hasn't happened. A president who promised an end to endless wars, that hasn't happened. A president losing supporters like Joe Rogan. I mean, the list goes on and on. So very bad at this point for Republicans and Mike Johnson as the leader of this conference.
Well, and it seems that there are some interesting interactions happening right now in front of the cameras between the House Speaker Mike Johnson and President Trump, specifically speaking about this very narrow majority, the president saying death is very bad when you're the speaker and you have a majority of 2 or 3. And they're talking specifically about Republican Congressman Neil Dunn, who, according to the Speaker Mike Johnson, had a very serious diagnosis, but is still coming to work because he's a patriot, in the words of Mike Johnson. If others got the diagnosis, they'd be apt to go home and retire. The president then asked the speaker what was the diagnosis. Johnson said, I think it was a terminal diagnosis. And the president went on to say that he would be dead by June. The Speaker of the House saying that that particular information was not public. So a very interesting exchange there. And as we're talking about medical diagnoses, it is worth noting that directly next to the president on the other side is his chief of staff, Susie Wiles, who just before walking into the East Room, President Trump announced on Truth Social has been diagnosed with early stage breast cancer and will begin undergoing treatment. The president says her prognosis is good. Of course, we are all wishing her a speedy treatment and recovery, Rick, but pretty remarkable for that news to hit us today. As we know, Susie Wiles obviously is very close to the president, has been pushing him specifically to focus more on affordability, wanting him to go out on this affordability tour around the country to really hammer home his economic messaging. And I wonder what you think the Susie Wiles voice in his ear is saying to him right now as he continues to push for this war in the Middle East, knowing and saying full well that he was aware it was going to mean higher gas prices. At the very same time, she's wanting him to talk about how prices are going to be lower under his policies. How difficult is her job right now, not only because of the fact that she is now fighting cancer, but because this is the political situation that she is trying to help shepherd him through.
Yeah, first I'd like to say, prayers with Susie. You've known her for a very, very long time, and she's a real patriot. And obviously, it sounds like the news that they caught it early is good, but nobody wants to go through a torment like that. So our hearts are with you. And you're right, Susie has been this sort of calming political voice in the White House that we need to get back on message. We need to talk about what we're doing as an administration to champion getting lower prices for consumers and the people. But it's definitely been drowned out by the incursion into Iran and all the subsequent, not only news media, but really a little bit of indecision by the White House as to what is it that they are actually trying to communicate to the American public. So that gets in the way of any kind of straight focus related to pivoting over and being able to talk about prices. I mean, even just the way they talk about the increase in crude pricing and the impact on gasoline. It's not as it relates to consumers, it's almost as it relates to the geopolitics. And I'm sure Susie spends a lot of time trying to say, no, we got to keep back focused on Americans' interests and what we're doing for consumers, because we know she's been trying to drive the schedule to get Donald Trump out of Washington and talking about these issues. But it doesn't do any good if you have one day out on the road to talk about affordability, and then the next 5 days you are creating enormous amount of media around something as important as a war in Iran. So it's got to be a very daunting challenge to navigate these divided, important aspects of the presidency right now.
Well, I'm glad Rick mentions the media coverage of Iran specifically, Jeannie, because the president, as well as others in his administration, including the defense secretary, Pete Hegseth, in his most recent briefing, have been very critical of what they see as critical media coverage of the war. And the president actually on True Social overnight has lent his support towards something that was suggested by the chair of the FCC, Brendan Carr, the idea that they're going to look at the broadcast licenses of some of the networks that they see as having negative coverage on this conflict. The president calls them, and this is a quote, corrupt and highly unpatriotic news, in quotation marks, organizations. Jeannie, I wonder what you make of this threat, the idea that if the coverage of the war does not become more positive, that the actual ability to these companies, for these companies to broadcast, to have these licenses may be in question.
Yeah, and I just want to join Rick and Susie Wiles experiencing something so many women suffer from in this country and around the world, and you wish her the best and a quick recovery. When it comes to the threats to the media out of the president, out of Pete Hegseth, out of Brendan Carr, certainly the FCC chair, you just scratch your head and wonder what happened to the Republican Party that favored freedom of press, that favored freedom of speech, that was against big government meddling with either of those things. To now hear the FCC chair threaten the licenses of companies, media outlets that are reporting on the war. So there is that component of this. There is the fact we've heard from Republicans like Ron Johnson and others who have pushed back on this very idea. There is also the reality that, and this reminds me, Kaylee, very much of like what's going on in the Strait of Hormuz. We are no longer in 1950. We are in a time when even if you were to take the totalitarian step of holding people's licenses, depending on how they report the news, you have a vibrant social media out there, new media out there. So this is inoperable. And I mentioned the Strait of Hormuz because in the very similar way, the president keeps touting the fact that we took down Iran's Navy. The reality is, in today's day, you don't need a Navy to shut down something like the Strait of Hormuz. You can use drones. You can use other types of weaponry. So there is that reality of this whole thing. But the fact is that the big government idea of we are angry with coverage and we're going to shut down the media, as opposed to saying that we are grateful to the media for putting their lives on the line in a war zone and reporting what is going on in the interest of the United States, the people of the United States, and quite frankly, the military, who deserve straight news as to where things are. You don't shut down licenses to get that. You have an open market and you have people reporting, and Americans can vet what they believe and what they think. Their poll numbers are now down, not because of media reporting, but because they entered a war without any goal, without an end game, without a way out, without alliances, and the list goes on and on.
Well, of course, the president has invited the media into the East Room of the White House, where he is still assembled with the members of the board of the Trump Kennedy Center. Again, he has promised to take some questions from the journalists who are in that room. And when he does so, we will be bringing them to you live here on Bloomberg. But Rick, when we consider the relationship that the White House and the administration, specifically as it pertains to this conflict, has with the media right now, this is also a president who isn't only promising to answer questions from journalists today, but has been repeatedly picking up phone calls to his personal cell phone from journalists from a variety of outlets, publications, TV networks, and the like, and not always giving them the same message in those phone calls. So to what extent is it media reporting versus the messenger, not just in the president, but others in the administration themselves, who are giving the media conflicting signals about what it is that they're trying to say?
Yeah, it's an exceptional love-hate relationship that this president has with the media that covers him. As you point out, I mean, he's one of the most accessible, if not the most accessible president of the United States in modern political history. His obvious interest in communicating directly, as you point out, picking up his phone calls when individual reporters call him up to ask him questions. Of course, they can do that because he's given them his cell phone number. And at the same time, holding more press conferences, having more access to meetings that the president is holding inside the Oval Office and other places in the White House. I mean, it's quite extraordinary. But at the same time, excoriating the press for not actually seeing what he is seeing and reporting what he would like to have reported. That's part of the bargain, right? You invite him in and you're going to take the consequences. But you point out a very important aspect, which is that this administration is not speaking with one voice, and that is more and more in various issue areas. It's been a real jam at the White House to try and control the messaging around the war in Iran. Every time an administration official goes out, it tends to conflict with what the president's saying, whether that's today with Scott Bessent or with Chris Wright last week about the fact that we're already escorting ships out of the Gulf of Hormuz. I mean, like, these are things that are just sloppy. I mean, it lacks control. It means the White House has not, done their part to rein in the administration to always have the same message, because of course that's what you strive for, is the daily message. What is it that we're going to push out? Because it's hard enough to get our message out in a competitive media environment, but we have to all speak with one voice. And certainly the attack on journalism writ large by Brendan Carr, the head of the FCC, and the threat to pull people's license unless they report the media his way is really an extraordinary push against the First Amendment, and one that is not going to go without a lot of reporting by the news media.
Well, as we consider the different voices in this administration, Jeannie, I also would point out that we are going to see together for the first time since this conflict began, President Trump and Vice President J.D. Vance. They will be in the Oval Office for a signing ceremony together later this afternoon. This is, of course, as there's been many questions, some of them pursued by journalistic outlets as well, the idea around how J.D. Vance feels about this conflict, knowing he historically has been very against U.S. interventionism in the Middle East, specifically given his own military experience. And Jeannie, I wonder how closely you will be watching the body language in the words of J.D. Vance when he is beside President Trump later today talking about this conflict.
Oh, I think we're all going to be watching very closely, Kaylee. Trying to read what every, sort of side glance look means, because of course, this has been one of the big questions hanging over domestic politics has been, where is JD Vance in all of this? As you mentioned, he has been opposed to these kinds of interventions or wars for a long time. He's in the unenviable position now of having to support a president who went in another direction. So it's going to be interesting to see how he handles that and what Donald Trump has to say. When you talk about some of these phone calls that he has been making, meaning the president, I would just point out one that really struck me over the weekend was a call he apparently made to Kirsten Welker of NBC News, where he said, after having obliterated Iran's oil sites, we may bomb it again, quote, just for fun. And I think that just for fun speaks volumes about this president. And, we talk a little bit about messaging. We talk a little bit about the press and the threats about licenses and so on and so forth. But the reality is you have a president out there talking about ballrooms, about gold window dressings, about bombings for fun at a time like this. It is very disconcerting. No licensing issues, no lambasting the press is going to change what he is saying and doing, and the American public are well aware of that.
All right, Jeannie Shanzano and Rick Davis, our political panel today, will be back with us in the second hour of Balance of Power. But right now, we want to go back live to the White House, where President Trump has started answering questions from reporters, right now answering what countries will get involved in aiding reopening the Strait of Hormuz. Let's listen live on Bloomberg.
Travel an ocean, so it doesn't go that fast, but it'll go fast. And we have some that are fairly local that are doing it, but we'll give you a list. Some are very enthusiastic and some are less than enthusiastic, and I assume some will not do it. I think we have one or two that will not do it that we've been protecting for about 40 years at, tens of billions of dollars, Mr. Speaker. So I'll be reporting that to you in the House and the Senate, and I'll say, why are we protecting countries that don't protect us? And I've always felt that was a weakness of NATO. We were going to protect them, but I always said, when in need, they won't protect us. Now, this isn't need. Need would be one of the big boys. But I will say that we built the greatest military in the world, and we protect people. And if we need their mine boats, or if we need anything, any piece of apparatus that they may have because of a situation that they have, they should be jumping to help us, because we've helped them for years stay out of wars. Yeah, please.
Thank you very much, Mr. President. Can you tell us if you have spoken with French President Macron about the coalition to reopen the Strait of Hormuz? Have you been speaking with the French President?
What does that mean?
Have you been speaking with the French President Macron about the coalition to reopen the Strait of Hormuz?
Yeah, I have spoken to him. He's been on a scale of 0 to 10. I'd say he's been an 8. Not perfect, but it's France. We don't expect perfect.
Are you confident that France will help with the reopening of Strait of Hormuz?
Yeah, I mean, sure. I think he's going to help. I mean, I'll let you know. I spoke to him yesterday. I don't do a hard sell on them, because my attitude is we don't need anybody. We're the strongest nation in the world. We have the strongest military by far in the world. We don't need them. But it's interesting. I'm almost doing it in some cases, not because we need them, but because I want to find out how they react. Because I've been saying for years that if we ever did need them, they won't be there. Not all of them, but they won't be there. I was very surprised with the United Kingdom, because the United Kingdom, 2 weeks ago, I said, why don't you send some ships over? And he really didn't want to do it. I said, you don't want to do it. We've been with you. You're our oldest ally. And we spend a lot of money on, NATO and all of these things to protect you. I mean, we're protecting them. We're working with them on Ukraine. Ukraine's thousands of miles away, separated by a vast ocean. We don't have to do that, but we did it. Well, Biden did it. I mean, I have to be honest with you. Biden got taken to the cleaners. But we worked with them in Ukraine. We don't need to work with them in Ukraine. And then they tell us that we have a mine ship around, and they don't want to do it. I think it's terrible. No, I was very surprised. I told him, you know, we requested 2 aircraft carriers, which they had, and he didn't really want to do it. And then right after the war essentially ended, you know, meaning they were obliterated, he said, I would like to send the aircraft carriers. I said, I don't need them after the war has ended and won. I need it before the war. So I was very upset not upset, I was not happy with the UK. I think they'll be involved, yeah, maybe. But they should be involved enthusiastically. We've been protecting these countries for years with NATO, because NATO is us. You can ask Putin. Putin fears us. He has no fear of Europe whatsoever. He fears the United States of America and the military that was built by me in the first term. Yeah.
President, you mentioned the significant amount of oil that China derives from the Middle East. What is the status of your conversation with President Xi in terms of getting China to cooperate, in terms of making the Strait of Hormuz safe for those oil tankers?
Yeah, so China is a great example. They get 91% of their oil from the Hormuz Straits, which we protected for years. And it always bothered me that we have these countries. Japan gets 95% of its from the Straits, the Hormuz Straits. And it always bothered me that we're protecting and we don't need them. We didn't need them before we started dig we must. Dig me must, that's the Trump policy of lots of oil. And we didn't use them very much. It used to be at 10%. Now it's at almost 0. We don't need, we don't need oil. We have all the oil we need for ourselves. It's one of the great assets that we have. We have more than double what anybody else in terms of oil production. We're at more than double any other country. So we don't need it, but we did it. It's almost, you could say we did it out of habit, which is not a good thing to do. But we did it because we have some good allies there. We have some great Middle Eastern countries there, Israel there. So we did it for a lot of reasons. But it always amazed me that we did it. We never asked for reimbursement. And it was really there to serve other countries, not us. And by the way, we have the Sugar King. The same story. Look at that. Alfie von Hool. Alfie, thank you both very much. Huh? That's Pepe, yeah. Pepe. Hi, Pepe. How are you? How are you? Is Alfie in the backstage? Huh? Is he sitting back there waiting for you? No? You doing all right? Pepe is a great friend of all of ours, I think, in the room. Tremendous. And we appreciate you being here. Great to have you. Thank you.
Mr. President, honored.
That's great. Both of you. Thank you very much. So go ahead, please.
Mr. President, you've said that Iran does want to make a deal. Now, into the 3rd week of this bombing campaign, what would that deal look like? What are the asks that you're making of the government?
They want to make a deal. They're talking to our people. I don't know if they say that to you. Maybe they do, maybe they don't. Don't forget, they are a country that for years, I didn't know this until recently, they're a country based on disinformation. And now they're using disinformation plus AI. And that's a terrible situation. That's a terrible situation. They showed all sorts of things happening in the last 2 weeks that never happened. Between their kamikaze boats that don't exist, between blowing up the aircraft carrier, one of the great ships in the world, the Abraham Lincoln, on fire. They showed it on fire. I called the general. I said, General, what's with the Abraham Lincoln? It looks like it's burning down. No, it's not burning down. Not a bullet was ever fired at it, sir. They know better. They said, this is my first glimpse of AI and what they've done with it. They showed buildings in Tel Aviv burning to the ground, high-rises burning. They showed buildings in Qatar. They showed buildings in Saudi Arabia burning, and they weren't burning. They weren't hit. It was all AI-based. Terrible. It's terrible. And that's their only, I think that's the only thing they do well. They're negotiating, and we always talk. Somebody said, well, would you talk? Why would you even talk to them? I talk to everybody because sometimes good things come out of it. But I don't know if they're ready yet. They're taking a pounding. I don't know if they're ready yet. And we don't even know their leaders. Look, all of their leaders are dead, as far as we know, but they're all dead. We don't know who we're dealing with. We knocked out the first group. Then the second group met, 88 met to pick the leader because the first group was all dead. And the second group got knocked out. They're all dead. Then a third group met. I would think they're a little nervous about meeting. I don't know if they're nervous. Maybe they're not. Maybe they're crazy. If they're not nervous, then they're crazy. But we met with the next group, but we don't know who their leader is. We have people wanting to negotiate. We have no idea who they are. Yeah, please, Peter.
Thanks, President Trump. What are your advisors telling you about the Ayatollah's son, the new supreme leader? What are they telling you about
Well, it's
him?
not only them, it's you people. I mean, a lot of people are saying that he's badly disfigured. They're saying that he lost his leg, one leg, and he's, been hurt very badly. Other people are saying he's dead. Nobody's saying he's 100% healthy. And he hasn't spoken because the Ayatollah would sit and he'd spew hate from a form of a throne. Not as nice as a throne. I like the English throne much better. But it was a fancy chair. But he'd spew hate from his chair. But you'd see him a lot, right? This one, we haven't seen at all. So that could be for a lot of different reasons. We don't know, Peter, if he's dead or not.
Now that you've announced...
I will say this, nobody's seen him, which is unusual.
Something else. Now that you've announced that the U.S. has destroyed all of Iran's mine-laying ships, why can't the U.S. just immediately reopen the Strait of Hormuz?
Well, we could, but it takes two to tango. We have to get people to take their billion-dollar ship and drive it up. If when Pepe has his big sugar ships coming around and they cost $1 billion, and we say, I think it's okay now, Pepe, take your ship, drive it through the Strait of Hormuz. He may say, let me wait a little while, because it takes ship owners and these ships are very expensive. They can cost up to $2 billion. So they don't want to take a chance that, gee, I think you'll be okay. They got to know it. So they don't have to set, we don't know if they even set any mines. But the thought that they may have is enough to keep people from saying, we don't need it. Now, we are pounding that area, that coast, as you know, left side. We're pounding it, like really pounding it hard. And again, they may have no mine set. We hit every one of their mine droppers. They call it the mine layers, right? The ships. They're pretty sophisticated ships. Every one of them is gone. But it only takes one. So it's a little unfair. You win a war, but they have no right to be doing what they're doing. But we're hitting them very hard. And today is a big day where we're pounding a certain area that has very much to do with the strait. And I think we'll get it going very soon. In addition, we do have other nations coming in. You need people to watch and people to see. We have other nations coming in. Yes, please.
If the United States is working to secure the Strait of Hormuz for the benefit of other countries like China, and our allies aren't yet stepping up to your standard, is the United States getting back to being the world's policeman?
Look, the United States should not be very much involved. They can on a certain basis. They've been doing it for a long time. But I've always said, if you look back years ago, I said, why aren't we being reimbursed? These are the richest countries in the world. Why aren't we being reimbursed for maintaining the Hormuz Strait? And why aren't we being reimbursed for that? I've said that for years. You can go back. They reported on it yesterday. I've been saying a lot of things about the straits. Number one, I said it's the one advantage they have, but that's a suicidal advantage because they kill themselves more than they kill the rest of the world. And there are things you can do. With time, there are other things you can do. But I think we're going to have the situation straightened out pretty quickly. And I think we're going to have some good help. And I think we're going to be disappointed in some nations, too. And I'll let you know who those nations are.
One of your advisors, David Sachs, said the other week that the U.S. should, quote, declare victory and get out of the Iran war. He also warned that if the conflict escalates, Israel may contemplate the use of a nuclear weapon. Has he shared that assessment with you?
No, he hasn't. Israel wouldn't do that. Israel would never do that. And, yeah, there's a theory. You pounded them to hell, and you could just leave now, and it'll take 10 years for them to build back not nearly what they have right now. And I guess that's another theory. But we want to have it ended so that another president doesn't have... Look, for 47 years, no president was willing to do what I'm doing, and they should have done it a long time ago. It would have been a lot easier. There's no president that wanted to do it. And yet every president knew. I've spoken to a certain president, who I like, actually, a past president, former president. He said, I wish I did it. I wish I did. But they didn't do it. I'm doing it. Yeah.
Which president?
I can't tell you that. I don't want to embarrass him. It would be very bad for his career, even though he's got no career left. Go ahead, please.
You mentioned...
How about the man right
Thank you, sir. Mr. President, you mentioned that you're not entirely sure who you're dealing with, who the leadership is in Iran. Do you see a viable opposition movement still in that country following all of the protests that we had seen before the airstrikes and kind of an opposition movement that could become a viable leader in Iran?
Well, the biggest problem, and, you know, we have brave people in this room, but the biggest problem that I see is that, you know, they put out a warning, and we have the warning. We get everything they get. And it said any protester that goes onto the street will be immediately shot and killed. This is a little tougher than the American way. This is not quite as tough as, nobody can believe it. So I can't imagine, they don't have guns. And the other ones have guns. Highly sophisticated machine guns and AK-47s and other kinds of guns. And they did that with the women. So the women had 250,000, even 500 people protesting a year ago. And they shot women right through the middle of the forehead with snipers. And they didn't have to do many. About 10 went down bleeding profusely. And 250 to 500,000 women went running in the other direction. Because they can be brave, but they're not stupid. And they have no gun, and you have snipers in buildings specifically for this reason. So a woman goes down falling, bleeding from the head, and it doesn't take long for that to spread. And when that spreads, that crowd dispenses. And nobody else has been able to do that to the extent that these people are violent. They killed a minimum 2 weeks ago, 32,000 people. So, and they put out actually a notice 2 days ago, if you protest, you will be shot and killed. So, I don't know. I would say Mike Johnson's the only person I know who has the courage to go out in that kind of an atmosphere. I don't think so. Yeah.
Have your advisors told you anything in terms of how long we can expect gas prices as high as they are right now?
I don't need advisors to tell me that. I know what it is. You know, the Prime Minister of UK, United Kingdom, yesterday told me, I'm meeting with my team to make a determination. I said, you don't need to meet it with the team. You're the Prime Minister. You can make your own. Why do you have to meet with your team to find out whether or not you're going to send some minesweepers to us or to send some boats? I said, you don't have to meet with your team. It's the same thing here. I can tell you that when this is over, oil prices are going to go down very, very rapidly. So is inflation, so is everything else. But frankly, much more important than short-term or even long-term oil prices, you can't let the most violent, vicious country in the last 50 years have a nuclear weapon, because the Middle East will be gone. Israel will go first, without question, and they'll certainly take a shot at us before we get our act together and say we got to take them out. You can't let Iran, who's truly a nation of great terror and power. Look what happened in the last 2 weeks. They weren't supposed to go after all these other countries in the Middle East. Those missiles were set to go after them. So they hit Qatar, Saudi Arabia, UAE, Bahrain, Kuwait. Nobody expected that. We were shocked. And the other one, they fought back. They could have yielded. But think of it, if we weren't around, they had tremendous power. They had thousands of missiles, most of which we've terminated. They had thousands of drones. They were making drones and missiles all over the place. We've knocked out most of those factories. I mean, now they're sending out 2 or 3 missiles. Now, they've still got some. They might have 8% left. But mostly they've been eliminated. They've been terminated by what we did and what Israel did, too. Yeah, please.
Israel is expected to expand its ground offensive in southern Lebanon to go after Hezbollah. Have you discussed that with Israeli leaders?
Yeah.
And does the United States support a potential Israeli invasion of Lebanon?
Yeah, no, I did. And I know, look, Hezbollah is a problem. It's been a problem for a long time, not just now. And it's a certain area, because I was with the other night a person whose parents live in Lebanon. This is a very substantial person, wealthy person, whose parents live in Lebanon. I said, really? How do you live in Lebanon? Your parents are living? Oh, yeah, they live there. And over the years, they've gotten used to the fact that it's being bombed. But they explained to me that it's really a different section of Lebanon. It's the section where Hezbollah is. And they get used to it, I guess. I don't know. I mean, people live in Ukraine. You would think they wouldn't live in Ukraine, but they live in Ukraine. I don't know that I'd do that, but they live in Ukraine. They live in Lebanon. Hezbollah is a big problem, and they're rapidly being eliminated. Thank you very much, everybody. I appreciate it.
That was President Trump just concluding answering some questions from reporters at the White House in the East Room for a meeting of the Trump Kennedy Center board. Thank you for being with us on Bloomberg TV and radio. This is Balance of Power, and I'm Kaylee Lines. No surprise that the president faced a number of questions there pertaining to the war with Iran, which is now in its 3rd week. The president suggesting that Iran wants to make a deal, that they are talking to, quote, our people, though he also said it is not clear who the leadership is in Iran at this point. He says we don't know who Iran's leader is. He also said he does not know if the new supreme leader, Mujtaba Khamenei, of course, the son of the late Ayatollah, is dead or not. He said people are saying he may have lost his leg or is dead. No confirmation from the president either way on that, as he also spent a good deal of time talking about the Strait of Hormuz after calling on other world powers to help the U.S. in reopening the strait. He says that it takes 2 to tango on the Strait of Hormuz, and that ships need to want to go through. They need to feel safe doing so. He thinks the ships would be okay to pass at this point, and he thinks the Strait of Hormuz will get going, quote, very soon. Now, also interesting that the president said he will be putting out a list of countries who are willing to help on the Strait of Hormuz and those who are not going to be cooperating nations. He said that he would not be very happy with, though he did say, and this is a quote, we don't need them, going on to say that the U.S. has all the oil it needs. And he said that when this war is over, oil prices are going to go down very rapidly. Of course, that is not the case now. We are down on the day, but Brent is still up over $100 a barrel. So we want to get more on the latest from President Trump now as we go live to the North Lawn of the White House, where we find Bloomberg Washington correspondent Tyler Kendall. Tyler, obviously, President Trump covered a lot of ground there. Just walk us through what else he told us.
Yeah, hey, Kaylee. Well, as the president gave this update on Iran, he did confirm that the U.S. and Israel have hit more than 7,000 Iranian targets and said that he thinks that the Strait of Hormuz will get going, quote, very quickly. President Trump, as you mentioned, called out some allies in Europe, also South Korea, Japan, also mentioned China there, urging them to send military assets to the strait to get the critical waterway opened. He went on to say that many of them have told them that they're, quote, on the way, but that others aren't as enthusiastic enthusiastic about helping the U.S. In his words, he said that 1 or 2 countries he thinks will not commit to the U.S., that they will surge assets, adding, quote, "My attitude is we don't need anybody." As you well know, at least publicly, we've heard from some allies that they are wary at best about sending naval escorts to the region while the conflict is ongoing. For example, we heard from the German Chancellor Merz last hour saying that the NATO alliance is a defense alliance. It's not an intervention alliance, in his words, appearing to echo what we heard from UK Prime Minister Keir Starmer earlier today, who seemed to rule out the potential that we could see a NATO naval mission sent to the Strait of Hormuz, though people familiar with the matter do tell Bloomberg News the UK is looking at some other potential options to put on the table in talks with the U.S., including deploying autonomous drone mine hunting drones to go after any potential mines that may be left in the strait. Really importantly here from President Trump, he did indicate that the threat of targeting energy infrastructure in Iran does remain on the table, saying, quote, "One simple word and Karg Island pipelines will be gone," in reference to the U.S. going after military targets in Iran's top oil export hub. That would be considered a major escalation in the war if the U.S. started targeting energy infrastructure. But Kayleigh, at the end there, President Trump maintaining that oil prices will go down. He says once the conflict comes to an end, as you well know, the Interior Secretary Doug Burgum told us on Balance of Power last week that in the meantime, the administration is, quote, "leaving no stone unturned" in its bid to help lower costs for consumers.
Well, and also at the end there, Tyler, we heard from President Trump talking specifically about Israel, which of course is with the U.S. in these operations as we speak. He says he's also spoken to Israel about its operation in Lebanon against Hezbollah. He says specifically they are looking at the section where Hezbollah is. He also was asked if Israel would use a nuclear weapon against Iran at some point. He says they would not. But do we have a sense of whether or not there is any daylight emerging between the U.S. and Israel as these operations continue? If President Trump wants to pursue an off-ramp, is it necessarily that the same would go for Israel?
Right. Well, this seems to be the main question that we've been trying to glean some sort of answers to, as President Trump has repeatedly suggested in the last few days that there could be a potential negotiated off-ramp here. You'll recall over the weekend, he seemed to suggest that it was because of him that he didn't like terms that had been put forward, that he would agree to a deal with Iran, saying that he needs to see in total terms that Iran would abandon its nuclear ambitions. Still, Iran came out, as you well know, and denied that there had been any outreach, and at this point it's unclear exactly who is exactly speaking with who, as President Trump even said in this presser that it's unclear what the leadership looks like in Iran today. But as President Trump maintains this, it is raising those questions about what may be the differences between the U.S. and Israel. Kayleigh, last week we saw perhaps one of the most public disagreements between the countries when Israel went after oil infrastructure after the U.S. had repeatedly said that it was not going to go after energy infrastructure. We'll see how that involves, as President Trump just renewed that threat in this press conference earlier today, that could be an escalation on the table.
All right, Bloomberg's Tyler Kendall live at the White House for us. Thank you so much. And as we contend with the idea of potential damage to energy infrastructure, be it Iran or other infrastructure in the Gulf that we have seen targeted in just the last 24 hours or so, we, of course, want to monitor oil prices, too. They actually are down on the day. Greater move down for WTI, but Brent remains above $100 a barrel, even with the nearly 2 percentage point decline today. So let's get a check on that, commodities across the board and other asset classes, as we turn now to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kayleigh. Indeed, got to begin with crude. West Texas Intermediate, $94.50 a barrel right now. WTI trading lower by 4.3%. Brent, 101 right now. Barrel of Brent down by 2%. Brent, of course, the global benchmark. Also keeping an eye on spot gold. It has just fallen below $5,000 the ounce. The precious metal now at $49.98. Spot gold is down by 0.4%. But again, a pullback in crude. WTI is lower now by 4.2%. Equities higher as the price of crude declines. That is lifting stocks, with the S&P up 72 right now at 67.04, up by 1.1%. The Dow up 385, up by by 0.8%, and NASDAQ, the composite index, up 305, NASDAQ up by 1.4%. We've got the 10-year at 4.23% with the 2-year 3.68%. Gold bears repeating below $5,000 the ounce at $49.98, down 0.4. And again, West Texas Intermediate crude 94.40 a barrel, down by 4.3%. According to a court document, Bank of America has reached an agreement in principle to settle a proposed class action lawsuit on behalf of Jeffrey Epstein victims who accuse the bank of aiding in the deceased financier's sex trafficking. And Warner Brothers Discovery shares are higher after one battle after another took home the Best Picture prize last night at the Academy Awards, delivering a long-awaited win for veteran filmmaker Paul Thomas Anderson. Shares of Warner Brothers Discovery, they're up now by 1.1%. Recapping, S&P higher by 1.1%. That, Kaylee Lines, is a Bloomberg Business Flash.
All right, Charlie Pellet monitoring the markets for us. Thank you so much. Meantime, here in Washington, we are monitoring the developments out of the White House. President Trump having just concluded a news conference ahead of a meeting of the Trump Kennedy Center board at the White House, spending a great deal of time giving a status update on the combat operations in Iran, which of course are now in their third week. Here's part of what President Trump had to say.
Since the beginning of the conflict, we've struck more than 7,000 targets across Iran. And these have been mostly commercial and military targets. We've achieved a 90% reduction in their ballistic missile launches and a 95% reduction in drone attacks. The missiles are trickling in now at very low levels because they don't have too many missiles left.
The president went on to say that Iran wants to make a deal, that they're talking to our people, that Iran has people who want to talk, but we don't know who because we don't know who Iran's leader is. So for reaction to all of this and more on what we can expect as this conflict is ongoing, we turn now to Natasha Hall, who is Associate Fellow at Chatham House and is here with us on Bloomberg TV and radio. Natasha, it's good to speak with you again. As you hear the words of the president today talking about what the military operations have already accomplished, though not signaling that they're any closer to necessarily reaching a conclusion, the idea that maybe Iran wants to talk even though Iran says otherwise, where is the likelihood in your mind of any viable off-ramp of some kind of solution to this conflict, or at the very least something that could bring us to a cessation of the strikes?
Thanks for having me on. I think the administration has been a bit all over the place, and there are strategic reasons for that. But we continue to see a lot of confusion in President Trump's words that the conflict is going to come to an end, but then threatening many other states if they don't come to help that are reliant on the energy supplies from emanating from the Strait of Hormuz. And so I think that there's a lot of off-ramps. I think the question for me is then, what then? He talked about 7,000 strikes on Iran. We've also heard about regime change. Well, you can degrade Iran's capabilities to a large extent, but it seems like they could produce drones forever. And so it's unclear to me then what. We have a lot of mistrust now between the Gulf states and Iran that had some kind of detente, at least beforehand. Europe is still fighting this war with, Russia and Ukraine. There's a lot of different fronts that have been forgotten about with this war. And the question for me is again, what then? What has been accomplished aside from really, I think, emboldening the Iranian regime? And as you said, there's a lot of questions with regards to the transition in terms of the Iranian government, too.
Well, so if we focus on that for just a moment longer, what are the odds that we reach a conclusion here that both the U.S. and Israel would decide enough is enough, we are done here, we've accomplished what we want, with the son of the late Ayatollah still in power?
I mean, I'm very skeptical of that. I think that there could be a short-term ceasefire, much like we saw in the summer, but that ultimately the war continues. And Iran is really trying to establish deterrence here so that doesn't happen again. And what they've done is they've simply eliminated all of the leadership, including the more moderate elements of the Iranian regime through many of these airstrikes. So it's unclear who they're going to negotiate with at this point. I think what is clear to me is that Israel wants to see a sort of mow the lawn strategy that it had incorporated into with Gaza to the rest of the region. And I think the question for the United States and for the American people is, do we have the appetite? Do we have the bandwidth for that kind of strategy in the Middle East moving forward?
Well, and the president was asked moments ago specifically about Israel and potentially greater ground operations in the north, in Lebanon, to go after Hezbollah. He said they're looking at the section where Hezbollah is. He certainly wasn't critical of that decision making by Israel, even if he wasn't outright endorsing it, Natasha. And I wonder what you make of that aspect of this conflict, that this is no longer just about strikes directly with Iran, that there are other fronts here to consider.
Yeah, there are many other wars that are sort of being, continuing and deepening under the cover of this larger war with Iran. And one of those, as you mentioned, is Lebanon, where Israel is preparing for a ground invasion to essentially displace those south of the Litani River. We're talking about 300 to 400,000 people here. We've already seen upwards of, 800,000 people displaced in Lebanon. We're talking about a fifth of the country's population. And, Trump's comments, he mentioned that these are isolated areas with Hezbollah supporters. The reality is that these people are sleeping out in the streets in downtown Beirut. This is going to encompass the entire country. And so I think that there's something missing in terms of the what then piece of this. There's a lot of cheering on of tactical wins and airstrikes. But there's not really a strategy long term in terms of what's going to actually happen after this war or after this current phase of the conflict concludes.
As we consider airstrikes, Natasha, I want to return to something President Trump spoke about once again in his remarks, which is the strikes that the U.S. Did targeting at Karg Island, specifically military infrastructure, not Iran's energy infrastructure there yet. Of course, we know Karg Island is critical. It's where the vast majority of Iranian oil passes through. It seems as though the president is trying to use those strikes to get Iran to back down in some way. But I wonder if you think it might actually have the opposite effect than its intent.
I think a lot of this could backfire, and that wasn't the first strike. I mean, there was also strikes on oil depots, which caused basically black rain to fall on Tehran earlier this week. So, I mean, I think that they're trying to destroy Iran's infrastructure, its ability to sustain its population as well, right? So this is sort of the more regime change elements of these operations. I think the question is, if you're not going to have a ground invasion, if you're not going to have something after this in a few weeks, and what you have is a really wounded tiger, which doesn't really mean good future for Iran, for the Iranian people, or for the rest of the region moving forward. So, I think this is all part of those weakening the regime more broadly strategy of this offensive. But I think the question is, for the longer term, how does this affect global oil markets? How does this affect the Iranian people and, internal dissent more broadly? But for sure, you are angering the Iranian regime even further.
All right, Natasha, such valuable insight. We appreciate you joining us. Natasha Hall is an associate fellow at Chatham House here with us on Balance of Power. And we want to keep this conversation going as we turn now to our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with me. Rick, Republican strategist and Stone Court Capital partner. Jeannie, a Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. To the point Natasha was just making on what could happen with energy prices, Rick, around this question around Karg Island and whether or not the U.S. might actually decide to go after Iran's oil infrastructure specifically. I wonder if you think the greater deterrent to that is the idea that that would be escalation and could prompt even greater retaliation from Iran, or that it actually could potentially have a more dramatic impact on global oil prices and therefore prices at the pump here at home.
Well, I think it's a little bit of the both. Iran is very, very good at sort of asymmetric warfare. They don't need to match our missiles with their missiles. The president said earlier in the press conference that they have significantly scaled down on their attacks in the Gulf and to Israel, and that's true. Could be husbanding their resources, but it only takes a few missiles into the Strait of Hormuz or a set of drone strikes to destabilize the entire oil trade. And as we've been discussing on this program, there's much more to getting conditions precedent in the Strait of Hormuz to allow insurance companies and tankers to want to sail. So I think this is expected to be destabilized for a long time. I mean, General McRaven, who is quite an expert on the region, has said recently that even under the rosiest of scenarios, it could take months to get the necessary equipment in to demine and to be able to create the conditions to be able to open up the Strait of Hormuz to commercial traffic. And even Bibi Netanyahu has been very clear that he's got 3 more weeks on a bombing campaign that he's going to prosecute, in addition to whatever the United States decides to do. So I think that at least for the next month, I can't imagine a scenario where we have conditions in the Strait that are commercially viable.
Well, so when we consider that commercial viability, Jeannie, and the president spoke to this when answering questions from reporters about the Strait of Hormuz, he was asked, if we've destroyed all these mining vessels, then why isn't the strait open? And he said it takes 2 to tango. And he specifically spoke to the idea that the operators of these vessels need to be willing to go through the strait. We obviously have seen the president use whatever leverage he can, be it tariffs or other kind of economic statecraft, if you were to try to change the behavior of countries that he would like to see behavioral changes for. But is he able to do the same in this instance for private companies that are making risk calculations about their crew and cargo?
The answer in one word is no, or how about 2? Absolutely not. We've seen the president do this for the last 2 weeks of this campaign. Go on Fox News, for instance, and say, hey guys, just put the ships through there. It'll be okay. It's not that dangerous. Then he turned to offering risk insurance as if, I've got terminal cancer. Now do you want to give me insurance? That was a non-starter. Now he's making these cases to the private sector again. He's also threatening our allies that they better help us. The reality is that when you listen to the president, what struck me so much was his chastising, making fun of, if you will, the Prime Minister of the UK, Keir Starmer, for checking with his cabinet, for consulting people. And Donald Trump sort of bragged and said, I don't need to do that. I don't know why he needs to do that. Well, the answer is, Mr. President, because we've learned all these lessons before. You get alliances, you build your life raft, if you will, before the ship starts to sink. He didn't do that, and now he's going on threatening allies. You're going to, if you bomb Iran, threaten the Strait of Hormuz. They'll be able to close it, and you don't have any way out of that. So many of these lessons we've known, and had the president bothered to check with experts, as opposed to pushing them out of the State Department in a DOGE effort, he may have gotten some advice that he desperately needs and not be in the position he is in now to be sitting up and making these statements.
All right, Jeannie Shanzano and Rick Davis, our political panel today on Balance of Power. Thank you so much. And we have more coming up here on Balance of Power as we turn next to the CEO of the Airlines for America organization as the Middle East disrupts air traffic, and also the Department of Homeland Security shutdown, creating some issues at airports. That's next on Bloomberg TV.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Oil is declining, giving stocks and bonds a boost. The Dow, the S&P, NASDAQ all higher as West Texas Intermediate crude oil now retreats below $95 a barrel. 94.48. WTI is down 4.3%. Brent, the global benchmark, holding above $101. Right now it is down 1.9% at 101.22 for a barrel of Brent. The S&P 500 index advancing 1% now to 66.99. WTI is up 66 points. The S&P is up 66 points at 66.99, up by 1%. The Dow up 359, up 0.8%, while the NASDAQ Composite Index up 280. That is a gain of 1.3%. The VIX at 24, the 10-year 4.23%, with the 2-year 3.67%. Gold right now down $31 the ounce to $49.88, below 5,000, down 0.6%. And crude bears repeating, 94.49 for a barrel of WTI. Right now, down 4.3%. Earnings this morning from Dollar Tree. Its strategy to introduce higher-priced items is helping it increase sales, especially with wealthier shoppers. Dollar Tree, after earnings, up 6.9%. Rival Dollar General up by 2%. Recapping, we've got oil prices sliding. Stocks are gaining. S&P right now up by 1%. Balance of Power continues now. Back we go to Washington. Once again, your host. Here she is, Kaylee Lines.
All right, Charlie Pellet in New York, thank you so much. I am indeed Kaylee Lines in Washington, where you might not really want to be right now if you've been watching the weather. It's going to be pretty gnarly this afternoon. We're talking winds of some 80 miles per hour. We're under tornado watch in the D.C. region until 7 p.m. Eastern time. It's going to be pretty brutal out there, and it's for that reason that the House of Representatives decided to go ahead and just cancel planned votes for today. The Senate, though, is beginning their work week this afternoon, and they do have a lot of work to do, as we are expecting them to take steps forward on trying, though likely not succeeding, to pass the Save America Act, voting ID legislation that, of course, the president is heavily pushing and says he will not sign any other legislation into law until he can put his signature on that particular piece of legislation. So there's that effort. We're expecting a hearing, a confirmation hearing for the man he has tapped to succeed Kristi Noem as Department of Homeland Security Secretary. Senator Markwayne Mullin will be testifying come Wednesday. There's questions swirling around whether a supplemental funding request will be coming to Congress anytime soon as it pertains to our ongoing military operations and war against Iran. And then there's the little matter of the fact that the Department of Homeland Security is still shut down. It's been about a month that that agency is gone without funding, and there's no sign yet on a path forward to get it reopened. So we want to get into all of this now as we turn to Jonathan Tamari, who's a senior Washington reporter for Bloomberg Government and is joining us now here on Bloomberg TV and radio. So Jonathan, obviously there's a lot of different directions that we could go. Let's begin with the Save America Act, because it does seem that that's what the Senate is going to prioritize first and foremost. How messy is this going to get? Is there any real chance that the president gets what he wants and the Senate decides we're going to do away with the filibuster or do a talking filibuster to avoid any Democratic pushback to this bill?
Yeah, what it looks like right now is that it's going to be a Senate failure, only slower and more painful than usual. There does not seem to be any path towards either getting the 60 votes required to pass the bill through the Senate or even to changing the filibuster with rules with the majority. There are a number of Republicans who don't want to do that, don't want to change the filibuster rules. Senate Majority Leader John Thune doesn't want to change the filibuster rule. So this is an attempt by Republicans to show the president that they're trying to pass his top priority, but that there's not really a pathway to do it. It could take a number of weeks. They might let this sit on the Senate floor for a week, 2 weeks, maybe even more, as a way to show that they're really making an honest effort at it. But nobody seems to think that there's a way where this finishes, where it actually passes the chamber and becomes law.
Okay, so if that's an uphill climb, I wonder if it'll be a similar uphill climb for any supplemental funding the president might request from Congress, as we know that this war with Iran has already cost billions and billions of dollars. There has been reporting that a supplemental request could be in the tens of billions, if not $100 billion. Jonathan, I don't know if you have any insight for us on the potential timing or size of that, but what about just the idea of it in and of itself? Is it going to be difficult to get through both chambers, or could we actually see Democrats supporting this measure, if not for anything else other than in the name of the American troops who are in theater?
I think both of those things could be true. I think it could be very difficult because I think there are a lot of Democrats who are going to say, we haven't been consulted on this war. We're not going to vote for something where we've had no input onto it, and the president doesn't seem interested in our input. The chamber hasn't formally voted on it. So I think it's difficult in that sense, but I do think you make a point. This is the kind of thing where maybe a handful of Democrats could cross over and vote for it anyway, because in the name of supporting the troops, supporting a military mission, regardless of whether they necessarily agree with the president on it, just in the name of supporting military members who are there fighting. But I think that still remains to be seen. I think we'll have to see exactly how much money they're asking for and what, if any, input they take from Democrats. Do they accept any kind of strings attached to this money, or do they just say, we want a blank check? I think that could affect the posture of those handful of Democrats who might be willing to cross over and vote for it. Again, we're probably talking about a very small number, but it only takes 7, 8, maybe 9, depending on the Republican votes, of Democrats crossing over to potentially get that through the Senate. I do think it could even be tricky for Republicans, though. I think there are a number of Republicans who might not necessarily want to be on the hook for this war, that they're content to let Trump kind of lead the way and carry, the burden of it politically and with the vote with the public. Voting for the money would essentially be endorsing it, and I think there are probably some Republicans who might be a little wary of that too.
All right, Jonathan Tamari of Bloomberg Government. Thank you so much. Jonathan, of course, speaking with us about the idea of Democrats crossing over on a vote on supplemental funding, but we also saw Democrats last fall crossing over in the name of reopening the government after the longest shutdown in history. And of course, we are in the middle of another long partial shutdown as we speak. It's been about a month, and the Department of Homeland Security has gone unfunded. And you're starting to see the real world effects of that, specifically if you've been trying to travel by air in recent weeks, as we're looking at TSA lines with those agents going unpaid that have gotten longer and longer at airports. It's starting to become a real problem. And we want to get into it now with Chris Sununu, who's the CEO of Airlines for America. He's the president there as well. Of course, he also is the former Republican governor of New Hampshire, and he's here with me in our Washington, D.C. studio. Governor, great to see you.
Great to see you.
As always. We know the situation's not great at airports right now.
No.
How much worse could it get if this shutdown continues?
Well, believe it or not, right now we're managing, right? So you have maybe a dozen airports where there's hot spots that could be a 30-minute, 60-minute. We've seen some on a couple weekends ago, upwards of 2 or 3 hour waits, and you've seen some of those long lines. For the most part, they're managed in that the TSA has emergency deployment teams. They kind of move into place. They can add some and supplement with where the call-outs might be where the higher traffic, especially given spring break, might be. So again, it's been managed. Folks, we tell everyone, don't cancel your flights. You might have to give yourself a little extra time going to some of these airports. But at the end of the day, the issue is really about just the federal government paying their own employees. I mean, we've talked about this before. It's common sense. It's the most basic thing that you have to do. And remember, DHS isn't unfunded because of the big, beautiful bill that ICE and CBP and parts of Homeland Security, they are funded because they've gotten billions of dollars. It's really TSA that takes the hit. And these are some of the lowest paid employees that have been going on. They just got a zero paycheck. They're going into their 4th week of not being paid. Imagine averaging $35,000 a year. 3 or 4 weeks is a lot, right? If you're a single mom and you're working, you're TSO and you're working, and all of a sudden you're not bringing a paycheck home for 4 weeks, well, yeah, that's real pressure on the system, and that will continue to build. So I don't think we're in crisis mode. Hopefully we don't get to crisis mode. I think there's huge opportunity for folks here in Washington to say, okay, they may not have liked Secretary Noem, fine. The president said, fine. He moved around. He capitulated there. They wanted more body cameras. They're installing those. They wanted some calmness and some stability to be brought into Minnesota. They've done that. So I think the Republicans have actually done a pretty good job of saying, okay, we'll give in on these issues, but we got to fund this thing, as a whole. Democrats aren't moving right now. Leadership is not talking, and that's probably the most frustrating part. It's not that they disagree on major points. They're literally not entering the room and having discussions at the table. That's hard.
Well, we know that typically when it comes time to difficult negotiations like this, they like to operate on a deadline. Usually there's the deadline of the whole government's going to shut down at midnight if we don't do this now. This is obviously much smaller in scale. So I wonder if you see any kind of deadline. You mentioned spring break. Easter's coming up. I'm supposed to travel with a 7-month-old over Easter. I'm a little nervous about that right now, I got to say, given what's going on. Is that a realistic deadline, do you think, or is there a problem right now that there is
no, because there's no deadline, right? It's when the crisis hits, maybe Washington will finally do their job. So that's this arbitrary moving target.
Yeah.
It's not going to be what we saw in October. October, you had air traffic controllers. You had delayed and canceled flights. You don't have that this time. Flights are taking off and landing just fine. The airspace is terrific. It's just literally getting into the door of those airports. So the crisis, if there is one, would only be a regional piece. It would be this airport there or that airport there, and you just don't know when or how it's going to come. Would that be, if we had an issue at one airport 4 weeks from now in the Midwest somewhere, is that enough to all of a sudden get leadership to start talking again? That would be a very weird thing. So they have to be proactive about it. Both sides need to actually say, okay, what do we need to do to end this? The new secretary, Mark Wayne Mullen, hopefully will be in early April. Maybe that's an opportunity, and then just in the next couple of weeks. Hopefully he doesn't get there, but that could be an opportunity because he is a former senator, or will have been a former senator at that time. He has friends on the Democrat side. They know how he works. He respects and understands that process. Another opportunity, I think, for both sides to come together in a leadership position and say, here's our discussion points. But right now, it's not even really clear what they disagree on, because they're so close, if you will. It's all very blurry, and at the end of the day, who suffers? The American public. Like the traveling American public goes, what should I be doing with my travel plans? The answer is keep your travel plans. You might just have to give yourself a little extra time, maybe look ahead, see if your airport is one where the lines are a little longer, 30-minute, 60-minute waits. All that data is available online. If you go to the airport websites, it's usually there. So I think that the folks at TSA are doing a tremendous job. Please say thank you, by the way. Have some patience. They're under as much stress as anybody to move folks through that line quickly. The last thing they need is, again, as a customer, you can be frustrated. It's not their fault. It is not their fault. In fact, we need to thank them for all the hard work they're doing. I think Ha McNeil, who runs TSA, Rodney Scott, who runs CBP, they're doing a tremendous job keeping morale up, keeping their staff moving forward. They deserve a lot of credit as well. So things are moving in terms of management. They're just not moving in terms of, that Capitol Hill building that sits behind you there. It's a little frustrating.
Yeah, I'm sure it is. As we consider as well that all of this is happening against a backdrop of a war in the Middle East, there's questions about whether or not there's domestic threats that could be inspired by the war against Iran. But we have also seen, for airlines specifically, it having a very disruptive effect in what are global airline hubs. We saw Dubai's airport have to close down just today. What is the cascading effect of that?
Well, believe it or not, the number one cascading effect is the price of oil, right? So remember, the folks that are flying today probably bought their ticket 6 or 12 weeks ago. So they bought that ticket there's a lag in the price, right? What we're going to see is a pretty big disruptor across all the different airlines in terms of as price of oil, goes up 50 to 100% on jet fuel, whatever it might be. You'll see some potential price increases, let's say a month down the road, right? If we don't get the Strait of Hormuz really secured, I'm going to give it till about mid-May before Memorial Day. Because remember, Memorial Day, right before Memorial Day, they come out and say, the price of gas, the price of oil is X, and this is how it will affect summer travel. If by that time we haven't seen any substantial security of that supply chain of 1/5 of the world's energy source, then you could be looking at some long-term price increases. Right now, the price increases could be, hopefully they're temporary, they're just bumps in the road, they're nothing that really impact people's desire to travel. But as we hit those summer months, what happens with FIFA? Right, we have this amazing American opportunity of all these international folks coming in, both in terms of safety and security. I think CBP and TSA are doing a great job doing as much of the technology, innovation, and implementation for those security protocols that have to happen around the FIFA World Cup, where you'll see, maybe millions of people come in across the world for that. Great opportunity. We don't want to miss it. So on the price of oil, I think we're going to hit a little bump in the road unless we get to around Memorial Day. Then it could be a little more of a long-term impact. But remember, flying domestically is still the most affordable thing you can do. The average price of a ticket today is less than it was in 2019. It's not just bucked inflation, it's actually deflationary. I think the average price of anything else has gone up about 26-30% since 2019. Our prices have gone down 3%. So what happens? More families are traveling before, more opportunity for folks than ever before. We're seeing record numbers. to have politics disrupt that for the American people is so silly and such a terrible sign of where our system is politically.
All right, we have to leave it there. But Governor, thanks for joining us. The former governor of New Hampshire, now president and CEO of Airlines for America. I know, pray for me. I have a few more weeks to hype myself up for it.
Prioritize families in the airline industry.
Oh, fingers crossed it all goes okay. Thanks for being here on Balance of Power. I'll see you again for the late edition at 5 p.m. Eastern Time right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, this is Bloomberg Business Week Daily. It is Monday, March 16th, 2026. Carol Masser, along with Tim Stenivek, live here at Bloomberg headquarters in New York City. We've got the U.S. war on Iran. It is entering its third week. We're also got that Fed decision on Wednesday. I feel like there's a lot. There's a big thing going on with NVIDIA right now, a big
GTC
event on the West Coast, right? We've got Micron earnings also coming our way on Wednesday. There's just a lot percolating right now, although I think it's safe to say energy markets and that war still front and center.
Yeah, on energy markets, WTI crude lower after hitting $102 per barrel. Right now, WTI at $94.31 a barrel. Brent still above $100 a barrel, but Carol, WTI down about 4.4% today.
Yeah, and markets, I mean, if you look at the major averages, they're green across the screen, and you've got more names in the S&P 500 higher today. Having said that, we're definitely off our best levels of the session, as you said. We're going to get more on the trade in just a moment. Also ahead in the next 60 minutes, who would want to be a U.S. ally in 2026? So asks Bloomberg Opinion's Mark Champion. We're going to head over to London in just a moment and check in with him.
Yeah, plus hyperscalers shadow borrowing, maybe bolstering private credit risks. That and the macro environment. Alberto Gallo of Andromeda Capital Management joining us a little bit later.
We're also going to talk markets with the U.S. head of international wealth and private banking over at HSBC. She says we are looking at the year of value. Although when it comes to value, I get it, but we've heard people say that a lot. But maybe something's different this time around.
And we hear from Melinda French Gates a little bit on leadership and on egos.
All right, they often go together. So we're going to get into that in just a moment. First up, let's get a check on the trade on this Monday. Here is Charlie Pellet.
Thank you very much. Higher across the board with the Dow, the S&P, NASDAQ, all in the green. Crude oil retreating, as Tim mentioned. Right now we got a barrel of West Texas Intermediate back below 95, 94.47, down 4.3%. Brent crude 101.14 right now, down 1.9%. The Dow, the S&P, NASDAQ, all higher. S&P up 64 at 66.96. That is a gain of 1%. The Dow up 349, now up 0.7, while the NASDAQ Composite Index is up 270. For NASDAQ, a gain of 1.2%. The 10-year at 4.22%, with the 2-year 3.67%. And right now, we do have West Texas Intermediate crude down 4.3%. WTI 94.53 a barrel. Should not ignore the move in gold today. Spot gold below $5,000 at $49.95 right now. Spot gold is down 0.5%. Among oil majors, ExxonMobil shares higher, along with the price of crude up 0.6%. Chevron up 0.1%. ConocoPhillips down now by about 0.1%. Recapping, S&P is gaining 1%. West Texas Intermediate crude oil down 4.3%, 94.43 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, U.S. allies deflecting President Trump's demands to help reopen the Strait of Hormuz, expressing unease about getting pulled into that war, U.S. war in Iran. President Trump spoke about it less than 2 hours ago from the White House.
Their capacity to threaten commercial shipping in the Strait of Hormuz, with more than 30 mine-laying ships destroyed. So we want them to come and help us with the Strait. We have it in very good shape. The numerous countries have told me they're on the way. Some are very enthusiastic about it, and some aren't. Some are countries that we've helped for many, many years. We've protected them from horrible outside sources, and they weren't that enthusiastic.
That, of course, is President Trump at the White House earlier today. Well, the U.S. request for a NATO assist comes at a time when Bloomberg Opinion's Mark Champion, who covers Europe, Russia, and the Middle East for us, writes about how essentially U.S. allies can put a high price on helping out the United States in the Strait of Hormuz. It's all about maybe being in the driver's seat a little bit. Maybe. Maybe. This is what we want to hear from Mark about. Hey, Mark joins us right now. Mark Champion, that is, from London. Mark, it is good to have you here with Tim and myself. You know, after a year where President Trump seems to have had the edge on U.S. allies on a lot of different fronts and situations, have the tables turned a bit here, and are U.S. allies a little bit more perhaps in the driver's seat?
Well, it's not, you know, they're still dependent on the U.S. for security. There's limits to what they can do. But the point is that here is an instance where, you know, when he says, you know, this is a NATO, you know, NATO needs to respond, you know, NATO doesn't need to respond. You know, NATO has a defense clause, collective defense clause, and it's been invoked once on behalf of the U.S., you know, when it was attacked on September 11. You know, this is not a war of self-defense. This is a war of choice that the U.S. made. It wasn't attacked. It decided to attack Iran. So there's no automaticity here. There's no, and basically this is a case where Donald Trump needs some help. It isn't often that the U.S. Needs military help. But this is one instance where the U.S. is pretty stretched. It's got two, carrier strike fleets in the Gulf. They are very busy attacking Iran. And it isn't actually militarily very easy to sort of split that out and begin an operation to protect shipping on its way through the Gulf. Also, some of the countries that he's asked, the UK, France, Japan, South Korea, these are countries that are actually pretty good at demining. So if the Iranians have demined, they have the kit, they have, drone demining equipment, which is what you want in a conflicted zone like this. But the point is that, because he needs them, it isn't just about raising the oil. Controlling the oil price. So that's why you want the Straits open. But he needs it because that is where the war is being fought. He needs it in order to win the war. And so they should do what Donald Trump would do, which is to say, okay, if you're going to ask us to put our ships and sailors at risk, then we have certain conditions and we have a price.
What would the price be? What would the conditions be, in your view, Mark? How would Donald Trump handle this if he were on the other side?
Yeah, so there are things that different countries will want. I would say that there are two overall things that they should be asking for. The first is for to make it for the Americans to understand and to make it clear that this is a non-American operation. In other words, to be able to separate this and be able to say we are not joining the war effort. We are operating a non-U.S. effort in order to keep the international waterways free and to keep shipping safe. The Iranians will see this as an intervention because they are, trying to keep the straits closed. But nevertheless, this is a war that, may not suddenly, end from one day to the next. It may drag on in different forms for some time. And it will be important for allies who didn't want to be a part of the war and don't want the consequences to be able to sort of make that difference and to include other countries, that aren't necessarily the usual suspects of Western allies and so on, in order to take part. So that's one thing they can do. The other thing that they can and should do is to tell him, look, we know that you're not that keen on helping out Ukraine. We need Ukraine helped. You haven't been, the difference between the Trump administration and the Biden administration in terms of helping out on Ukraine is pretty stark. So, we have a minimal demand to make, and that really should be that the U.S. continues to provide Patriot missiles, which will be at a premium after this Gulf War because of the rate at which the Gulf states have been burning through them, and the U.S. bases have been burning through them.
Hey, before we go, Mark, just one last thing that this really jumped out in your column that's on the Bloomberg today. You remind us that the worst hit countries have been America's allies in the Persian Gulf specifically. And you say the Trump administration's failure to prioritize Gulf allies will have a long tail, prompting a reassessment of their security policies. But for now, they need the Hormuz open too. Just real quickly, 30, 40 seconds, what might be the implications there?
Yeah, I don't have a crystal ball to say how it will fall, but there's no question that the Saudis, the UAE, the Gulf states collectively, that they are going to be looking at their situation and saying, we host these U.S. bases in order to make us more secure. They made us less secure. So, what are we going to do about that? And I don't know that they would know the answers at this point. I certainly don't, but they will be looking at it.
All right, going to leave it there. So appreciate it. We know it's later over there in London. Mark, thank you as always. Mark Champion's columns, I got to say, must read on the Bloomberg. So highly recommend you check them out on the Bloomberg and at Bloomberg.com. Mark, by the way, international affairs columnist for Bloomberg Opinion, again, joining us from London.
All right, so that's one view of everything happening right now, at least when it comes to what could affect markets. Another view has to do with investment in AI infrastructure via off-balance sheet debt, increasing the exposure of insurers and private credit funds to hyperscalers. That's according to officials at the Bank for International Settlements. So we're talking about hyperscalers turning to off-balance sheet arrangements to finance infrastructure expansions, often in partnership with private credit firms, strengthening the links, Carol, between hyperscalers and non-bank investors.
I got to say, this really fits into something you and I have been talking about so much, and everybody at Bloomberg really, is what's going on with private credit. Curious to see what our next guest has to say. He is Andromeda Capital Management's Chief Investment Officer and co-founder. He is Alberto Gallo, and he joins us from London as well. They have over 300 million in assets under management. We were just talking with our Mark Champion in London. Alberto, I do want to talk about private credit and what's going on, but first up, you are joining us from London. Mark has often weighed in for us and our other colleagues overseas about the U.S. war in Iran. How do you see investors and market participants from there and from who you are talking to, how they see this war?
So I would say that the war is seen still very optimistically by the majority of investors. So a lot of investors expect a taco moment that would translate this into a very muted conflict in the next few days. But on the ground, the signs are suggesting that it could last a lot longer. And even if there is a ceasefire, we could go back to a situation which might be quite different from what we had before. So oil might not go back to 60, and we will still have tensions in the Middle East and some disruptions to supply chains. Now, if you put that in context, we were starting the year with a very, very close consensus on growth and disinflation. So very optimistic outlooks, Goldilocks outlooks for 2026, the opposite of what we had in 2025. And in this context, we had extremely tight valuations in credit markets, 30-year tights in spreads at the beginning of 2026. And together with all the signs of froth that we saw in the private credit market, these made us really cautious about credit. We were already last year, but it made us even more entering this year.
What's made you even more cautious about credit this year? How has the situation changed?
If you think about valuations, that's a fact. But then there's a number of other signs that you can put on a checklist, which, you can call it, this time is different, circularity, conflict of interest, investors ignoring risks. And all these elements typically tend to happen before, just before something goes wrong. You don't know what the catalyst is going to be. The catalyst could be the war and therefore higher commodity prices and central banks not being able to cut as much or even having to hike. That's what the market is pricing for Europe. But when the credit market is priced for perfection and investors are ignoring risks, then it's time to really, start being defensive, looking for the weakest catalyst, the weakest link in the chain. And we mapped the private credit system since over a year ago. We saw all the elements of risk, overlooking risk of very loose underwriting, which are now translating in a big, discovery moment from investors. And we're just at the beginning of this. This has been a multi-year, $3 trillion trade that coincided with the AI capex. Now, the AI capex is the second largest capex effort in U.S. history after the annexation of Louisiana. And, at the same time as software companies were looking for funding, private equity managers were looking to expand in the credit space, and they started lending to any borrower to gain market share out of banks. And so this has created a very large amount of misallocation of capital. 40% of the companies in private credit are software, 40% is negative free cash flow, so they don't generate enough cash, and 10% is pay in kind. So they don't have enough cash to pay coupons, but they pay principal instead of coupons.
Okay, doesn't sound like a very good scenario, to say the least. How does this, though, we've had a lot of guests on, Alberto, to talk about this, and many seem to say that it isn't systemic. There's not a lot of tentacles in kind of, the traditional financial system, although big banks do have exposure. So, we are talking more about kind of the insurers and what their exposure is. How do you, as you continue to look over this and do your analysis, maybe see where does it go? How bad does it get? And how problematic does it get more broadly for our financial system? And how long does that take?
The response today is that it's not systemic. A few months ago, the same, analysts were saying it's not a problem, or it's just one manager, for example, Blue Owl. But, the size of the market is over 3 trillion. Subprime was 1.3 trillion in 2008. So it's a comparable size. Now, the spillover effects are different. It doesn't go through the banks.
Yeah.
Banks this time around have been very, very, severely regulated. Regulators have been, with their magnifier over the bank balance sheets for the last 3 years and for the last 10 years. So it actually goes into a different contagion channel. And it's almost, it does look like the 2007, 2008 credit situation. There's a lot of leverage, there's bad underwriting, but in a way, it's a different contagion channel. So it goes through the insurers. These are the biggest buyers of private credit assets. Now, remember that loans are not securities, so they're not regulated by the SEC. If you do a bilateral loan or private credit fund does not buy or hold securities. And insurance regulators are very often at the state level in the US. So to some extent, you can escape mark-to-market, you can escape the SEC, but when you start having defaults, like with First Brands or Tricolor, you cannot escape investor outflows. So a lot of the 3.5 trillion of private credit is owned by insurers. The private equity own the insurers, so the ones that are owned by Apollo, KKR, and so on, are around 1 trillion. And the total of the US life insurance industry is 35 trillion. Now, you could say, yes, a lot of these collateral is investment grade, but we know that ratings tend to be very cyclical. A lot of these collateral is actually rated in the BBB minus space. And when we look at the portfolios and the data and the concentration in sectors and the fact that a lot of companies don't have free cash flows, it all looks very fragile.
Yeah.
So if you want to get exposure to AI, probably lending at 2-3% spread is not the best way.
Yeah, and it's interesting when you talk about the insurers and the big kind of private credit, private equity firms that have the insurers that are there to be basically a buyer of these private credit. To me, it gets back to circular.
Just doing a circle.
It's a little bit too close for comfort, some would say. So glad we could get some time with you. We feel like this is such an important issue as we continue to track it, and hopefully we can continue to have this conversation with you. Alberto, thank you so much. Have a great week. Alberto,
thank you. Good luck.
Alberto Gallo of Andromeda Capital Management, CIO and co-founder, joining us from London.
Coming up next, Jensen Huang speaking this hour, what you need to know, along with reporting on Meta, OpenAI, and more. Ed Ludlow, next on Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. A slide in oil prices is lifting stocks and bonds on hopes that more tankers will be able to get through the Strait of Hormuz. Right now, the S&P is up 75, 67.07 where we stand. That is a gain of 1.1%. The Dow up 420 now, up by about 0.9%. And NASDAQ is up 308 for the NASDAQ Composite Index, up by 1.4%. The VIX below 24 now, very close to 23. We've got the 10-year, 4.22% with the 2-year, 3.68%. All of this ahead of the Fed meeting that begins tomorrow with a decision on Wednesday. Spot gold is trading below $5,000 the ounce, $49.97. Spot gold down 0.4%. Crude, major move there to the downside, dropping 5%. WTI right now at 93.83 a barrel. Brent just above $100 a barrel, now down 2.6%. Bank of America has agreed to settle a proposed class action lawsuit on behalf of Jeffrey Epstein victims who accuse the bank of aiding in the deceased financier's sex trafficking. Shares of Bank of America are trading higher today. Right now, we do have Bank of America, BAC on the ticker. It is gaining by 0.9%. Warner Brothers Discovery shares higher after one battle after another. Took home the Best Picture prize last night at the Academy Awards, delivering a long-awaited win for veteran filmmaker Paul Thomas Anderson. Shares of WBD Warner Brothers Discovery up by 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as you know, at this hour, NVIDIA CEO Jensen Huang speaking at the company's annual AI conference. It's a big deal. It's 4 days. It's called GTC. It's out there in San Jose.
Yeah, NVIDIA executives likely need to deliver surprise to spark a rally in the stock. It's essentially treaded water amid concerns that the rapid revenue growth is peaking. Not even a banner earnings report last month was good enough to impress investors. The shares fell 5.5% the following day. With more on NVIDIA, let's get to one of the co-hosts of Bloomberg Tech on Bloomberg TV. Ed Ludlow, he's in the Bloomberg News San Francisco bureau. Ed, you were at this event in San Jose last year. You were at this event in Washington, D.C. earlier this year. It's like the kind of like the two a year they do. What's different about this one?
Gosh, I don't know that it's any different in practice. You guys set up the ramifications for the markets really well. That NVIDIA, as the most bullish on the street would put it, really is searching for its next catalyst, right, to propel it forward. You know, the state of play is that NVIDIA dominates. It has a literal and technical monopoly on the market for chips that train AIs and run them on the inference side, and those chips go into data centers. And one of the things that you kind of hinted at was that it's not the only event that they do. So when they had the DC edition of this last year, the big piece of news was forward-looking guidance, $500 billion of sales, $500 billion of sales, just on 2 platforms, Blackwell and Rubin, through the end of calendar 2026. And already so far this year, Jensen Huang has indicated that they're tracking beyond that. And so the market is just waiting for that number to go up. And that pretty much will judge, the response will be judged by that.
Okay. Kind of sounds...
What have you done for me lately, Jensen? It's kind of like what investors want to know. I mean,
I don't know. It doesn't sound as exciting as we've seen her in the past, but it's but important, right?
Well, no, let me take you inside the room. I mean, I'm not there right now. I'm going to go tomorrow down to San Jose. You know, it's thousands and thousands of people, from developers, which is its history as a developers conference, through to venture capitalists, all of the AI companies that are building on top of NVIDIA gear. There is no adequate superlative for it. It is the Super Bowl of AI. And, Jensen Huang, as some call him, the godfather of AI. And that is true, that they kind of go on this pilgrimage down to San Jose to see him. But the bar is higher now in terms of what's material for the stock. And, we're talking about the world's most valuable company, that between 2022 and 2024, the stock jumped 800% anyway. And people had come accustomed to that kind of trajectory higher. And that's the bit that's in doubt at the moment, what it would take to move the stock even higher at that kind of a gradient or ascent.
Yeah, I mean, the company... or the market, I should say, is not necessarily maturing in the traditional sense. But I mean, Ed, you can't grow like that forever. What about the inference layer versus the training layer and the opportunity there? Because that could be an area of growth. But there's also
Yeah, so-
competition.
The academic debate has been that GPUs were very good specifically for training. You know, a GPU can run multiple data processes in parallel, and that's why it was good for training. Inference, running an AI model, generating tokens, there is an academic school of thought that says, you know, having a chip specifically designed for that is better. And you see AMD make the case that its platform is best for inference. You have inference-specific platforms like Cerebras, or companies working on their own chips that have a much more narrow focus, like Google's TPU. Now, NVIDIA, towards the middle of last year, acquired a big chunk of Grok with a Q, and hasn't really told the world what it's done with that. What was essentially an acqui-hire. Grok had an inference-specific platform, and so over the course of the next 90 minutes, the assumption of the street is we will hear about NVIDIA saying, by the way, we have something now that we think is particularly good for inference.
All right, we just want to point out for everybody who's now watching, we are also keeping an eye on Jensen live there on the West Coast. At GTC, the first day of that 4-day event. Hey, one of the things I want to go maybe from one company, NVIDIA, that is so important to that AI spend, Ed, and build, is also OpenAI, obviously integral to all of this. You've got a great story out today. OpenAI in advanced discussions to form a joint venture with private equity firms, and we're talking about TPG and Bain Capital. Tell us a little bit more about what you found out.
Yeah, I mean, the very simple way of describing this is OpenAI is trying to find a way to sell its products other than just doing it itself. And so in very literal terms, they've set up this new entity, or it actually hasn't closed yet, but they're in the process of setting up this new entity that basically translates into a sales and distribution org so that enterprise companies can buy OpenAI software in a meaningful way. And if you think about why private equity, so the details we've reported, as you said, TPG, Bain, Brookfield, others, they have portfolios of companies. They are private equity, and their job is to make those various companies across various sectors better, improve them, make them more efficient. And so that's a rife market for OpenAI to look at in the first instance. So what we've reported is that those PE names are putting about $4 billion into the entity to get a stake in it. The valuation's about $10 billion. But that's what it is. It's a way for OpenAI to sort of think differently about selling what it does with capital that is not on its own balance sheet. And given OpenAI's sort of intense capital requirements for lots of different reasons, it's a kind of a shrewd move.
Shrewd, but is it smart?
Yeah, I mean, the thing is, like, we always talk about OpenAI and Anthropic in the context of who uses the tool in the end. So in ChatGPT's case, it was a success because of it being an overnight phenomenon with consumers. People on their smartphone or on their laptop engage with ChatGPT. In Anthropic's case, they early went after the enterprise customer, basically saying, here's our model, here's what it could do if it was integrated into what it is you already do. And OpenAI's tried really aggressively to catch up. Now, with this joint venture, why can't OpenAI just sell its stuff itself?
Right.
And some of the things I heard from sources were, well, part of it's jurisdictional. Think about markets like Japan, where there is a very entrenched corporate culture. It can be difficult to do it in a market like that. So bring on people who have expertise in that region and have a specific entity set up to sell into the sectors that are most prominent there.
Carol, did you do Nebius as a gainer today?
I did not.
Yes.
Okay, up 16%.
Oops.
Right now. Kurt Wagner reporting early this morning, Ed, that Meta is going to pay as much as $27 billion over the next 5 years for access to AI infrastructure from Nebius as it spends aggressively to compete with the industry's top frontier models. Remind everybody what Nebius is. I mean, the stock is just rallying, not just today, but this year up more than 50%. Where does it sit, and why Meta Platforms? Why would they choose Nebius?
Well, Nebius is a neocloud, which is a fancy term we assign to data center operators whose data centers only do AI workloads. In a data center, which is basically a big tin can with computers in it, you can run all kinds of workloads, and data center infrastructure around the world does have various workloads inside it. A neocloud is just infrastructure that supports AI only, and Nebius has an interesting history. It was spun out of Yandex, which is a Russian company, and of course, they want to have continuity of doing business. And very similar to CoreWeave, they are taking on workloads of companies who have their own data centers. Meta's no exception to that. It's just that Meta doesn't have the capacity on its own, so it's looking elsewhere. And I guess making it relevant to to NVIDIA GTC. Meta, of course, is a very big buyer of NVIDIA chips for its own data centers, but Nebius's cloud platform also runs on NVIDIA gear. So it's all very much linked.
It all feels incestuous. No, but you know what, Ed? It just sounds like some kind of outsourcing a little bit, right? In terms of capacity. Is that what this is about?
Yeah, like really simply, the state of play for the world in AI is that the demand for compute, the demand for workload capacity is greater than what's built around the world.
Yeah.
That's true of Meta, it's true of many of the hyperscalers, it's true of all the frontier labs. If they had more access to compute, they could do more things with it. Meta is an everything strategy. So I told you it's a really big buyer of NVIDIA and AMD chips. It takes those and puts them in its own data centers. It also has its own chips, which we went deep on last week, right? And then the third bucket is they have to go to the neo clouds and say, we need even more capacity, like what can you give us right now? And so the specifics of the Nebius deal, it's about a $12 billion deal in the first instance, where next year Nebius says, okay, we are dedicating this amount of capacity just to you. And if you want, you can take even more in the excess that we have 5 years thereafter for an extra $15 billion. And for Nebius, that's highly lucrative.
You know, I almost feel like sometimes I'm playing Monopoly. It's just kind of interesting, Ed, and I am curious about you. We have another question we want to get to on Meta, a Market Watch report. But I'm just curious, as you, like we do this too, the circular financing, but continuing to track all the money that is coming in, going out, the relationships. Do you feel like we as an entity and just the world at large, you are watching this build, have a good grasp on where the money's coming, going, and it all makes sense, or is it getting a little funny and unclear?
It makes sense if you're able to decipher webs. And, you know, I always go to the same meme from It's Always Sunny in Philadelphia. You know, some of your audience will get it, but you can just Google it, where there's like pictures on a board and loads of red string, and you're like, here's kind of what's going on. In each company's case, very often it leads back to NVIDIA, right? Because NVIDIA tends to make equity investments in some of the smaller players, either in its own supply chain or those that are users of its technology for training or inference purposes on AI. You know, Meta equally has done similar arrangements. So Meta has a very large multi-year deal with AMD. And as part of that, it took a very sizable stake in AMD on paper in the form of warrants, right? OpenAI too has a warrants agreement with AMD. The question for AMD in that case is, why did you have to give away 20% of your company in the end to get these people to use your technology? And, you know, we ask those questions often, and usually the answer back is, we want to support the ecosystem.
Hey, Ed, before we let you go, we got to talk about this report from Friday from Reuters.
So that was confidence, right? Yeah. Ed, you felt confident.
Yeah.
Okay. Just
I want to get this layoffs question.
Okay,
now.
let's go.
Right.
Let's go.
All right, Meta plans layoffs
Sorry.
that could affect over 20% of the company. It comes after a year of Meta spending aggressively to bolster what it can do when it comes to AI, or at least the people that it's hired for AI. How do you look at this reshuffling that's been reported by Reuters?
So, you know, that 20% is really significant, right? That would be more than 15,000 people if it's true. Although, note, if you have to look every single year where Meta's headcount ended, it has been up and down. Like post-pandemic, maybe this is right-sizing. But the interpretation of the street is really interesting. They both think that this is really prudent because Meta is clearly committed to its AI spending. And so when you trim headcount, that protects your margins. But people also recognize post-Block, where Block got rid of 40% of employees citing AI, that Meta is one of the companies that should be able to demonstrate that AI has had an internal impact, a positive impact.
Okay, there we go.
By the way, I'm kind of loving the beard and the mustache.
Oh, thank you.
Am I allowed to
Any of our glorious leaders watching the show, they should put it in the fans column.
I am a fan on many levels.
Carol, by the way, Carol doesn't just say that stuff, Ed. She means it when she says it. So
I appreciate it. I'm tough. No, I love it.
She wouldn't say it if she didn't.
All right, Ed, thanks so much. We'll continue to track all the reporting Ed and the team are doing, certainly when as NVIDIA continues to have headlines.
Yeah, he'll be down in San Jose tomorrow.
Yeah.
NVIDIA GTC, remember a few months ago, late last year. It was
Am I going to get in trouble with HR for saying that?
No.
Okay.
I don't know.
I mean, come on.
I want to talk about the S&P 500.
Compliments are
We might
okay.
get in trouble if we don't do markets right now.
Oh, let's do it.
Up 1.1%. The NASDAQ up 1.4%. That's the NASDAQ composite. The Dow up close to 1%. In terms of global commodities, specifically oil, WTI down to 93.57, so down more than 5%. You got Brent below $100 a barrel. That's down 3.1%.
It's a weird trade today.
It is a weird trade.
We look at the U.S. equities. Yep, they're higher, but they're definitely off their best levels of the session. However, you go inside the S&P 500, and you do have most names in that index higher in today's session. But it does seem like markets, even though we are in our third week of this war and continuing to kind of struggle when it comes to the energy markets, it's kind of interesting to see how things are playing out.
Well, let's stay on markets. As we note that the S&P 500 index slid almost 5% from its last record that was back in January. The war with Iran showing no signs of ending soon. It keeps oil prices alarmingly high, though under $100 per barrel, 62%, 63% higher for both of those, Carol, so far this year.
I just want to mention, longtime market watcher Ed Yardeni said that from a contrarian perspective, seeing sentiment heading south just increases the likelihood that we'll get a good buying opportunity at some point, but added that it may not work now. So let's see.
What's a good buying point?
That's the million, trillion, billion dollar question.
And when?
Let's see what our next guest has to say. Joining us is Raquel Oden. She is U.S. Head of International Wealth and Private Banking over at HSBC. She's here in studio. Nice to have you here with us. There's a lot coming at investors. The war in Iran, we keep trying to figure out when this might wrap up. That is the big question. How are you kind of factoring that in? Are you not yet? The energy market disruption, it feels like things are cooled down, yet we are still way up from the start of the year when you look at the prices of oil. So how do you assess all of this when you think about investment management?
So thanks for having me.
Yeah.
And you are spot on. I think right now, one of the taglines I go by when I talk to our clients is, in the short term, markets follow headlines, but in the long term, markets follow corporate earnings. And you have to separate the two. So in the short term, we're going to continue to see this volatility, as we've talked about. And that is just a reality of what you're seeing from an S&P, NASDAQ standpoint, that you're saying, like, today was down, it was up. But in the long term, the reason why I still feel bullish and confident on equity markets in the U.S. as a whole is corporate earnings is still predicting 13 to 15% overall earnings this year, right, in 26. And so what you want to anchor yourselves to from a long-term standpoint with our clients is really focusing on that. Now, you've talked about it. There is going to be a more focus on value over growth. And so you're seeing that in the tech sector that you're talking about right now. So the Mag 7, I consider that a repricing opportunity.
And you are calling or thinking about 2026 as kind of the year of value, right?
Year value.
Yeah.
Year value, right? Because you're right. The market is repricing some things right now. So that's why you're saying it's the year of value. So when you take a look at use tech as example. We talked about the Mag 7. That's getting repriced a little bit, as we're going to see this year, but it's the forgotten 493, right? The widening out of that sector. That's going to be where the value opportunity lies, right? If you think about that, if you take a look at I say 493, outside of the Mag 7, last year their earnings were something like 6%, and they're predicting this year in 26 closer to 15%. So if you take a look, the Mag 7 will come down slightly to the 14-15% range, and the widening of that sector really says there's value within there that we should be tapping into.
So let's talk a little bit about the consumer and the idea that the consumer powers this economy, and if a consumer is paying more for gas, that might cause the consumer to pay less for other things. Since January 14th, gas prices are up more than $1. Or exactly $1, roughly $2.77 back on January 14th, $3.71, so 33% higher right now. How does that affect earnings if consumers are feeling strapped?
So corporate earnings slightly different from how the individual is feeling, right? And so
but I mean,
completely agree with you.
If I mean, and bear with me here, but there is this connection where if a company has to pull back from advertising as a result of earning less revenue, then that affects, a Mag 7 company because their top line is dependent on advertising.
Yeah, I think over time. So I'd say I always tell it's a tale of two cities. The story of the individual is slightly quite different from a corporate standpoint. And you're absolutely right. Gas prices are higher. We still have not resolved tariffs as we think about it, right? We're also looking for what will the Fed do as it relates to rate cuts that are coming up. and AI. Like, we can't forget that and what that means to the labor market. So these are real things that impact the individual. And so when you think about that, the importance of that is the alliance around what sectors to focus on and where the rebalancing comes in, right? Because there are going to be sectors that are very much more impacted by oil or AI or specifically tariffs. And that's why active management is where we're really leaning into and figuring out what sectors you need to pivot to in this volatile market that we're experiencing in the short term. But again, I try to anchor us back on the corporate earnings piece and the importance of equity markets right now and what that means.
I get what you're saying, and I get what you're saying when it comes to earnings growth. I think about top line growth, and I also think about pressure on margins, especially amid higher energy prices. And so how does that play out if companies potentially are feeling pressured? We still don't know. Again, tariffs are once
Still
again
unknown,
an unknown. I do think about pressure on margins, and then how do they make it up? And if they're able to use AI to do something, do they let go of workers, or do they not hire as workers leaves? And then that plays out into the economy, and that ultimately, does the economy become the market?
Yeah, no, you're spot on. So I think what I'd say to that takes a longer time to show up in the economy overall. But what you just pointed to, the AI, the labor markets, like that's what we're seeing, the unemployment rate. Like in the last unemployment report that we saw, while we were higher than estimate, it was concentrated in healthcare. It was very concentrated, right? So it wasn't a widening of a labor market, and that makes you dangerously nervous because that really means it's only healthcare that really tipped over, the job report, the last one that we received. So labor markets absolutely would be impacted by AI and, let's say, this inflationary thing called what's happening with oil prices, and then also potential the unresolved of tariffs at this point. So the small business owner and the individual are absolutely feeling differently right now.
Raquel, is there any conversation within your world and with your team over at HSBC where there is a thinking that even if we ended this U.S. war in Iran tomorrow, that there's still a region that has been impacted severely and a country that has not liked the U.S. for decades, and that somehow lingers and creates some volatility potentially for us going forward, whether it's in the energy markets or just our life?
Yeah, so I think as we all look at this, there's always the geopolitical piece of this that would impact lots of decisions, right?
Yeah.
And so we always have to have an eye on what's happening outside of the country, and specifically from a geopolitical standpoint. And we would say what keeps people up at night, it's that unknown, right? And so whether you say it ends tomorrow or it may not, right? I mean, that's also a very big unknown. So for that reason, you have to figure out how do you get oil prices back under control, right? So you have to assume if it doesn't end tomorrow, what does that really mean? And what does that mean for the price at the gas tank as we think about individuals? And what you're seeing in that price increase, it happened in such a short period of time, too. It's the shocker, right, that you weren't planning for it, and it went up within a week, up 20%, 30%. And so that's a lot for an individual consumer to take on.
And maybe we'll find out more on Wednesday, hopefully. But it's a shock that the Fed maybe didn't necessarily see company.
And then you got to watch inflation. That's the important thing. The Fed's going to come in and make a decision, and it's a hard decision right now as you're taking a look at what's happening from a market standpoint. As you just said, pretty resilient, the markets, but at the same time, individuals are feeling pain, right? So the question is, does the Fed make cuts? I think, right now, it will be important to see what happens on Wednesday.
I can't imagine the Fed cutting rates. I don't think anybody at this point.
I don't think anyone's anticipating that, but I think people are hopeful for that. But I think for us at HSBC, we're actually saying no cuts this year, quite honestly. We're taking a very extreme view on this one.
I like this.
Or Anna Wong has talked about four rate cuts this year.
4 cuts, so 100 basis points.
So
maybe it's somewhere in the middle.
It's a wide range right now.
As of last week, traders were not even pricing in 1. They were pricing in 24 basis points, so not even 1.
Yeah,
as of
right?
last week,
It's just.
But you also have a new Fed chair, too. So there's a lot of differences.
Not yet.
Maybe.
Well, very soon.
Talk
Very
about
soon.
unknowns.
Very soon.
I have learned.
I don't know if you were around on Friday and you saw that press conference.
Yes, correct. So all those factors then says, we can't always predict what's going to take place here, but the Fed plays an important role, right, to answer that question. Yeah.
All right, we're going to leave it there. Thank you so much. Really appreciate it. Raquel Olden, she is U.S. Head of International Wealth and Private Banking at HSBC, joining us right here in studio.
We wanted to flag a conversation that Bloomberg's Francine Lacroix had on her series, Leaders with Francine Lacroix, which airs on Bloomberg TV and now, Carol, can be found as a podcast.
It can indeed. In the first episode, Melinda French Gates reflects on the choices that set her path from Microsoft executive to philanthropist and now founder of Pivotal. She shares how values-based based leadership, resilience, and the courage to embrace the next day, as she says, have guided her through change, power, and public scrutiny.
I think sometimes people stay too long because their ego's attached to the job or because they're too afraid to make the transition. And they may not even realize they are afraid, but it does take courage to make a transition. And so I try to say to them, look, there's something beautiful on the other side. You may not know what it is next. You may be afraid, but when you make the transition, you're also making way, making room for what might come next for both you and whomever's to come behind you, right? And so I think as leaders, it's our job to understand, when is it time to go? When do we need another leader in this role?
How would you advise they, is it up to the people that surround them
100%.
To say, like, look, hold on, think about what you're doing, or is there something that they need to think about from day one?
I think it's both. I think they need to lay out for day one, what are they trying to accomplish? What happens if they don't get there? What is their exit ramp for themselves? Do they have a time limit? Like, if I get X done by year 5, but if I don't, will I leave? So having a plan going in, and then they have to surround themselves with people who are truth tellers and who they will truly listen to, right? Because once you get into a position of power, people are always going to tell you, you're doing well, you're doing great at this, aren't you fantastic? You have to have truth tellers around you, and you have to be willing to listen.
I feel like that's the hardest thing. It's making sure that you're not in an ivory tower where people say you're wonderful and actually you're doing things that are wrong.
Absolutely. I worry about that for myself. I worried about that at the foundation, like, who's not telling me the truth? And I knew there were a lot of people who weren't. But you know what? I could find the 2 or 3 that would tell me the truth about my leadership or something they didn't think was right about the organization. And so I had to make that safe for them. I also, outside of that, I'm very close to my family. And so my 2 younger brothers, my older sister, they will tell me the truth. And they never, ever let me think that I'm all that, especially my brothers.
All right, that, of course, is Melinda French Gates. She is there with Bloomberg's Francine Lacroix. Catch the full conversation. It's the first of 12 episodes in the first season of the podcast version of Leaders with Francine Lacroix, which you can find on your podcast feed and on the Bloomberg and, of course, at Bloomberg.com.
Let's take a look at some stocks right now in the equity indexes. The S&P 500 up more than 1.1%. Let's round that up to 1.2%. Carol, the NASDAQ composite up 1.5%. The Dow up 1%. You do have 409 stocks moving higher today. It's a broad-based gain in the S&P 500. Only 93 stocks moving lower. As far as commodities go, WTI down 5%. To right now $93.80, and we are seeing Brent at triple digits still, $100.60 per barrel, but down about 2.5%.
We're also tracking a GTC event there in San Jose, California. Of course, Jensen Huang has been speaking at the event. It kicked off today. It's their big AI annual event that they do, 4 days, and this is the first day. We did see shares of IBM kicking up higher, up about 2.4%, intraday high. This, as IBM is said to be working with NVIDIA on data processing. So NVIDIA, we're going to track those headlines and bring you any of them that are certainly of import when it comes to what the company's up to.
Just day one of GTC.
Day one.
But that's where all the news happens.
It is. That is very true. All right, stick around, everybody. Stocks on the move when we come back on this Monday.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, getting ready to kick off the last hour of trade on this Monday. Interesting week, interesting day. I feel like that has been 2026 in a nutshell. Having said that, bouncing around on the equity trade, we've been, really, it looks like a lively EKG. Can I say that? That's what it looks like.
And you're no cardiologist, but
and I don't play one on TV.
Okay, but it looks like one.
But we're definitely off our best and worst levels of the session. Still up about 1.1% on the S&P 500, 1.3% higher on the NASDAQ 100. And you flip it on over to the Treasury trade, and we do see yields. They have backed off some of their higher levels of the session. I'm looking at a 10-year at 421, 2-year note with a yield of 367. We've got a Fed meeting, Fed decision on Wednesday.
You have 4 stocks higher for every 1 stock that is lower in the S&P 500.
Yeah.
So it's very broad-based in terms of gains today.
Yeah, right, and more of a risk-on trade here. All right, I'm Carol Masser along with Tim Stenovec. Let's get to Bloomberg News cross-asset reporter Isabel Lee. She's in the house with some stocks on the move. Good to have you here with us. Dollar Tree.
Dollar Tree. I have just brought everything in the green because to Tim's great stats. How did you compute that so fast? But anyway.
Oh, fractions.
Good.
Yeah.
That's like 4th grade or something. 5th grade.
Well, look, here's how. 400 stocks are
Is that
up.
a diss?
400 stocks are up, 100 stocks are down.
4 to 1.
Okay, good.
So
Dollar Tree, it's the biggest gainer, up by nearly 7%, the highest since March 10. But still, we're going to talk about it. So it seems to have found a winning strategy, and that winning strategy involves introducing higher price items to help increase sales, especially to wealthier consumers.
Can they still be Dollar Tree when they're not just charging
I don't think
$1?
so. Yes, like the pizza that's $1, not really. But when I was reading the story,
you're talking
I was
about
like,
dollar slices in New
dollar
York City,
slices,
which don't
yes.
really exist anymore?
Yeah.
Yes,
Okay.
no. So
And
when
if you run into a shop that has a dollar slice, you might want to run it the other way.
Yes, don't eat it. It's. I do have a tourist friend, and he was like, "No, I still want to try it." Anyway, so I was reading the story, and I was like, "Wow, how much are they pricing it?" So it's $3 to $5. It includes toys, party supplies, and that helped boost the results last quarter. Sales are now projected to be as much as $20 billion next year. Although on Monday today, they gave a mixed annual outlook. But for now, shares are popping.
Maybe it should be called a couple of dollar tree.
Dollars tree.
Dollars tree.
Dollars tree. Nice. Dollars
Trees
tree.
a tree of dollars.
Ticker is DLTR.
Okay.
Dollar
Well,
Tree.
listen, I like watching these companies because it tells you a lot about the consumer.
Yes.
And, we've talked often about even higher end consumers kind of tapping into these names. So I think it's a good read on the economy. Let's go to this one playing video games all the time.
Me?
Oh, really?
No, he doesn't.
Oh, I don't know why my voice had so much judgment. No, it's good if you do, actually.
I don't.
No,
play
he
video
doesn't.
games.
He doesn't. We're just trying to get him in trouble.
I would like to relax by playing video games, but I just don't see how I would find the time. But Electronic Arts, shares are moving higher.
Yes, ticker is EA, slightly higher now, up by 0.4%. So they're in the headlines because of the largest ever leverage buyout. Wall Street banks, including JP Morgan, have attracted enough demand for nearly $15 billion of debt that it's selling. And this is again to back the leverage buyout of the video game maker. Investors have placed around $19 billion of orders for debt under the package, according to people familiar with the matter. So the deal values Electronic Arts at $55 billion.
When is this closing?
It's massive.
When is this closing? Like this company's
Let us
been
see.
trading at $200 a share for since September. So yeah, I don't know.
I don't know, actually. You're right.
So you want to know when that EAD deal closes?
Yeah, that's okay. Let's move on to NVIDIA while we
You
do a
do
little
that.
research.
Yeah.
GTC
Okay.
is happening right now. Ticker NVDA.
It's a good day for them because they're kicking off their annual conference, which is usually a 4-day conference.
Expected to
called
close
GTC.
June of 2026.
Oh.
I'm sorry about that.
No,
Yeah. Okay.
that's near. That's helpful. So NVIDIA executives will likely deliver a surprise, and many are expecting that this will give the stock that's been languishing a little push, because even when we saw a banner earnings report, it still wasn't enough for investors. They just want more and more and more. And during that day, just a flashback, the stock fell 5.5% the following day. So they're hoping that this will be a boost, and the conference comes 6 months after the shares have essentially kind of really treaded water. So a lot of investors are hoping that this will be the big Going back to Carol's medical reference, what is that thing?
EKG.
EKG.
Yeah, it's like when they
For the
measure your
stock,
heart
yes.
and how it's going. Because it's like,
Why are we pretending to
If you
be?
look at stuff, no, but if you look at the like overall trade today,
Yes.
it's like kind of back and forth, back and forth. Ed Ludlow gave us a good like landmark or like mark to keep an eye on when it comes to NVIDIA. So if you missed that, you can check out our podcast feed because he did a nice deep dive for us.
Here's the
on
headline
what he's watching.
that crossed earlier.
Mm-hmm.
Intel Xeon 6 used as host CPUs in NVIDIA DGX Rubin NVL8 systems.
Okay.
That was something that came from, unveils NVIDIA DLSS 5.
You want to explain that one?
So
I know, I was
I'm
like...
just bringing NVIDIA's DLSS 5 arriving this fall. So that crossed a few
Well,
minutes
I
ago,
have one
too.
quick one.
Yeah.
Do we have time?
Yeah.
So this is from Bloomberg Intelligence. They say GTC is historically a modest mover of stock price. Over the past 3 years, stock moves around GTC have stayed within a range of 4% up or down.
Well, it's up 2% now.
Okay.
We'll see what happens.
And it's only day one.
Yeah, 3
That's
more
true.
days.
It's only day one.
Yeah, and
What
the
else
market
will
hasn't even
happen?
closed. Good stuff. Really good names. Bloomberg News cross-asset reporter Isabel Lee. For more conversations, check out our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
We've got a great program coming up next on Bloomberg Business Week Daily. Wayne Sanders, Colonel Sanders, we're going to speak to him in just a few minutes on the war in Iran. That's next.
This is CBS News on the Hour, sponsored by JTV.com.
I'm Jennifer Kuiper. On week 3 of the war with Iran, President Trump urges other countries to help keep oil moving through the Strait of Hormuz. CBS's Stacey Lynn.
The president stepped up the pressure on U.S. allies and said he expected them to help secure shipping in the strait.
We strongly encourage the other nations to get involved with us and get involved quickly and with great enthusiasm.
He said he has talked with French President Macron and believes he is on board.
On a scale of 0 to 10, I'd say it's been an 8.
He said he also thinks Britain would be involved as well. Stacey Lynn, CBS News, the White House.
CBS's Ramy Inocencio says there is a rationale for the president to expect help from nations in Asia.
Asian countries do rely most on the oil out of the Strait of Hormuz. We know about 20% of the world's oil comes out of it. China, the biggest importer, roughly in the 35% range or so. India at about 15%. Japan and South Korea something like 10%. And in total, those 4 countries buy of about 75% of oil out of Hormuz. And President Trump saying they should be the ones to do more.
Cuba's Ministry of Energy and Mines notes a complete disconnection of the country's electrical system and says it is investigating. Just before spring arrives, severe weather heads toward the East Coast after plowing through the Midwest.
The same storm system that churned up blizzards in the northern plains and upper Great Lakes Sunday is moving east Monday, threatening the region with potential tornadoes, damaging wind gusts, hail, and flash flooding. Forecasters say mid-Atlantic states and Washington, D.C. are at the greatest risk. Several central North Carolina school districts have canceled classes for the day. Governor Josh Stein is warning residents to expect wind gusts of up to 74 miles per hour. Heather Bosch, CBS News.
Closing arguments begin today in the trial of Corey Richins, the Utah woman accused of fraud and murdering her husband in 2022 with a lethal dose of fentanyl. Judge Richard Mazik telling the jury,
"You must base your decision only on the evidence that you saw and heard here in court, and any exhibits admitted into evidence. Nothing else is evidence. The lawyer's statements and arguments are not evidence. Their objections are not evidence."
The prosecution argued Richins murdered her husband to cash in on his estate. The defense suggested Eric Richins may have overdosed on painkillers. Talk about ruining a vacation, CBS's Jim Krasula explains.
More than 150 passengers and crew aboard a Princess cruise ship were sickened in a norovirus outbreak. As the vessel sailed through the Caribbean, there were more than 4,300 passengers and 1,600 crew members on board the cruise ship.
Stocks are up on Wall Street. This is CBS News. A decades-long study by Northwestern medicine researchers is challenging assumptions about rising heart attack risk as men and women age.
Think about who's at risk from heart disease, and you'll likely picture an overweight, out-of-shape man in late middle age. But a 30-year study suggests that men start developing cardiovascular disease years earlier than women, with that risk starting to rise by their mid-30s. A 35-year-old man was nearly twice as likely as a woman to develop cardiovascular disease by 45. The researchers say men should start getting tested earlier while there's still time to implement prevention strategies. Vicki Barker, CBS News.
Robocalls, texts, and phishing emails from scammers are up this tax season compared to previous years, according to the Consumer Protection Bureau of the FTC. Consumer advocates and government officials are urging the public to stop and think before engaging with phone or text messages, and to remember the IRS will not contact you directly by text or phone. Jennifer Kuiper, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just under 55 minutes away from the closing bell on this Monday, March 16th, 2026. Carol Masser, Tim Stenivek, live in our Bloomberg Interactive Broker studio. It's an interesting week. Got a Fed decision. Actually, the Fed kicking off a two-day meeting starting tomorrow. Mañana. Por supuesto, muy bien. And so on Wednesday, we get a decision. We get Micron earnings. That's a big one. That stock's been on a tear. It's even moving higher today on expectations maybe of what we might get from earnings. You've got that going on. You've got the wars, our big macro backdrop. What am I missing out on?
That's
NVIDIA.
NVIDIA GTC. So on NVIDIA GTC, we're kind of covering all of that in the next 2 hours. On NVIDIA GTC, Jay Goldberg of Seaport Research Partners is going to be joining us in the 4 o'clock hour. He's still the only analyst tracked by the Bloomberg terminal that has a sell rating on NVIDIA.
Yeah.
We'll see if he's right.
Yeah, I mean, listen, the stock hasn't done much this year, kind of treading water as we keep reminding you. So maybe he's onto something, but we'll see what he has to say. Hey, we are, though, also going to get to the latest on the war. Our own Wayne Sanders of Bloomberg Intelligence on the opportunity for defense contractors. If you watch, if you listen, you know here at Bloomberg, we've talked a lot about the defense sector, the spend that's going on currently, but is going to have to continue to go on, not only just here, but also around the globe. So we'll tackle that.
Yeah, we're covering it from all angles. Wendy Benjaminson from our Washington, D.C. team on where the White House goes from here. The president did talk a lot about this just around lunchtime today from the White House, where he did make some comments regarding his view and the view of what he believes allies should be doing. And also on that, and on oil, Bloomberg Economics defense lead Becca Wasser is going to be joining us on the Strait of Hormuz.
And for something a little different, we watch a lot of different sectors, so much going on in the pharmaceutical industry. And we're going to have the CEO of Acadia Acadia Pharmaceuticals with us. So talking about the regulatory environment, what they've got in the pipeline, what they are working forward to, or working towards, I should say, because there is a lot of movement in that space.
Yeah, you were gone last time she was here because it was during the JP Morgan Healthcare Conference. She was in San Francisco. She's going to join us in the Interactive Broker Studio in just a few minutes.
All right, looking forward to it. Let's get you going, though, and check on the trading day. Let's toss things back over to Charlie Pell. Hey,
Thank you very much. And indeed, right now we got Acadia up by just about 4.2%. This on a day when the Dow, the S&P, NASDAQ all advancing. The VIX coming down. S&P right now up 70 at 6702. That is a gain of 1.1%. Dow Industrials up 413, now up 0.9%. The NASDAQ Composite Index up 291 for NASDAQ, a gain now of 1.3%. The VIX with a 23 handle below 24. We've got the 10-year 4.21%, but the 2-year 3.67%. Gold is down $9 the ounce, back above 5,000, was trading below that big round number earlier today. 5,010 right now on the precious metal, down 0.2%. Crude, everybody's monitoring what's happening with WTI, 93.95 a barrel. West Texas Intermediate crude down 4.8%. Barrel of Brent just above $100 right now, down by 2.5%. Bitcoin up 3.2%. Bitcoin 74,006 right now. So a slide in oil prices lifting stocks and bonds on hopes that more tankers will be able to move through the Strait of Hormuz. As for the overall market backdrop, Liz Thomas is head of investment strategy at SoFi. She was a guest this morning on Bloomberg Surveillance.
I do believe that if this only lasts for, let's say, a month or less, we will be okay. There will be a snapback, and generally, I would say it's likely that we go back to the trends that were in place in January and maybe early February.
SoFi's Liz Thomas interviewed this morning on Surveillance. Earnings news briefly. Dollar Tree up by 6.6%. Rival Dollar General up by 2%. Again, S&P 500 index up 1.2%, with West Texas Intermediate crude down 4.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Appreciate it. As I mentioned, over the next 2 hours here on Bloomberg Business Week Daily, we're covering the conflict in Iran from a lot of different angles, including the global air defense demand and really what the outlook there is. It's something that Wayne Sanders over on our Bloomberg Intelligence team covers closely. He's senior defense analyst. He's a retired colonel. He joins us from the Washington, D.C. area. Wayne, I just want to remind everybody here, you have a note in your note that says, go check out BI Iran Go on the Bloomberg terminal. It's for a comprehensive overview of everything that our intelligence team is thinking about when it comes to research and the war in Iran. There's everything from oil to the different scenarios for the Strait of Hormuz. You're looking at global air defense and demand for global air defense. Even before going into this conflict, the idea was that investors were bullish on this because the president wanted to do the Golden Dome. He wants to increase the budget for the Department of Defense. How did this conflict change the scenario?
Yeah, thanks, Tim. I think one of the biggest pieces is there was already European demand because of Russia and Ukraine. What they were doing, though, is Europe was really looking at it in terms of a little bit incremental spend increase, trying to reach 3.5% to 5% GDP for defense spending. And a large part of that we already anticipated was going to be based off of air defense. What we saw, probably around the range of about 200 to 300 billion of what we anticipated Europe would need to do, about 800 billion total defense. 200, 300 billion of that should have been air defense. Now you add in what Iran was able to provide from ballistic missiles and the drone strikes themselves. And you've seen not only across Europe, but everywhere else as well, saying that they're ill-prepared for the amount of air defense capability that is going to be required for interceptors based off of the cheap amount of drones that can actually be used for attacks. So we see a lot of that growth right now. There's really three different categories. You've got your large exquisites, which you would see with Lockheed's PAC-3 interceptors or with RTX's SM-6s fired from sea. But you've got a lot of lower cost munitions platforms as well that are coming out right now that are much more scalable, that you can actually buy in a larger bulk, like BAE L3 Harris's Vampire and Advanced APKWS, Advanced Precision Kill Weapon System. So there's a great opportunity right now where you're seeing demand and orders globally. Middle East obviously is going to be one of those areas as well, across Asia as well.
Hey, one thing I do wonder, Wayne, are we going to just become a world of domes, where everybody has some kind of dome system? I think about growing up, and President Reagan and Star Wars, right? This whole concept of like shooting stuff down, and I think everybody was like, what?
And it didn't work.
And and here we are, though. Is that kind of where we're moving towards?
I think as you become more sophisticated in the air for drone capabilities and missiles, and then you even get into hypersonics, you put all those pieces together, it really is going to require these almost cooperative domes. You look at European Sky Shield Initiative across Europe. You look at Golden Dome for the U.S. You look at Iron Dome as one piece of Israel's that they've used along with their Arrow 2 and Arrow 3, and then they get into directed energy with their Iron Beam platform. So really, you're looking at this layered defense dome. But the problem is like you're saying, they are expensive. So you have to start looking at where those partnerships are going to come from, and that's the EU and NATO looking at what kind of solutions they can put together, because not every single country is going to be able to afford this multi-layered defense. So that's where the collaboration comes in.
I think about this and all the conversations we've had with you, just even as this U.S. war in Iran has started, and I just think about the spend on defense. I mean, what are you thinking in terms of military budgets, U.S., the world at large? I mean, I'm looking at a sector, and mind you, this is aerospace and defense together. We're up 9% already this year. We were up more than 40% last year. And I feel like a lot of investment experts come on and say, this is an area where you want to, allocate some capital to. But how are you seeing it in terms of dollars that are going to be spent going forward, no matter what?
Yeah, I think that you're going to see $150 billion at least in a one-year surge for the demand capacity to include emergency spending, right? We see a $50 billion emergency spending bill going in front of Congress right now to be able to look at replenishing the munitions that we've used, both long-range strike offensive capability as well as interceptors for a defense capability. And then you're looking across other platforms, even in Europe, their research and development has gone up 50% over the last year. Year-on-year growth, specifically for research and development, that up until now they've actually normally relied on. U.S. would be maybe an overstatement, but they've definitely relied on a lot of the R&D that's come out from the United States, and then they help out from the production perspective. Now we're seeing them actually pick up there as well. So I see quite a bit, probably 10-15% gains for most countries. You see that push towards 3.5 to 5% GDP for Europe. I think is going to be one of the largest growth areas, and continued demand for interceptors throughout the Middle East.
Yeah, the interceptor story, has it changed due to the sort of lower tech munitions that adversaries are using right now, namely drones, and the idea that the U.S. doesn't want to send $3 million missiles after $30,000 drones?
Yeah, I think that's where you see that middle market area come in with the APKWS. You see Rheinmetall comes in with Skynex with these different capabilities, as well as RTX and their Coyote Block 2 and 3. There are a lot of different capabilities that are out there to kind of bridge the gap between the two. Now, obviously, the PAC-3 interceptors, SM-6s, they're really designed specifically for ballistic missile defense. And so you see that a lot of people that actually have these countries that have access to those exquisite munition and interceptors, they don't try to use them on drones. So they are looking for additional ways to do it. And then you also have in the futures coming up through quickly, probably in the next 5 years, you're going to start seeing a lot of directed energy platforms, which is high-powered microwave. Like Epirus has a Leonidas system that does it. Lockheed has Helios, which is a high-energy laser platform that's on board Navy vessels. And but you've got to be able to deal with size, weight, and power, because it's got to be strong enough so that you can beat something that is flying at you at speed that may be shielded. And so you've got to have it's really a time calculation as to whether or not you can do that. But the size, weight, and power allows that magazine depth to be a fraction of the cost of shooting any of these other types of munitions.
Wayne Sanders, he's just part of the team at Bloomberg Intelligence, covering all things and implications of this conflict in Iran. He's senior defense analyst. He's a former colonel. He joins us from Maryland. Wayne, always good to check in with you. Really do appreciate your time each and every time. Carol, you're watching what's going on with shares of NVIDIA because they are pushing higher.
Yeah, just want to mention a headline. CEO Jensen Huang at GTC, their annual event, 4-day event, AI and all things around it, saying that NVIDIA targets a $1 trillion span of revenues through 2027. So they expect to generate at least $1 trillion in revenue through 2027. If you take a look at NVIDIA shares, we did see actually the stock kick higher on that trade. Let me just pull it up on my Bloomberg. NVIDIA, Jensen Huang there on the screen continuing to speak. It did kick higher. Right now we're up about 2.8%, but we were a little bit higher on that headline. In fact, we went as high as 4.8%. Intraday high on that headline. So continuing to track, and we'll bring you more news as it's known. Don't go anywhere. Tim and I coming back right here on Bloomberg Business Week Daily.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher, oil lower. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. S&P right now higher by 72 points, up 1.1% at 6704. This is West Texas. Intermediate crude retreats by 4.5%. The Dow is up 436 now, up 0.9%. The Nasdaq Composite Index up 288 for Nasdaq, a gain of 1.3%. The VIX at 23, the 10-year 4.21%, the 2-year ahead of tomorrow's the start of the Fed meeting 3.67%. Gold down $6 the ounce to 5,013, down 0.1%. WTI at 94.35 a barrel, again down 4.4%. Brent below 101 now at $100.90 a barrel, down 2.2%. And Bitcoin up 3.3%, 74,084 on Bitcoin. So stocks higher, oil lower. As for the market backdrop, specifically on the economy and energy, Barbara Reinhardt is Chief Investment Officer for Multi-Asset Strategy at Voya Investment Management, and she was a guest this morning on Surveillance.
In order for it to really hurt the U.S. in a significant way, you would probably need to see Brent somewhere around, WTI, somewhere around $140 a barrel for a pretty long period of time, like 2 to 3 months, in order for it to really hit the U.S. economy very hard.
Barbara Reinhardt of Voya, and again, putting that call in perspective, West Texas Intermediate currently at 94.39 a barrel, down 4.4%. Oil majors trading mixed. ExxonMobil up 0.7%. Chevron right now up 0.1%. ConocoPhillips down 0.2%. Again, recapping, S&P 500 index higher now by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Well, earlier this month, Acadia Pharmaceuticals said the Committee for Medicinal Products for Human Use, this is the CHMP of the European Medicines Agency, reviewed the drug, Trifenitide. Oh, this is why Carol Massar.
No, listen,
the best,
you are usually like king on this
for
stuff.
treatment of Rett syndrome in patients 2 years of age and older for approval in the EU, and decided the evidence didn't support approving it. Acadia said it planned to formally challenge the decision. We're joined now once again by Catherine Owen Adams, CEO of Acadia Pharmaceuticals. It's the $3.6 billion market cap biopharmaceutical company. It focuses on the discovery, development, and commercialization of small molecule drugs for the treatment of central nervous systems disorders. She joins us here in the Bloomberg Interactive Brokers studio. Welcome. It's good to see you again. Last time we spoke, you were in San Francisco at the JP Morgan Healthcare Conference.
Good to be here. Thanks for having me.
It's good to have you in New York. So I want to start with the trofinetide statement from the European regulators for the treatment of Rett syndrome. Is there anything new? You came out a few weeks ago and said you would challenge this. What's the latest on that?
Yeah, so there's nothing new since we said that. We are putting in writing our official application for re-examination, and that's going in the next few days. And we expect that process, it's governed by a time clock, so it's pretty fixed. And that process will run probably till June. And that's during that time we have the opportunity to restate our evidence, have another scientific advisory group, and also probably have an oral explanation. So there's a lot more chance to interact with the European Union.
So this drug is approved for use in the U.S. under DAYBUE.
It's approved for use in the U.S. as DAYBUE, also approved in Canada and Israel.
So what's different about the European situation?
Aren't they tougher?
They are definitely tougher in rare disease. We have a pivotal trial which was statistically significant across 2 co-primary endpoints. And the European Union has stated that they don't value the meaningful difference that gives our Rett patients, and they're finding it hard to understand the clinical value of the differentiation that we saw between the endpoints. And so we're having to educate on Rett. It's not a very well understood. It's rare neurological disorder. It affects mainly young girls. There's about 12,000 patients in the EU, 6,000 in the US. So it's not very well understood, even by neurologists. So there's a lot of education that we have to continue to do. And also our patient advocacy voices are quite disparate across the EU, and now with the International Rett Syndrome Foundation helping us as well in terms of understanding what it's like to live with a child with Rett syndrome. All of this is important now to help our re-examination process.
You know, speaking of a process or processes, I am wondering, Catherine, too, I think we think a lot about this administration and what it's like going through a regulatory process. How has it changed? Has it calmed down? Give us some insight, since you guys have to deal with it on a day-to-day basis.
Yeah, we don't have an active approval process going on right now. We actually just got our debut Sticks formulation approved by the FDA in December. And actually, our process went really quite smoothly. So as I try to explain to people, we don't deal necessarily with the people at the top of the FDA. We deal with our divisions. And the division leaders and the division staff work really hard all the time to ensure that they are applying the timelines that we agreed to during the PDUFA process. And we have found so far at Acadia that all of those timelines have been stuck to.
Do those individuals stay from administration to administration, or are those
They
different
have
people?
tended to, and the people that we deal with are certainly the same people that we've been dealing with for a number of years. So that's really a positive right now.
Are there fewer trials? Are there faster approvals? And I think this gets to, as citizens here of the United States trying to understand, public safety concerns and just wondering, a process that I think many would say was a gold standard globally, has that changed?
No, I don't think so. I think the FDA still applies very high standards of safety and efficacy for our population, and I think the US will continue to be the gold standard. As we see the leadership changing, I think some positives have come out of it. This sort of focus on trying to be less bureaucratic, trying to think about different ways of approaching clinical trials. And so we're very positive about supporting that, but obviously that then needs to be actually put into the guidelines and the rules. So we'll see how that flows down.
What about when it comes to affordability and the focus on affordability? How is that kind of affecting you as a pharmaceutical company? We're also focusing on certainly the United States on the pharmacy benefit managers, that level.
Trump RX.
There is that. So just how is any of that affecting some of the business decisions? Because as you say, you guys are developing sometimes a treatment, a drug that is not inexpensive, and it's a smaller pool of patients who can who will
But there's
use
also
it.
a little bit of misunderstanding about that. So DAYBUE, for example, 90% of our patients pay less than $10 per month for their prescription. So there's a lot of misunderstanding around that whole sort of high price situation. But I think, Carol, your point around pressures on affordability for the American patient, that is absolutely top of all of our minds. Even as individuals, right? We all go to the pharmacy as well and see that. And so America is unique in terms of a market in that 50 cents on every dollar spent on medicine goes to middlemen. And we're the only country in the world where
So by unique.
Yes, unique
This
and
is not
special.
unique.
Some would argue inefficient, or maybe they're...
Yes, and it's the PBMs. It's also hospitals mark up their drug prices as well. It's a lot of intermediaries that actually don't add to the patient experience at the end at the pharmacy. And we're really trying to work with our various policy groups in a bipartisan way. I think everybody agrees that it's not great for patients in terms of how we're currently structured, and we're very, very focused on supporting the administration in a bipartisan way to help us sort of get through that.
My daughter got some crayons and Play-Doh at the hospittal when she was there a few weeks ago, and I haven't gotten the bill yet. So I don't know. I don't know what it'll be.
Everything will be itemized.
I think it'll be okay.
It will be. How did we kind of get there? And I know you're from London.
Yes.
The UK, and just as you think about different health systems, and everything has pluses and minuses. I get that. It's not apple to apples in terms of comparison, but how did we get this wrong maybe in terms of PBMs? Because everybody thought this was going to be great for patients, for everybody. It was going to be more efficient, and the cost savings would be passed on to consumers.
Well, the idea of a middleman in terms of brokering sort of, larger discounts across sort of payers, I guess at its fundamentals is a good idea. The issue is that the rebates that the pharmaceutical manufacturers give to the PBMs should be passed along to patients, and yet they're not. And so that's the point where we're really trying to sort of unpick the systems that have got us to where we are now and ensure that those rebates that we do give actually do get to the patients that they were intended for. And that is actually written into the contracts and into the sort of the legislation, and that actually happens.
I have to say, I always find that whole process, why is there a rebate? Who gets a rebate, and how does it work? It just seems to me so
Well, the
random.
idea is you get the coupon, and then you don't use it, so...
Why don't we just mark down the drug to begin with?
Because then that will be a guarantee of a decline in revenue rather than you actually taking the time to get the coupon and going in and
Well,
doing
the middlemen are so entrenched now in our whole healthcare
Yeah.
system, it's really quite hard right now to sort of try and take them out and just get these discounts to the patient at the pharmacy counter.
Okay. I'm glad we settled everything. We solved it all.
30 seconds. I know we have to run because we got to get
course.
to NBA. In terms of the macro, how do you feel about the environment with everything that's going on?
You know, we are just every day trying to deliver our medicines to patients who have high unmet medical need, and we're continuing with our R&D pipeline. We're continuing to invest in the US and biotech innovation, and we believe in it. And we also believe the US is the best innovation environment in the world, and we'll continue to do that.
I love that optimism. Thank you so much. Great and thank you for letting us go kind of wider, because you have a great vantage point. Catherine, thank you. Good to have you here. Catherine Owen Adams, Chief Executive Officer and Board Member of Acadia Pharmaceuticals, joining us in our Bloomberg Interactive Broker studio.
I want to go now back to San Francisco and talk a little bit about NVIDIA, because shares of NVIDIA were up as much as 4.8%. Now they're up just about 2%. NVIDIA expects to make $1 trillion from AI chips through 2027. That's just one of the headlines. The latest forecast delivered by CEO Jensen Huang during the company's GTC event, extending the outlook. I want to bring in Ed Ludlow. He's the co-host of Bloomberg Tech on Bloomberg TV. Ed, the numbers, these were some of the numbers that we were waiting for. Just give us some context around these figures and what we knew and what is new here.
So $1 trillion, which is a range between 2025 and the end of 2027. The prior figure was $500 billion, which was stated on October 28th of last year, over a period of 5 fiscal quarters through the end of calendar 2026. So what this new number is, $1 trillion between 2025 and the end of 2027, it doesn't represent an acceleration nor an expansion of the outlook that NVIDIA had kind of given. It's not saying that growth is accelerating beyond the prior trend. What they are doing is making that outlook further out. They're telling us what they see through the end of next year, 2027. And the market reaction represents, you know, the line chart, bring up your GIP on the terminal of NVIDIA shares, massive spike when Jensen Huang said it on stage. And then Wall Street did the math. And
they realized this was just the natural progression of how things would go if things stayed at what he announced in October.
Yeah, I mean, it's very, very complicated, because you can't say this is what they're tracking out on a per quarter basis going forward. The original forecast was just Blackwell-Rubin systems. It was stated out loud by Jensen Huang on October 28th, and then it was a mismatch between a forecast for 5 fiscal quarters against a dateline of the end of this calendar year, 2026. There's another data point within it, and I posted the slide on X. There's a pie chart that they shared with it. What's really interesting is that NVIDIA is saying that 60% of that revenue opportunity is coming from the hyperscalers still. Just those 4 big cloud computing providers. And the reason that's important is that with NVIDIA has been something very closely tracked, how much they're reliant on the hyperscalers only, and how diversified their customer base is. And it seems as if actually it's swung back to being heavily, a majority being around the hyperscalers.
You know, I did the same thing, because I saw the number and I'm like trying to understand. I'm like, where's Ed? I need some context. And I was looking at, was it the CES reporting that Ian and you guys all did reporting? And he at that point was talking about $500 billion, right, in revenue by the end of 2026. And I think an opportunity that it could eclipse that. So we need to kind of, I don't know, is there a question you would ask Jensen at this point off of this number or off of this?
Yeah, why didn't you guys file an 8K or put it in writing so the market could understand it? And actually, like, I don't know, I think that the market might sympathize with me on that question.
But is that, Ed, is the reason is because he wants something flashy for this event that he holds twice a year?
Look, in the sequence, like, you know, the video will be available for people to watch back, right? But in the sequence of presenting that number, what Jensen Huang was saying was, you know, I presented to you this $500 billion figure, and then he kind of made a joke that no one gave them credit for it, or no one was wowed by it. And he paused and he said, as I stand right here today, we now see $1 trillion through the end of 2027. And, you know, for them, it was a really big moment. I'm really finding it difficult to pass. We're discussing it as a team in the IB about how do you word that and mismatch I'm trying to reconcile fiscal quarters with calendar quarters. What I would say is when that $500 billion came out after GTC DC, what happened was the sell side went away and baked it into what they modeled, and then that started showing up in the estimates. And so at least we can say, oh, aren't we lucky that in the coming days, maybe you go on MODL on the Bloomberg and those numbers will be updated a little bit.
Okay, so in the meantime, we are getting some other headlines. I don't know if you had a chance to see these. The company saying that Vera has twice the performance of any CPU. Jensen says the CPU, quote, for sure, is a multi-billion-dollar business, or multi-billion business, rather. What about the latest from Vera at NVIDIA, and how this changes the equation in hardware? Is this new to you?
So NVIDIA has been hinting for a few months that they're going to go harder after the CPU market. And that was confirmed first with CoreWeave as having access to it, and then Meta as the CPU being sold as a standalone product. If you look at the market right now, in the moment that the headlines hit, there's no sharp reaction in AMD or Intel to the downside, because the market's kind of baked that in, that NVIDIA would do this. CPUs are not as valuable to NVIDIA as GPUs are. The cost per CPU and where the CPU fits in the server design, it's a general purpose processor. It doesn't have the sort of AI workload specific use case that a GPU has, but it's an addressable market that NVIDIA can go over to boost the overall TAM, and do something different that they've not already done. And there are loads of use cases where you might have data center infrastructure built that NVIDIA's GPUs are not a part of the plans, but that CPU would come in quite useful.
Hey, one other headline I want to ask you about. Jensen Huang talking and showing off the new Rubin Ultra system. And this plays into agentic AI, which I feel like when I have AI conversations now, increasingly people are moving in that direction. What do we need to know about that? Is that a big mover?
Yeah.
Or no?
No, insofar as that, NVIDIA is committed to bringing out a new generation of platform on an annual basis. The details of the Rubin-based platforms have been released, and in terms of literally the energy it takes to power that thing relative to the Blackwell system, it's a big step up.
Yeah.
Tokens generated, it's a big step up. It's a much more efficient system, but those data points aren't that new. They've been spec'd out already and discussed.
Which
don't go too far, Ed.
It kind of explains though the trade, right? Like we got this kick up of more than 4%, and now we're just up about 1.67%.
Which I think was lower than where it was before.
It is
the announcement,
because we were up 2% higher earlier in the session today.
Yeah.
We were up about 2%. Anything else you're looking at for at this point, or just I don't know?
Yeah, I ran away from my desk and the live feed to come join you guys, which is good. I'm not complaining about that. But the thing that I'm not seeing is a specific announcement on an inference-specific platform. Again, NVIDIA hired Grok with a Q's CEO and other leading talent, and acquired the rights to their platform. And, I think that they've hinted that at GTC, well, Jensen Huang said explicitly, at GTC, we will hear more about what they actually plan to do with that transaction. And Grok was an inference-only platform. So you'd expect NVIDIA to say, here's our offering for inference only. Yeah.
Ed, you got to explain Grok with a Q versus Grok with a K, because I think people hear Grok, they think
Yeah.
Yeah, there is a AI hardware company called Grok with a Q. It makes accelerators or server systems, server designs for running AI workloads, not training them, but running them. Grok with a K is the tool, the chatbot of xAI, or indeed its model. The models are also named Grok. And xAI is Elon Musk's AI frontier lab or company, which is now owned by SpaceX, his rocket company. They are the same word spelt differently.
And Ed,
got that.
We end with the It's Always Sunny in Philadelphia whiteboard with Charlie. I think it's Charlie just standing there, trying to connect everything.
I think we should just load that into Viz or into our system for the next time I'm on. Sure.
Our producer Cece threw it in our chat, and as soon as you said it, and just a reminder of kind of where we are. Thank you so much, Ed Ludlow.
Anytime.
Hopping on twice for us. He is one of the co-hosts of Bloomberg Tech on Bloomberg TV. Catch Ed and Caroline Hyde, 11 a.m. to 12 noon, Wall Street time, Monday through Friday on Bloomberg TV.
Hey, a little later, in just under an hour, we're going to be speaking with Jay Goldberg over at Seaport Research Partners. More about NVIDIA and about today's news coming from NVIDIA GTC in San Jose. Jay, the only analyst tracked by Bloomberg who has a sell rating on NVIDIA.
Had it for a while, right?
Yep.
All right, folks, we've got just about 18 minutes to go until we wrap up the trade on this Monday, bouncing around here. Let's get another update on the session and some of your top business stories. Here is once again, Charlie Bell.
All right, I thank you very much indeed. Keep it locked into Bloomberg for any and all developments out of GTC. And right now we do have NVIDIA shares up by 1.6%. Also keeping an eye on crude, West Texas Intermediate, right now trading at 93.86. WTI down by almost 5%. Right now down by 4.87%. Stock 4.87%. Stocks higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a bid from the start today, with the Dow currently up 391 points. S&Ps are higher by 1%, and the NASDAQ, that's up by 1.2%. The U.S. 10-year yield is at 4.22. Gold and oil are in the red. The dollar is trading lower, but Bitcoin, that's jumping by 2%. Among the main 11 S&P sectors, all were trading in the green, led by tech and consumer discretionary. And leaders to the upside in the Dow, Amazon and Salesforce, while Walmart and 3M led to the downside. After earnings, Dollar Tree rose 6.5%. And in the tech space, you mentioned NVIDIA. The CEO sees revenue of at least $1 trillion through 2027. Wrapping things up, the CBOE launched or filed a proposal to launch near 24/5 U.S. equities trading. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg-type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Bell. That is a Bloomberg Business Flash.
Daddy, can I drive?
Yeah, sure, why not?
Do I look like I drive a minivan?
Shut up and drive.
Don't drive angry. Don't drive angry.
I'll drive. Shotgun.
This is the drive to the close.
If you had access to a car like this, would you take it back right away?
On Bloomberg Radio.
Well, look at that. Just about 15 minutes ago until the close of U.S. equity trading. The S&P 500 off its best levels of the day, but still up close to 1%. I want to bring in Aaron Mulvihill, J.P. Morgan Asset Management Executive Director and Global Alternative Strategist. He joins us here in the Bloomberg Interactive Brokers studio. We want to talk alternatives. We want to talk about the Fed meeting this week. We want to talk about the macro environment and private credit. But I think the thing that we want to start with is the conflict in Iran.
Yeah.
And sort of how, as it enters its third week, how it's changed your view or not changed your view of the macroeconomic environment.
Yeah, that's obviously what everybody's focused on right now. I think coming into the Fed meeting, we don't expect a change in interest rates, but what we'll be looking at will be the commentary out of the FOMC and what we're seeing in the dot plot and how much inflation is reflected in that. Because inflation is coming out of the higher oil prices, right? We're not on $100 a barrel anymore, but we're at much higher prices.
So in other words, you want to know, is this transitory or not?
Exactly. How long? The key question is, how long is the war going to continue? When will it end? And what will the situation be like when it ends?
Fortunately, you know the answer to all that, Carol.
I absolutely do. That's why I'm still here.
Okay.
No, Aaron, I want to ask you, you guys, JP Morgan Asset Management, $4.1 trillion in assets under supervision. We're talking alternatives, fixed income, equities, lots of different areas of the marketplace. Give us an idea, first of all, certainly from either institutional investors or, some of your investors, what are you hearing since this war began, since this year began, which safe to say with Venezuela and the U.S. Invasion there, things haven't necessarily started as we anticipated.
No, they certainly haven't. I think in public markets, performance has been fairly lackluster.
Yeah.
Right? As I looked just before coming in here, we're about 2.5% down in the S&P. A balanced 60-40 portfolio of 60% stock, 40% bonds is negative so far year to date. And so that's got investors looking at where can they get alternative sources of yield, alternative returns, which private markets can be a provider of.
Even with all the worries that are out there?
Yeah, absolutely.
Give us an idea of
across the space.
Yeah.
So I'll take one, right, which is an interesting one that's kind of been a geopolitical hedge, is transportation, so shipping. Private shipping companies that are shipping funds, right? And counterintuitive, because we expect when there's a geopolitical issue, shipping can slow down. But what's actually happening with the Strait of Hormuz closed effectively is all that oil and gas has got to come from somewhere else. And it's been brought by ships that are traveling longer distances to get there. So think about LNG, for example. 25% of the liquid natural gas comes from Qatar. That can't get out of the strait, and so more of it's coming from the United States and elsewhere. That's traveling on ships, so those ships have to go further to get to their destinations, and that's a benefit for transportation companies and funds.
Okay, but are you saying then investors should make that shift or shift to that exposure because you think this is going to be a longer conflict? Because if you don't, then why would you make that shift?
The challenging thing, right, with alternatives in private markets is it takes time to get exposure.
Yeah.
Right. So I think.
But would you
really
have wanted the exposure before this? Then
it certainly would be nice to have the exposure before coming into this, right?
Okay.
But what's the next best thing is to think about what's the economic situation going to be like coming out of this. We probably need to think about inflation a little bit more and about counteracting that inflation that could persist even after the conflict resolves, because it's not that easy. You've got a lot of oil can feed into the economy.
You don't think the strait's
going to
go back? The Strait of Hormuz is just going to go back to the way it was?
It's a lot harder to start oil production than it is to shut it down.
Yeah.
So it's going to take some time for those refineries to get back going. And so we might see inflation drag on further. And that means looking at assets that have that inflation hedging characteristic. Like infrastructure is one. You were just talking about data centers and AI. Well, what's powering those data centers often is private infrastructure companies, energy companies, and so that can be an inflation hedge in itself.
Let's say there is some sort of ceasefire and things do go back to, I'm definitely not going to say normal. I'm not going to say the way they are, because I don't think those two things are possible. But there are ships crossing the Strait of Hormuz again. Right. How long does it take for those higher oil prices to sort of come out of our economy?
So what we can look at is the futures markets. So we're looking at futures for April right now, trading around $90 a barrel, right? That's expectations of markets. If we look at December, we're back down to $70, $75 a barrel, right? So somewhere between that, it's going to take a matter of weeks to actually bring those prices back down.
Or months, as you see,
or
right?
Potentially months. And it really, every day that the conflict continues, could be multiple days of bringing that back to normal, because a lot of people's expectations now are baking in higher prices going forward.
Our investors just got about 20, 25 seconds. Aaron, are investors looking to put more money to work, or are they just kind of sitting tight right now?
I think they're reassessing their portfolio for the future in terms of potentially higher inflation expectations and wanting to be protected from that.
All right, going to leave it there. Aaron, thank you. Really appreciate it. Aaron Mulvihill, he is JP Morgan Asset Management Executive Director and Global Alternative Strategist, joining us right here in our Bloomberg Interactive Brokers studio. Hey, everybody, just about 10 minutes to go until we wrap up the trade on this Monday. Carol Master, Tim Stanovic, we're counting you down to the close.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are just under 7 minutes away from the closing bell on this Monday. Carol Masser, Tim Stenovec, live here in our Bloomberg Interactive Brokers studio. Bouncing around here, is that little kick up, it looks like, in the equity markets?
That was NVIDIA.
That was the whole NVIDIA
Yeah, that was
impact.
NVIDIA. And we saw the NASDAQ 100 go to session highs.
They all did.
That's how powerful and how big NVIDIA is.
Listen, you look at the weighting in terms of those major equity averages. Yeah, it totally makes sense. But as we heard from our Ed Ludlow, not necessarily something as significant as at least the initial headline that cross. So more to be known perhaps from NVIDIA as this GTC event goes on for the next 3 days here this week. S&P 500, not even up a full percentage point, just up about 64 points as we speak. So we're definitely off our best levels of the session. NASDAQ 100, Tim, a gain of 1%, also off our highs of the session, but it is up about 267 points.
Okay, so we're going to have more on the markets in just a minute when we have our cross-platform coverage. Bailey Lipschultz in for Katie Greifeld this afternoon. In the meantime, more weather threatening air travel, as if, Carol, not enough challenges when it comes to TSA and those TSA workers not getting paid thanks to a government shutdown.
There's so much going on. The eastern half of the United States has been hit